Focus on the people and vote to advance this bill. Remember the Americans we met traveling on the road and the people in each of your districts who are better off today thanks to the Trump tax cuts. Together with the one big, beautiful bill, we can ignite the second Trump economic boom and improve the lives of millions of our neighbors back home. I'm now pleased to recognize the ranking member from Massachusetts, Mr. Neal, for his opening statement.
Thank you, Mr. Chairman. So here we are. One big, beautiful tax cut for billionaires legislation. The Republican pathology with tax cuts for wealthy people continues. The theology for a long time, until it was put to rest, was that tax cuts would pay for themselves. Well, that's just what it was, theology. Then we heard in the middle of the Iraq War, the Republican whip in the House of Representatives say, quote, it was patriotic to cut taxes in a time of war. Then we were told it would always be about accelerated growth. Well, we'll take the Clinton growth rates any day. In 2017, our colleagues on the Republican side passed a tax law that was supposed to pay for itself, raise wages, and help working families. None of that happened. Instead, it exploded the deficit, worsened inequality, and left everyday Americans behind. This bill, as currently proposed, will cut health care from 14 million members of the American family. Now they want to double down on the same playbook, one that rigs the system for billionaires while everybody else pays the price. Here's the real kick. They're going to ignore the baseline for 2017, just make people think it never happened. So they borrowed $2.3 trillion in 2017 for a tax cut that did not impel greater growth. They don't want to even pay attention to that. The other part of this, how about raising the debt ceiling by $4 trillion to pay for their tax cut, which will be with borrowed money? Let's be clear. The Trump economy didn't work for all American families then, and it won't work now. What we've seen is the continued chaos. No real trade deals, no lower prices, no economic stability, empty ports, anxious markets, and rising costs, while the president blames everybody but himself. Complain about the debt on Monday, and then borrow $4 trillion on Tuesday to add to the debt. This legislation pours gasoline on the fire that's already burning. Americans are buckling under the chaos that our Republican colleagues have helped to create, and this bill will make it worse. No wonder a strong majority of Americans believe that this could trigger a recession. They're right. This isn't about growth or prosperity. It's about protecting the ultra-wealthy again. Let me point something else out that's really important. We haven't seen the Joint Committee on Taxation distribution tables yet. You know why? Because that shows who will get what. And it'll give the American people a chance to contrast what's going to happen to those at the top and what's going to happen to those at the bottom who will get $1 a day in tax relief. 70% of the benefits in this bill go to the top 20% of the American family. That's before the Trump tariff tax takes $2,800 out of our household budgets each year, and then Republicans gutting health care that will just drive people to emergency rooms when the hospitals don't close. That's not a tax plan, it's a wealth grab. While the richest Americans are raking in piles of cash, they want to gut the Affordable Care Act, Medicare, Medicaid, and SNAP. This bill is the greatest loss of health care in our history. According to the Congressional Budget Office, 14 million Americans will lose their health care plan. 2 in 5 pregnancies are covered by Medicaid. It funds long-term care, addiction services, mental health treatments. We all know people that have those challenges and problems. They're our constituents. Cuts like these will devastate families and entire communities, especially in rural areas. And what are they offering in exchange for this pain? The same tired promises that tax cuts automatically will give you more growth, even though the CBO says that's false. In fact, extending that tax scam could conceivably slow the economy, not expand it. It doesn't have to be this way. Republicans have chosen this path. They could have extended the expanded child credit, cut poverty in half. They could have made the ACA subsidies permanently. They could have made meaningful progress with long-term care and housing. Instead, another $2 trillion giveaway to the wealthiest Americans. When they start talking about the deficits, don't forget $10 trillion worth of tax cuts that have never been paid for. They'll use this hole as an excuse to come to Medicare, Medicaid, and Social Security next. It's the same pattern. Blow up the budget, then gut the programs that people rely on. We deserve a tax system that works. We deserve peace of mind and not the fear that our retirement plans will be taken away. We will continue to fight for the future as Democrats, and we intend to lay out for the American people precisely what this legislation means. It is a tax cut for billionaires. I yield back my time, Mr. Chairman.
Thank you. Our only business today is consideration of the committee print providing legislative recommendations to comply with the reconciliation directives included in Section 2001 of the concurrent resolution on the budget for fiscal year 2025, HCON Res 14. The committee will now proceed to consideration of the committee print.
Mr. Chairman, at this point, I want to reserve a right to object to your unanimous consent request and raise a point of order concerning its consideration.
So the next line is without objection?
It is with objection, with a reservation of objection. Hopefully, I can not object.
State your objection, gentlemen.
Surely. Mr. Chairman, I just asked to be heard briefly about the amendment and the nature
State
of
your
my point.
objection.
My point of order is under House Rule 16, Clause 7, in that your 28-page bill that you filed Friday night is now a 389-page bill, that it includes multiple provisions that were not in any way referenced on Friday night, from the SALT cap to the $20 billion voucher plan to just one provision after another. And under House Rule 16, Clause 7, it is designed to help the members of Congress properly legislate by knowing what's going to be considered before we act. I have people in my district who will spend months researching a $40,000 car. We're being asked to consider a $5 trillion tax bill where we don't have the information since this bill deviates so much from the one that was filed Friday night. I have, Mr. Chairman, the House Practice Manual, and it makes very clear that on page 565 that the burden of proof is on the offerer of an amendment that deviates so fundamentally, and that this applies to amendments in the nature of a substitute. So I just ask you to clarify perhaps your broad definition of germaneness, if that is your position, will be applied similarly to any Democratic amendment that would be offered. But I'm trying to ensure that we don't have one standard that applies to your amendment and another standard that applies to mine or the others that might be offered. So perhaps you could just explain why you think this is germane to what you offered on Friday night.
The House substitute that we provides with all House rules. And so the gentleman is more than happy to discuss any of the conversations when we move forward within the substitute.
So your position is that our amendments, for example, to deal with the Affordable Care Act enhanced credits, though they're not dealt with directly in your bill, that germaneness will permit us to debate all of those matters on the merits?
We'll consider case-by-case basis as we move forward.
Sometimes your consideration tends to run a little one way.
You've stated your objection. We're going to move on.
All right. Well, my objection, I raise a point of order that
State your point of order.
the amendment in the nature of a substitute is not germane to the base bill because it includes multiple provisions: SALT, the vouchers, the denial of health care.
The gentleman will suspend for a moment.
Surely.
The amendment as a nature of a substitute hasn't been called up yet, so it's not timely to raise a point of order at this moment on.
Well, you're about to make a unanimous consent request that we dispense with any objection. So if you want to make that request, I will renew my
I was about to
reservation.
say the measure will be considered as read and open for amendment at any point if there's no objection.
Are you referring to the amendment in the nature of a substitute?
We are not there yet.
When you're there, I have a reservation of objection, and it will be somewhat similar to the one I just stated.
Without objection, the measure will be considered as read and open for amendment at any point. At this time, I offer an amendment in the nature of a substitute, which was distributed in advance along with the green sheet explaining it. Without objection, the amendment...
Mr. Chairman, at that point, I would reserve an objection and raise a point of order.
And that is the appropriate time.
Thank you very much.
That is not the appropriate time. Does the gentleman wish to reserve a point of order on germaneness?
I reserve a point of order under the House rule that I cited, hoping that we can comply with the rules, or if you're adjusting the rules, that it will apply the same to Democrats as Republicans. House Rule 16, Clause 7.
The committee is complying with all House rules, and we will continue to comply with all House rules.
Mr. Chairman, you're not complying with House Rule 16, Clause 7, which applies to amendments in the nature of a substitute of this type. And it's obvious from your expansion from 28 pages to 8.
Would the gentleman suspend?
Surely.
After I read this next line, the gentleman would have the opportunity to make the objection. So,
Sorry to jump
or
the gun,
to
but
raise
it's
the point of order on germaneness. Without objection, the amendment in the nature of a substitute shall be considered as read, open for amendment at any point, and considered base text for purpose of amendment.
Mr. Chairman, at that point, I would reserve an objection and raise a point of order.
This is the time you need to raise it, not reserve it.
Well, I'm reserving it because I'm hopeful that you'll give me an explanation that germaneness would apply the same way to Democratic amendments as you have applied it to your amendment in the nature of a substitute. And if that's not the case, and there's some possibility that our amendments will be rejected as non-germane, while yours, which is obviously non-germane, is okay to consider, I'm willing to withdraw the objection. Really was hoping to get more insight from you about your approach to germaneness and the vast change in this bill from Friday night, which gave us almost no time to prepare amendments or to be prepared to discuss its multiple provisions of a big, beautiful bill. And I'm hoping that the House rules will be followed more closely than the rule of law has been followed by the administration.
So the amendment in the nature of a substitute is germane. And we'll move forward as it being germane.
Mr. Chairman, I raise a point of order against further consideration of the amendment and request a vote on my point of order as described, that the amendment in the nature of the substitute is not germane to the base bill. It legislates on a different subject matter and has a different fundamental purpose from the bill that you noticed, and the burden is on you to show germaneness, and you've done nothing to show germaneness here. You've not only not met your burden, you've not even offered an explanation as to why you deviated from a bill of 28 pages and went to 389 pages with more new provisions than you had old provisions.
Okay, so the chair is prepared to rule that this is germane, so you're objecting to that and you want to...
I want a record vote on it.
Okay, so...
Point of order, Mr. Speaker, Mr. Chairman.
You can't entertain another point of order while this is pending.
Can I ask a question about this vote before us, before we vote?
It's not debatable or discussion. We're going to it.
No discussion of germaneness, in other words. You're just going to rule on germaneness with no discussion
Does
of
the
germaneness?
gentleman wish to be heard on his point of order on germaneness?
I do.
Proceed.
Oh, well, thank you very much. Mr. Chairman, I believe you are taking a very expansive view of germaneness when you add multiple provisions that are wholly unrelated to the 28 pages that you presented us on Friday evening. That Friday evening presentation seemed to be designed to minimize scrutiny of what you were doing. but not included in that 28 pages is any mention of SALT whatsoever, a matter that seems to have gendered some discussion in not only the Democratic caucus, but in the Republican caucus. Your expansive definition includes an entirely new $20 billion voucher system that seems to encourage parents to abandon our public schools. You help throw millions of Americans out of their health plan. You repeal all the renewable energy credits. That was not in Friday night, which have been generating so many new jobs, especially in Republican districts. You've given the Trump administration dangerous new authority to impose capital punishment on nonprofit universities, civic, and charitable organizations. And you have established a new category of tax-preferred savings accounts, which were not in the base bill. House Rule 16, Clause 7 is designed to help all of us on both sides of the aisle, as members of Congress, be prepared to legislate. It's designed to prevent hasty, ill-considered decisions. You know, Mr. Chairman, last Tuesday, it was Speaker Johnson himself who said that the legislation that we're considering right now would, quote, be the most important, the most consequential legislation that we'll ever be involved in our lifetimes, and arguably one of the biggest in the history of Congress. Shouldn't a matter of such importance, according to the Speaker, be in full compliance with the rules of the House of Representatives? At such a momentous measure, we ought to be complying with the House rules, and the precedents are clear. Under the House, there have been bills brought to the floor that have been rejected because they did not comply with the House rules. On Friday night, you set out what we were supposed to be prepared to legislate on Tuesday, and then hours ago, you totally altered it. If, as you and the President have been describing it, this is one big, beautiful bill, I have to say it's certainly hidden beauty. You certainly didn't want anyone admiring the flawless beauty very closely. By introducing a new subject matter not contemplated in Friday's base text and changing the fundamental purpose of measures before us today, this proposed substitute is manifestly non-germane. If you're rejecting the bill that you introduced on Friday night and asking us to consider this monstrosity, that is your right. But it is a right that can only be exercised after proper notice to us, which means giving members the requisite time to read, to understand it, and to prepare any necessary amendments, and to have the information that the ranking member referred to that we lack from the Joint Committee on Taxation. Mr. Chairman, I would just particularly address your attention to page 565 of the discussion of this rule in the House Practice Manual, which I brought along with me. Since under the House rules, you as the sponsor of this gigantic new amendment bear the burden of proof that it is germane to the underlying 28 pages, I would just ask you to explain how it is germane and assure us that if you're applying what appears to be a very liberal interpretation of germaneness, that you do the same for any amendment that may be offered by any member of the committee.
The chair is prepared to rule. The gentleman from Texas makes the point of order that the amendment proposed is non-germane. The amendment is in order, and the point of order is overruled.
Mr. Chairman, on that, I would ask for a record vote.
Could I have a point of clarification, please, Mr.
You
Chairman?
have to.
Oh, pardon?
You have to appeal the decision
I'm
of the chair.
appealing the decision of the chair and asking for a record vote on that.
Mr. Chairman, may I have a point of clarification?
It's no discussion, a pending motion.
I can't make ask for a point of clarification?
No. What is the, I mean, we can. What is the clarification?
I would like you just to clarify why the bill that you put in, the amendment in the nature of a substitute, is germane.
Because it is germane. Mr. Buchanan.
So there's no rationale behind it, just because you say so.
Go ahead. The gentleman, Mr. Buchanan, is recognized for a motion.
I move to table the appeal.
Because I said so?
The chair.
The clerk will call the roll.
Mr. Buchanan.
Yes.
Mr. Buchanan, yes. Mr. Smith of Nebraska.
Yes.
Mr. Smith of Nebraska, yes. Mr. Kelly.
Yes.
Mr. Kelly, yes. Mr. Schweikert. Mr. Schweikert, yes. Mr. LaHood. Mr. Arrington. Mr. Arrington, yes. Mr. Estes. Mr. Estes, yes. Mr. Smucker. Mr. Smucker, yes. Mr. Hearn. Mr. Hearn, yes. Mrs. Miller. Mrs. Miller, yes. Dr. Murphy. Dr. Murphy, yes. Mr. Kustoff. Mr. Kustoff, yes. Mr. Fitzpatrick. Mr. Fitzpatrick, yes. Mr. Stubbe. Mr. Stubbe, yes. Ms. Tinney. Ms. Tinney, yes. Mrs. Fishbach. Mrs. Fishbach, yes. Mr. Moore. Mr. Moore, yes. Ms. Van Dyne. Ms. Van Dyne, yes. Mr. Feenstra. Mr. Feenstra, yes. Ms. Malliotakis. Ms. Malliotakis, yes. Mr. Carey. Mr. Carey, yes. Mr. Yakum. Mr. Yakum, yes. Mr. Miller. Mr. Miller, yes. Mr. Bean. Mr. Bean, yes. Mr. Moran. Mr. Moran, yes. Mr. Neal. Mr. Neal, no. Mr. Doggett. Mr. Doggett, no. Mr. Thompson. Mr. Thompson, no. Mr. Larson. Mr. Larson, no. Mr. Davis. Mr. Davis, no. Ms. Sanchez. Ms. Sanchez, no. Ms. Sewell. Ms. Sewell, no. Ms. Delbene. Ms. Delbene, no. Ms. Chu. Ms. Chu, no. Ms. Moore. Ms. Moore, no. Mr. Boyle. Mr. Boyle, no. Mr. Byer. Mr. Byer, no. Mr. Evans.
No.
Mr. Evans, no. Mr. Schneider. Mr. Schneider, no. Mr. Panetta. Mr. Panetta, no. Mr. Gomez. Mr. Gomez, no. Mr. Horsford. Mr. Horsford, no. Ms. Plaskett. Ms. Plaskett, no. Mr. Swazi. Mr. Swazi, no. Mr. LaHood. Chairman Smith?
Yes.
Chairman Smith, yes.
The clerk will report the vote.
The yeses are 25, the noes are 19.
There being 25 yeses and 19 noes, the appeal is tabled. I will now turn to Tom Bartold, Chief of Staff for the Joint Committee on Taxation, Josh Sneed, Chief Trade Counsel, Patrick Dumas, Staff Director of the Subcommittee on Health, and Sean Freeman, Deputy General Counsel, to provide the technical description of the amendment and the nature of a substitute with an emphasis on the changes made since introduction. I ask that members hold their questions until after their presentations.
Chairman Smith, Mr. Neal, members of the committee, you have before you several joint committee documents, JCX 18, 19, and 20, which describe the mark as noticed, and more relevant for today's proceeding, JCX 21 and JCX 22R, which describe the chairman's amendment in the nature of a substitute with respect to the tax provisions of the legislation that's before you. The legislation makes a substantial number of changes. I'll try to briefly highlight a number of them. In general, as was noted in the opening statement, the legislation would extend and make permanent almost all of the provisions of Public Law 11597 that were otherwise scheduled to expire at the end of this year. While extending those provisions, it does make a number of modifications. So, for example, the rate schedule that was established in the 2017 legislation is extended and made permanent. The standard deduction that was increased in the 2017 legislation is extended and made permanent. And the Section 199A special deduction for pass-through businesses is extended and made permanent, but each of these is also modified in terms of the indexing that was the indexing of the thresholds of the breakpoints and the values under those provisions by providing an additional year of inflation indexing in the calculation of each year's indexed change. In addition, the standard deduction for 4 years from 2025 through 2028 has an increase in value of $1,000 for single taxpayers, $1,500 for head of household filers, and $2,000 for joint filers. The child tax credit, which is extended permanently by the legislation, has for 4 years, 2025 through 2028, an increase in value to $2,500, and also on a permanent basis, makes changes in terms of requiring Social Security requirements to be eligible to claim the child tax credit. The Section 199A small pass-through business deduction that I already mentioned has its deduction amount increased from 20 to 23%, modifies the test for the limit based on either wage or capital. And I want to point out that in the document describing this that was passed out to you, there's an error, 2 errors on page 22 where it incorrectly references 22% rather than the 23% deduction increase that I just mentioned. The estate and gift tax effective for 2026 will be have a $15 million exemption. That amount is indexed and is made permanent. The legislation repeals the old PEAS limitation on itemized deductions, but enacts in its place, effective for next year, a limit on the value of itemized deductions to 35%. That would generally affect only taxpayers in the top income tax bracket of 37%. In addition, the 2017 legislation had enacted a limitation on the deduction of state and local taxes, the so-called SALT limitation. The legislation before you would increase the current year $10,000 limitation to $30,000. This would be phased out for taxpayers with a modified adjusted gross income in excess of $400,000. And in addition, this legislation limits certain substitute payments such as pass-through entity taxes that a number of states have enacted to enable taxpayers to mitigate the effects of this limitation. The legislation before you also enacts an exclusion on tip income. The exclusion applies to tips that are reported on W-2 wage statements. It requires reporting requirements. It's available to both itemizers and non-itemizers, and this would be effective for years 2025 through 2028. The legislation also provides an income tax deduction for qualified overtime. This would apply to all taxpayers other than to highly compensated taxpayers. There are reporting requirements established under the legislation, and this provision would apply years 2025 through 2028. An additional increase in the deduction for taxpayers age 65 or older is provided for years 2025 through 2028. The increased amount is $4,000 per eligible taxpayer. It is phased out for taxpayers with higher incomes. The legislation also provides an exclusion of up to $10,000 of qualified automobile loan interest for vehicles that are assembled domestically. This interest exclusion would apply for years 2025 through 2028. The legislation also increases the amount of refundability of the adoption credit to up to $5,000 on a permanent basis. There is an error in the description in the document that was passed out before you. To be clear, this provision would be effective for years after 2024. The charitable deduction, the limited charitable deduction for non-itemizers is reinstated, I should say, in this legislation. It applies for years 2025 through 2028. On business provisions, the legislation enacts effective for property placed in service after January 19th, 2025 and through the end of calendar year 2029, 100% bonus depreciation. The legislation also provides for full expensing of domestic research expenditures under Code Section 174, again, applicable for years expenditures incurred in years 2025 through 2029. The legislation reinstates the adjusted income limitation on deductible business interest by reference to EBIT rather than EBITDA, again, effective for interest payments in 2025 through 2029. The legislation freezes and makes permanent the current levels of the deduction amounts under the FDII and the GILTI and the tax rate under the BEAT regimes. For manufacturing property, for years 2025 through 2032, 100% depreciation is permitted. This is generally for property, for structures that are engaged in manufacturing activities. A second round of opportunity zones is established with an emphasis on increasing the number and opportunities in rural zones. The legislation increases the expensing permitted under Code Section 179, generally applicable to smaller businesses, to $2.5 million. The legislation also repeals just garbled that, forgive me. The legislation establishes a tiered structure, an increased level and tiered structure of excise taxes on university endowments and private foundations. It creates a new code section 899, which provides remedies against unfair foreign taxes. Generally, this would increase certain taxes already in the code, such as the BEAT, gross basis withholding, and it would apply to individuals and corporate residents in those countries that are deemed to have discriminatory tax regimes. And the legislation would also establish a new excise tax on remittances from persons in the United States paid to persons in another country. There's many other provisions in the legislation. I'd be happy to answer any other questions that the members might have. It's just a general overview. Again, happy to answer questions the members might have.
Thank you. Mr. Sneed, you are recognized.
Thank you, Chairman Smith, Ranking Member Neal, and members of the committee. I have simply one trade provision to cover today. Section 112031 modifies Section 321 of the Tariff Act of 1930, which is commonly referred to as the de minimis law, in two ways. First, it adds a new penalty provision applicable to violations of U.S. law through de minimis shipments. The level of penalty is up to $5,000 for the first violation and $10,000 for any subsequent violation. These penalty levels are the same as those included in Representative Murphy's bill that this committee marked up in April of 2024, and also are the same as those included in former Representative Blumenauer's de minimis bill. The effective date for this penalty provision is 30 days after enactment. Second, it repeals Section 321A2C of the Tariff Act of 1930, which provides an $800 threshold value for de minimis shipments and is the provision under which commercial shipments currently may qualify for de minimis treatment. The effective date of this change is July 1st, 2027. The separate provisions in the statute providing de minimis treatment for bona fide gifts or for articles accompanying persons arriving in the United States remain unchanged. This concludes my walkthrough, and I welcome any technical questions.
Thank you. Mr. DeMaw, you are recognized.
Thank you, Chairman Smith, Ranking Member Neal, and members of the committee. The amendment in the nature of a substitute contains three provisions amending Medicare statute. Section 111-201 amends Sections 1861 and 1834 of the Social Security Act to allow otherwise eligible facilities that closed between January 1st, 2014 and December 26th, 2020 to reopen under the Rural Emergency Hospital designation. Section 112-104 adds a new section to Part E of Title 18 of the Social Security Act to limit Medicare benefit eligibility only for U.S. citizens, lawful permanent residents, certain Cuban individuals, and individuals living in the United States through a compact of free association. Section 112-204 adds a new section to Part E of Title 18 of the Social Security Act to require the Secretary of Health and Human Services to contract with artificial intelligence vendors and data scientists to identify, reduce, and recoup improper payments under Medicare and report on such progress. This concludes the technical walkthrough of the Medicare provisions of this title.
Thank you. Mr. Freeman, you are recognized.
Thank you, Chairman Smith, Ranking Member Neal, and members of the Committee on Ways and Means. In addition to the matters covered by Mr. Bartold, Sneed, and Dumas, and in compliance with the reconciliation instructions provided by House Concurrent Resolution 14, the Chairman's amendment in the nature of a substitute includes a provision that increases by exactly $4 trillion the general limitation on public debt imposed by Section 3101 of Title 31 of the United States Code, and that was most recently reestablished on January 2, 2025, following a debt limit suspension period that ran from June 3, 2023 through January 1, 2025, in accordance with Section 401B of Public Law 118-5. Thank you, Mr. Chairman, Ranking Member Neal, and members of the committee. This concludes my walkthrough, and I welcome any technical questions related to this provision of the amendment in the nature of a substitute.
Thank you. Does anyone wish to ask a technical question? Mr. Neal.
Thank you, Mr. Chairman. Mr. Barthold, let me start with a simple question. What has the JCT reported as the fiscal impact of this bill that's being considered by the committee today?
Mr. Neal, as reported, the tax provisions only are in JCX 2225R, which is made available to all the members. And we reported the total for fiscal years 25 through 2034 as minus $3.819 trillion.
Thank you. As you know, it's the standard practice for JCT to report the cost of tax bills over a 10-year budget window. I've noticed that the document that you cited, that in one of those 10 years that included fiscal 2025, even though that fiscal year is now almost over, would a bill that is being considered in May of 2025 normally include 2025 in the budget window? And similarly, wouldn't that score instead include the year 2035 in the window?
Mr. Neal, in the routine course, we would report through 2035, consistent with the Congressional Budget Office macroeconomic baseline for the budget period. The reporting here is under the rules for the current budget reconciliation provision.
Instructions.
Resolution. Yes,
Instructions? Okay. So let me ask you this, then, Tom. Has JCT prepared an estimate of what this bill would cost under our standard budget window rather than the bespoke budget window that's been requested by the Republican colleagues?
I do not have that at this time. We will be working on that, and it will be provided to all the members of the committee as soon as we are able to do so.
So looking at those numbers, Tom, it seems clear that if my colleagues use the standard budget window, the cost would be well in excess of $4 trillion. And that's not even counting the gimmicks that have been used to make much of the policy temporary. So let me move on to the Republican claims that, notwithstanding the eye-popping JCT score, which, by the way, is even higher than I thought, of this bill, that they're being fiscally responsible. Now, one of those ways in Republican claims that these tax cuts will drive so much growth that they will increase revenue. In fact, Mr. Barthold, the chairman of the Budget Committee, claimed that the tax cuts that you see here would drive so much economic growth that it would generate $2.6 trillion in additional revenue. Let me ask you this, Mr. Barthold. Does the JCT believe that the growth from these tax cuts will generate $2.6 trillion in revenue?
Mr. Neal, under House rules, this legislation before you'd be considered major fiscal legislation and require us to undertake a macroeconomic analysis. We have started that, so it's probably inappropriate for me to prejudge the result of that analysis.
So how about $1 trillion?
Well, again, I shouldn't prejudge the result of the analysis.
How about $500 billion?
Again, I should defer and let my colleagues do their work, and we will report that to the House.
So you're pretty good at this. Worked with you for a long time. The effects of these tax changes on the economy are really not in front of us right now. But there's no one I'd trust more about cutting the edge of the research that's done by JCT. So with that in mind, maybe you might be able to name a respected economist other than those that are on this dais. That has anybody suggested that these tax cuts being considered today would raise $2.6 trillion in revenue?
Mr. Neal, I have read news accounts from economists who have said that there would be large increases. I believe the White House's Council of Economic Advisors has. I do not recall the specific.
That's really important that they would say that, yes. Okay. So let me ask you this. have you even seen a CBO score that's done a study showing that what these deficit-financed tax cuts will actually reduce growth?
Mr. Neal, I have read the report that you're referencing. The issue is, does additional borrowing, particularly in the short term, crowd out some potential for private investment, which could diminish future growth?
So I'm assuming, Tom, that when this analysis comes in way, way, way below 2.6 trillion, our colleagues across the aisle will accuse you of having no idea what you're talking about. But let me say this. We value the honesty that has come from JCT, and the facts still matter to us. This is going to blow another massive hole in the budget debt because of the borrowing from 2017 to the $4.5 trillion that will be borrowed when they raise the debt ceiling because of this legislation. Yield back my time, Mr. Chairman.
Additional members have technical questions. I'll recognize myself for a technical question. Mr. Barthold, I want to ask you a couple questions to make sure we all understand the scope of the no tax on overtime proposal that's within the legislation. A good friend of mine in Missouri is a hardworking lineman for the electric co-op. He makes $40 an hour for an annual salary of just a little over $75,000 a year. Under this policy, is my friend eligible for the new overtime tax deduction?
Yes, sir, he would be, because the only taxpayers that would be excluded are those that were considered highly compensated as defined in the prior year. Highly compensated, I believe the threshold at present is $160,000. So your friend the lineman would surely qualify.
So he often has to work overtime. Last year, he worked more than 300 hours of overtime. If I have this right, he could claim a deduction for his premium pay, which would be $20 per hour, multiplying that by 300 hours, and you get $6,000. He could claim that $6,000 deduction in addition to the standard deduction. Mr. Barthold, do I have that right?
That's correct, Mr. Chairman.
Thank you. That is real tax relief for one of the hardest working people that I know in my congressional district, and there are millions and millions of workers like him across the country. Additional technical questions?
Mr. Thompson.
Mr. Snyder.
Thank you, and Mr. Barthold, thank you. I'm grateful that Ranking Member Neal clarified the so-called official score of this bill, significantly underestimating the true cost. Just to emphasize, what is the standard window normally used in evaluating legislation? How many years?
We hew to the Congressional Budget Office's 10-year baseline, which would, the present macroeconomic baseline runs through fiscal year 2035.
And just to be clear, that's not what's done here. It's a shorter window on this.
Under the budget resolution's instructions, we're looking through fiscal year 2034.
So cutting off a full year of what this would actually cost. I think there's other real costs. It seems like my colleagues on the other side either willingly or naively are deluding themselves, believing that they're doing something fiscally responsible. Part of that comes from the mind-boggling number of $2.6 trillion made up out of whole cloth. But another part of the delusion comes from the fact that so much of this bill is temporary. And we've seen this script before. In fact, we're talking about here, in the 2017 bill, the Republicans put all sorts of arbitrary and artificial cliffs into the tax bill back in 2017. And yet here we are today pretending like those don't exist. Virtually everything that either had a sunset or is now being, if it had a sunset, it's now being extended. Tax increases that were to go into effect on a delayed basis are now being turned off. The real question is, why on earth would we think that the Republicans on the other side of the aisle would change their behavior at the end of these sunsets? Mr. Barthold, let me ask you this. Has JCT estimated the cost of this bill if all the provisions with artificial sunsets are indeed made permanent like they're doing to the 2017 bill?
Mr. Snyder, at present, we have not. Now, I can reasonably, I can prepare and deliver to the members estimates of making permanent those provisions that are identified as temporary, but we have not worked on the interactions that would be involved. So each estimate would be as a standalone. If you were to make the exclusion for overtime permanent, what would that be? If you made the exclusion for tips, what would that be? But we have not worked the interaction effects of how that plays in with both of them together, interacting with the changes in the standard deduction and the rate schedule.
Is that something?
But I can prepare, and we will deliver to all the member offices during this markup, unless the markup concludes in the next 45 minutes.
Right. No,
that information.
I'm confident it won't conclude in 45 minutes, but that would be useful because we have seen what they did last time. They're making permanent as if there was no cost. And just to be clear, if we can get those numbers on the traditional 10-year budget window, so we're seeing the normal.
Mr. Snyder, I don't have anything run out through 2035. Best I'll be able to do tonight is through 2034.
Well, maybe later we can look at that.
Yes, sir.
And looking at the numbers, some of the scores the committee has gotten in the past in these policies, it's pretty clear that we are, or the Republicans will try to make everything permanent. And the estimate, the Committee for a Responsible Budget is saying that it will cost well over $5 trillion. Over a 30-year period, the estimate is that these will cost $45 trillion, adding $45 trillion to our national debt that already sits at $36 trillion. That is an unfathomably large number. And just to put it maybe into a context, and maybe instead of using dollars, we should be using astronomical units. Just as an example, the nearest star to us, Proxima Centauri, is 25 trillion miles away. You could travel to that star, but it would take 4 years traveling at the speed of light. Travel there and back, and you would have the size of the debt that we will have in 30 years because of this bill. So in a few short months, you know, we're adding to the deficit, we're adding to the debt. The president's failing trade and economic agenda has already devastated the economy, putting small businesses over a barrel, raising costs for working families. Many economists are warning of the potential for an economic downturn or an impending recession. That really should concern us all. I want to take a minute to talk about the broader impacts of a potential recession on our economy. Mr. Barthold, in previous recessions this economy has endured, what were the impacts generally on revenues for the fisc, of tax revenues?
During recessions, sir?
During recessions?
Generally, income tax receipts decline, sometimes quite substantially. Also, payroll tax receipts, as unemployment rates increase, payroll tax receipts decline.
So it's really more than just income tax, it's across the board, which should raise concerns for all of us in light of the chaos and havoc we're seeing from the president on the economy. It's not just me saying this. Goldman Sachs has said it, Bank of America has said it, so many economists are predicting that we are headed towards a recession.
Mr. Snyder, your time has expired by more than 1 minute.
Well, I yield back. Thank you.
Thank you. Mr. Thompson?
Thank you, Mr. Chairman. Mr. Barthol, are you going to have will we have distribution tables before this hearing's over today?
Mr. Thompson, members of the committee, yes, my colleagues are trying to finalize the distribution table.
How long do you think that will take?
90 minutes?
90 days?
90 minutes.
Okay, thank you. Mr. Barthol, the bill that we're considering today, how many people will lose their health care if this bill becomes law?
I'll have to get back to you in a second after I check with my colleagues. I do have a note of some work that we have done.
13 plus million close?
If by the bill you mean the actions under the entire budget resolution,
Correct.
which involves work from
Correct.
the Energy and Commerce Committee. I'm not familiar with what's happening in energy and commerce and the effects of that. Do you know some of the effects within the tax
Does the bill that we're
provisions
marking
we have?
up today add to our national debt?
Again, the tax provisions only, Mr. Thompson, as I responded to Mr. Neal, over the budget period, would reduce revenues by approximately $3.8 trillion in our estimation.
So a
it would
minimum of
increase
$2.8 trillion to our
Three-
national debt.
3.8.
Does the bill that we're marking up today end tax on Social Security?
The legislation under reconciliation does not change any benefits or taxes paid into the trust funds for Social Security.
Thank you. So in 2024, for the first time, our interest expense exceeded our discretionary non-defense spending. In 2035, CBO projects our total defense and non-defense spending will be $2.2 trillion. $2.2 trillion. And our interest payments will be $1.7 trillion. That's a scary fiscal picture. Mr. Barthol, you reported the cost of this bill to Mr. Neal as $3.8 trillion. But we know that, as Mr. Neal and Mr. Snyder both pointed out, the real cost is more like $5.3 trillion. So that being said, I'd submit that even the $5.3 trillion number isn't the real cost because, and Mr. Bartholt, tell me if I'm correct, that the cost cited in the conversation that you had didn't include any additional interest the government will have to pay to service all this new debt. Is that correct?
That's correct, Mr. Thompson. We do not report on changes in interest that will be required if the debt increases.
Thank you. And then, Mr. Barthol, why should our committee or why should the American people care about interest payments on the debt? What's the economic impact of the growth of interest payments?
Well, Mr. Thompson, the growth of interest payments, as you just pointed out, they're a cost to the federal government. They potentially crowd out other items that members might think are worthy in terms of fiscal activities of the federal government. It's an increase in government outlays, which either at some point should be offset by increased revenues or reduced spending, a combination of both.
Thank you. So make no mistake about it, Mr. Chairman and colleagues. What the committee is dealing with here is a deficit finance tax cut, which will cause soaring interest payments. This is a fiscal tenuous moment for our country. Our debt and our deficits are soaring, and our interest payments will as well. Without a doubt, crowd out any growth aspects you might hope to receive from this tax bill. We could have gone a different way here today. We could have worked together to protect 98% of Americans who earn under $400,000 a year. We could have ensured that they wouldn't receive a tax increase and work together for a responsible way to pay for the cost of that smaller bill. Instead, we're maxing out our credit card, passing the debt on to future generations, and then also applying for 3 more. This is the height of irresponsibility, and I can only hope we don't pay for this in the credit markets, although I remain hopeful. I am concerned. Thank you, and I yield back.
Mr. Arrington.
Thank you, Mr. Chairman. I'm sure my friend and colleague, Mr. Thompson, would like to know what the interest rates in terms of U.S. Treasuries have increased over the last 4 years since President Biden was in office. Mr. Barthol, do you know what those, what our payments on our debt was when President Biden took office?
Mr. Arrington, I'm afraid I don't have.
Does roughly 300 billion ring a bell sound relatively close?
Again, Mr. Arrington,
it was around $300 billion. Do you know what it is? Do you know what it was when President Trump took over after 4 years of 40-year high inflation after a record spending spree. Do you know what those payments are today? It's almost $1 trillion, just to kind of cut to the chase. So we're talking about triple the interest payments because of the policies of the previous administration. So we'll see what we as Republicans with unified Republican leadership can do about that. But so far, the prices have come down. The recent inflation reports, do you know, Mr. Barthow, what those are? Are they going up or down in terms of inflation? Core inflation.
Core inflation has moderated, is still slightly above.
Moderated in terms of it's slightly going down?
It's coming down closer.
Yeah, in 100 days, that's pretty remarkable to me. Core output, is core output going up or down in terms of economic output?
The gross domestic product has continued to grow in real terms, sir.
It continues, so we're growing that. And do you know about the job participation rates? For the last 4 years under the Biden administration, they've been below what we had pre-COVID. Are they going up in terms of people going back to the workforce or going down?
I honestly do not know the current labor force participation
They're
rates. So I'd have to
slightly
look them
up and improving. We're talking about 100 days into this new administration. My friend and ranking member made mention of the growth rate assumptions, suggesting that they, I think fairly suggesting that they were not, I mean, I hope this is fair to say and to characterize, suggesting that they were.
When the gentleman finishes, I'll say we're not there.
That they were not based in any rationale of accomplishment in any recent historic terms. 50 years, what's the average of 50-year GDP growth in this country? Do you know what it was, the average annual growth rate in this country over the last 50 years or 30 years?
Historically, there's a break in post-World War II growth noted about around 1973 to 1975, at the time of the oil crisis and stagflation.
So the average is
so
3%.
I was going to say it's lower now than it was from 1945 to 1972.
Yeah, so it's 3% roughly, and there were a couple of decades where we had over 4%. Do you know what the annual average growth rate was for this country and our economy under President Biden, controlling for the first year $2 trillion, sort of flooding the market with spending? So do you know what the last 3 years were, annual average growth rate for President Biden?
I don't have those figures.
It was
at my fingertips.
2.7%. Do you know what the growth rate, annual average growth rate of President Trump was before COVID?
Again, I don't have those figures.
It was 2.8%. Do you know what the assumption was of the Budget Committee in terms of the annual average growth rate for the purposes of budget reconciliation? 2.6%. So we are actually more conservative than both President Biden or the growth rate under President Biden and under President Trump. Remarkable, isn't it? So do you know, last question about growth rates. Do you know what the growth rate increase was from when President Trump took over, when it was at 1.8%, and just prior to COVID under President Trump and unified Republican leadership? Do you know what that delta was in terms of growth?
Again, Mr. Arrington, I don't have those figures here at the table.
It was 1%, which was the 2.8 on average. Ours was 2.6. If we'd have maintained 1%, we would have had $3 trillion in additional revenue. Did we have record corporate revenue after TCJA for the following year or two?
Yes, sir, we did.
Okay.
Corporate receipts.
Record revenue, record low unemployment, and record low poverty rates, record investment, record repatriation, record job growth, 1% GDP growth, and an annual average of 2%. I'm just...
Will the gentleman yield?
The gentleman's time's expired, but I'll call on you next.
Thank you. My time's expired.
Oh, thank you. Thank you. Mr. Neal.
Thanks, Chairman. So what the gentleman has suggested record this, record that. No, none of what he has suggested comes close to what was produced during the Clinton administration. None of it. Record growth, 4 balanced budgets, poverty down, revenue through the roof. So that's simply a misstatement of fact. I yield my time back.
Mr. Horsford.
Thank you. Mr. Bartold, is there anything in the current no tax on tips section that would stop a related party, like a family member, from calling a $20,000 gift payment a tip just to get the tax break?
Mr. Horsford, the legislation does have several guidelines. One, tips generally have to be qualified, have to be reported by an employer on a wage statement, a W-2. Also, tips are only qualified tips if they're in industries in which tipping has been historically customary. So, for example, a hospitality industry. So, just any employee could not readily claim that some income was tip income.
Thank you, Mr. Bartold. And I do know that there are a number of necessary guardrails to ensure tips are not used as a loophole. And while I'm glad to see that the no tax on tips is in the bill, albeit temporarily, I would ask that my Republican colleagues join me to prevent tips from being used as a loophole. And so we'll be coming back to that later. Mr. Bartold, my concern overall is that this bill benefits the wealthiest. Millionaires are getting a tax cut while those earning under $50,000 per year are getting just pennies. Meaning the people of Beatty, Nevada, in the rural part of my district, whose median income is $24,000, are getting pennies while billionaires are getting gold bars. But I think there's even more to this story than that. Mr. Bartold, can you briefly describe for the committee what this bill does to the estate tax?
Under the legislation before you, Mr. Horsford, it increases the exemption amount to $15 million effective for gifts and estates for bequests in 2026, and it indexes that $15 million amount. That's an increase relative to present law. For 2025, the estate and gift tax exemption amount is $13.99 million, just under $14 million. It also is indexed. If it were extended with indexing, it would be somewhere in the $14 million range for 2026. So it's an incremental increase beyond simple extension of what was enacted in the 2017 legislation.
So, and how much did that cost?
The 2017 legislation, I'd have to look up. I don't recall offhand, but our estimate for the effect of the legislation that's before you is $211 billion over the period 2025 through 2034.
Thank you. And are those changes to the estate tax outlined here reflected in those distribution tables?
Because the estate tax is, this is a real wonky answer, it's a tax on a stock, a transfer of wealth, and everything else that we're looking at is really looking at flows, be it a flow of income or a flow of consumption if it was an excise tax. It's not really cricket to weave the two together. That's a long answer to say the answer to your question is no. Changes to the estate tax will not be reflected in the distribution tables that I'll be making available later in the day.
Thank you. So these aren't in the distribution tables, but the benefits certainly go to well-off individuals. Let me ask you this, Mr. Bartold. For 2022, the last year for which you have data, how many people paid the estate tax who had an estate of over $100 million?
I'll have to respond later to you on that. I know that we've done some analysis
I believe
on
it's
that.
approximately 200.
I will respond to all the members of the committee and give them a figure.
Doesn't this bill give those $100 million plus estates, doesn't this bill give those estates tax benefits of millions of dollars?
Absent this legislation, the estate tax exemption would fall substantially. So yes, it would provide an additional exempt amount for all large estates and more modest estates as well.
So thank you. So clearly the estate and gift tax provisions benefit very wealthy taxpayers. Isn't it fair to say the JCT data underestimate just how much this bill benefits wealthy taxpayers then?
Again, as I explained why we don't distribute the effects, but it does not reflect the effect of transfers of wealth. That's correct, sir.
So let's then turn to the other side of the distribution tables then, the lowest end of the income scale. Mr. Bartold, there are other committees that are also have instruction around the reconciliation process. And one of those committees, the Energy and Commerce Committee, has an instruction to raise $880 billion. How are they going about doing that?
Mr. Barthold, I'll let you respond to this, but we're a minute over, and I just let him respond, and then your time has expired.
Mr. Horsford, I'm really not up to speed on what's going on in the other committees. This committee's been keeping us fairly busy.
Well, they're Medicaid cuts. It's the largest cut to health care in the history of the country. That's what's happening in the other committee. The exact same time this committee is marking up the biggest tax cut for billionaires. I yield my time.
There was nothing to yield. Mr. Doggett?
Thank you. Thank you very much, Mr. Chairman. Mr. Barthold, I just want to be sure that it's clear the enormity of what's at stake here today. Now, you've indicated, I believe, that the tax cuts you estimate at $3.8 trillion. Is that correct?
That's correct, as reported on JCX 22R.
If they're made permanent, it's $1.4 trillion more.
Have not made that estimate. We'll be getting supplemental
Committee for a
information.
Responsible Federal Budget has, and of course, that's not even considering interest. We had over $1 trillion in interest payments this past year, more than defense. And we're going to have hundreds of millions of dollars there. And just to understand how big that figure is, it's about, if you make these tax cuts permanent, it's about twice the size of the entire Social Security Trust Fund. That's what's at stake. It's more than the entire gross domestic product of Germany, the strongest country in Europe. Now let's talk about the enormity of the harm that is being done to people on their health care. Is it correct, Mr. Barthold, that this legislation fails to extend the enhanced tax credits that lower the cost of insurance for millions of Americans who purchase their own coverage through the marketplace?
That's correct.
And when the
Mr.
Republicans permit these credits to expire in a mere 7 months, what is the effect on health insurance premiums for those individuals that rely on the marketplace today?
Work that our staff has done in conjunction with the Congressional Budget Office suggests that the premiums will increase for individuals, sir.
Yes, sir. They go up about almost 8%, I believe is the specific calculation that you did. And is it true that this failure on the part of Republicans will raise premiums not just for those, not that they'll raise them really for nearly everyone in the marketplace, not just for those who receive the subsidies?
That's correct. That's part of the analysis.
If my understanding is correct, failure to extend this policy will result in an increase in the number of uninsured Americans. Is that right?
That's correct, sir. That's
yes, sir. And I've received data. In fact, Mr. Chairman, I'd ask unanimous consent to include this letter from CBO saying that 4.2 million Americans will lose their coverage in 7 months if you are successful with this bill.
Is it germane?
Well, I guess that's the question. And germaneness, Mr. Chairman, goes to another question I have for Mr. Barthold, because Mr. Barthold tells us he cannot tell us the macroeconomic effects today cannot tell us who gets what out of this bill. We think it's mostly billionaires, but who gets what? Because, Mr. Barthold, you only got this full bill within the last 24 hours or so yourself, didn't you?
Well, Mr. Doggett, I think you know that we do work with the chairman
sure
and as they develop policies.
Yes.
But yes, the
I'm
final
sure
legislation was
you didn't have the final
yesterday.
bill till yesterday, and that's one of the other reasons it's so important to comply with all the rules of the House rather than to break them as has occurred today. Now, let me ask you also about another entirely different section of the bill concerning the energy ITC and PTC provisions, these investment credits that have been so important. If I understand it, over the past 15 years, when clean energy production and investment credits were being guaranteed so that someone could begin construction, that you consider the year facilities are placed in service, not the year that the construction began. Is that correct?
Yes, that's
And with all the unpredictability of Trump's up and down tariff taxes, the supply chain difficulties, and the natural disasters that are made worse by climate change, all this chaos, no project developer worth his salt can actually guarantee when their facility will be placed in service, can they?
there is more substantial uncertainty, yes, sir.
Under current law, if a taxpayer started construction, say, on an offshore wind facility on January 1st of this year and maintained continuous construction, would they be eligible to claim the credits if their facility was placed in service in 2032?
Yes, sir, under the begin construction rule.
And if the proposal today was amended to maintain the 15-year precedent, these credits are based on when the construction begins, but Republicans still chose to phase the credit out, say, in 2028, would the taxpayer still be eligible? Yes.
No, sir, not if it's phased out.
Well, wouldn't it be based, if you maintain it the way it is
Oh, under
today,
begin
they would be
construction, yes, that's
Instead,
correct,
under
sir.
the text before us today, the value of the credit they'll be entitled to by changing that is zero, right?
Yes, sir.
They get no benefit. We reject a 15-year way of handling these important facilities, many of which may already be under construction. They're doing their due diligence. They're proceeding with their construction on a continuous basis, but suddenly this bill will wipe them out. Thank you, and I yield back.
The gentleman yields back, and I recognize Mr. Miller for 5 minutes. Mr. Miller is recognized for 5 minutes.
Thank you, Chairman. My friends across the aisle appear to be opposing tax cuts for all Americans just to spite President Trump. But, Mr. Barthold, is it true that doubling the standard deduction in 2017 helped simplify the tax code and lower taxes for millions of Americans?
Yeah, Mr. Moore, the increase in standard deduction reduced the number of itemizers substantially from around 1/3 of tax filers to in the neighborhood of 10 to 15%. And many people consider that a substantial simplification.
So the answer is yes. Thank you, Mr. Barthold. Now, my Democrat friends oppose this bill. What happens to the standard deduction that so many everyday Americans rely on if this bill passes and this provision expires, Mr. Barthold?
Could you run that back if the standard deduction is not extended?
That is correct.
If the standard deduction is not extended, a substantial number of taxpayers, again, will probably choose to itemize, requires additional record keeping, generally more complexity, probably back up again above 1/3 of tax filing units would be itemizing.
Thank you. And for what we have within this bill, we added for a year of inflation. Is that correct within the standard deduction?
The standard deduction, the rate bracket points, a couple other provisions modified the inflation adjustment, effectively giving an extra year of inflation in the calculation, increasing those values.
Thank you. So we accounted for inflation and added it for an extra year. I appreciate that. So essentially, we have a 4-year boost, would you say, from 1,000 to 2,000 starting in 2025?
Well, inflation is calculated year over year. It's just that you're getting an extra year's boost from the relative to that base.
Thank you. So it's still 1,000 to 2,000. So the answer is yes. This is incredibly helpful for our constituency as the vast majority of the country uses standard deduction In the Ohio 7th Congressional District, 93% of my constituents use standard deduction. So if this were not to continue, 93% of my constituents would be hurt by this expiration. Is that correct?
93% would have a smaller standard deduction. Not everybody necessarily has would have an increase in taxes because of the other provisions that would be expiring. But yes, a substantial number of people would lose the benefit of the higher standard deduction.
Thank you very much. I yield back.
The gentleman yields back. I now recognize Ms. Sanchez for 5 minutes. Oh, excuse me, Ms. Delbene. My apologies.
Thank you, Mr. Chairman. Thank you, Mr. Bartold. I wanted to talk to you about the child tax credit. You likely recall the changes Democrats made to the child tax credit as part of the American Rescue Plan. Back then, we increased the value of the child tax credit to $3,000 per year and $3,600 per year for young children. Mr. Bartold, is that number, those numbers, higher or lower than what is proposed by Republicans in this legislation?
This legislation for a temporary period would have a child tax credit at $2,500, so lower.
It's lower. And Democrats also ensured by making the credit fully refundable that the full credit went to all taxpayers, especially the ones with the lowest incomes, the families that arguably need the credit the most. Mr. Bartold, does this Republican bill ensure that children in the poorest families receive the same assistance as children in families that make $400,000 a year?
No, Ms. Delbene, there is a phase-in of the credit which is based on earned income. So it's limited by, the refundability is limited by the amount of the household's earned income.
Thank you. So no, under this bill, a family making $400,000 per year gets $2,500 per child, but a struggling family where maybe there was a job loss or even a family when both parents are working full-time earning minimum wage but are still scraping to get by, they just get a fraction of that. Mr. Bartold, does JCT know how many low-income children won't receive the full value of the $2,500, the $2,500 credit under the Republican bill?
I think I can provide the committee with an estimate of that. I don't have that at my fingertips, but I will get an estimate to the committee.
And it's true that some children, even if they have Social Security numbers, may not get access to the credit.
Again, for the point that you raised, Ms. Delbene, because there's a limitation on refundability based on the earned income of the household, there can be some households where there's not full refundability.
Lastly, the American Rescue Plan ensured that taxpayers would get delivery of the child tax credit on a monthly basis to ensure that funds were available to meet families' monthly needs. Does this bill do that?
It does not provide for monthly refundability, no.
And also under this bill, if a family has a baby on January 1st, does that family receive the child tax credit before the child turns 1 year old?
No.
But
and if a colleague did just pass me the information that we have on number of children with Social Security numbers who would not receive the full value of the $2,500 child tax credit, and our estimate of that for tax year 2026, so next year, would be approximately 17 million children.
Thank you. Astounding number. And then if a family had a baby in November, would they receive the child tax credit before the child turns 1 year old?
Yes.
So inconsistency depending on the time of the year, also in the legislation Republicans are proposing. So it certainly seems like the child tax credit in this bill is woefully inadequate, does not reach all the children and their families who have needs, and does not prioritize children in families who need it the most. Thank you. I yield back.
Mr. Baney, would you yield?
I yield to Mr. Thompson.
Thank you. Mr. Barthol, my friend from Texas has made the point that middle-class folks are going to get something out of this and got something out of the last bill. Isn't it true that this committee can write a tax bill that benefits people in that proverbial middle class, people who make less than $400,000, without having at the same time to give a huge tax cut to the richest people in the country?
Mr. Thompson, the members have often chosen to limit
Can we do that?
benefits.
Can we write a tax bill that targets the middle class people?
Of course, you can design policy to target as the members choose.
Without a big giveaway to the richest people, people who don't need the help right now.
As I said, decisions for the members to make, sir.
Thank you. I yield back.
Gentleman yields back. I now recognize Ms. Sanchez for 5 minutes.
Thank you, Mr. Barthold. The title of Part 2 is Removing Taxpayer Benefits for Illegal Immigrants, but I think that title does not match the actual language of the bill. Mr. Barthold, my understanding is that these sections make changes to whether lawfully present individuals can access premium tax credits. Is that correct?
Yes, Ms. Sanchez, that's correct.
So we are talking about lawfully present individuals.
Yes, Ms. Sanchez.
So lawfully present individuals are not illegal immigrants, are they?
No, they're lawfully present.
Okay, so the title, Removing Taxpayer Benefits for Illegal Immigrants, is actually false, patently. Yes?
Well, I didn't make
It's
the title.
inconsistent. Is it inconsistent?
I think you established that under the legislation, there could be some lawfully present individuals who are denied.
Do these sections make changes to illegal immigrants' eligibility? Are any of the categories of immigrants covered in this section those that are illegally in the United States?
Those such individuals already are not eligible, Ms. Sanchez.
Correct. Illegal immigrants are not eligible, but I'm asking whether or not the sections in the text of the bill that we are marking up today make any changes to illegal immigrants' eligibility.
No, they do not.
No, they do not. Are any of the categories of immigrants covered in this section those that are illegally in the United States?
No.
No. So the title is patently false and misleading. Do these legally present individuals pay taxes, generally speaking?
The lawful residents present in the United States can have jobs. They may pay payroll taxes. They may pay income taxes.
So generally speaking, if they're in the country legally and they're working, they generally pay taxes.
There will be some. There will certainly be some taxes paid. Yes.
Okay. So the title of Part 2, Removing Taxpayer Benefits for Illegal Immigrants, is patently false. It's misleading. But this section, nevertheless, is removing benefits for legally present individuals. And I would note that a similar change is made with respect to Medicare, again, pertaining to legally, lawfully present individuals. Is that correct?
I don't know about the Medicare piece, Ms. Sanchez, but yes, related to the provisions here in the Internal Revenue Code.
Okay, so they're saying they're taking away these benefits from illegal immigrants, but this section solely deals with lawfully present people who are paying taxes into the system and now are going to be denied those benefits. Really great work, guys. Mr. Barthold, can you describe the rules that the Republicans placed on the child tax credit related to identification requirements when they enacted their bill in 2017?
Pardon the delay. In the 2017 legislation provided that the child had to have a Social Security number.
The child had to have a social, so proving that the child is in fact a citizen. Can you explain the rule that has been added to this bill in contrast to that bill?
Both the child and the taxpayer and taxpayer's spouse have to have Social Security numbers.
So under this rule that's in the text of the bill today, a child with a Social Security number, a citizen of the United States, is going to be denied the vital support of the child tax credit that the child tax credit provides if one of the parents doesn't have a Social Security number.
That's possible, Ms. Sanchez, yes.
Okay, can the GCT, I don't think that's possible. I think that's the whole purpose of this section of the bill, is to penalize these children even though they're United States citizens. Can JCT provide this committee with a number of the citizen children that will be denied the child tax credit as a result of this provision?
Yes, but it'll probably take me a couple of minutes to find it.
Okay, I'll let you do that calculation, but I just want to make this last point in closing.
Okay.
In the 2017 tax bill, we were told many things about how great that bill was, and we were sold on the many benefits I might add, that never materialized. One of which was that it was going to be so easy that people were going to be able to file their income tax on a postcard. Mr. Barthold, do people file their income taxes on a postcard?
Ms. Sanchez, no to the postcard, and
no to postcard.
And my colleague did provide an estimate that we have developed in answer to your question, and we estimate, again, looking ahead a year, 2026, we estimate that approximately 2 million children with Social Security numbers will be denied the child tax.
2 million kids who are
expired.
citizens of this country are going to be
My colleague's time
denied
has
the
expired.
child tax credit. And I would just say this bill is more inflated promises, but
My
the
colleague's
reality,
time
it's
has
pain for
expired.
American families and it's gain for millionaires.
My
And with that, I
colleague's
yield
time
back.
has expired. I now recognize Mr. Yocum for 5 minutes.
Thank you, Mr. Chairman. Mr. Barthold, my colleague on the other side of the aisle just described the child tax credit provisions under the American Rescue Plan Act. How long were those provisions in effect for?
Just 1 year, I was thinking.
1 year.
1 year.
So what you're saying is that when Democrats held the House, the Senate, and the presidency, and they had the opportunity to make those provisions more generous and potentially even make them permanent, they chose to allow them to expire after 1 year. Is that correct?
1 year. Yes, sir.
Thank you. Mr. Chairman, I yield back.
The gentleman yields back. I now recognize Mr. Davis for 5 minutes.
Thank you, Mr. Chairman. Mr. Barthold, one of the primary anti-poverty tools that we have in this country is through the Earned Income Tax Credit, which lifts nearly 6 million people above the poverty line every year. In 2021, Ways and Means Democrats led the charge to strengthen the Earned Income Tax Credit by significantly expanding the credit for taxpayers without dependents. This assured that workers were not being taxed into poverty by the federal government. So, Mr. Barthold, let me ask you this question. Other than for a narrow group of Purple Heart recipients who also earn SSDI, does the bill before us today make any changes to the Earned Income Tax Credit to better help single workers, younger workers, older workers, foster youth, or homeless youth?
Mr. Davis, the legislation before you does not specifically address any of the categories of workers that you mentioned. It establishes in Section 112206 a certification program for establishing a child's status as a qualifying child of the taxpayer. As you noted, it does make change for Purple Heart recipients, but it does not directly address specific categories of workers.
Thank you very much. And let me ask, am I correct, or correct me if I'm wrong, but didn't the 2017 Republican tax bill change the way in which we adjusted for inflation, causing the growth in the Earned Income Tax Credit to slow down?
The 2017 legislation changed for almost all purposes in the individual income tax inflation adjustments. That was rate brackets, standard deduction, and as you note, the Earned Income Tax Credit. It went from the regular CPI to what is referred to as the changed CPI. The changed CPI generally grows at a slower rate than the regular CPI. So the short answer is yes, the result is that the parameters defining the earned income tax credit grew more slowly, as did the parameters for the values of the standard deduction and the rate brackets.
So as a result of this TCJA, have there been fewer earned income tax credit payments to low-income workers than if the TCJA never passed?
Yes, sir, that's correct.
By roughly how much?
Okay, we've looked at some research on this in 2021 and 2022. The estimated difference in the effect due to the indexing using regular the old CPI versus the chain CPI, it was about $1.5 to $2 billion in aggregate.
So while my Republican colleagues seem intent on showering their wealthy donors with tax cuts, they're doing nothing for the vast majority of our poorest workers, even while the poorest continue to feel the consequences from their original bill. Similarly, I'd like to ask you about child care. As you know, Ways and Means Democrats significantly expanded the Child Independent Care Credit in the American Rescue Plan and made the credit refundable so all families could benefit from it. So, Mr. Bartha, as child care prices skyrocket, does this bill before us today do anything to increase the Child Independent Care Credit?
Mr. Davis, this legislation does not address the Child Independent Care Credit.
And so the priorities reflected in this bill are truly disappointing. Whereas Democrats put supporting the neediest and supporting working families at the top of our priority list, my Republican colleagues are ignoring these struggles while showering those at the top with tax cuts once again. And I yield back.
The gentleman yields back, and now recognize Mr. Larson for 5 minutes.
Thank you, Mr. Chairman, and thank you, Mr. Barthold, for Mr. Barthold, how long have you been doing this?
This, actually 2 days from today, will mark my 16th anniversary as the Chief of Staff of the Joint Committee on Taxation.
And I think you can tell from the applause the enormous respect that people have for your job. When did you receive this bill that we're asking you all these questions on, the full bill?
The final completed version of the bill was delivered to us when it was delivered to you yesterday afternoon. Now, to be fair, and as you know from your experience, we work closely with all the members. We work closely with the chairman and his staff. So we were aware of many of the
understandable, but I want for the viewing audience to know that when you actually receive this and are supposed to answer all these questions. I have some technical questions that I wanted to ask you, especially was interested in what you were saying, how in a bill sometimes things can get crowded out by the changes that occur from a 28-page to over 400. But how many, you know, because initially we had heard about this Social Security tax on income and that it was going to be eliminated altogether, but how many individuals will still be subject to tax on Social Security income after accounting for the what's now called the senior deduction in this proposal?
Well, let's see. Under present law for 2026, we estimate that there will be about 56 million tax filing units with Social Security benefits. 32 million have Social Security benefits in their adjusted gross income because there is the exclusion for a number of taxpayers. And about 27 million have Social Security benefits in AGI and owe some individual income tax. Under the proposal for 2026, about 25 million tax returns are estimated to have Social Security benefits included in AGI and owe any income tax. Now, that's in part because they have other income. About 24 million tax returns will have Social Security benefits included in AGI that exceed the $4,000 additional seniors deduction, and also will owe some individual income.
So essentially, this bill doesn't do as President Trump promised to eliminate taxes on Social Security, because some seniors will receive no benefit or less than full benefits from the additional senior deduction from this bill. Believe it or not, Mr. Chairman, we do have a solution for that in a bill that we'd like to see at some time at least be heard. Mr. Bartold, at what income amount does someone stop paying FICA contributions to Social Security?
For the present year, it's $176,100.
Thank you. And so someone who's making, let's say, 2.5, I won't go to the 500 billion that our favorite person, Mr. Musk, is getting, but 2.5 million in annual wages, will they pay FICA throughout the year?
FICA is collected until you reach the maximum. So at that substantial rate of pay, no, you do not pay FICA.
So in the case of Mr. Musk, who receives a compensation package of more than $50 billion from Telsa, but has never received the salaried income, how much would a person who makes millions or billions in compensation through stocks contribute to Social Security each year?
Capital gain income, return on equity grants are not wages subject to FICA. There are certain stock compensation that is subject to FICA, and I'm not specifically familiar with Mr. Musk's compensation.
Is there anything in this legislation that would increase the amount of those making over $400,000 to contribute to Social Security or its solvency?
No, sir. There's nothing that would increase contributions.
So this bill raises the debt by over $4 trillion, yet
Gentleman's time has expired.
nothing to improve the Social Security benefits.
Gentleman's time has expired. I now recognize Ms. Chu for 5 minutes.
Mr. Bartold, not only does this legislation appear to cut trillions of dollars in taxes, but it appears to do nothing to address Trump's mass firings at the IRS or address the cuts to the IRS. Does funding to the IRS result in higher or lower revenue for the federal government?
Ms. Chu, the funding of the IRS, just to be precise, the analysis of that's carried out by our colleagues at the Congressional Budget Office. The Congressional Budget Office did, as part of the analysis for the reconciliation legislation in 2022, estimate that increased expenditures in different areas of the IRS, such as modernization, customer service, other different aspects, would have an effect of increasing collections by the IRS in excess of the investments in human and IT resources that would be necessary.
Thank you. And if this legislation were to be enacted, will this increase the federal budget deficit?
Again, drawing only on what the Joint Committee staff has reported in JCX 22-25R for the tax provisions, as we conventionally estimate them, prior to a macroeconomic analysis, would increase the deficit by $3.8 trillion over the budget period fiscal 2025 through 2034.
Yes, so it will increase the budget deficit by $3.8 trillion, is what you just said.
Yes, ma'am.
So can you confirm that not only will this bill slash taxes for the wealthiest people in the country, but It will also make it easier for the same people to avoid paying the taxes they do owe because the IRS's ability to audit those returns and address this law breaking has been greatly diminished by President Trump and his administration.
Well, Ms. Chu, again, I have to rely on the colleagues at the Congressional Budget Office to opine on effects in terms of expenditures and allocation of resources within the IRS. And I believe we're just in the process of making available our distribution analysis on this legislation. Member offices should be getting it, and you should be getting it at the dais soon. So I can't really comment on the first part of your question about the distribution of the tax benefits under this legislation.
Well, if this bill is enacted, will this bill compound the fact that the budget deficit would be made considerably worse at a time when it is already rising and threatening the long-term solvency of programs like Social Security and Medicare?
Well, just to repeat, in terms of the analysis of the tax provisions, setting aside what might be happening in terms of reduction in spending or other or potential offsetting receipts, the tax provisions would contribute to a higher deficit. I do not know the total effect of what will be reported under the budget resolution.
But it will result in a higher deficit. I would like to repeat that. And will anything in this bill improve the solvency of Social Security and Medicare and strengthen those programs to ensure that Americans who paid into them for their entire lives can count on receiving their benefits when they reach retirement age?
This legislation makes no changes to Social Security.
Thank you. This clarifies quite a bit about the bill, which would not only cut taxes for the ultra-wealthy, but also give wealthy tax cheats the knowledge that they can break the law without consequences because our tax law enforcement has been defunded by the Trump administration. And together, these decisions will worsen the budget deficit and do nothing to protect Social Security and Medicare, which are under attack. And I'd also like to ask you about something that thousands of my constituents have been calling and writing to me about since the start of this administration, which is President Trump's decision to let Elon Musk, an unconfirmed, unelected billionaire, into the government's most sensitive systems, including the IRS records. Now, these are the most private and sensitive taxpayer information for our constituents. It's how the government pays Social Security benefits. And so, Mr. Barthold, is there any provision here to keep DOJ employees out of the Treasury payment system that includes taxpayer information which is required to be confidential by law?
The gentlewoman's time has expired. I now recognize Ms. Sewell for 5 minutes.
Thank you, Mr. Chairman. Mr. Barthold, my question is regarding Section 25F and pertains to the qualified elementary and secondary education scholarships that are found on page 57 in the amendment in the nature of a substitute. Can you elaborate on the tax benefits that donors to private school voucher programs would receive from this measure? And is it possible for taxpayers to receive more than $1 benefit from taxpayers if they donate a dollar?
Ms. Sewell, the way this provision works is the proposal creates a non-refundable income tax credit that's equal to the aggregate amount of qualified contributions made by the taxpayer.
So 1 to 1.
So
if I give $1, I get $1 tax credit. Is that right?
The credit allowed cannot exceed the greater of 10% of the taxpayer's aggregate gross income. But yes, give $1, you get a credit for $1.
Now, could the taxpayer also receive a credit from the state on that same dollar that they donated?
The legislation does not bind state law in any way, so I guess that would be possible, Ms. Sewell.
So it's possible that that you could give $1 to these scholarship funds and get a dollar credit.
Actually, let me correct that. The legislation does try to provide that credit allowed to the taxpayer would be reduced by the amount that's
you can't
allowed
double-
on a state tax return. So it's not.
So what about a deduction? Can you get a deduction, a state deduction for that same dollar?
Yes.
You
Yes,
can.
ma'am.
So basically, a person can give $1 and get the benefit of more than $1 on their taxes if you combine both federal and state. What is the income amount for qualified students to receive these scholarships? Can a student whose parent makes over $100,000 receive one of these scholarships?
There are no restrictions on the students of these schools.
So I guess what I'm asking is, so the student's parent can make over $100,000 and they can still get a scholarship from the scholarship fund?
Yes.
So basically, you can give $1 to a scholarship fund, and then those people, the students who receive that scholarship, parents can have an income of unlimited amounts of money. Is that right?
Yes, as you've laid out the possibility.
So is there a provision within the tax code that would require that teachers at any of the private academies receiving these vouchers be certified or accredited?
Not aware of a code
No,
section
there's
that
not.
does that.
Is there a provision in the tax code that requires these private schools to provide special education or to educate disabled students like you have to do in public schools?
Generally, again, no requirement.
So does the contribution to churches get the same kind of tax treatment as this program described in this bill?
Well, a donation to a church may be deductible as a charitable contribution, and itemizers might be able to claim the charitable deduction subject to
But
limitations.
they are not going to be able to get the same kind of double dipping that
No, ma'am. No.
Okay. So my parishioners, the parishioners that tied with me at my home church of the historic Brown Chapel AME Church gets a less generous tax benefit than those that give to this scholarship fund. Is that right?
As you've posited the situation, yes, ma'am.
So what makes me concerned about this is that House Republicans have set aside up to $5 billion a year to go to scholarships for private and religious schools. This is an unprecedented effort to use public money for private schools. The program would be funded by donors who can contribute money or stock, and the students who receive it can have parents that make as much money as Elon Musk, right?
There is no income limitation on the
That's right.
on the donor.
What makes me particularly concerned about this is because in the Deep South, where I represent, Alabama, many of those private schools are segregated schools that are all white. And we would be giving a public benefit to private schools that promote segregation.
The gentlewoman's time has expired. I now recognize Ms. Moore for 5 minutes.
Thank you so much, Mr. Chairman. Mr. Bartold, I'm going to ask you a lot of questions, and I don't want all my time consumed. So just follow me and please be patient. I want to ask you questions about Code Section 199A. This is a section that my colleagues, we've talked about helping families and workers. This one is the one that my colleagues like to refer to as a small business deduction. First of all, how much did this bill will it cost to extend this Code Section 199A? And I realize you don't have the 23%, and if you got only 20% numbers, that's acceptable. How much will it cost, the loss to the Treasury?
Ms. Moore, as we report in JCX 22-25, are the permanent extension plus the expansions of Code Section 199A we've estimated at a cost of approximately $818 billion over the budget period.
Okay. $818 billion is the cost to help these small businesses. Fine. Can you please tell me how, you have data for 2022, I understand. Can you tell me how, what was the total amount of the deductions claimed for Section 199A?
A little bit over $216 billion
Okay.
in tax year 2022.
Thank you. $216 billion in deductions, $818 billion in loss in revenues. That's a lot of money. But what we will do to help small businesses, we ought to do. Okay, now, I like to talk a lot about helping only the 1%. And the 1% makes maybe about $650,000 a year. Is that right, Mr. Bartold?
In reported adjusted gross incomes, that's about right, Ms. Moore.
Okay, so the top 1% of taxpayers by adjusted gross income claimed what percentage of these 199A deductions? The top 1%. How much did they get out of the whole package?
About 50%.
50%. The top 1% got 50%. And these are small business benefits. Wow. Half of it. So, for the sake of illustration, I want to take a real small business. Say a business that has $200,000 of AGI. What is the average amount of a 199A deduction that kind of business could claim?
Well, just to clarify, Ms. Moore, AGI applies to the taxpayer, and so it can be income from multiple sources.
This is all qualified business income.
If it's all qualified business income, $200,000 under present law, the 20% deduction, that would be a deduction of about $40,000.
Okay, but
if your question was taxpayers with AGIs of around $200,000 with qualifying business income being
that was
less
my
than
question, Mr. Bartold.
Well, then
okay, because
the
I'm
average
running out of
deduction
time.
is about $6,500.
That's right. It's about $6,000. So I'm going to go on. I don't want to burn all my time up. If you had a $10 million, there were 10 people, taxpayers claiming the 199A deduction had $10 million, and they got how much on average?
Adjusted gross income, $10 million, not all of which is qualified business income. So on average, those sort of taxpayers claiming about $500,000 in deduction.
All right, they got $500,000 in deduction. I'm going to skip some because it's taken a long time. So there are taxpayers in my state, the E-lines, who made over $100 million that claimed deductions under 199A. And so can you tell me how much that they received as a deduction?
100?
Yeah, $100 million of these small businesses.
Well, in 2022, there's in the neighborhood of 800 taxpayers with adjusted incomes exceeding $100 million who claimed a deduction under Code Section 199A, and the average deduction was around $11 million.
And did they, and I'm going to tell you,
Gentlewoman's time is expired.
17 million of these businesses, 84% of these businesses had 0 employees. So they didn't create jobs. Thank you so much for your indulgence, Mr. Chairman.
Gentlewoman's time
and thank you,
expired.
Mr. Bartold.
I now recognize Mr. Byer for 5 minutes.
Mr. Chairman, thank you very much. And Mr. Bartold, the goal of my question is to elucidate how current law operates and how this legislation proposes to change current law. Current statute prohibits the President and the Secretary of Treasury from initiating an IRS investigation on any specific taxpayer as outlined in 26 U.S. Code 7217, which states, and I quote, "It shall be unlawful for any applicable person, that is, the President, Vice President, any employee of the Executive Office of the President, the Secretary of the Treasury, and other members of the Cabinet, to request, directly or indirectly, any officer or employee of the IRS to conduct or terminate an audit or other investigation of any particular taxpayer with respect to the tax liability of such preparer." Mr. Bartold, can you confirm that it would be illegal under current law for the President or the Secretary of the Treasury to initiate an IRS investigation on an organization's nonprofit status?
That's correct, Mr. Byer.
Thank you, sir. Under current law and IRS practice, if a taxpayer has demonstrated it is operating outside the requirements of his tax-exempt status, and there's an investigation by non-political IRS civil servants and due process for the organization involved. Isn't that correct?
Yes, Mr. Barr. There are situations where an investigation could involve chief counsel at the IRS, and the chief counsel is a political appointment.
Great, thank you. But now I want to turn to the legislation. In Section 112209, it claims to combat tax-exempt organizations that provide material support for terrorism. Considering the Trump administration's clear weaponization of government, including the IRS, to pursue their political enemies, I want to make sure that I understand how this proposal would operate if it became law. The language in this section states, quote, the term terrorist supporting organization means any organization which is designated by the Secretary as having provided material support to a terrorist organization. So the Secretary must notify the offending organization of its forthcoming designation and the name of the terrorist organization being provided material support, quote, as determined by the Secretary. Mr. Bartold, does this language require that the offending organization be convicted in a court of law for providing material support to an organization before losing its tax-exempt status?
No, Mr. Barr, the language does not require a conviction for providing material support.
Thanks. So to be clear, the only requirement is that the Secretary determines an offense has taken place, and that the Secretary can do so on his own authority and judgment without any judicial determination at all, correct?
Yes, that's correct, Mr. Barr. The proposal does not require judicial determination.
Thank you. And this legislation states that the Secretary must provide, quote, a description of such material support or resources except to the extent that the Secretary determines that disclosure of such description would be inconsistent. Could the Secretary assert that documentation of an offense is classified or, quote unquote, law enforcement sensitive and therefore provide no substantive description, let alone evidence, to an organization on their alleged offense? In other words, if this legislation were law, are there scenarios where a target organization could have no opportunity to review the evidence against them in order to meaningfully respond to the allegations?
Well, the proposal contemplates and allows the Secretary to withhold a description of the nature of the material support provided by the organization if the Secretary is determined doing so is inconsistent with national security. But the Secretary must note that he's made such a determination in a notice to the organization. And so then the organization may seek a judicial review of that determination.
Thank you. So in summary, this legislation will allow the Secretary on his sole authority to determine a tax-exempt organization has provided material support to a terrorist organization without any prior judicial review, and he could also do so without providing even a description of the alleged offense to the accused organization. The Constitution requires the executive branch to faithfully execute the law, but we've seen what contempt this president, this administration has for due process. There are current cases in litigation where federal officials are being threatened with criminal contempt and operating in bad faith. The administration's track record is taken to heart. This proposal will allow the Treasury Department to rescind the tax-exempt status for law-abiding organizations without due process, without judicial determination of guilt, and without providing evidence for the alleged offense. Mr. Bartold, if this legislation were passed into law, any administration, the Trump administration, any future ones, would be allowed to target its political enemies through unsubstantiated claims of supporting terrorism without providing evidence to revoke their tax-exempt status. If a group, a social welfare organization, a civil rights group, a religious institution, advocacy coalitions disagrees with the administration, they risk their tax-exempt status.
The gentleman's time has expired.
And my point is made. Thank you. I yield back.
I now recognize Mr. Swazi for 5 minutes.
Okay, Mr. Bartold, I have some technical questions for you, but first I want to point out a op-ed piece from Senator Josh Hawley from Missouri, the chairman's home state, when he said, I think it was just yesterday, Republicans are having an identity crisis. The nub of the conflict, will Republicans be a majority party of working people or a permanent minority speaking only for the C-suite? Mr. Trump has proposed working-class tax cuts and protection for working-class social insurance, such as Medicaid, but now a noisy contingent of corporatist Republicans call it the party's Wall Street wing, is urging Congress to ignore all that and get back to the good old-time religion, corporate giveaways, preferences for capital, and deep cuts to social insurance. This wing of the party wants Republicans to build our big, beautiful bill around slashing health insurance for the working poor. My argument is it's both morally wrong and politically suicidal. So with that in mind, Mr. Barthold, the president has said that we have massive deficits, and they're going to be reduced to practically nothing in Asheville, North Carolina. In Politico reported that the president committed to publicly support Senate Republicans in their efforts to massively reduce the deficit. Chairman Smith said, if we don't reduce the deficit, we will spend more in the debt than we do on national defense. Jody Arrington, the chairman of Defense, said this trajectory of the deficit is unsustainable and is arguably the biggest threat failing our nation. And he said we have to reverse the curse. Lloyd Smucker, a good friend, said the reconciliation bill must not add to the deficit. And there are other quotes from Schweikert and Feenstra and Murphy and Moore and Aronson and Vern Buchanan and Adrian Smith and Mike Kelly says it's a threat to our national security. Darren LaHood, even Estes, a good friend, another good friend, said we have to have a balanced budget amendment. My question to you regarding the deficit, does the bill before us and this committee right now increase the deficit?
The legislation before you, as we've reported in JCX 22-25R, the tax provisions would increase the deficit.
Okay, does the president authorized as part of this bill before this committee to borrow $4 trillion?
Yes, that's correct, sir.
Okay. Regarding salt, the president said when coming to Nassau County during the campaign, he says, I will turn it around. I will get salt back. I will work with the Democratic governor and mayor and make sure the funding is there to bring New York State back to levels it has never seen in 50 years. Mr. Barthold, does this bill before us restore the entire state and local tax deduction?
No, it does not, Mr. Suozzi.
Okay, the president has said that we are the party of the working class, and Chairman Smith has said we're the party of the working class, and other people have said they're the party of the working class. Punchbowl reported, Financial Times reported on May 9th of this year, Trump and Johnson agree to a new tax bracket for earners making more than $2.5 million. President Trump on Truth Social said he will graciously accept a tax increase in order to help lower and middle class families. I'm okay if they do it. Is there an increase in the tax rate for the wealthiest people in the United States of America?
The legislation before you extends permanently the top bracket at 37%.
So it does not restore it to what it was before to 39.6.
That is correct, Mr. Suozzi.
So this is a tax decrease for the wealthiest Americans in our country, or it's a continuation of the previous tax decrease for the wealthiest Americans. Is that correct?
That's subject to different member interpretation, Mr. Suozzi.
Okay, on tips. The president has said your tips will be 100% yours. Does this tax bill continue the payroll tax on people's tips?
Yes, it does, Mr.
Overtime. The president said your overtime will be tax-free. Does this bill continue the payroll tax on overtime?
It does not exempt overtime from the payroll tax.
The president has said he's going to remove taxes on Social Security. Does this bill remove taxes on Social Security benefits?
The legislation provides an increased exemption amount.
But does it remove taxes on Social Security benefits as promised by the president?
It does not change Social
The president and the Republicans have made a very big deal about the importance of tariffs. Tariffs are essential, they say, in order for us to balance the budget, to do things to help bring money into the federal government so we don't have to cut as many things. We need to bring money in from tariffs. Does the Ways and Means Committee have the sole jurisdiction of the committees in Congress on tariffs?
I believe that is so, sir.
Is there anything in this bill whatsoever, this massive 400-page bill, this big, beautiful bill, this important bill that's comprehensively looking at the finances of the United States of America, does it have a single thing in it about setting tariff policy in America?
I'll ask my colleague from the Trade Subcommittee.
The answer to the question is yes.
What does it have?
The provision I walked through,
Gentleman's time has expired.
The provision I walked through, which eliminates our de minimis law, and tariffs would be applied to any packages that currently receive de minimis treatment, under which you do not pay a tariff.
Okay, I support the de minimis elimination, especially if we do it sooner instead of waiting until 2027.
expired.
But all the other things we've been talking about tariffs have not been discussed in this bill.
Expired.
Thank you.
I now recognize
Thank you.
Ms. Plaskett for 5 minutes.
Thank you very much, Mr. Chairman, and thank you for your patience in dealing with us and answering these questions. We know that this information was given to you at a very short time. I listened to my colleagues just recently discuss the amount of money that's given to the largest bracket. You said that that was a reduction in how much, Mr. Bartold, for the top bracket?
Absent this legislation, the top bracket would revert to a rate of 39.6. This legislation extends the 37% bracket that was established in 2017.
It extends the 37 bracket. And then what is the next bracket of individuals in the tax code?
35 is next down.
35. And who's within that group? What income bracket is that?
I'll have to check the break points. I'm afraid I don't know them off the top of my head. I'll get that for you.
I know that we just received the chairman's amendment in the nature of substitute the budget reconciliation, legislative recommendations related to tax. And this chart shows us in calendar year 2027 income categories and change in federal taxes in those categories. I was hoping, I'm not a math person. I actually went to Georgetown Foreign Service School because they told me there was no math requirement. I even applied early to get in, and then I got bamboozled when I found out that there was a 2-year of econ. So I'm gonna need you to help me with the math here. It says here that for those individuals in the income category of 80 to 100,000, right? What is the change to them in this new bill? What are they gonna be receiving?
You want to know the provisions that affect them, Ms.
Yes.
Plaskett? Okay. Well, remember, absent this legislation, tax brackets would generally increase. The standard deduction would decrease. The child tax credit would decrease. And so many taxpayers in that bracket, in that income group, would have a change in tax rates. They would have a decrease in their standard deduction. They would have a decrease in child tax credit if their household had children. On the other hand, they would some might be more likely to itemize, could claim.
Individuals making 80 to 100,000 are going to be itemizing, sir?
Yes, some individuals in 80
That's a
to
small
100,000.
percentage.
It is a smaller percentage. The itemization under prior law and under current law is typically in the upper half of the income.
So let's talk about what percentage those individuals are going to be getting. People within the Virgin Islands, I mean, our medium income and the amount of income that people in the Virgin Islands going to get is going to put them in either the $60,000 to $80,000 range or the $80,000 to $100,000 range, and that's for a household income doing pretty well in the Virgin Islands. That compared to individuals in the $500,000 to the $1,000 range. What is the difference between those two and what this bill is going to be giving them?
Right. Well, as you can see in the very first column to the left of the income categories, it reports the change in federal taxes under the legislation. And on the first page of JCX 23-25, it shows for the income category of 80,000 to 100,000 that the aggregate reduction in federal taxes will be approximately $31.3 billion. If you compare that to the 500,000 to 1 million category, the aggregate reduction is $73.1 billion.
That's overall. That's overall what we're going to get.
That's in aggregate.
But that's not going to tell us what the average individual is going to get,
Well,
is it?
some of the average effect you can see in the last two columns where it reports the average tax rate. And so for your category of 80,000 to 100,000, you can see that under present law, the average tax rate that those taxpayers pay is a little bit over 15%. Under the proposed legislation, it would fall to 13.5%. So
Okay.
a reduction in taxes. Now, by comparison, since you wanted to compare, the reduction in average tax rate for the $500,000 to the $1 million category is from close to 30% to closer to 36%.
How about this percent? How about this? This is what I've heard. The top 1%, 0.1%, stands to gain about $278,000 per year. That's $762 per day, while the average family is going to get $1,000 a year.
Gentlewoman's time has
That's
expired.
about $2 a day. Is that correct, sir?
Gentlewoman's time has expired. I now recognize Mr. Murphy.
Can he answer the question? That was a yes or a no?
I'll allow a yes or no answer.
I can't verify the mathematics, Ms. Plaskett. I'm not doubting it, but I just can't verify it.
Mr. Murphy is recognized for 5 minutes.
Thank you, Mr. Chairman. Just a point of clarification. I think it's important just that we have frames of reference with who pays the taxes in this country. Mr. Berthold, do you know what percentage the 1%, top 1% of earners in this country pay in taxes?
Excuse me. The top 1%. If you look on page 5 of JCX 23, we have tried to provide income quantiles, and you'll see that we report the 99th to 99.9th percentile, and then the highest 1/10 of 1%. And in about the middle column, you can see that under present law, that those, so that would be the top 1% of taxpayers would pay 13.6% plus 11.9%, which is 25.5% of all federal taxes.
All right, I was looking at something here on this illustrious thing called Google that said it was 40.
Don't believe everything you see on the internet,
40% of
sir.
federal taxes. So, all right, so you're saying how much? 26%?
I said 25.5%.
Okay. And the top 10% said accounts for 72% of all federal income taxes paid in 2022.
Again, I'd prefer if you'd look at my page 5, and then you'd be summing the last 4 rows of that middle column.
And what is can you help me with the bottom 50%? How much they pay in taxes?
Okay, well, I have to take.
Well, I'm looking at Google again, and it says 3%.
Again,
so
we
don't want to believe Google.
Not knowing what Google's measuring. What we're trying to measure here is the effect of payroll taxes, income taxes, federal excise taxes, and the corporate tax.
Okay.
One tax
All right.
that is not federal tax that's left out is the estate and gift tax.
Okay. All right. Fair enough. Are there provisions in this bill where those in the higher income bracket have fewer deductions?
Yes, as noted in the walkthrough, the extension of the 2017 legislation includes extension of a number of limitations on itemized deductions, state and local income tax, mortgage interest. It creates, in addition, a new limitation on the benefit of those who itemize, limiting the value of the benefit to 35%.
So the top bracket will actually end up paying more in taxes, even
They will
though the
have
rate
those
hasn't
limitations. Some taxpayers will pay more.
Okay.
Some will pay less.
Okay. All right. Thank you, Mr. Chairman. I yield back.
Gentleman yields back, and now recognize Mr. Evans with the technical question for 5 minutes.
Mr. Chairman, I'd like to yield to Mr. Doggett.
Thank you very much. You know, at the beginning of this hearing, the chairman told us that his priority was the working class. And it sounds a lot like what President Trump has said in all of his broken promises, that he's concerned with working people. And now that we have, which we didn't have earlier, these green sheets, I'd like to ask you, Mr. Barthold, about how much good they've done for the working class. First of all, given the last questions that you just answered, there's not any law of physics or law of tax law of any kind that says if you really want to help the working people of this country, you've got to give big tax breaks to the people at the top. There's no such law, is there? There's no reason we can't focus this tax relief on the people that are out there working hard for a living, not the Elon Musk of the world.
I'm sorry, Mr. Doggett.
Well, let me shorten it just a little bit. there's not any requirement under the tax laws that you have worked on as the chief of the Joint Committee on Taxation that say if we want to help working people, if, as the chairman told us, his priority is the working class, that the only way we can do it is to give huge tax cuts to Elon Musk and the billionaire class.
As we discussed earlier, Mr. Doggett, the members can
Yes, sir.
choose to target tax benefits
let's-
ways they seem.
We can target it if we want to, but we can also target it to the limousine lobbyists and to the power brokers in our country who already have so many loopholes and advantages in our tax code. Let's see how well, based on the information you gave us just now that we did not have earlier, how well this Republican majority has done in prioritizing the working class. If I understand your numbers, it looks to me like it's about $263 per taxpayer for those who earn less than $50,000. Is that about right? And this is in year 2027.
Mr. Doggett, you're ahead of me in that you've been able to do the division.
You've got, don't you, first of all, in year 2027, those who earn over $1 million a year, they're going to get about $96 billion in tax cuts, aren't they?
Above $1 million, the change under the proposal is about 100 billion. Yes, sir.
They'll get $100 billion. And all of those below $50,000, if you add them up, I think it comes up to about 19, doesn't it, in the first year?
100, we're looking at the difference between
I don't want to hold you up
5.1,
on
4.
Basically, by my calculations, we're talking about something like 310 times the average tax cut for taxpayers under 50,000 as for those over $1 million. Does that sound in the range of about what it is?
Again, to do these calculations, we provided the number of returns on page 15, and so you can compute the average.
Yes, sir.
By category. I don't want to overstate or understate a result here and
I appreciate your objectivity. I'm using your numbers, and it looks to me like we are providing, under the Republican bill, the average tax cut for a taxpayer who's making more than $1 million a year. Somebody who's pretty comfortable in our society, more than $1 million in a single year. They get 310 times the average tax cut for taxpayers making less than $50,000 a year. I don't call that prioritizing the working class, wherever you came from, prioritizing the people that are out there providing the services that make America go. I call it more trickle-down economics, that a little will come dribbling down to those who are working hard out there, from Elon Musk and all the people that were on the front row behind the president at his inauguration. It's pretty clear where the focus is, where the whole purpose of this tax proposal is. It's not to help working America. It's to take from those who are working their health care, their future, and use those proceeds and $1 trillion and trillions of dollars of debt to provide more benefits to the billionaire class. And it's wrong and it should be rejected. And thank you for your answers and for this late data.
Gentleman's time has expired. I now recognize Mr. Hearn for 5 minutes.
I won't need 5 minutes. The gentleman from Texas talks about the tax code only, the income tax and the change. Mr. Bartold, how much is the child tax credit scored at?
The extension of the child tax credit.
Just roughly, you don't have to get, I don't care about pennies.
Well, I wasn't pennies. I was trying to look for the specific line on the table. Over the 10-year period, almost $800 billion.
So is that going to the billionaires?
No, they're...
Okay, that's all I need to say. What about the no tax on tips? How much does that score?
No tax on tips is almost $40 billion.
And no tax on overtime?
Overtime, $124 billion.
Either one of those going to the billionaires? I'm using the billionaires because that's what my colleague from Texas pointed to. Either one of those going to the billionaires?
Well, there's no income restriction on tips, but I don't know that there's a lot of tips among billionaires. There is.
So the reality is, Mr. Bartold, is that while we're talking specifically about the tax rate here staying permanent, all these other provisions that we put in there that President Trump has talked about taking, that they're wanting to demagogue, that these other ones do affect a lot of billions, hundreds of billions of dollars to the folks that are making on the lower end of income scales that they don't want to allude to. So I just want to point that out for the record, Mr. Bartold. Thank you for all your work.
Thank you. Are there others? Okay, I'll ask my question now and then proceed forward from there with other members wishing to ask a technical question. Mr. Sneed, I wanted to talk a little bit about the de minimis provision, and do you see a risk that perhaps this provision could possibly or not conflict with the Trump administration's current actions on de minimis?
Thank you for that question. I think as constructed, I don't see significant risk of that, but I think that is important context. We have that President Trump has acted already in this area to eliminate the de minimis exemption for shipments from China. That took effect May 2nd, which is the week before last, and so that has already taken effect as an emergency action under IEEPA, the International Emergency Economic Powers Act. So this provision in today's legislative recommendation is not conflicting with that, is completely ending the privilege, not on an emergency basis, on a permanent basis for shipments from all countries. And so I don't see immediate conflict with that. I think if there were sort of nearer term action directly relevant to China, there might be more questions and challenges as far as how these two things fit together. One piece of the context I point to is there is some litigation currently about IEEPA and its connection to tariffs. There was an argument in the Court of International Trade just today, and this approach takes an approach of creating long-term certainty while providing room for the president to act. He's already acted on China, has indicated an intent to act even sooner with other countries, but this approach is ensuring that de minimis does go away for commercial shipments from all countries within the next 2 years.
And just to clarify, though, for the sake of information, a traveler coming back into the U.S. with some purchases of souvenirs, that limit would be, as proposed, how much?
So that would be completely unchanged. That's a $200 limit. That's a separate provision in the law, and we're not looking to change that.
Okay, thank you. I yield back and now recognize Mr. Gomez for 5 minutes.
Thank you, Mr. Chairman. Mr. Barthold, can you help me with explain a little bit on this? I was just looking at the chart here, and it says that in the calendar year 2027, someone that's making less than $15,000 will see an increase in federal taxes by 18.7%. Is that correct?
Yes, Mr. Gomez, and that's a consequence of loss of premium tax credits, health care.
Okay, so, and then in calendar year 2020, anybody making less than $15,000 sees an increase of 53.5%. Anybody who's making $15,000 to $30,000 sees an increase by 11.7%. Is that correct?
What calendar year are we in, Mr. Gomez?
2029. It's the next page.
2029. Yes.
And then we see the next page in 2031. Anyone making less than $15,000 sees a, check this out. I thought this was a mistake. I thought I was not reading this correctly. An increase in their taxes of 74.3%. And from $15,000 to $30,000 of 20.6%. Is that correct? Or is that, did you guys make a mistake, or is that like?
No mistake in the numbers, but an important thing to remember is in lower brackets, it's actually hard to measure the denominator because there are some taxpayers that are getting refundable tax credits, for example, and so there's some with negative tax rates. And so you're adding up some with negative tax rates and positive tax rates, so it's like dividing a modest
Barthel,
changeover by zero.
Well, here's the thing. This is what your own tax brackets suggest. And one of the things that we have my Republican colleagues over here saying, hey, we're not doing tax on tips, which we know is actually pretty limited. Oh, we're not going to do X, Y, and Z, but we're screwing over people who are making less than $30,000 a year. And what I actually find offensive is because my parents never made more than $38,000 a year in their entire lifetime after working 4 to 6 jobs a week to make ends meet, right? And then we have Donald Trump and his chaotic, reckless tariff policy that is creating so much uncertainty that it's driving up the cost of living in this country. At first, it was $4,900 a year. Then it became $3,800 a year. Either way, the people at the lower income brackets are getting screwed over by a Republican majority that doesn't give a damn about them. Then on top of that, we know this, the people that are under $30,000 a year are most likely to be on Medicaid, most likely to live in rural areas, more likely to be in urban areas that are the working poor. But then they're bragging about, you know what? The top income brackets make the most money, so we're going to give them the highest amount of refunds. That's insane. And they have no shame about it. You have no shame when it comes to hurting working men and women in this country. You know, I'm somebody that was supposed to not go to college. I ended up working at Subway and Target. I would make $700 a week working not 9 to 5, but 5 in the afternoon to 9 the next day. I had zero health care. And to me, you would tell somebody in my place, you know what? We're helping you out, just giving you a little bit. But the billionaires are the ones that make the most money and deserve the most help. That's your logic. But I like to quote one billionaire when it comes to Warren Buffett that says that a lot of people shouldn't be punished because it wasn't determined on what they did. It was the happenstance of their birth. But you all want to tout a tax plan that increases taxes on people making under $30,000 a year, the folks that are struggling, and then cutting their Medicaid on top of that, but yet you want people to have more babies. That's the most insulting thing I've ever heard in my life. With that, I yield back.
Are there additional members with technical questions? Seeing none, we'll move to strike the last word. Are there any members that wish to strike the last word? Mr. Doggett is recognized to strike the last word.
Thank you, Mr. Chairman. Trump's one big, beautiful bill is nothing but an ugly lie, built on a mountain of lies, preserved today through a process that is a lie in blatant violation of the rules of this House of Representatives. Republicans can talk fiscal responsibility all day long, and they usually do at their campaign rallies, but they are practicing incredible fiscal irresponsibility by adding trillions of dollars to our national debt and endangering the future of what Elon Musk condemns as a Ponzi scheme, but what most Americans, generations of Americans, recognize as Social Security and a respectable retirement. It is a lie first to claim that this bill shows fiscal responsibility, because the Republicans are following their cult leader, the self-described king of debt, when it comes to more and more tax breaks for those at the very top. Too much is never enough, even when it means total fiscal responsibility. Republicans have a one-size-fits-all solution to loopholes that allow some of the most profitable corporations in the world to pay so little on their taxes. Their solution: widen the loopholes, and that's what this bill does. Let them avoid even more of their fair share of paying for our national security and other vital services. Second, it is a lie that this bill is focused on tax relief for the middle class, and we have just seen that. 310 times more relief for those who earn over $1 million a year than for those that earn $50,000 or less. This entire bill could be about half its total size if we were not providing benefits to those at the top, the billionaire class that they hope will eventually come down to the rest of our society, but which it never has. And guess who does this Republican tax bill treat better? Someone who trims hedges for a living or someone who's a hedge fund manager? Well, if you guessed the hedge fund manager, it wasn't very difficult, but under this bill, most of these Wall Street titans can put most of their income through carried interest and pay a maximum rate of 20%. Multinational corporations are paying an average of about 7.8% tax rate, far below the tax rate for a nurse or a teacher. Whatever incentive or reward these Republicans think hedge fund managers and major corporations need to do their job, shouldn't that tax incentive apply to those who nurse the sick, who educate our children, and those who keep us safe? I think the answer is quite clear. And the ideological attacks on clean energy will leave families paying the bill. A coalition of 23 retired four-star generals and admirals just this week advised the committee that it was vital to both our economic security and national security to preserve the incentives that we enacted in a Democratic Congress, which they proposed to wipe out. And third, I would say this bill is based on a lie that this bill protects our health care and access to a family physician. Republicans are turning safety net programs into more hole than net, gaping holes that will deny almost 14 million vulnerable Americans access to a family physician. After more than 60 repeated failures by Republicans to repeal the Affordable Care Act, they're at it again. They're sabotaging it. They're trying to deny the access that our countrymen need to get health care. 4 million alone will lose coverage because of their failure to extend the Affordable Care Act enhanced incentives. The beauty of this bill may be in the eye of the billionaire class, but to the rest of us, it is just another dangerous swing, using the wrecking ball that Donald Trump keeps using to wreck our economy and our democracy. And if all the lies were not enough, if our tax code did not already look like a block of Swiss cheese, Republicans are creating even more loopholes to benefit every special interest, from tanning studios to tobacco companies. Even as they shut down the Department of Education and slash billions from pre-K to 12 funding, they're pushing a $20 billion tax credit over 4 years, effectively a federal voucher plan to encourage parents all over this country to remove their children from our valued public schools. All of it is a package of lies that must be rejected. I yield back.
Mr. Thompson is recognized to strike the last word.
Thank you, Mr. Chairman. I've got to hand it to you, Mr. Chairman. Your bill touches just about everyone, gives incredible amount of big dollars to people who need it the least. It takes health care away from 13 million people, and it passes the bill on to future generations. Mr. Chairman, this Republican tax bill to extend the Trump tax cuts for billionaire donors like Elon Musk is a bad deal for the American people. The extension of these cuts will disproportionately benefit those who don't need the help, while failing to prioritize hardworking Americans. The reality is, Democrats have been behind some of the most significant middle-class tax cuts we've seen in a generation. By expanding the child tax credit, the earned income tax credit, and the dependent care tax credit. In other words, when Democrats cut taxes, we focus on those who need the help the most, not our large donors. People making over $1 million a year are not the ones that need a helping hand in today's economy. They simply get their priorities backwards, and it's the hard-working American people who are getting left behind. If Republicans were serious and would be willing to abandon their goals of cutting taxes for their largest donors and focus on cutting taxes for the middle class in a responsible manner, a lot of my colleagues on this side of the aisle would join them. Instead, they're slashing and burning our tax code, social safety net, hurting taxpayers in high SALT states, dismantling our nation's ability to lead the world in green energy and domestic manufacturing, and for future and hurting kids who need food and nutrition programs, and cutting health care for working people. These tax cuts will come at the expense of real lives, costing real hurt to our constituents, all of our constituents. Take Kate Laddish, a constituent of mine from Yolo County, California. Kate has rare and chronic conditions that have resulted in extensive hospital stays, the need for a motorized wheelchair, and in-home health services, much of it paid for by Medicaid. Her treatments, in-home care, and wheelchair allow her to have a quality of life and contribute to our community. Let me be clear, without these specialized treatments, she will die. And from listening to and watching the actions of this administration and some of my colleagues, she believes many would not care. We all know people like Kate. We represent people like Kate. We also know people who have been down on their luck and need a little extra help to put food on their table. We all know people who have worked long hours and multiple jobs to care for their families. We have a moral responsibility as members of this committee to ensure that our tax policies work for everyone, not just the well-off and the well-connected. That's why this is a bad bill, and that's why we should all vote against it. I yield back the balance of my time.
Mr. Larson.
Thank you, Mr. Chairman. And I don't know if you've ever had the opportunity, Mr. Chairman, to go to Augie and Ray's in East Hartford, but it's this incredible institution that's located right next to Pratt & Whitney Aircraft. And a shout out quickly to the IAM there, who's on strike for fair wages. But you get real practical, straightforward questions and answers from them, and they would be somewhat confused about this. When you, for example, they don't talk a lot about germaneness. And when asked about, and you heard the discussion at the beginning here that we had with regard to what would be ruled germane and what wouldn't. We'll see as we progress through the night. But basically, germaneness here is what people don't want to vote on. And so whatever is put forward by this side of the aisle will not be deemed germane and therefore not voted on. And I guess the disheartening thing here is that, and listen, everybody on this side of the aisle, they're good people. They're decent, caring Americans who love their country as much as we do. And that's what makes this so difficult. When you look at how disproportionate this bill is, because what it is simply is fulfilling a Trump promise to make permanent the tax cut of 2017. But to do that, he charged Elon Musk with finding cuts. And so they look to 70% of the budget that includes Social Security, Medicare, and defense, and decide that's what they're going to do. And in this bill, what we find is that while the top percent gets the bulk of the tax cut, they pay for it. Pay for it by cutting people's health benefits.
14 million Americans get cut their health benefits so that billionaires can have more? How much more money does Elon Musk need than $500 billion? I guarantee you the billionaire class is embarrassed by what's being proposed here. The largest cut to Medicaid in its history. Imagine 42 million Americans will see lower food assistance and SNAP benefits so that billionaires can have more? This is at the core of what makes Americans, and I've had public hearings throughout my district, and Erin from Bristol who says she has no idea what she would do without Medicaid and SNAP. She's a wartime veteran and a single mother of 4 boys and groceries. This is who we're talking about, the people who will be directly impacted by this bill. You're good people. You know this. And yet we're going to persist and take this to a vote. Our amendments will be ruled non-germane, won't go forward, and you'll take this on to the floor. Catherine and Richard of Southington say, we have a 39-year-old son who was born intellectually disabled and asked me, if we cannot take care of the innocent in our society, how can we be called Christian? Judith from Granby, who said, my daughter with MS asked, should Mr. Trump or his 1% cronies get more? My daughter and thousands of others who do not need to suffer because of unbridled greed. Can it be possible that MAGA really stands for Make America Greedy Again? I yield back.
Ms. Tinney is recognized to strike the last word.
Move to strike the last word. Thank you so much, Chairman Smith, and to all of my Ways and Means Republican colleagues and the dedicated committee and staff for your work on this landmark legislation, which actually delivers for American families, workers, and small businesses. As a member of Ways and Means, we were tasked with leading the charge to build on the successes of President Trump's Tax Cuts and Jobs Act and deliver meaningful tax relief for hardworking Americans and their families. And as someone who voted yes on the 2017 Tax Cuts and Jobs Act, from upstate New York, there has been nothing in legislation better for upstate New York than the Tax Cuts and Jobs Act for our small business community, our farmers, and our middle-income taxpayers and lower-income taxpayers. And I'm looking forward to making these permanent in so many ways. It's been a long and winding road to get where we are today, and House Republicans on this committee have spent countless hours deliberating these changes together, poring over data, numbers, making informed decisions, and meeting with individuals and businesses and communities in our districts and across the country. President Trump's Tax Cuts and Jobs Act led to the strongest American economy in decades, and we are poised to extend critical tax relief for American workers, the very people who work for me and their families, and include new policies that will drive growth and economic prosperity, something we lacked over the last 4 years. I commend the chairman for leading and crafting this bill, an unenviable task, considering the difficult choices that had to be made to get this here in a partisan way, because not a single Democrat in this entire Capitol complex will vote for tax cuts for the American people. While we would like to see all of the work that we have done come to fruition, we acknowledge the reality that we are working within limited parameters and that individual priorities do not take precedence over ensuring the American families, workers, and businesses do not face tax hikes in 2026. While this is an impressive package, I join my colleagues in expressing concern over the wind down of the 45U nuclear power production tax credit. Nuclear power represents nearly a quarter of New York's electrical supply, and my district in central and western New York is home to all 4 of New York's reactors. Those reactors are critical to the baseload power of our region and our state and should be considered separately from our conversations on renewable energy. This is an issue that I will continue to work with the chairman and to ensure that continued success in the nuclear sector. And before I close, there's many issues that I would like to highlight. Some, I can't list them all, but there are many. And these were priorities that unfortunately did not get in the package because of the limited space. And I will continue to work with the chairman and our team to pass. First of all, the permanency of the New Markets Tax Credit, co-sponsored by Representative Sewell of Alabama, which has been a critical tool for economic development in rural districts like mine. Ensuring that domestically manufactured fuel cells are treated on par with other initiatives under the Electricity Investment Tax Credit. Supporting technologies and energy delivery options like fuel cells that can deliver on-site power will continue our country's efforts to prevail in the artificial intelligence war with China, ensure the resilience of America's energy infrastructure, and to combat the absurdity and catastrophic policies in states like mine in New York, where energy intelligence is not available. Also, the Motorsports Fairness Act, which will sustain the long-term financial health of motorsports facilities by making that 7-year cost recovery period permanent. The PAR Act, which modernizes the tax code's so-called sin list by striking golf courses, especially small family-owned entities that are dotted all across New York State, and allowing their eligibility for financing using tax-exempt bonds. I sure hope the president, who's an avid golfer, will consider making golf great again in the state of New York. The BASIC Act promotes further investment in establishing new production facilities to manufacture semiconductors, which will spur job growth in advanced science, technology, engineering, and manufacturing, as well as ensure that the United States can compete globally and maintain its technological dominance over adversaries like China. This is critically important to Central New York. And also, high-quality charter schools act to expand school choice by creating a new tax credit for charitable contributions to nonprofit charter school organizations. And last on my list, but certainly not the last, many others I haven't included, but really important to my district is the Susan Muffley Act to restore Delphi salaried employees' pensions. They've waited for decades for Congress to provide reprieve, and this reconciliation bill is a great opportunity to deliver it. I urge the Education and Workforce Committee to take this bill up under their perspective title of the One Big Beautiful Bill. And I want to again thank the chairman and all of my colleagues on the Republican side of the Ways and Means Committee to bring us to where we are today. And I look forward to supporting this bill with enthusiasm for American families and workers, those especially who reside in New York's 24th Congressional District. And with that, I yield back.
Thank you. Ms. Maliotakis is recognized to strike the last word.
Thank you, Mr. Chairman. You know, this legislation is about providing relief for our working Americans, for our senior citizens, and for our middle-class families.
I thought it was 6.
That is the core of what this legislation is about and who will benefit. One of the most important provisions I see here is a bonus deduction for our senior citizens that would provide $4,000 for individuals, $8,000 for married. For those earning $75,000 or less if they're individuals, or $150,000 if they're married. I don't know how anyone can argue something like that goes to benefit the wealthy. As a matter of fact, it phases out when the income reaches $175,000. The increase in the SALT deduction, critical to the people I represent in Staten Island and Brooklyn. It will be tripled to $30,000, and it will have an income limit, so that way it is truly benefiting the middle class. It's interesting to hear the Democrats and the governor of my state of New York, who's the reason why we need SALT relief to begin with, because she keeps hammering people to death with high income taxes and refusing to put a cap on New York City property taxes, saying that they want an unlimited cap. Unlimited would actually benefit the billionaires. We're focused on the middle class. And I do hope that we'll see that relief take place to address 2025 so my constituents can benefit in 2026. Increases to the standard deduction, expanding the child tax credit. These are also provisions that benefit the middle class. No tax on tips, helping people who work with their hands. They're working overtime, our first responders. No tax on American loans, auto loans for American vehicles. Preventing the return of the alternative minimum tax. This is huge for the people I represent. In fact, it was the reason, the alternative minimum tax was the reason why so many of my constituents could not benefit from SALT, because it was never indexed, never adjusted, and you saw increasingly middle-class families being hit with that alternative minimum tax. Additionally, if you're a new employee, if you come out of college with debt, your employer will be able to now permanently be able to give you up to $5,250 annually tax-free to help you pay off your loans. It's legislation I'm proud to also sponsor in this that has made this bill. The Educational Choice for Children Act. This is going to be able to deliver scholarships for the families who need it most so they can attend private and parochial schools. Again, we're talking about poor children, giving them school choice, giving them access to education. Does not benefit the wealthy at the end of the day. This bill actually benefits middle-class families, working families like the ones I represent in Staten Island and Brooklyn. So I'm proud that so many of my provisions that I've championed have made it into this bill. And I want to thank the chairman, who has really been a good friend to the people of New York. I understand that everybody here has very different districts than I do. I might be the only SALT caucus member that's on this side of the dais. But this committee and the chairman have really worked with me to get to a medium that I think we're obviously continuing, as you know, to work through this. But I believe that we will get to a place that truly represents the hardworking people in Staten Island and Brooklyn. And the $30,000 deduction that is currently on the table and that we'll be voting on today actually covers 98% of my district. And so I'm very happy that I'll be able to go home and tell everyone that I was able to triple their deduction, and that those who want unlimited, and there may be an amendment here to make it unlimited that will support the millionaires and the billionaires, that's not who we're fighting for. The Republicans are fighting for the working class. We're fighting for the middle class, and that's who we're delivering relief for today. So thank you to my colleagues who understood where I was coming from as a New York City Republican and working with me to address and provide much-needed relief for my constituents. Thank you, Chairman. I yield back.
Thank you. Mr. Davis.
Thank you, Mr. Chairman. You know, the good book teaches us to care for the least among us. In medicine, doctors are taught, do no harm. Yet the Republican budget we are dealing with today does harm to every category of individuals and groups in our country except the rich, the wealthiest, and the most secure. Billionaires get tax cuts, while tens of millions of children, seniors, people with disabilities, and workers suffer deep cuts to their health care, food, education, and housing. That's not right. Americans want their government to help them, and they expect the wealthy to pay their fair share. While Trump's tariff taxes force families to pay almost $4,700 more a year on essentials like groceries, cars, and appliances, the GOP blesses CEOs, lets tax cheats run wild, tell children they can't have a toy, ignore the work of not-for-profits, lay them off, shut them down, kicks millions of seniors off Medicare, rips tens of millions of people off Medicaid, evict people from nursing homes so that the nursing home has to become your home. And even if one manages to keep their health insurance, this bill makes their health premiums skyrocket. The Republican priorities are shameful. The plan bestows immediate, permanent, and monumental tax handouts to obscenely affluent individuals and corporations. But the crumbs they give to hardworking Americans vanish. It leaves out the poorest children from the child tax credit and the poorest workers from the earned income tax credit. Rather than directly giving families paid leave and child care assistance, this bill bestows riches on businesses again. In my district alone, this cruel Republican plan threatens to cut health insurance from over 240,000 people on Illinois Medical Assistance Program, including over 102,000 children and 27,000 seniors. Thousands of seniors and persons with disabilities could lose their nursing home coverage. This ruthless plan also will increase hunger for about 244,000 people in my district alone who could lose SNAP, and for over 80,000 children who won't have a free lunch. Government should help people, not harm them. Government should make it easy for the vulnerable to ask for help to lift their burdens, not exclude them from assistance with excessive barriers, only to freely shower the wealthy with trillions. Government should encourage charitable service, philanthropy, and education, not terrorize them. As does a good con artist, Republicans use sleight of hand and tricks to make us believe they are helping when they are hurting. Nothing can justify the biggest Medicaid cut in the history of this country. Nothing can justify taking SNAP benefits from hungry children. No, we're not helping the wealthy. We are not helping the wealthy. We need to help the children, save the babies. I thank you, Mr. Chairman, and I yield back.
The gentleman yields back. Ms. Sanchez, you're recognized to strike the last word.
Well, here we go again. Republicans are once again choosing billionaires and big corporations over working families. This bill that we are marking up today is an insult to every hardworking American. It sends a very clear message that you'll pay more and you'll receive fewer services just so that billionaires can pocket another tax cut that they really don't need. American families, in case you haven't noticed, are struggling. Under President Trump and Republican leadership, they have seen nothing but chaos. They've watched Elon Musk gleefully take a chainsaw to vital programs that they rely on, like Social Security, Medicare, and the VA. Travel is less safe at airports because they're left in disarray due to the cuts to our air traffic control systems. And prices for everyday necessities like food and clothing and diapers and formulas keep rising because of Trump's tariffs. Premiums for health insurance, car insurance, and housing are going up, making it harder and harder for families to make ends meet. And now, rather than providing real relief, Republicans want to look at this chaos, put it into law, and call it a one beautiful bill, all to pay for more tax cuts for the rich while adding millions to our national debt. Nearly $20 trillion in debt over the next 10 years by Republicans, your own members' estimates. Not our estimates, their estimates. Americans are worried about their future, consumer confidence is at a record low, and people are afraid of losing their jobs, their health care, student aid, and food assistance. And this bill today compounds that pain. 14 million people will lose health care coverage under this plan. And for what? Again, so billionaires can get even richer while we all drown in debt. This is outrageous. Billionaires already have more money than they could ever spend, and they can afford to pay their fair share. What's equally disturbing is that you're not being honest about the fact that you are meting out crumbs to the most needy while you are helping the most wealthy. And don't buy the bullshit that tax cuts for the rich create more jobs or better wages, because it's been the excuse by every Republican administration over the last half century to pass more and more tax cuts to the rich. And it's failed to deliver on that promise each and every single time. The wealthy just got richer while the working families got harmed, all while piling on more debt that families will have to pay off. I'm outraged that this committee is focused on doing more for the richest in this country while destroying the means of survival for the poorest. And this bill doubles down on that assault on those seeking the American dream by stealing tax benefits and services to working people who are paying taxes. It would deny the child tax credit to 2 million U.S. citizen children. Even worse, it would deny Medicare coverage to those who've worked and paid into the system. How dare Republicans say that they're for the working class when they are making it harder for those that are struggling to get by? Enough is enough. My constituents are fed up. They're sick and tired of Republican tax cuts that only benefit the ultra-wealthy. Our tax code needs to be about fairness. It needs to be about balance. It should support families, not the rich. But this bill does the exact opposite. To my Republican colleagues, I say, please just stop this insanity. You have to lie about what is in this bill. Otherwise, probably your constituents would be rioting in the streets. Here's an idea. How about you think about putting your constituents first for once, rather than the people who donate to your campaigns? But I guess that's asking a little too much from people who have completely lost their moral compass. I will be voting no on this bill. I hope that some on that side of the aisle see the light and do the same. And with that, I yield back the balance of my time.
Mr. Chairman, I move to strike the last word.
You're recognized for 5 minutes to strike the last word.
Thank you, sir. I want to express my strong support for this pro-family, pro-worker, pro-growth, pro-America, one big, beautiful bill before us. It makes the tax cuts permanent for working families. It also increases the child tax credit. It increases incentives for employer-provided child care and the standard deduction. A family of four could see well over $1,000 in additional tax cuts. That's real money in Indiana, not mere crumbs, as my colleague across the aisle just said. For workers, we're delivering on President Trump's promise of no tax on tips and no tax on overtime. We're expanding 529 accounts to cover post-secondary credentialing for Americans looking to advance in their career or tool up for a new one. And we're giving businesses the certainty to invest, enhancing the small business deduction, incentivizing research and development to be done right here in America. We're incentivizing buying new equipment and building new factories. So again, we can manufacture things here in America. We're also putting disastrous Democratic policies in the rearview mirror. No subsidies for China, no more. We're ending President Biden's global tax surrender that sent billions in revenues to foreign countries. We're also repealing the 1099K gig worker rule, which was going to bury everyday Americans under a mountain of paperwork for the simple act of reselling tickets or buying something on eBay. It was so poorly thought out that even President Biden's IRS refused to implement that policy. There are so many other great provisions in here, increasing the adoption tax credit, savings accounts for newborns, tax relief for seniors, and no auto loan interest, no tax on auto loan interest. And there's also no tax credit for recycling talking points,
We've already heard the same tired complaints from my friends on the other side of the aisle about giveaways to the rich. They said the same things about the Trump tax cuts in 2017. It wasn't true then, and it's not true now. The New York Times admitted as much in a 2019 article titled, "Face It, You Probably Got a Tax Cut," which said that most taxpayers got a cut, but, quote, "there's a good chance you don't believe it." And why is that? To quote, "To a large degree, the gap between perception and reality on tax cuts appears to flow from a sustained and misleading effort by liberal opponents of the law to brand it as a middle-class tax increase." So let's be clear. Our one big beautiful bill will deliver real tax cuts to families in South Bend, Indiana. It will deliver real tax cuts to seniors in Goshen, to manufacturers in Elkhart, to innovators in places like Warsaw, Indiana. It will deliver real tax cuts to farmers in Marshall County, to farmers in Bremen, and to small businesses on main streets in places like Wabash, Indiana. And it will deliver real tax cuts to people who are working out of a garage and starting a small business in places like Napanee, Indiana. These tax cuts are real, folks. Trust your bank accounts, not lying politicians. I certainly want to thank Chairman Smith and his staff for fostering an open and collaborative process throughout the course of putting this one big, beautiful bill together. I urge my colleagues to support this pro-family, pro-worker, pro-growth, pro-American, one big, beautiful bill. And Mr. Chairman, with that, I yield back.
Gentleman yields. Ms. Sewell, you're recognized to strike the last word.
My colleagues, let's be honest about why we're here today. We're here because, according to President Trump, Elon Musk, and Republicans in Congress, the wealthiest individuals and the largest corporations in our country are not wealthy enough. This committee could be working to help Americans deal with the high cost of living. We could be working to make health care more accessible and more affordable. We could be working to strengthen Social Security. And of course, we could be working to support our small businesses who are reeling from President Trump's reckless tariffs. But what we're doing instead, at the direction of President Trump, we are marking up a bill that would give $4 trillion worth of tax giveaways to the wealthy, the well-connected, and the well-off. And how are we going to pay for it? Not by reducing the billions of dollars we spend to subsidize oil industry. No, instead, my Republican colleagues would rather kick 14 million Americans off of their health care, cut off food stamps and food assistance for hungry families, and bankrupt our small businesses because of this tariff war. It's outrageous and it's unacceptable. In my home state of Alabama, half of all births are covered by Medicaid, and more than half of the Medicaid recipients in Alabama are children. 60% of the nursing homes in Alabama have Medicaid beneficiaries. So let's be clear. The face of Medicaid are our children, our seniors, and the disabled. When our Republican colleagues cut $715 billion from Medicaid, it is our children, our seniors, and the disabled who will pay the price. Mr. Chairman, these cuts are about more than just statistics. They are about lives and livelihoods. Real people will be impacted by the actions that we take. Last Friday, I had the chance to meet with one of my constituents, LaToya Mims. LaToya's beautiful 6-year-old daughter, Harper, has cerebral palsy. She is one of the 3 million American children living with disabilities. It was because of Medicaid that Harper is able to live at home with her family, surrounded by her loved ones. Without it, she would be forced into an institution. To strip children like Harper of their health care in order to cut taxes for Trump's billionaire friends is an outrageous betrayal of our American values. It's shameful. Everyone in this committee has a Harper in their district. Everyone on this committee represents tens of thousands of Americans who rely on Medicaid to make ends meet. We should be standing up for them instead of ripping the rug out from under them. The people that I represent are good and honest Americans. They work hard every day. They make enormous sacrifices to support themselves and their families, but they are hurting. They are being crushed by the high cost of living, and many are living paycheck to paycheck. What are my constituents to do to make Donald Trump care about protecting their health care? They can't afford to bribe him by funneling millions of dollars into crypto scheme. They can't afford to buy him another jet. The American people sent us here to speak up for their needs, not to do the bidding for the billionaire class. As members of this committee, we have the opportunity to build an economy that works for all Americans, but we are failing them. My constituents deserve to have a voice in this democracy, and I will fight each and every day to provide them with that voice. This is a sad day on this committee, a sad day for Congress, a sad day for the American people. I am a hard no on this bill. Actually, I'm a hell no on this bill. I will continue to fight to make sure that those who are the most vulnerable in our society get a voice. We have to speak up and speak out for the least of these. I will continue to do that, and I ask that my colleagues do the same. Thank you, and I yield back the balance of my time.
Generally yields back. Ms. Delbini, you recognize to strike the last word.
Thank you, Mr. Chairman. I move to strike the last word. This bill is one big broken promise. Republicans promised that when they were elected, they would lower costs for American families. But that's not what's happened. Families have seen the cost of basic goods like groceries and household products go up because of Trump's trade war. A trade war he had no authority to start because he did not get congressional approval before imposing sweeping tariffs against some of our closest allies like Canada and Mexico. These tariffs will raise costs on families by thousands of dollars a year. And while the president has paused some tariffs, it's only temporary. He changes his mind all the time. And that uncertainty itself is damaging to businesses that cannot plan or invest for the future, further raising prices and straining supply chains. Meanwhile, the Republican members of this committee have been silent. They won't stand up for their constituents because they work for Donald Trump. And that brings us to this bill, which will make life even more expensive for families. Republicans are trying to move this bill through, even going through the night, because they don't want the American people to see it. But the American people do see what they're doing. They see that you're giving another massive handout to the ultra-wealthy. They see that you're trying to pay for it by ripping away health care and food security from millions of Americans. They see that you're going to saddle future generations with even more debt. A constituent of mine from Kirkland wrote to me recently sharing that she was horrified to see what Republicans are trying to do to programs Americans rely on. She raised her family with the support of Medicaid, of SNAP, and the child tax credit. Her children grew up to be a nurse and an aircraft mechanic. She was able to give back to the community through nonprofit work helping people with dementia because she had the resources from these programs when she needed them the most. These are the people that are going to suffer because of this tax bill. Hard-working, everyday Americans who are just trying to get by and raise their families. And as costs are increasing because of the president's recklessness, Republicans are cutting the programs that are supposed to help families make ends meet. I was here in 2017, the last time Republicans moved a massive tax bill for the ultra-rich. And they promised that it would pay for itself. Just another broken promise. Instead, the tax bill ballooned our national debt. They said it would stimulate the economy and benefit workers. Another broken promise. A recent study that included some JCT economists found that the corporate gains flowed to shareholders and executives, not to 90% of the workers. You continue to break the promise to make life more affordable for Americans. And on top of the price hikes from Trump's tariffs, you're raising health care bills by taking away Medicaid and Affordable Care Act coverage. This impacts every American because when people don't have coverage, hospitals cut services or close entirely. ER wait times are going to swell, which will mean the difference between life or death for some patients. And you're taking away food assistance, which will lead to more families in our communities going hungry. Washington's Governor Bob Ferguson and governors from 22 other states said it would be impossible for states to pick up the tab from these cuts. There was a way we could do this together. Last Congress, we approved with overwhelming bipartisan support a tax package that would have made a real difference for Americans by investing in our children, building more affordable housing, and supporting innovation. It was a compromise for both sides, but that's what Americans want us to do, to compromise and put them first. I know that's a dirty word on the Republican side right now, but people want us to find a way forward together to improve our communities. Unfortunately, that's not what's happening today. I urge my colleagues to reject this massive broken promise because the American people deserve better. And I yield back.
Ms. Chu, you're recognized to strike the last word.
I move to strike the last word. Republicans are trying to spread the lie that there will be tax relief for everybody in this bill. But this is far from the truth. This is a bill that gives billionaires gold bars worth of tax giveaways. And what do hardworking families get? Pennies. Yes, in this bill, the top 0.1% stand to gain tax giveaways of $278,000 per year. And a family earning less than $50,000 a year gets tax relief of $273 per year. It's laughable, if not tragic. What it means is that billionaires get 1,000 times more tax relief than working families get. Yes, billionaires get the gold bars, working families get the pennies. This bill could have been an opportunity for Republicans to get serious about correcting the damage they've caused since their original tax scam was enacted 7 years ago. They could have reversed the 40% cut to the corporate tax rate that flowed entirely to executives and the largest shareholders instead of workers. They could have recognized that giving millionaires a tax cut 288 times larger than for those making under $50,000 per year was hideously unfair. They could have worked to protect Social Security or Medicare. They could have stopped the president's senseless trade war that's turned our economy upside down in a matter of weeks. They could have revisited their decision to give a 20% deduction on take-home pay to some of the richest people in the country instead of making this giveaway even larger. But Republicans did none of these things. They chose to once again give tax giveaways, $5 trillion of tax giveaways to the richest people in the country and the largest corporation. But that is not even the worst, most irresponsible thing about this budget reconciliation scam. The worst part is that they're taking this money out of the pockets of those most in need. They're doing it with the most devastating cuts to health care benefits for low-income and middle-income people in our nation's history. Through draconian cuts to Medicaid and the Affordable Care Act that together are going to leave almost 14 million people without health care coverage. That's the entire population of LA County and Orange County combined. And this will devastate so many, but especially children, the elderly, and disabled. 40% of births are paid for by Medicaid. Medicaid pays for 2 out of every 3 nursing home residents. In fact, Medicare covers on the average 28 days of hospitalization, and after that, who pays for it? It's Medicaid. And people all across the country are in fear of what could happen, such as Chi Kwong from my district in Monterey Park. When he heard about Republicans' plans to cut Medicaid, he called my office and said, I am a 74-year-old who's worked for 40 years as a warehouse worker. After decades of hard work, I now rely on Medicaid and Medicare for life, and especially after undergoing hip and spine surgery. Now, on top of all of this, Republicans are cheering the president as he wages a senseless trade war that's turned our economy upside down. So the bottom line is this. To my constituents watching this, you're paying the bill. When you pay more for basic necessities, when you lose your SNAP benefits, when your small business is forced to close its doors, when you lose your Medicaid coverage or the tax credits for your health premiums, know that this is the reason why. It is so that Elon Musk can get another yacht. It is so that Donald Trump and congressional Republicans can give another tax cut to themselves and their friends. I yield back.
Gentleman yields. Mr. Bean, you're recognized to strike the last word.
Mr. Chairman, I move to strike the last word, and thank you very much, and a very good evening, Ways and Means. Mr. Chairman, call me old-fashioned, but I love robust debate. But do we have to do it with profane words and cuss words? We're better than that. We're the Ways and Means. So let me, for the record, say I object. Let's keep it clean. Let's keep it classy. To everybody out there that's going to be writing a headline or a byline, I know the deadline, we're in a 24-hour news cycle, but you're going to have a choice. You're going to have a choice. What's your headline going to be? Are you going to buy into the hype that we're giving tax cuts just for billionaires? You can buy into that hype, or you can read the bill, because do you really think Elon Musk is working for tips? No, he's not working for tips. It's the waitress that's raising her kids trying to get by. That's who we're bringing tax relief for. Do you think it's the billionaire that's trying to make ends meet by working overtime? No, it's the family that's struggling, that the husband or wife says, I'll work extra to make ends meet. Overtime. It's the American taxpayer. I've got it right here. A family household under $50,000 is going to see their taxes reduced by 16% in the coming years under this bill. That's America. If I can reach you, the taxpayers that probably aren't watching anyway, because they're working right now. They're trying to still afford the damage done by the previous administration. So we're trying to fix this economy, to light it on fire, to do great things so that everybody can have a chance at the American dream. So the people that are paying the bills, the people that are working overtime for tips, trying to buy a car, do you think billionaires are financing their cars? They are not. But the people trying to make ends meet, they are. And that is the target, and that's the delivery of this bill, to bring hope and prosperity to those who are quietly paying the bills and trying to get by. So yes, the right answer on this bill is yes. We're determined to stay here as long as it takes to get the job done. I just had my first cup of coffee. I'm ready to jump in for round 2. So, Mr. Chairman, with all that, I'm fired up and ready to go to bring real relief to the American taxpayer. Let's go get them. I yield back.
The gentleman yields back and don't have another coffee yet. Ms. Moore, you're recognized for 5 minutes to strike the last word.
Thank you, Mr. Chairman. I move to strike the last word.
Recognized, ma'am.
Thank you. You know, Mr. Bean, you admonish those of us who might believe the quote-unquote hype that this big, beautiful bill would harm families and small businesses and workers. Well, I think this big, beautiful bill is just a big bonanza for billionaires. And I'm going to tell you, when historians, researchers, and scientists study this bill and this country's fray and fall, this day May 13th, 2025, and the markups of Energy and Commerce, the Ag Committee, and this prestigious Ways and Means Committee will be Exhibit A of the breach of the American social contract, the e pluribus unum, envisioned by our founders, as we dismantle health care benefits for at least minimally 14 million people. We destroy the healthcare infrastructure of hospitals, nursing homes, home care, community health centers, as we undermine the Affordable Care Act and Medicare, as we take food from the mouths of babies and older adults, as we interrupt breakthrough medical research, as we retreat from saving our planet from climate change and other things, and as we add $5 trillion and upwards to our debt. All of this to provide monies and breaks to the ultra wealthy. You know, these are choices that we're going to make, but I am saying to my Republican colleagues, this, no matter what you've done in Congress, this will be your legacy. And as Liz Cheney warned you, Donald Trump will be gone. But this, when people Google you, when your descendants Google you, this will be your legacy. And let me say, you know, all these talking points, you know, all this wordsmithing, you know, these are the facts right here. You're not doing this because of debt reduction. You're adding trillions of dollars to the debt for these tax cuts for the rich. You're not doing it for economic growth. The trickle down hasn't worked for 40 years, and it just hasn't trickled, and it ain't gonna trickle. That trickle down economics has been debunked. This is not about work and work requirements. If it had been, we would have been expanding the earned income tax credit. This is not about helping small businesses. You know, we would not be increasing the 199A deduction instead of doing something meaningful for working families. Don't tell me that this is what the MAGA base wanted. The MAGA base, as Steve Bannon told us, need Medicaid. This is not what they asked for. And I'm telling you, anybody with basic understanding of math, including our colleagues in the Freedom Caucus, can tell you that this is not going to reduce our deficit at all. And I just want to say, you know, you can fool yourself, but you cannot fool the real numbers. And the thing that is so outrageous is to hear people talk about how this is going to help families and boost the child tax credit. It's a trick. You do it temporarily so you can get through the 2026 election cycle. Good luck with that. And then these benefits for children and elders and workers disappear, while the tax benefits to the ultra wealthy soar. You know, 3 months into President Trump's term, the chorus of MAGA and others is growing louder. This is not what they signed up for. And they're realizing that this tax reconciliation bill is coming after them and will hurt their families. Not only are you taking health care away from people, you know, they will have access to fewer goods and services because of the tariffs. The promised jobs are not going to materialize. I believe, as Democrats believe, in building from the bottom up. This means that none of our kids go hungry, that they all have access to higher quality education, not just some of our kids. And I urge my colleagues to join me in voting no on this big bonanza for billionaires. And I yield back.
Gentleman yields. Mr. Boyle, you're recognized as strike a last word.
Thank you, Mr. Chairman. Well, here we are. The president's big, beautiful bill for billionaires. Tax cuts, almost all of which go to the top 1%, paid for by the biggest cut to health care in American history. Don't take my word for it. Just days ago, the nonpartisan Congressional Budget Office confirmed that at least 13.7 million Americans will lose their health care because of this bill. That's historic. I went back and checked. No other previous bill, no other previous law, no other previous event caused so many millions of Americans to lose their health care. Not even the Great Depression. So congratulations, this is one hell of an achievement. And why? All to pay for tax cuts for the richest people in America, the top 1%. Now, you can understand why many of us on the Democratic side are attacking this awful proposal. But it's not just us. Just yesterday, conservative Republican from Missouri, Senator Josh Hawley, called cutting Medicaid and the other health programs, quote, morally wrong. He's right. But that's not all. It turns out after cutting Medicaid and cutting the Affordable Care Act and cutting nutrition assistance and cutting education programs and on and on and on, even after all of that, all of those cuts, as large as they are, only pay for about 25% of the tax cuts for the rich. So how does this legislation pay for the rest of it? More added to the national credit card. Our national debt will explode as a result of this, to the tune of almost $4 trillion more added to the national debt. I never want to hear, ever again, anyone on the other side lecture us about deficit and debt. No single piece of legislation in my time here in Congress will do more to add to the national debt than this one. The American people get it. They were asked a few weeks ago in one opinion poll, do you support cutting Medicaid to pay for tax cuts? 81% of the American people said no. And that was before the Congressional Budget Office confirmed that over 13 million Americans will lose their health coverage. Now, sure, you can spin numbers, you can spin statistics. It's the reason why Mark Twain once said there are three kinds of lies: lies, damned lies, and statistics. You won't be able to spin the 13.5 million Americans who lose their health care as a result of this bill. No amount of spinning will convince them to believe something contrary to what they actually are about to live. I say to all of my colleagues here, we can do better. We can ensure that we have tax relief for almost every American, and we can do it in a way that doesn't rip away health coverage from more than 13 million Americans. I urge all of my colleagues to reject this big, beautiful bill for billionaires. I yield back.
Gentleman yields. Mr. Byer, you're recognized to strike the last word.
Thank you, Mr. Chairman. I move to strike the last word.
Gentleman's recognized.
Top-heavy tax cuts paid for by low-income benefit cuts. President Trump and the Republican majorities in Congress were narrowly elected by a little more than 1%, with the simple hope from the American people that it would lower costs. The president himself declared that he would bring prices down on day one. And Trump and Republicans are now breaking that promise. In fact, thanks in part to the unprecedented taxes Trump has imposed on the American people through his nonsensical tariff plan, prices remain high and consumer inflation expectations have surged. Americans are seeing the evidence of his broken promise everywhere. When you buy a cup of coffee or a used car or a dozen eggs, we're paying more now than we did before Trump took office. And on top of that, under Trump's reckless leadership, our economy took a nosedive in the first quarter of the year, the first time it's contracted in years. And many other indications are flashing red. Economic uncertainties at an all-time high, and the conversations around the kitchen table and in small businesses are the same. Everybody's scared. And that brings us to today. My Republican friends are hoping this multi-trillion-dollar giveaway to the wealthy will somehow dig them out of the hole the president has gotten them into. If history is any guide, more tax cuts for the rich won't do much, if anything, to put the economy on a firmer footing or provide lasting assistance for working and middle-class Americans. Their model is the 2017 Tax Cut and Jobs Act. Trump and the Republicans want to extend it here, but look at it. It failed across the board. Wages didn't rise any faster, the economy didn't grow any faster, and the bill definitely didn't pay for itself. It just exploded our national debt. And just like last time, dollar for dollar, the benefits in this bill overwhelmingly skew towards the ultra-wealthy. It's nice to have my friends talk about the tax cuts on tips and the tax cuts on overtime. This is a tiny part of this bill, a distraction from what's really going on. They're trying to pull a fast one on the American people by delivering massive long-term benefits to the millionaires and billionaires while throwing a few temporary tax breaks to working people, timed to help them get through one election cycle. The folks who are getting the most help in this legislation are the same folks who don't bat an eye when the prices go up at the grocery store, or they buy a new car, or they go on vacation, or they're affected by the tariffs that are cost average Americans at least $2,800 a year, according to Yale. The ultra-wealthy are the very last people that need a boost on their incomes. And yet, my Republican colleagues closely attend to their needs in this bill, ensuring their tax rates stay low, and the states where tens of millions of dollars don't get taxed, and the folks who manage hedge funds keep their special carried interest tax loophole. Making the legislation even worse is how my Republican friends plan on offsetting this eye-watering price tax. We've heard again and again they want to undermine America's fastest growing, most affordable energy sources and jack up utility bills for working families and do their friends in big oil a big favor in the process. They want to keep food assistance for the poorest Americans, and they're planning on ripping health insurance away from 14 million Americans, including seniors, kids, and people with disabilities. I have a constituent, Chris McCauley, with spastic quadriplegia, and he uses a wheelchair. Medicaid pays for his equipment and support programs during the day. Without the help of his dedicated caregivers and the support Medicaid provides his mother, she wouldn't have been able to work full-time and support her family as a single mom for the past 20 years. These are the kinds of families that this legislation will harm. All to help give the richest Americans a tax break they don't need, and they won't change their lives at all. Trump and Republicans have shown what their priorities are. At every turn, they choose to help the rich, often by taking money directly out of the pockets of working Americans. This bill will be a disaster for American people and will further divide our society between the thoughtlessly comfortable and the yearning discouraged. Top-heavy tax cuts paid for by low-income benefit cuts. I urge my colleagues to vote no, and I yield back.
Gentleman yields. Mr. Evans, you recognize to strike the last word.
Thank you, Mr. Chairman. I move to strike the last word.
Gentleman's recognized.
Let's making one thing clear. The committee is here for one reason and only one reason. We are here today to watch President Trump wants to make his billionaire buddies richer in expenses of working people. We're here because Republican members want to help Donald Trump find ways to eliminate our health care for working families. Republicans are not here to help those who are struggling. It's a Republican bill, if it passes today, will take away health care for millions of Americans and the expenses. I urge all my colleagues to do the right thing. Vote no against this bill. And I yield back, Mr. Chairman.
Gentleman yields. Mr. Snyder, you recognize to strike the last word.
Seriously, Mr. Chairman, are the Republicans really serious about taking health care away from 14 million Americans? Are you all willing to demand those earning less than $30,000, many of whom are going to see their families lose their health care because of the Medicaid cuts? Are you seriously going to vote to increase their tax burden? Are those of you who spent your careers calling for fiscal responsibility seriously now going to vote to increase our national debt by $5 trillion in just 9 years? The fact of the matter is that there is nothing serious about this bill or the charade that we in this committee are having a serious markup. This is not a serious exercise, but an exercise of partisan parsimony favoring the most fortunate, and especially the billionaire friends and family members of President Trump. And let's consider how we got to this moment. The Republicans weren't serious on Friday when they offered a 28-page bill that was nothing more than a feint. The Republicans were not serious yesterday when they dropped a 400-page substituting amendment barely 24 hours ago that is neither complete nor germane.
Republicans are cramming us with what they are calling one big, beautiful bill, but it is really just a big package of gimmicks, feints, and ploys that will add more than $45 trillion to our debt by the middle of the century. That's why we're doing this in such a rushed manner, why Republicans are rushing to hold this hearing in the dark of night, rather than what could easily be held in broad daylight with constructive debate. And in fact, if we wanted to, if they wanted to, we could probably have bipartisan collaboration. Mr. Chairman, I've received thousands of letters from my constituents terrified what's going to happen to their families because of the Republican bill. I've heard from people dealing with life-threatening diagnoses who wonder if they will be able to continue their battle or be able to see their kids and grandchildren grow up. I've heard from parents of children with disabilities that rely on Medicaid for long-term care. Medicaid is a lifeline for these families, and they wouldn't be able to afford to get their children the care they need if Medicaid is taken away. I've heard from one of my constituents whose son is autistic and receives home-based services from Medicaid. She can't afford the home-based supports Medicaid funds for her sons. What's going to happen to her and her family if Medicaid is taken away? I've heard from constituents whose parents are dealing with dementia and wonder if they will be able to provide them the long-term care they need and deserve. How do I tell these people the Republicans' one big, beautiful bill will make their life better when it is so patently obvious that it will make their life harder? Mr. Chairman, in my home state of Illinois, nearly 3.5 million people are enrolled in Medicaid. That's 20% of all Illinoisans. Medicaid covers 3 in 8 children, 1 in 3 working-age adults with disabilities, and 2 in 3 nursing home residents. This big, beautiful bill will not make kids healthier, won't suddenly disappear anyone's disabilities, won't make nursing home care unnecessary. People's needs for these services will not go away, but by cutting Medicaid, their access to life-sustaining, life-saving health care certainly will. Hospitals will close, especially in rural communities already struggling to get care. Nursing homes will either have to close or raise their prices, either way pushing care out of reach for countless seniors. We're here today to consider the nearly 400-page bill. The tax policy in this bill is all smoke and mirrors. The real effect is that millions of Americans will be far worse off because of this one big, beautiful Republican bill. There is nothing beautiful in this bill. It's not going to help people who need support. They're gutting safety net programs, taking away health insurance, and stealing food from families in need. And not just make people worse off now, Americans will be worse off for generations to come. Remember, Republicans are adding more than $5 trillion to the national debt by 2034 and $45 trillion by the middle of the century. A kid born today, before that kid turns 30, this nation will be $45 trillion in debt. And here's the thing. We could keep the current tax rates for 98% of all Americans, everyone making less than $400,000 a year, for a $1.8 trillion package. And we could responsibly cover that figure with smart, bipartisan solutions that help hardworking American families not just make ends meet, but get ahead and give their kids a better future. That's what we should be doing with this bill. That's what we should be doing seriously. I yield back.
Gentleman yields. Mr. Moore of Utah, you recognize to strike the last word.
Thank you, Chairman. Appreciate the opportunity to just address a few things in this tax portion of the reconciliation bill. We're going to hear a lot today, and that's the nature of any reconciliation bill. I wasn't on this committee when the Democrats did the American Rescue Plan, but there were just as many arguments on our side against the nature of that bill. And from that, you know, we saw an enormous amount of relief spending that was put into the monetary supply, and subsequently some of the worst inflation that we've ever seen. What we're trying to do here is take what we learned and what we knew from 2017, the tax provisions that took place in 2017, and what that does to economic growth with respect to the entire economy. Let me just highlight a few things that I think are getting missed today in the conversation, and then some things that we're trying to actually address from the 2017. So in 2017, the standard deduction was doubled. So the amount that you can write off on your tax liability was increased by 2x, both for individuals and for married filing jointly. I don't know how to say this over and over again. I don't know how to make this settle in, but that's one of the largest provisions in the bill, along with the child tax credit that goes directly, the largest provisions in the bill, and the benefit goes directly to middle income and lower income Americans. This is not a bill for billionaire relief. I'm sorry, it's just a talking point. The Washington Post has refuted this over and over again. This is just rhetoric. We have to look at the actual pieces of the bill. Okay, the standard deduction was doubled. So what does that do? That means fewer people itemize. And guess what? There was an issue with that. Because charitable organizations realized, fewer people are itemizing. They're less incentivized to give to charities because it's not a tax benefit necessarily, because they're getting such a great big tax break by the standard deduction being increased so big. So what are we trying to do here? Something called the Charitable Act, a very bipartisan piece of legislation that we've worked on in this committee for the last several years, the 2 years that I've been on, is going to get enacted here. And what it does is it provides an above-the-line tax break for those people that are contributing $10 to the Salvation Army, $100 to their local Boys and Girls Club, and just make sure that we're encouraging organizations like the United Way to still get those small dollar donations that are so important. Okay, so that's the kind of opportunity. We haven't been able to do it for the last 4 years. This is a moment where we can do it because this tax bill will, if this gets signed into law. Those are the kind of things that we're working on here. This is important, right? There's things within, making sure that I'm a big supporter of private and family foundations. There's provisions in here that I've worked on to make sure to reduce the impact this sector has grown dramatically, and there's already a tax on this sector, and there's work that's being done on this. I've been working really hard to make sure that good work is being shown. There is so much focus in this particular tax bill on making sure that the world that exists outside of public sector and private sector, the nonprofit sector, is actually supported. So lower income, middle income Americans are getting a huge amount of tax relief through the extension of what was done in 2017, which is the majority of this bill. Then you add on things that are also new provisions in this bill that are targeting lower and middle income Americans. It just flies in the face of this concept that it's just for this wealthy class. Let me add in quickly the 199 Cap A provision. This is hugely important for small businesses across the board. That you'll hear from the economy, folks that are involved in this world, focusing on LLCs, partnerships. This is where small businesses generally set up their status, and this is giving a 20 to 23, even an increase on qualified business income relief. That is not some massive benefit to, well, this is a small business type of provision. And this is key to being able to make sure that Utah, for example, it's a state that focuses heavily on small business. We're not big Fortune 500 places, location. We actually are at the backs of small businesses, and it's key that they have tax relief that will help them continue to grow. We did a bipartisan tax bill just last year, last Congress, that had the provisions of R&D, interest deductibility, bonus depreciation, that got unanimous support across the board. Those are the types of things that we're focusing on this bill, and a lot of the rhetoric is just going towards stuff that is just not accurate, and I yield back.
Gentleman yields. Like to recognize the ranking member.
Thank you very much. I had not intended to strike the last word to give our colleagues an opportunity, but has the gentleman had a chance to look at the distribution tables that you spoke? To equate $500 for a child with hundreds of thousands of dollars that are going to go to individual filers at the top, billionaires, doesn't make any sense under the magnifying glass of critical analysis. How can we say that this is relief for the little person who's going to get $1 a day compared to people who are multimillionaires who are going to derive an enormous benefit? Digest the distribution tables. This is the Bible of the Ways and Means Committee when it comes to tax policy. I yield back my time. Yeah, I'm going to yield to Mr. Thompson.
Thank you, Mr. Neal. I just want to add, in regard to the comments my friend from Utah made about the talking points that we're using. I think the ranking member is correct. We're using the distribution tables. This explains exactly who gets what. And the ranking member was very generous to suggest that people on the lower end of the income spectrum get $1 a day. They actually get 72 cents a day, vis-a-vis those on the other end that get $223 a day. These aren't Ways and Means Democratic Party talking points. These are the distribution table, the coin of the realm in the tax world. So to suggest that somehow we're making up numbers in order to make political points is absolutely ridiculous. And I yield back.
Mr. Panetta, you're recognized to strike the last word.
Thanks, Mr. Chair. Look, I think we've seen, we've heard, we've read what we could have of this 400-page bill, that this legislation guts benefits to working families to give tax breaks to billionaires, and all the while adding trillions to our debt. And by supporting it, you're giving up our commitment to this country. Look, I recognize how difficult it is to advance tax policies and balance fiscal responsibility with economic growth. Yet if you call yourself fiscally responsible, that type of legislator, or if you call yourself a responsible legislator, you have to realize how thoroughly this bill fails working families, all the while undermining the fiscal state of our nation. Now, the larger reconciliation bill advances cuts to Medicaid, a program that provides health care for over 71 million Americans. This bill would institute work requirements that would both cut health care spending and push people to work. Look, I get there's dignity in work, but the problem is less with that principle than with the implementation of such a program. Let's be clear. Very few people who receive Medicaid do not work. Just 8% of working-age, able-bodied Medicaid recipients are unemployed without an excuse. Yet it's very difficult to create a policy that targets that 8% and does not sweep others who are vulnerable. Recently, Arkansas tried this. It was such a failure that a court stopped the work requirements less than a year after it started. Why? Way too much red tape that led to 18,000 people losing health care coverage. And it didn't even increase employment. That doesn't just work in Arkansas. That in 2023, the CBO found a similar House Republican plan for work requirements would not increase employment and would lead to the loss of hundreds of thousands of jobs because of the decrease in health care spending. I get the idea of work requirements, but they also feed that ideological urge that Medicaid should not be an entitlement. But the fact is that Medicaid is a benefit that working families rely on, yet this bill sacrifices that program for billionaires. You are sticking us with this bill that not only worsens the lives of working families, you are worsening the unsustainable fiscal trajectory of our nation. Currently, our federal debt now exceeds $36 trillion, which is about the size of our economy. But this bill would increase the national debt by $5.3 trillion over the next 10 years, something that is unthinkably irresponsible. Yet this bill takes the easy way out when it comes to adding to our debt and deficit, so much so that they want to ignore the cost of extending the lower tax rates of the TCJA. But let me tell you, working families won't be able to ignore the consequences of this bill. Interest rates will go up, inflation will go up, mortgages will go up, and the average American income will go down. This bill is about stealing from Peter to pay Paul. You're stealing from working families to pay for billionaires. You're stealing not just from our children, you're stealing from the future of this country. By convincing yourself that you're fixing the problem, you're failing to be honest with yourself about meaningful fiscal reform. And by voting for this bill, you're just making things worse. That's why I oppose this bill, and so should you. I yield back.
Mr. Gomez is recognized to strike the last word.
I didn't think Republicans could get any worse, but here we are. But one thing that they do is finally admit that this is one, quote unquote, big, beautiful bill. Calling it beautiful is like putting lipstick on a pig. You might put lipstick on a pig, but it's still a pig, and the American people don't want to kiss that swine. And at the same time, the American people are witnessing one of the biggest transfers of wealth in the history of this country. In the Energy and Commerce Committee, just down the hall from here, Republicans are voting to slash almost $700 billion from Medicaid, which is the health care for the working class, so that Republicans in this room can then give trillions of dollars in tax breaks to the billionaires, the ultra-wealthy, and the largest corporations in this country. Republicans are literally stealing from the poor to give to the rich. This is in broad daylight, without any shame. They're actually proud of it. And who loses when the Republicans cut Medicaid? It's you, the American people. 51% of new moms and their babies who are covered by Medicaid, they will lose. Seniors that don't get enough coverage through Medicare, they will lose. The son or daughter that doesn't earn enough to cover their parents' assisted living facility bill, they will lose. People that live in rural communities, they will lose. And who represents those constituents? The Republicans. So the Republicans claim to be the pro-family party, but they hardly pass anything that actually values families. Republicans are making it harder for working people to get by, harder for families to welcome a new child, get postpartum care, or cover basic medical needs during one of their most vulnerable times in their lives. But they don't care. Families are struggling. Many are working 2 to 4 jobs a week to make ends meet. They're already stretched thin by the increasing cost of food, housing, and childcare. And now Trump's tariffs are hitting them even more, costing them another almost $4,900 a year in taxes. This doesn't uplift families, it pushes them down. Voters sent us here to lower costs and create real opportunity. And that's what we should be doing. We should make the child tax credit fully refundable and advanceable. Make it bigger and make it pay out monthly. That's how we cut child poverty in this country by 40% during the 1 year it was implemented. We should help families buy their first home and build wealth. We should make child care affordable and guaranteed paid family leave. But this bill doesn't do any of that. That's because the Republicans choose the new billionaire establishment that has taken root in D.C. over their own constituents, over the working class, the ones that they actually talk that they fight for. But we know that that is BS. We know that's not what they're doing. Because the tax cuts don't lie, the tax breaks don't lie, and the people who are going to get rich, who's going to be better off, are the higher folks on the income ladder. That's who gets by. That's who gets wealthy. We should be. So it is one big bill. They're absolutely right, and they're cutting Medicaid in order to pay for it. They're cutting SNAP in order to pay for it. They're cutting everything that working people rely on. So to my Republican colleagues, I have a few questions for you. Are you for the babies or the billionaires? Are you for seniors or the billionaires? Are you for rural communities or the billionaires? Are you for working men and women who are struggling in this economy, who are struggling to save up, to take care of a sick family member, to start a small business, to put a child through college? Are you for the billionaires? Words are cheap. It's your vote that matters. And we all know how you're going to vote. And you're going to say that you're not taking from the poor, that you're not taking from the middle class. So I want you to be honest with the American people. Stop pissing on our leg and telling us it's raining. With that, I yield back.
Mr. Horsford.
Thank you, Mr. Chairman. I would like to strike the last word. Economic chaos, cruelty, and corruption. That's what lies before us. I know there's a lot of tension on a $400 million airplane. That's a distraction that's taken away from the fact that this bill screws America. The cuts in this Screw America bill are rigging the game, stacking the deck for billionaires while leaving working families to play with the losing hand. And while we're dealing with the chaos here in our committee, the other committee down the hall is making the biggest cut to health care in U.S. history. In the other committee down the hall, they're cutting nutrition assistance for children and seniors. And they're planning on doing so in the middle of the night, under the cover of dark, because you don't have enough courage to bring this bill before the American people to read it aloud and tell them who actually benefits. Why are they doing this? To pay for their Screw America tax cuts for billionaires. Mr. Chairman, the committee's not in order. Let's break down those cuts. If you're lucky, you might get $1,000. But Elon Musk, he'll pocket over $300,000 per year because of this big, beautiful bill. That's $762 every single day. Their Screw America plans to gut $300 billion in new private sector investments in clean energy solutions. How does it screw Americans? Simple. By repealing the credits, that raises household energy costs by $110 a year. That means that so-called $1,000 tax cut for middle-class families is now worth $890. This bill does nothing to address the housing crisis. Nothing. Nearly half of the renters in Nevada spend an excessive portion of their monthly income on housing. Democrats have a plan for that. Republicans, they're handing out another tax break to Jeff Bezos. Rents in Las Vegas have risen 30%. What was once $1,500 a month is now $1,900. The cause? Institutional speculators buying up homes. That's why my Home Act would directly address this. But Republicans, they just gutted the FTC and handed more power back to corporate landlords to jack up the rent. So that $890 tax cut now is worth $440. Even a free program to help people file their taxes is on the chopping block by Republicans. Industry estimates show that on average, Americans spend about $200 to file a simple return. So this is just more money out of your pocket. And we can't forget the blanket tariffs, which are taxes that American consumers pay, not foreign governments. President Trump is weaponizing tariffs, not to boost U.S. manufacturing and workers, but to punish allies and to raise cost on consumers. That's a tax hike, one that could cost the average U.S. household $2,800. So remember that $440 I talked about? It's now wiped out. You're now losing over $2,000. Remember Elon Musk and other billionaires like him? He's still saving nearly $1,000 a day. That's the Screw America agenda. So how are Republicans planning to give Elon Musk more money? By slashing vital programs like nutrition assistance, like Medicaid. 2/3 of seniors in nursing homes are on Medicaid. My grandmother lived in a nursing home for 27 years of her life after suffering a debilitating stroke. 1 out of 10 of our veterans are on Medicaid. These are lifelines for more than 500,000 and 811,000 Nevadans, respectfully. So let's be serious. Show me where there is relief for working families. Show me where there is relief for rural communities. Make rural America great again? Their method? A tax break for large international corporations. Republicans want to give the American people, they want to give you pennies while handing out gold bars to billionaires. So as we begin this process, and yeah, I'm going to fight all night, Mr. Chairman, I'm asking my colleagues to break from Donald Trump, break from this cruelty, break from this economic chaos, and join with us to chart a different path forward, one that ensures that we give permanent tax breaks to moms and dads and small businesses, not to billionaires and big corporations. Let's get serious about lowering costs. Work with us to hold corporate interests accountable. And if you're serious about serving the people, not the lobbyists in D.C., then work with us and not this Screw America bill that inflicts so much pain on the American people. I yield back.
Votes have been called. We will recess until the last vote's been taken, and the committee will start immediately after the second vote. The committee will come to order. We'll resume with strike the last word. Ms. Plaskett, you are recognized.
Thank you, Mr. Chair. I move to strike the last word. I understand that my Republican colleagues have made the best of a bill that they've been told they have to pass. A bill for the president and the billionaire donors. They want the American people to believe it's a growth bill, a jobs bill, that this is a bill for the working class. That's to give them comfort for what they know they have to do. And what they have to do is have a tax cut that's a deficit-raising bill. Giving money to the rich does not raise wages or grow new jobs. And how do we know? Because the 2017 tax bill did not grow the economy, did not spur manufacturing, did not bring new jobs. And we know this because the numbers tell us that. The 2017 tax bill gave Biden, when he became president, a gross domestic productivity rate of negative 1.4% when he was inaugurated. While this year, when Trump was inaugurated, he was given a domestic productivity rate of 2.7%. Private business investments were up to 3.9% when Biden left office. While Trump's last term, it was negative 6.3%. Trump gave Biden a manufacturing job growth of negative 0.5%. Biden was able to raise it at the end of 4 years to just under 1% growth. This bill makes it even worse. The private sector growth, stripping out, as you've heard from my colleagues, $300 billion in private sector investments in clean energy, doing nothing to support the housing crisis that young Americans, middle-class Americans face, whether it's through rental or the ability to buy a home. Small business, 87% of the pass-throughs that my Republican colleagues are talking about and want small businesses to believe they're going to get, 87% of that is going to the top 1%, not to the small businesses barely trying to make it that the Biden administration supported. Healthcare, you've heard that 70 million Americans rely on federal support healthcare. Low-income children, pregnant women, seniors, nursing homes, seniors in nursing homes, people with disabilities, veterans, to pay the big super PAC donors that got Trump elected, they're going to strip 13 million Americans of health care to give those donors additional money. And while you may not be on Medicaid, it's going to affect you. Let's look no further than my home of the U.S. Virgin Islands, right? Let me talk to you about what happened in Puerto Rico. Puerto Rico has not received sufficient Medicaid. We are on a cap on the block grants that everyone here is talking about. Puerto Rico had federal spending up to this amount, and then they have had to make it up to that. The trend led to them going into bankruptcy with the debt and the burden that they had to make. Remember PROMESA? That was all predicated on debt that Puerto Rico had. In the U.S. Virgin Islands, our hospitals face a funding gap treating uncompensated patients because we are capped in the amount of money we receive from the federal government and have to make up the rest or just don't have it, that we have taken people off of the Medicaid rolls, so much so that our doctors have said that they do not have sufficient blood, oxygen, anesthesiologists to be able to meet their Hippocratic oath to be able to function in a hospital. That's what's going to happen with the rest of America if we continue on this trend. And for what? Why are we doing all of this? What is the point? The point is to give tax breaks to the wealthy, to refund the top 1% who will gain $778,000 per year. America, you're the side chick. We're the side chick to the one person that they've married, the donor class that they've married, and are giving them the real money. They're getting the real money, and you're getting a little piece on the side. That's what's happening to us. We are getting less than $1 a day, while individuals who do not need the money, like Elon Musk, Jeff Bezos, let's remember that whole front row at inauguration, that $1 trillion of net worth that was there, have to be paid off. And that's what this bill is about. I yield back.
Mr. Swazi is recognized to strike the last word.
Thank you, Mr. Chairman. We all know that our country is so divided, our people are divided, and we see in this committee how divided we are. There's like two complete different universes that we're living in, and it's kind of the same debate that's going to be going on most of my adult life. The Republicans are saying this is a big, beautiful bill, it's going to get the economy moving, it's going to be great for everybody. And the Democrats are saying this is a big broken promises bill, where the deficits are going to explode, we're going to cut health insurance for some of the most needy people in the country, and we're giving tax cuts for some of the wealthiest people in the country that are unnecessary. So the people are concerned about things like the economy and immigration and taxes and crime. People are concerned about health care, and we're just fighting with each other all the time. And this is an effort to just do one party, my way or the highway. Democrats have done it before when we were in power, instead of us working together. So we were concerned about deficits. Everybody's talking about the deficits. The president talked about how he's going to dramatically reduce the deficits. There's not going to be any more deficits here. Chairman Smith is concerned about the deficits. Chairman of Budget, Arrington, is concerned about deficits. Others are concerned about deficits. And as we heard earlier today, this is going to increase deficits by $4 trillion. Elon Musk and Doge says we're going to cut things. We got to cut. And they set a goal of $2 trillion in cuts. But then they reduced it to $1 trillion in cuts. And then they said we could only come up with $150 billion in cuts. And I guarantee you, mark my words, those cuts will end up costing money because they were done in such a reckless manner. So why can't we work together to try and find places that we can go after waste, fraud, and abuse, that we can find efficiencies in things, that we can work together to try and solve the problems that people care about? Why are we reducing the highest tax rate, or keeping the highest tax rate from where it was before? It was 39.6 until 2017. It was 39.6 under the under the Obama administration. It was 39.6 under the Clinton administration. For the wealthiest Americans, it was 39.6. It was reduced down to 37% for people making over $600,000. And for people making over $400,000 or a married couple making $500,000, it was reduced down to 35%. Why can't we just go back to 39.6%? It's not going to hurt those folks. They're going to do fine having that back again, and we won't be increasing the deficit so much. And we can pay for some of the things that we should be working on together to try and provide for the American people. Why can't we use Aaron Bean's committee, the Doge committee that he set up, where we wanted to try and have Democrats and Republicans work together to try and find places for us to find efficiencies? Tariffs. Well, tariffs can be good in some instances. What we've seen this thus far has been reckless. It caused the stock market to go crashing down. It causes prices to go up. Businesses in my district were very negatively affected by the way it was implemented. Why can't we use this committee with its jurisdiction to figure out the appropriate taxes in a way to implement it in an appropriate way so that we can hold our adversaries accountable and we can get our friends to make their markets more attractive for us? So let's try and work together to try and address the problems that the American people face. They're concerned about rising prices and their wages and their benefits and their ability to make it in America. They're concerned about the border. Let's work together to work on the border. They're concerned about taxes. Let's try and do a reasonable tax policy that benefits the middle and the working class and those aspiring to the middle class, instead of giving tax cuts to the wealthiest people in America who don't really need it. Let's focus on public safety, and let's focus on health care instead of taking it away from the people that are most in need in our country. I think if we could all work together, we could get a lot more things done instead of living in this bizarro world where we have this completely different view of what's actually happening before us right now. I think that what we see happening is an accurate portrayal of what's happening. But I know that there's a lot of good people on the Republican side that want to accomplish the same type of goals that we want to accomplish. And instead of trying to ram something down our throats that doesn't really make sense, especially for the people that are going to lose their health insurance, I mean, think of the 14 million stories of people going through some of the worst times in their lives, losing their health insurance. It's going to be awful. Thank you, Mr. Chairman. I yield back.
Mr. Schweikert is recognized to strike the last word.
Thank you, Mr. Chairman. And forgive me for doing this, but I wanted to geek out just for a moment, just because I've had a couple people sort of mention it. We were given a distributional tables, and there's a couple parts of it that we need to do a little bit of work on. Maybe I'm going to try to actually make a chart. Can you believe that? Okay, that was actually funny. And for everyone, if you take a quick look at the distributional chart, if you take a look at the first quartile, less to 15,000, as has been pointed out, and Mr. Barthold, thank you for guiding me the right direction. Just understand, denominator, very, very small, tiny changes blow that up. That one we almost have to set aside and build up. If you take a look at that present law, that's as TCJA expires, and you'll actually take a look at, we have multiple layouts of the distributional chart, and the numbers are different. So we're trying to chase down why the numbers are coming out. The other thing you also need to understand is you look at the distributional charts, particularly when you get into probably the top 6, 7 quartiles of income, that has also the pass-through income built into there. So it's total sort of income that is hitting those quartiles. So, Mr. Chairman, we're going to actually make a little bit of attempt to chart this because we're trying to get a sense of, most people don't understand in 2017 what we passed. All the rates came down, but it actually became more progressive, meaning the top quartiles of income were actually paying a higher percentage of federal income taxes than prior to TCJA. So our friends here who actually care about progressivity, so I knew I could get that word out, we're going to try to make a chart and sort of demonstrate that I think that nature of the curve actually stayed pretty much the same. It's just the generalization, the rates coming down or staying stable from popping up at the end of next year. All right, and with that, Mr. Chairman, one last thing I want to throw out. I care passionately about the debt. I'm terrified about interest fragility and those things. I have 2 pieces of legislation. One we've been working on since last summer. We have it at CBO getting scored. It is a stunning amount of money because it would reform a big portion of the MA. For those of you, this isn't the proper place for it, but if some of you really care about the debt and deficits, come talk to me because kindly even some Democrats have been being very kind in helping us look for savings and reform. It just turns out when you're doing something complex, it takes time and complexity, a whole lot of talent to help you. With that, I yield back.
Will the gentleman yield for 1 second?
May I recapture? Shoot.
So on the distribution table on the first page, page 1 of the distribution table, it shows for the people from $500,000 to $1 million a year and the people for $1 million and above.
Mm-hmm.
So between those two groups, the total revenues go from about $1.7 trillion down to about $1.5 trillion. So approximately a little bit less than $200 billion a year. $200 billion a year over 10 years is $2 trillion. You could cut $2 trillion from this bill if you just didn't lower the taxes on the people making over $500,000. You're concerned about the debt? You're concerned about pay-fors? There's $2 trillion on the people that make over $500,000 a year.
And Mr. Chairman, Mr. Suozzi, a good observation. We have to break that down to how much of that is pass-through business, other types.
No, I know it's pass-through and it's individual rates, but both things. Why should we be providing tax cuts?
But Mr. Suozzi, we also need to understand how much of that may be capital gains, other types of things. So we need to break down and figure out what categories that income is coming from. So look, as you know, I'm just fascinated with distributional tables. It's It's almost a fetish, so we'll work through that. Thank you, Mr. Chairman.
Thank you. Seeing that there's no additional members to strike the last word, we'll now move on to amendments. Are there any
I don't know.
yeah. Are there any amendments to the amendment in the nature of a substitute?
Mr. Chairman, I have a motion at the desk.
Mr. Chairman, I reserve a point of order.
Do you have a motion or an amendment?
An amendment.
Okay.
Thank you. Belay my last.
Would the gentleman suspend while we look at it?
Please. Thank you, Mr. Chairman.
Okay. Gentlemen, proceed.
Thank you, Mr. Chairman. As you can tell, a pretty straightforward amendment that would just strike the unprecedented $4 trillion debt limit increase that's in this bill. A $4 trillion increase that is the largest enumerated increase in the United States history. Look, while raising the debt ceiling is necessary to avoid default, a change of this magnitude does not belong in this type of partisan reconciliation package packed with policies that will only deepen our debt and deficit. Now, during the president's first term, this president's first term, the debt limit was raised 3 times, but each time through a bipartisan agreement, and never on this scale, and never through reconciliation. Now, most recently, Congress raised the debt limit through the Bipartisan Fiscal Responsibility Act, which resulted in $1.3 trillion in primary deficit reduction. This reconciliation bill would undo that progress and add $2.6 trillion to the size of the deficit. And if the Senate makes changes to this bill in line with its reconciliation instructions to disappear the cost of the TCJA, it will be 4 times as much. Mr. Chairman, now's not the time for a bill that experts calculate could add an additional $6.9 trillion to our national debt. As it is right now, the national debt stands at a staggering $36.2 trillion, almost the size of our economy. Interest payments alone on that debt now total $1 trillion annually, which is more than we spend on defense, education, or Medicare. And instead of investing in our future, we're paying down these past debts. You combine the fiscally reckless policies in this bill with a historic debt limit increase, it's just irresponsible. And it will put us in a deeper hole, especially when it comes to our debt and deficit. The $5.3 trillion in additional debt proposed in this bill will hurt working Americans. Extending the Tax Cuts and Jobs Act without offsets will increase the cost of the average mortgage by $600 to $1,200 per year. The increased deficits will push interest rates higher, increasing costs across the board from home ownership to business investment. Since this president took office, our fiscal trajectory has only deteriorated. Just last week, the Treasury Department increased its borrowing forecast for the next quarter by an astonishing 317%. It now expects to issue $514 billion in net marketable debt in the next quarter alone. We just can't afford a reconciliation bill, Mr. Chairman, that could add as much to the deficit as all the emergency borrowing for COVID relief. We really got to stabilize our fiscal outlook, not worsen it with another irresponsible debt-fueled tax plan. This amendment, Mr. Chairman, like I said, and as you can see, is very straightforward. It's an amendment that would ensure that we have this critical debate rather than giving the green light to massive tax giveaways with an unprecedented partisan increase in the debt limit. Thank you, Mr. Chairman.
Is there any discussion on the amendment? Mr. LaHood is recognized.
Thank you, Mr. Chairman. Mr. Chairman, I just want to make the body aware here that Secretary Bessent recently warned that a failure to increase the debt limit would, quote, wreak havoc on our financial system and diminish America's security and global leadership position. And in my view, Mr. Chairman, House Republicans will not let that happen. I would also note that even Minority Leader Hakeem Jeffries and Senate Minority Leader Schumer admitted that increasing the debt limit is, quote, about meeting obligations the government has already made. And in this bill, Mr. Chairman, Republicans are taking the first fiscally responsible step to ensure that the country does not default on its obligations. And I yield back.
Mr. Neal.
Thank you. On the gentleman's proposal, is that a widely held position in the Republican Party these days? that it's responsible to raise the debt limit, or is that only at moments like this when it's being used to camouflage a tax cut for wealthy people? Because I've listened to these arguments for a long time, and in my own experience, we used to do the responsible thing. If you voted for the expenditure, then you voted to raise the debt ceiling afterwards. That was cast aside in this chamber. The responsible thing is to honor our debts, but at the same time, I've listened to these arguments on the other side where you can cut taxes, do spending, and refuse to raise the national debt unless there's a Republican in the office of the White House.
Further discussion. Mr. Snyder.
Thank you, Mr. Chairman. And I'm proud to support my colleague, Congressman Panetta's amendment. We're sitting here talking about a bill that is going to add $5 trillion of debt, irresponsibly add $5 trillion of debt to the national account. As my colleague, Mr. Swazi, said earlier, we don't need to do this. We could, in fact, I'm sure we could do it in a very bipartisan way. Look at ways to make sure that those making less than $400,000 or even $500,000 a year don't see an increase in their taxes at the end of this year, but that we figure out a way to start paying down the debt, $36 trillion that we currently have. We know that a big portion of that debt is because of the decisions to save our economy, save American lives during the pandemic. That was the right decision then, but that is also a decision that the cost of that should be borne by those who benefited from it, not passed on to future generations. It's estimated that the bill we're talking about tonight, this one big, beautiful, giant debt bill, is going to add $45 trillion to the debt by the middle of the next century. That number is incomprehensible, or should be for most of us. That's 45 with 12 zeros. Everyone in this room should be saying, wait a second, is this the best we can do for our children and our grandchildren? And instead, you're burying in a sentence in a 400-page bill. In the dark of night, you've got a provision that says, okay, we'll just give a blank check to the president and the current Congress. We should be working at deficit reduction, not deficit expansion here. We have the chance to do that. As the ranking member talked about what now is a generation ago, under President Clinton, in a bipartisan way with a Republican Congress, we balanced our budget. We balanced our budget by addressing both revenues and expenditures. That's what we should be talking about. Instead, what we're talking about is a giveaway to the president's friends and billionaires like Elon Musk, and a takeaway from working families. 14 million Americans will lose their health insurance because of this Republican one big, beautiful boondoggle. So we should not be burying a debt ceiling clause in this bill. We should be having a robust debate. We should be having a robust debate about everything rather than in the middle of the night facade of a conversation that we're having today. I support this amendment, and I yield back.
Further discussion on the amendment? Seeing none, the question is on agreeing to the amendment offered by Mr. Panetta. The clerk will call the roll.
Mr. Buchanan?
No.
Mr. Buchanan, no. Mr. Smith of Nebraska? Mr. Smith of Nebraska, no. Mr. Kelly? Mr. Schweikert? Mr. LaHood? Mr. LaHood, no. Mr. Arrington? Mr. Estes? Mr. Estes, no. Mr. Smucker? Mr. Smucker, no. Mr. Hearn? Mrs. Miller? Mrs. Miller, no. Dr. Murphy? Dr. Murphy, no. Mr. Kustoff? Mr. Kustoff, no. Mr. Fitzpatrick? Mr. Fitzpatrick, no. Mr. Stubbe? Mr. Stubbe, no. Ms. Tinney? Ms. Tinney, no. Mrs. Fishbach? Mrs. Fishbach, no. Mr. Moore? Mr. Moore, no. Ms. Van Dyne? Ms. Van Dyne, no. Mr. Feenstra? Ms. Malliotakis. Ms. Malliotakis, no. Mr. Carey. Mr. Carey, no. Mr. Yakum. Mr. Yakum, no. Mr. Miller. Mr. Miller, no. Mr. Bean. Mr. Bean, no. Mr. Moran. Mr. Moran, no. Mr. Neal. Mr. Neal, yes. Mr. Doggett. Mr. Doggett, yes. Mr. Thompson. Mr. Larson. Mr. Larson, yes. Mr. Davis. Mr. Davis, yes. Ms. Sanchez. Ms. Sanchez, yes. Ms. Sewell. Ms. Sewell, yes. Ms. Delbene. Ms. Delbene, yes. Ms. Chu. Ms. Chu, yes. Ms. Moore. Ms. Moore, yes. Mr. Boyle. Mr. Boyle, yes. Mr. Byer. Mr. Byer, yes. Mr. Evans.
Yes.
Mr. Evans, yes. Mr. Schneider. Mr. Schneider, yes. Mr. Panetta. Mr. Panetta, yes. Mr. Gomez. Mr. Horsford. Mr. Horsford, yes. Ms. Plaskett. Mr. Swazi. Mr. Swazi, yes. Mr. Kelly. Mr. Kelly, no. Mr. Schweikert. Mr. Arrington.
How is Ms. Plaskett recorded?
Ms. Plaskett is not recorded. Yes. Ms. Plaskett, yes. Mr. Arrington. Mr. Arrington, no. Mr. Hearn. Mr. Feenstra. Mr. Feenstra, no. Mr. Thompson.
How is Mr. Hearn recorded?
Mr. Hearn is not recorded. No. Mr. Hearn, no. Mr. Gomez. You're not recorded. Mr. Gomez, yes. Chairman Smith?
No.
Chairman Smith, no.
How is Mr. Thompson recorded?
Mr. Thompson is not recorded. Mr. Thompson, yes.
How is Mr. Schweikert recorded?
Mr. Schweikert is not recorded. Mr. Schweikert, no.
The clerk will report the vote.
The yeses are 19, the nos are 26.
There being 19 yeses and 26 nos, the amendment is not agreed to. Are there additional amendments?
Mr. Chairman, I have an amendment at the desk.
Would the gentleman suspend?
Mr. Chairman, I reserve a point of order.
Point of order is reserved.
You'll see. Current policy baseline.
Oh, yeah.
Wait. Excuse me. I can't get closer. I'm on mic.
Would the gentleman proceed?
Chairman, my amendment would ensure fiscal responsibility and genuine transparency. Under this amendment, no provision of the Act may take effect unless the Congressional Budget Office certifies beforehand that it will not increase the federal deficit over the next 10 years based strictly on the straightforward current law baseline established by the Congressional Budget and Impoundment Control Act of 1974. This requirement restores accountability, stopping any part of the bill from moving forward until we have an honest, upfront cost estimate. Right now, Republicans are attempting to use the, quote, current policy baseline gimmick. Current policy baseline is DC jargon for the most fiscally irresponsible bill in history. Let me try to briefly explain what at first might seem like a very boring argument, current law baseline versus current policy baseline. Current policy baseline is a DC fancy way of saying a fraud. Imagine this. I bought and ate a cheesesteak yesterday, the staple of any good Philadelphian's diet. Because I bought that cheesesteak yesterday and paid for it, according to current policy baseline, if I buy a cheesesteak today, it costs $0. If I buy one tomorrow, it costs $0. If I buy one the day after that, it costs $0. And on forevermore, each day into the future. Does that sound legitimate to anyone? Of course not. It's phony. It's a fraud. It would be a great mistake to create this precedent of switching from current law baseline to current policy baseline. And I do fear that under this new precedent, if we move forward with it, it will become the new normal, and that both sides, when they have a trifecta, will find it all too tempting to use. So we think we have a debt problem now? Just imagine if the fraud as known as current policy baseline becomes the new normal. This amendment, my amendment at the desk, and now in front of you, is in the best interests of lawmakers on both sides. I urge you to consider it. I know the way this process works, it is by nature highly partisan, but I truly believe, Mr. Chair, if members on the other side move forward with current policy baseline as the new normal, they will live to regret it. Thank you. I yield back.
Further discussion on the amendment? Mr. Estes?
Thank you, Mr. Chairman. I just want to make some facts true about what's really happening out here. I mean, this bill, as it's being brought before the committee, is $500 billion less than what the reconciliation instructions were for the bill. So obviously, as we've worked through and we structured the bill, I mean, we wanted to look at how can we be fiscally responsible and make sure that we addressed pro-growth economic policies. That's why it was structured the way it was, trying to make sure that we could jumpstart the economy. I remember back to 2017 when we had foreign companies buying U.S. businesses. We had what was being called the new normal, where we did not have economic growth, at 1 to 1.5%. And this, we can't go back to that. We want to make sure that going forward, our tax law supports good economic growth for American businesses and American workers. With that, I yield back.
Further discussion on the amendment? Ms. Moore.
Thank you, Mr. Chairman. I do have to say that I find this the most perplexing provision in this bill, and I've spent a lot of time scratching my head on how the current policy baseline can say that, you know, $5.4 trillion worth of tax cuts equals $0. I want to associate myself with the comments of the gentleman from Pennsylvania, that this is just, this is not legitimate. I would yield some of my time to any one of the people, you, Mr. Swikert, I would yield time to you to explain to me how 5.4 equals 0. And you know, you never should ask the question you don't know the answer to, but I'm going to break that rule right now.
Ours is actually based on the law. You're talking about the Senate. So I know there's a little conflation right now. What you're talking about is how the Senate did theirs. This is actually based on how, shall we say, Jody did ours, which actually is the expirations.
So there is no current policy in this bill.
Yeah, so I disagree. If you actually look at the math, I think you have it just backwards.
No, I'm saying you said that the current policy is not the base for this bill, right?
Mr. Speaker, current policy baseline, I believe, is how the Senate did their reconciliation budget.
Okay, thank you. You want some time? Yeah, I would yield the remainder of my time to Mr. Boyle.
Thank you. I will just quickly point out, and the gentleman from Arizona doesn't have the benefit of being on the Budget Committee, where Jody Arrington serves as chair and I serve as ranking member.
Will Mr. Boyle yield for 1 second?
Sure.
They wouldn't let me on it.
Me either.
We do have very good standards, yes. But, well, if one day the good member ascends to the Budget Committee, he would know that actually I gave House Republicans credit for not using this gimmick. Unfortunately, however, your Senate Republican brethren completely used and abused the so-called current policy baseline fraud. And it is a legitimate and justifiable fear that the final bill will reflect more of their version and actually use that gimmick. So what I would say is let's preserve the House prerogative being right on this matter and adopt this amendment. With that, I yield back. Thank you.
Any further discussion on the amendment?
I yield back.
Seeing none, the question is on agreeing to the amendment offered by Mr. Boyle. The clerk will call the roll.
Mr. Buchanan?
No.
Mr. Buchanan, no. Mr. Smith of Nebraska? Mr. Smith of Nebraska, no. Mr. Kelly? Mr. Kelly, no. Mr. Schweikert? Mr. Schweikert, no. Mr. LaHood? Mr. LaHood, no. Mr. Arrington? Mr. Estes? Mr. Estes, no. Mr. Smucker? Mr. Smucker, no. Mr. Hearn? Mr. Hearn, no. Mrs. Miller? Mrs. Miller, no. Dr. Murphy? Dr. Murphy, no. Mr. Kustoff? Mr. Kustoff, no. Mr. Fitzpatrick? Mr. Fitzpatrick, no. Mr. Stubbe? Ms. Tinney? Ms. Tinney, no. Mrs. Fishbach? Mrs. Fishbach, no. Mr. Moore? Mr. Moore, no. Ms. Van Dyne? Ms. Van Dyne, no. Mr. Feenstra? Mr. Feenstra, no. Ms. Maliatakis? Ms. Maliatakis, no. Mr. Carey? Mr. Carey, no. Mr. Yakum? Mr. Yakum, no. Mr. Miller? Mr. Miller, no. Mr. Bean? Mr. Bean, no. Mr. Moran? Mr. Moran, no. Mr. Neal? Mr. Neal, yes. Mr. Doggett? Mr. Doggett, yes. Mr. Thompson? Mr. Thompson, yes. Mr. Larson? Mr. Larson, yes. Mr. Davis? Mr. Davis, yes. Ms. Sanchez? Ms. Sanchez, yes. Ms. Sewell? Ms. Sewell, yes. Ms. Delbene? Ms. Delbene, yes. Ms. Chu? Ms. Chu, yes. Ms. Moore? Ms. Moore, yes. Mr. Boyle? Mr. Boyle, yes. Mr. Byer? Mr. Byer, yes. Mr. Evans?
Yes.
Mr. Evans, yes. Mr. Schneider? Mr. Schneider, yes. Mr. Panetta? Mr. Panetta, yes. Mr. Gomez? Mr. Gomez, yes. Mr. Horsford? Mr. Horsford, yes. Ms. Plaskett? Ms. Plaskett, yes. Mr. Swazi? Mr. Swazi, yes. Mr. Arrington? Mr. Arrington, no. Mr. Stubbe? Mr. Stubbe, no. Chairman Smith?
No.
Chairman Smith, no.
Clerk will report the vote.
The yeses are 19, the noes are 26.
There being 19 yeses and 26 noes, the amendment is not agreed to. Are there additional amendments? Mr. Horsford.
Mr. Chair, I have an amendment at the desk.
Would the gentleman suspend while the amendment is distributed?
Thank you.
Mr. Chairman, I reserve a point of order.
A point of order has been reserved on the amendment. The gentleman may proceed.
Thank you, Mr. Chairman. My amendment prevents millions of working Americans from losing their health care coverage and will keep health care costs from skyrocketing by permanently extending the advance premium tax credit. If Republicans can claim that extending current tax cuts for billionaires don't cost the government money, then this measure, which is already law and already helping Americans, this should be first on the list. Thanks to congressional Democrats, nearly 20 million Americans have gained access to affordable health care coverage through the advanced premium tax credit. These tax credits haven't just helped people afford care, they've drove record-breaking marketplace enrollment and brought the uninsured rate down to a historic low. They've helped millions of hardworking Americans access affordable health care coverage. These are small business owners, farmers, entrepreneurs, they're our neighbors, our friends, and the engines of our local economies. But here's the catch. These enhanced tax credits are set to expire at the end of this year, and my colleagues on the other side of the aisle are doing nothing to stop these advanced benefits from disappearing. If we don't act now, nearly every individual and family that's enrolled through the marketplace will see their premiums increase. Now, to my Republican colleagues, this impact is real, you know it. If this bill is really about providing relief to working people, as you said, then this provision must be included. Mr. Schweikert, without these credits, premiums in your district would have been 41% higher for 44,000 people. Mr. Fitzpatrick, the average enrollee in your district saved more than $3,000 last year thanks to these tax credits. And Chairman Smith, the advanced premium tax credit saved your constituents an average of $670 on their health care premiums. In my district in Nevada, over 27,000 of my constituents are saving, on average, $424 per month. That's real money for working families. We cannot allow these enhanced credits to expire. Working families need to know that they can count on affordable health care. What will happen if Republicans continue refusing to extend the enhanced health care tax credit? The Congressional Budget Office estimates that more than 3.5 million people may lose coverage. Premiums could rise by nearly 8% each year, and working families would be forced to choose between paying for health care and putting food on the table. And in rural communities, they will feel this pain the most. That's why I urge all of my colleagues to act now, to vote for my amendment, to permanently extend these crucial lifelines. It's the right thing to do. Now, I want to be clear. Don't let them fool you. You cannot, in one breath, say it's okay to provide tax cuts for billionaires, and that can be free, and not provide tax relief for working families, for health care, for God's sake. So let's do the right thing. Let's vote yes on this amendment. Republicans are planning to let these health care tax credits expire, but we can avoid that. This is a choice. And I would yield back.
Further discussion on the amendment? Dr. Murphy.
Thank you, Mr. Chairman. You know, when I was practicing full-time and Obamacare came out, there were a couple things in it that I thought were okay. Cover people with, pre-existing conditions and some of the other things. The sad thing is that the Obamacare monstrosity, which it's turned out to be, has done nothing but raise health care costs across the board, filter and flow money into insurance companies, which, by the way, are the biggest beneficiaries of all of this, and were the biggest beneficiaries of the last rise in Obamacare subsidies. So in 2024 alone, 5 million individuals were fraudulently enrolled in the Obamacare plans, costing $26 billion. They inflated their own income in doing this. A permanent extension ends up costing the American public, and remember, we're talking about our debt here, $400 billion. And guess what? Wealthy families making as much as $600,000 a year can still qualify for these benefits. That's not affordable care. That's money for wealthy families that gets flushed through our wonderful insurance companies. So if you look at really what this is doing, guys, this is pushing out more government subsidies that honestly distort the marketplace and end up causing higher premiums. They cost $400 billion more to make this permanent. And guys, we have illegal individuals who are getting these subsidies. We have fraudsters that are making hundreds of thousands of dollars a year on this. Guys, we need to get back where less is more, because this is not helping the American public. It is not helping keep stabilized premiums, and the only people it really is helping is our insurance industry. So, Mr. Chairman, I yield that that I submit that we turn down this amendment and vote no against this amendment, because I don't believe the scare tactics work. We have fraudulent practices going on, and the whole Obamacare saga was really an absolute disaster. Thank you, Mr. Chairman. I'll yield back.
Further discussion, Ms. Sanchez.
Thank you, Mr. Chairman. I speak in support of Mr. Horsford's amendment extending the Vital Affordable Care Act advance premium tax credits. More Americans have health care today than ever before, and that's thanks to Democrats' investments and the expanded APTC. If Republicans want to talk about giving working Americans a tax cut, I hope they know that failing to renew these premium tax credits means that 19.3 million enrollees will see a tax increase. Families are currently saving an average of $2,400 a year on their premiums. What does that mean? It means that in my district, people who utilized enhanced premium subsidies will see a $1,173 increase in their health care premiums alone. In Chairman Smith's district, his constituents will see a $1,672 premium increase. In Ms. Van Dyne's district, her constituents will see a $1,500 premium increase. And what happens when low-income working Americans no longer have access to affordable health care? Well, they go without it. The AHA has called this expiration an effective tax increase of $700 on average for millions of people across the nation, and it would result in a $28 billion reduction in hospital spending over 10 years. So on top of the largest Medicaid cut in American history, they're now going to eliminate this critical lifeline for low-income Americans to be able to afford their health insurance. Republicans are sabotaging the 24.2 million Americans who gained coverage under the Affordable Care Act marketplace, many of whom reside in your own districts. I encourage my colleagues to renew these subsidies for their constituents and to stop thumping their chests and proclaiming that they're for the working American when this is a huge tax increase on working Americans who need health care coverage in order to be healthy enough to go to work. And with that, I yield back.
My colleague yields back. Is there any? Mr. Larson is recognized for 5 minutes.
Thank you, Mr. Chairman. Very briefly, I associate myself with the remarks of my colleagues, Sanchez and Horsford, and just say this, a constituent of mine called in near disbelief. His name is Rob Yearwood, and he talked about how insurance has benefited him and his family and provided the opportunity for savings of about $1,300 a month. $1,300 a month. So his total savings for a year is in excess of $15,000 that he was paying out of his pocket. So now, with the passage of this bill, he will be in disbelief that while on one hand you say you're cutting taxes, you've just increased his by 15 grand. I yield back.
Mr. Arrington is recognized for 5 minutes.
I'll ask any of my colleagues on the Democrat side. Mr. Horsford, you could answer it directly or not. Just to be clear, this says that we would be extending the advanced premium tax credit to ensure millions of Americans are still able to afford health care coverage. President Biden, through executive action, expanded Obamacare, the ACA, to people who are here in this country illegally. when we say millions of Americans in this amendment, are we talking about citizens of our country, or are we also including the illegal immigrants in this country that Biden signed an executive order to include at tens of billions of dollars? And I honestly would like to know the answer to that, because it says Americans.
Thank you to the gentleman from Texas, the chairman of the Budget Committee. As you know, the Affordable Care Act covers 20 million Americans under the marketplace today. Whatever executive orders were implemented under the prior administration, we know that this administration has issued over 300 executive orders repealing or replacing most of those. Now, my question back is, the underlying purpose of this bill provides permanent tax cuts to big corporations and others, wealthy individuals. What is wrong with providing a permanent tax credit for eligible participants under the Affordable Care Act marketplace? Why are we not prioritizing them instead of giving others the benefits?
I would answer that. Number one, the Affordable Care Act did not make health care affordable. That's a different debate. Secondly, the underlying program has fundamentally changed.
So do you agree
that
that 20 million Americans are currently covered, that they currently have insurance?
Yeah, well, they have, insurance, but they may not be able to afford the health care, and that's the problem.
Do you agree that those tax credits expire?
Yeah, I'm reclaiming my time. The underlying program has fundamentally changed. You see, in the Inflation Reduction Act, so-called, which was a partisan Democrat reconciliation bill, you all expanded the ACA to anyone for any reason at any income level.
That's not true.
It is.
Come on now.
There is
no. That's what I'm not going to allow is misinformation.
Well, is it my time, Mr. Chairman?
Would the gentleman yield?
There is no income eligibility cap, which is why people making hundreds of thousands of dollars, $500,000 and above.
Will the gentleman yield?
Let me return to my first question, because I disagree with the expansion to people who could otherwise afford it or receive employer-sponsored health care. But here's my question for
you agree that it should be for individuals
If
under
I may
40?
just finish this, I think this is my time. I
Mr.
appreciate the
Arrington's.
back and forth. I'll give you time to answer this question. Do you expect people who are here illegally to be part of Obamacare receiving this tax credit, which is the subsidy that allows people at one point under a certain poverty level to receive the subsidy? Now it's just wide open. So my question to any Democrat, do you intend for this to be for millions of Americans, or Americans plus some group of people here?
Would the gentleman
illegally?
yield to answer the question?
Yeah, sure.
All right, and I'm going to read from healthcare.gov, which at the top of it says an official website of the United States government, which currently is under the administration of Donald Trump. And on this website, healthcare.gov, you can go to it, healthcare coverage for immigrants, it says people in these groups can get coverage through the marketplace if they're eligible. 3 bullet points: United States citizens, U.S. nationals, lawfully present immigrants. It then goes on with a highlight of a bold blue bar. Undocumented immigrants cannot get marketplace health coverage. They may apply for coverage on behalf of documented individuals. So the answer to your question is yes, we intend this to be for citizens and people eligible, not for undocumented immigrants.
And people who are here illegally and undocumented.
They're not eligible.
Why did President Biden have to sign an executive order?
But
Brad, answer this question for me. Why would President Biden feel the need to write an executive order to expand to a group of people who are here illegally? Just a simple question. I don't want government.gov. I mean, I don't want the government.gov, by.gov.
I don't want the facts.
I just want an answer.
So, Jody, I appreciate
please.
that. I can't speak for the President Biden.
Okay.
I can speak to what is the law as it's written and how it is presented by the Trump administration on healthcare.gov.
I would suggest this subsidy is
expired.
no longer for millions of Americans. It's now for millions of people who are here illegally under the last administration. We will clean that up as stewards of taxpayers and the American people.
The gentleman's time has expired. I now recognize Ms. Sewell for 5 minutes.
Thank you, Mr. Chairman. As a representative from a state that refused to expand Medicaid, I am delighted to support the Horsford Amendment, extending advanced premium tax credits. I am dismayed that while Republicans don't mind running up the deficit to give tax breaks to the wealthy, but they won't give 1 cent in this bill to extend the advanced premium tax credit. Advanced premium tax credits have made a tangible difference in the lives of my constituents. In fact, 386,000 Alabamians have chosen a health insurance plan through the ACA marketplace. This is a game changer, not just for Alabama citizens and families, but also for Alabama hospitals and Alabama community health centers in our state. However, these health care benefits are under threat. According to the American Hospital Association, 2.2 million people are at risk of becoming uninsured in 2026, while 4 million people are at risk of facing higher costs due to the loss of the ACA marketplace premiums. For my home state of Alabama, over 465,000 are at risk of losing their health care due to increased coverage rates. In 2024, Alabama had a record-breaking number of people enrolled in health plans through the marketplace. The advanced premium tax credits have saved low-income Alabamians real money. Without the advanced premium tax credit, a single parent making $50,000 a year would go from paying $157 a month to $299 a month, representing a 90% increase. These are cost increase on working families that they simply can't afford. The advanced premium tax credit is especially important to my constituents. Barbara from Birmingham wrote to me about her daughter's health care when her daughter was diagnosed with type 1 diabetes. Without these premium subsidies, health insurance plans would be prohibitively expensive. Unfortunately, Ms. Barbara recently lost her job, resulting in her daughter losing access to health care. Her daughter has no choice but to secure a health plan through the ACA marketplace to continue her necessary treatment. We are talking about a matter of life or death, and the marketplace provided life-saving access to care for Ms. Barbara's daughter, who is able to afford health care coverage because of this subsidy. While Ms. Barbara's story is alarming, it is not just one story. I have many, many stories of my constituents who unfortunately reside in a state that did not expand Medicaid. More than 150,000 low-income Alabamians fall in the gap and otherwise would qualify for health insurance on the ACA. This is why I encourage my colleagues to vote in favor of the Horsford Amendment, and I'm glad to support it. I yield back the balance of my time.
My colleague yields back the balance of her time. I'd remind those in the room observing, if you could take your conversations out of the room, that will allow us a better environment to have the exchanges that we need to have here in the room. I now recognize Ms. Delbene for 5 minutes.
Thank you, Mr. Chairman. I want to speak in favor of this amendment. In Washington's 1st District, over 28,000 people get their health coverage through Washington Health Plan Finder, which is our state's ACA marketplace. Of those, nearly 18,000 save on their monthly premiums because of the advanced premium tax credits. These credits ensure that families can purchase health coverage that allows them to get preventative care, prescription drugs, and emergency care when needed. And we know that access to health insurance supports better health outcomes. My Republican colleagues consistently say they want to make America healthy again. I think the policy they're putting forward does not do that. They should all be in favor of this amendment if they care about making sure Americans are healthy. But instead, we're discussing tax breaks that benefit the wealthiest Americans and hurt Americans who are looking for health care coverage. These enhanced tax credits are set to expire at the end of the year and must be continued. If we don't extend these tax credits, health coverage will become too expensive and people will be forced to go without it. And in my district, ACA marketplace premiums will rise an average of 60%, with some premiums increasing more than 250%. Without these credits, a 60-year-old couple making $82,000 a year in my district will see their monthly premiums increase by approximately $1,200. A small business owner from Woodinville in my district gets her coverage from the ACA marketplace and isn't sure how she'll be able to keep getting the health care she needs if premiums spike. She said the president assumes we have the wealth he and his friends have to be able to withstand, quote, a little pain, as he said in the past. But these enhanced premium tax credits weren't included in the Republicans' massive bill of tax cuts. And instead of investing in health coverage, our colleagues on the Energy and Commerce Committee are marking up a bill right now that could decimate Medicaid. Collectively, the bill results in nearly 14 million people losing their health coverage. How do you propose that we make Americans healthier while making health insurance unattainable for nearly 14 million people? And it's not just my constituents that'll be hurt if we don't keep these subsidies. In 2024, Florida received $2.2 billion in enhanced subsidies, and Texas received $1.5 billion. This is not a red or a blue issue. It's about creating a tax code that cares about all people, not just the wealthiest. We have the opportunity to do the right thing here, and if we extend these tax credits, we're making it possible for individuals and families to continue to take care of their health needs. I urge all of my colleagues to vote to permanently extend the ACA enhanced premium tax credits. Vote yes on this amendment, and I yield back.
My colleague yields back, and now recognized to speak on the amendment, Mr. Schneider.
Thank you. I'm proud to support Mr. Horsford's amendment. And let me repeat what I read a moment ago. And remember, this is coming from healthcare.gov, the government website. Quote, undocumented immigrants can't get marketplace health coverage, end quote. Moreover, due to provisions included by Energy and Commerce preventing all immigrants, legal or otherwise, from receiving premium tax credits, if approved, this amendment would only cover American citizens. My Republican colleagues are tripping over themselves to extend tax breaks for the top 1%, but for those making less than 400% of the poverty level, specifically less than $62,600 a year, oh no, we can't give them a break. 70% of the cost of permanently extending the tax of this credit goes to people making less than 400% of the federal poverty level. The characterization that $600,000 income households are taking advantage of the credit is simply misleading. Working Americans earning $62,600 might be able to make ends meet, but it's really difficult to think that they are getting ahead without this credit. This amendment would extend the tax credit that allows working families, American families, to afford premiums for health insurance, taking responsibility for taking care of their own families, their kids. 21,000 of the constituents in my district depend on this credit to afford their health insurance. These credits will expire at the end of the year. This bill does not extend, or what we're talking about today doesn't extend those credits. Without an extension, these families will see their health insurance rise by $1,000 a year. The nonpartisan Congressional Budget Office estimates that failing to extend these credits will leave 5 million people without health insurance. 45,000 of those would be in Illinois. This amendment would extend the tax credits for health insurance to ensure families stay covered, that parents are able to take care of themselves and their children. No working individual or family should have to worry about affording health care, not for themselves or not for their family. I urge all my colleagues to support this amendment. I yield to my colleague.
I thank the gentleman for yielding, and I appreciate you for putting the facts on the record. My good friend, the chairman of the Budget Committee, made a very broad and misinformed statement, and I don't know that he's here to back it up. But again, for the record, if approved, my amendment would only cover American citizens. This is in part because of provisions that are included in the Energy and Commerce Committee markup that prevents immigrants, legal or otherwise, from receiving premium tax credits. That is what you all are moving. But my question is still the underlying point. There are 19.5 million of your constituents who are at risk of losing this tax credit at the end of this year. So why would you move to pass permanent tax credits for billionaires and big corporations and not your constituents who need health care? I agree we need to bring down the cost of health care, but taking health care away isn't going to bring down that cost. So what is the plan? And I, for one, will not allow you to put out misinformation to the public and not stand behind it. So wherever Mr. Arrington is, I want the record to reflect that this bill pertains to the individuals that are eligible under the law. With that, I yield back to the gentleman from Illinois.
Ms. Moore is now recognized to speak on the amendment for 5 minutes.
Thank you so much. I am just absolutely delighted that Mr. Horsford offered this amendment. All of the time that the Republicans were putting their bill together in secret and telling their constituents, those Republicans who had the guts to have town hall meetings, told them that we were lying about them cutting health care. There's no way that they were going to cut health care. This is one of the largest, this contributes to the largest tax cut that this country has seen in its history. And it also is an effort, and I have to admire the Republicans for never giving up. I stopped counting when they tried to undermine the Affordable Care Act, also known as Obamacare, 60 times. And John McCain did the thumbs down because he was not about to go meet his maker and denying millions of people health care. And so we've heard all kinds of narratives and excuses as to why Republicans want to cut health care. We heard about the lazy boy that's in his parents' basement playing video games. There have been all kinds of irrational and illogical arguments that have been made. And so now we see, aha, and several ahas, 20 million people are at risk of losing health care. Those who got the premium health care under the Biden administration, and also those people who are in expansion states are going to lose their health care as well. These are not lazy people. These are people who are not going to work. These are people who, in my state, weren't at or below 138% of the poverty level. These are people working at fast food restaurants, waiting tables, bartending, entrepreneurs that aren't covered by corporate employers that want to be responsible and pay for their own health care will now find themselves being driven out of the marketplace. And so I am delighted, Mr. Horsford, that you've offered this amendment. Do you need more time? Need any time? You always need time? And so I will yield some time to Mr. Horsford because I'm just really pleased with this amendment.
Well, I'll be brief. Thank you to the gentlelady from Wisconsin. So under page 315 of the Mark, Part 2, removing taxpayer benefits for illegal immigrants, Section 112-101, it specifically lays out who is and is not eligible for the Affordable Care Act or premium tax credits. So Mr. Arrington, wherever you are, it's in the underlying text. Don't put out misinformation and expect your mud to stick. I yield back to the gentlelady from Wisconsin.
That's right. And so there are a couple of other things. I agree with comments from Representative Sanchez. I mean, you don't cut off your nose to spite your face. And Dr. Murphy, I am so willing to work with you, and I think others on this committee are so willing to work with you if there is some shenanigans going on with the insurance companies and they are artificially increasing premiums, not only for people in the marketplace, but for people who are covered by private employers on account of these premium subsidies. We'd be very happy to work with you. But we don't think that cutting off 19, 20 million people is the solution to reining in bad practices of insurance companies. And so with that, I would yield back my time.
The gentlelady yields back. I now recognize Mr. Byer for 5 minutes to speak on the amendment.
Mr. Chairman, thank you very much. I too want to thank and congratulate Mr. Horsford for pushing this good amendment. You know, I had a chance to sit down with representatives of the world's largest healthcare company a few weeks ago. They were very concerned because they told me that getting rid of these premiums would increase the cost of insurance for a family of 4 in Virginia by $10,000 a year. $10,000 a year. What that's going to mean, 4 million people are going to lose their health insurance over the next decade. These are people who are going to go without drugs because they can't afford them. They're not going to go to the doctor because they can't afford it. You're going to have bankruptcies that soar. The number one cause of bankruptcies in America is healthcare. And people are going to die. This is not make America healthy again. This is not Maha. This is taking us back for those 4 million people to the 1930s, to an America without health insurance. I know there's many folks on the other side who like that idea. That, in fact, when you look at the 78 menus, the options they had for this committee in January, not one of them included extending these tax credits. Well, let me remind them that 1937, when the Social Security Act was passed, the average lifespan for a man in America was 62 years old. That's what America looks like without health insurance. Instead, what we have right now is a bill that raises the cost of prescription drugs, pursues an expensive, none-of-the-above energy strategy, and gives million-dollar tax cuts to the wealthiest individuals and corporations. All this on a 389-page bill that we got less than 24 hours to look for. Look, the people that are going to be affected by this are going to be older and they're going to be more rural. They already affect many more barriers to receiving care. They're often half-hour, 2 hours from the nearest hospital, which are going to be, many of those are going to close based on this bill. Longer trips to doctors, and much more expensive coverage. We have had a chance to go to 24 million people under the Affordable Care Act because of these premiums. We're going to tear that away. Where's the sense of tearing away essential health care coverage for more than 4 million people who are already struggling to get by? A little thought experiment. 2 years from now, in the 120th Congress, I think we should plan to get together on the Ways and Means, all those who are still here, to listen to a whole afternoon of those people who have lost their health care because of this action, people who lost their health care in the coming months because of stripping away the premium. Then we can see the real human impact, and we should be forced ourselves to listen to the damage that we have done to these people. With that, Mr. Chairman, I yield back.
Gentleman yields back. I now recognize Mr. Gomez for 5 minutes to speak on the amendment.
Thank you, Mr. Chairman. So I want to offer my support to Mr. Hortz's amendment on to extend the advanced premium tax credit to ensure millions of Americans still can afford health care in this country. I grew up without health insurance, so I know a lot of what it's like. I know what the decisions parents have to make when somebody gets sick. When I was about 7 years old, I ended up getting sick with pneumonia. But my parents didn't know it was pneumonia. My parents actually had to see if I got worse or I got better. That's the kind of decision that parents are making. They're seeing, okay, they have a fever, they have a cough, but can we avoid going to the hospital? Can we avoid going and taking on those expenses? If can we avoid those expenses just but with a little bit of home remedy, some luck? And that is kind of what a lot of parents do. But in my situation, I ended up getting pneumonia, went to the hospital, spent a week in the hospital, and that 1 week stay almost bankrupted my family. That 1 week stay almost bankrupted my family because I went through the ER, and you know how that expensive that is. Ended up getting checked in, and then my parents missed shifts from work because they didn't want me to be by myself. They wanted somebody to be there every single day, and my parents worked 4-6 jobs a week to make ends meet. We still didn't have health insurance. So back in the day, if you weren't on Medicaid or Medi-Cal, you had to put down something as collateral. My parents put down their house. So we almost lost our house back then. So families, that's the kind of decisions they make. And the good doctor over here talks about less is more. Well, yeah, less is more. Less health care coverage means more people that will end up in the emergency room costing the American taxpayers more. costing them a hell of a lot more. That means that also that we're going to have people that might be sick, but instead of going in right away to get treated for stage 1 cancer, they show up with stage 4 cancer. Or the mother who is pregnant and is having issues, going to show up to the hospital later, and maybe she will lose the baby because she doesn't have health care. So your less does cost people more. Your less is going to cost people their lives. Your less is gonna make our country sicker. And here's the thing. Some things that are beyond people's control, it's just in their genes. Earlier in the year, I haven't told this to many people publicly, but I was diagnosed with type 2 diabetes. I don't look that heavy. It's just something that runs in my family. And what I had to do is I had to first get over the shock of having type 2 diabetes, get it under control. And how do you get it under control? Insulin, number one. You have to start taking shots to reduce the amount of sugar that's in your blood. Do it as quickly as possible. Number two, you're on metformin to reduce the amount of glucose that's coming in your body. And because I literally quit all sugar, quit pastries, even though I love pan dulce as much as anybody else. I quit any form of 1 glass of alcohol, quit that as well. And I was able to get my tests under control. But then they put me on something called Jardiance, which a lot of people who are diabetic, type 2, have to be on. That just by itself, with insurance, costs $120 for a 90-day supply. $120 for a 100-day supply, for a 90-day supply. So here's the thing. Your less is more is going to cost people their lives. It's going to make them sicker. I'm fortunate that I have a job with health care. But if you take away these subsidies, there are people that are not going to be able to get their diabetes medicine. They're not going to be able to get their insulin. There are going to be people that are going to have to go in and get their limb chopped off because they have no way to control their diabetes. So yes, less Medicaid, less ACA coverage, less means more people that suffer. I wish you would take that same logic, less is more, and apply it to the tax breaks that you're giving to the billionaires and the ultra-rich in this country. Tell them less is more. We're going to give you less breaks so we can give more to everybody else. But you won't do that. And that's why this whole committee,
Gentleman's
this
time
bill
has
is a
expired.
fraud. With that, I yield back.
Gentleman's time has expired. I now recognize Mr. Thompson for 5 minutes to speak on the amendment.
Thank you, Mr. Chairman. I just want to take a moment to point out something that I think everyone's talked around it, but I think it needs to be spoken to specifically. All the people who are going to lose their health care that we on this side of the dais have been talking about and concerned about, they're not going to go away. They're not going to be immune from illness. They're not going to be immune from injuries. And whenever they get sick or whenever they become injured and they show up in a hospital, they're going to be treated. And that's going to create uncompensated care costs for that hospital. And if you consider all the other cuts that the health care facilities are going to sustain because of this bill and what they're doing down the hall in the Commerce Committee, this is going to take a real whack at health care. And anyone on this dais, your hospitals are going to smart from this. Hospitals are going to close, urgent care centers are going to close, clinics are going to close, and for those of us on this dais who represent rural areas, hold on, because they're the first ones that are going to get hit, those are the first ones that are going to close. So it's not going to be just people who are on the Affordable Care Act, it's not going to be just people who are on Medicaid, it's going to impact everybody who needs health care. If you've got a pocket full of gold or the best private insurance policy known to humankind, if you get sick or injured and you go to the hospital and that hospital is closed or they've had to make cuts, and those cuts happen to be the surgeon that is needed to save your life, too bad. You're going to suffer. Everybody's going to suffer. I yield the remaining time to Mr. Horsford.
I thank the gentleman from California, the ranking member of the Revenue Subcommittee. So my friend, Mr. Arrington from Texas 19th, asked me who's eligible. Well, I can tell him for his district, in 2024, an estimated 75,000 people in Texas 19th district that Mr. Arrington represents were enrolled in the ACA marketplace health insurance coverage. Are those illegals? Are those people who are undocumented, Mr. Arrington? That's in addition to the 117,000 individuals who are now at risk of losing their Medicaid under the $880 billion in cuts. Every member of this committee has tens of thousands, if not hundreds of thousands of constituents who receive the Affordable Care Act health coverage under the marketplace. And without the extension of those tax credits, you're leaving them without health care. And as Mr. Thompson just enumerated, they're going to still get at health care. Their health care will be in the form of an emergency room. It'll be in the form of uncompensated care that everyone as taxpayers will have to bear the brunt. That's not efficient. That's not making government work better. That's not bringing down the cost. That's shifting the burden to all taxpayers rather than making sure that we maintain the coverage that people need. So to Mr. Arrington and to every other person on this committee, I just ask you, who are you here to serve? Is it the constituents who elected us? I don't work for the federal government. I don't work for Donald Trump or Elon Musk. I work for 750,000 people in Nevada who elected me to do a job, and that job is to protect them. And in this case, it's to give them the health care that they need. Now, this is a tax credit. It's not an entitlement. Why is it that it's okay to give tax cuts to billionaires and to the very wealthy, but not give tax credits to the working people? And to my other colleague that tried to insinuate that there's no income limits, that's just erroneous. The way the formula works is you receive the benefit based on the need. So to my colleague, Mr. Arrington, I would encourage you to vote for the 75,000 people in your district
time has expired.
who receive this tax credit. Let's not allow it to expire.
The question is on agreeing to the amendment offered by Mr. Horsford. Clerk, call the roll.
Mr. Buchanan?
No.
Mr. Buchanan, no. Mr. Smith of Nebraska?
No.
Mr. Smith of Nebraska, no. Mr. Kelly? Mr. Kelly, no. Mr. Schweikert? Mr. Schweikert, no. Mr. LaHood? Mr. LaHood, no. Mr. Arrington? Mr. Estes? Mr. Estes, no. Mr. Smucker? Mr. Hearn? Mr. Hearn, no. Mrs. Miller? Mrs. Miller, no. Dr. Murphy? Dr. Murphy, no. Mr. Kustoff? Mr. Kustoff, no. Mr. Fitzpatrick? Mr. Stubbe? Mr. Stubbe, no. Ms. Tinney? Ms. Tinney, no. Mrs. Fishbach? Mrs. Fishbach, no. Mr. Moore? Mr. Moore, no. Ms. Van Dyne? Ms. Van Dyne, no. Mr. Feenstra? Mr. Feenstra, no. Ms. Maliotakis? Ms. Maliotakis, no. Mr. Carey? Mr. Carey, no. Mr. Yakum? Mr. Yakum, no. Mr. Miller? Mr. Miller, no. Mr. Bean? Mr. Bean, no. Mr. Moran? Mr. Moran, no. Mr. Neal? Mr. Neal, yes. Mr. Doggett? Mr. Doggett, yes. Mr. Thompson? Mr. Thompson, yes. Mr. Larson? Mr. Larson, yes. Mr. Davis. Mr. Davis, yes. Ms. Sanchez. Ms. Sanchez, yes. Ms. Sewell. Ms. Sewell, yes. Ms. Delbene. Ms. Delbene, yes. Ms. Chu. Ms. Chu, yes. Ms. Moore. Ms. Moore, yes. Mr. Boyle. Mr. Boyle, yes. Mr. Byer. Mr. Byer, yes. Mr. Evans. Mr. Evans, yes. Mr. Schneider. Mr. Schneider, yes. Mr. Panetta. Mr. Panetta, yes. Mr. Gomez. Mr. Gomez, yes. Mr. Horsford. Mr. Horsford, yes. Ms. Plaskett. Ms. Plaskett, yes. Mr. Swazi. Mr. Swazi, yes. Mr. Arrington. Mr. Arrington, no. Mr. Smucker. Mr. Smucker, no. Mr. Fitzpatrick. Chairman Smith? Chairman Smith, no.
Clerk will report the vote.
The yeses are 19, the nos are 25.
There being 19 yeses and 25 nos, the amendment is not agreed to. Are there additional amendments? Mr. Swazi?
Mr. Chairman, I reserve a point of order.
Point of order is reserved.
Are you ready?
Yeah.
Jam them.
That was really good. That was really good.
I'm sorry, because I actually like that.
Yeah. Yeah, yeah.
Mr. Swazi is recognized to speak on his amendment for 5 minutes.
Thank you, Mr. Chairman. I appreciate that very much. Under current law, state and local, Mr. Chairman, can I ask you for some quiet in the back of the room?
Yes, the gentleman will suspend. Will observers in the room please take their conversations out in the hallway as we conduct the conversation here on the committee. Mr. Swazi is recognized.
Thank you, Mr. Chairman. Under the current law, people are capped at $10,000 as to how much they can deduct from their state and local taxes. Under the reconciliation bill, it's going to be increased to $15,000 for a single person, $30,000 for a married couple. That's woefully inadequate, and even some of my Republican colleagues have come out and said it's insulting. It's much too low. It's not fair to our states. It's not about Democrats and Republicans. It's about different states. And 5 or 6 Republicans have said they will not vote for the reconciliation bill because of this. And I want to try and propose a solution. I'm proposing an amendment that we increase the state and local tax deduction cap to $80,000. And we pay for it by increasing the rate of the highest taxpayers from 37 to 39.6. So I want to just explain to some of the people that may not be familiar with the state and local tax deduction how it works. In 1913, we started the federal income tax code, and the governors and mayors at that time said, we don't want federal taxes because we collect taxes at the local level to pick up garbage, to provide for public safety, to pay for schools, and we want you to just do tariffs the way you've always done tariffs. We don't want a federal income tax. And the federal government said, no, don't worry about it. The first deduction we're going to give people in the history of the United States of America with their federal income taxes is a state and local tax deduction. So you will not be taxed on the taxes you've already paid. It's about basic fairness. Because when this bill was passed, it was a big body blow to my state of New York, to New Jersey, to California, to Connecticut, to Illinois, to Massachusetts, to Maryland, to Michigan, to Minnesota, to Oregon, Pennsylvania, Virginia, and Hawaii. People are moving away from our states. People are leaving our states to go to lower tax states right now. And when they leave our states, what happens is the middle class and lower income people that live in our states are left behind to hold the bag. And they're either going to lose their services or their taxes are going to go up even more, both of which are unacceptable. Now, why are our taxes higher in these high tax states versus low tax states? Well, we're older states, we're mature industrial states, and we have the lowest rate of uninsured children, for example, in New York State, the lowest rate of uninsured adults in the country. We have some of the highest paid teachers and police officers and firefighters. And when you look at low tax states like Florida and Texas, for example, they have some of the highest rates of uninsured children, the highest rates of uninsured adults. They don't have the same amount of infrastructure or sewers or mass transit that we do. And they are growing states. So right now, most of these states that I'm talking about are actually pretty successful in that they are net donors to the federal government. Most of these states I've mentioned that are high tax states give more to the federal government than they get back in federal services. And most of the red states are taker states, states that get more from the federal government than they actually pay in taxes. So it's really not fair that we are being stuck with this cap on our state and local tax deduction because people are getting taxed on taxes that they've already paid. Now, we set up this law back in 1913. It was in place for over 104 years to 2017. Our states relied upon that. And in 2017, the long arm of the federal government reached into our local states and municipalities and tried to control our policy in complete and direct contradiction to the concept of federalism on which this country is founded. That state and local municipalities have the right to determine how they're going to provide services to the people that they have, how they're going to pay their employees, how they're going to pick up the garbage, how they're going to take care of the schools, how they're going to make sure that they enact public safety laws. President Trump came to my county of Nassau County in the election year during 2024, and he got up on stage and he said, I will get you your state and local tax deduction back. I pledge that to you. I will make things better here in this state than it's ever been before. And many people relied upon that promise from our president, as have many members of Congress who are now saying that what's been proposed in this only increasing to $15,000 or $30,000 for a married couple is, as I said before, an insult and unfair to our state. So I'm asking our colleagues to please support this amendment, an idea that's supported by the U.S. Conference of Mayors and by the teachers and by the firefighters and by the counties and by other municipal officials throughout the country that have relied upon this ability to tax as they see fit at the state and local level for over 100 years and are trying to get that recaptured again. We don't want to see people boasting that they're getting people to leave our states and move to your states, when in fact we've been the largest net donors to our federal government
time has expired.
of any states in the nation. Thank you, Mr. Chairman.
Gentleman's time has expired. I now recognize to speak on the amendment, Mr. Estes.
Well, thank you, Mr. Chairman. You know, this has obviously been one of the provisions within the state, within the tax bill that came out of 2017. That's generated a lot of discussion, a lot of noise, a lot of talk about. Unfortunately, one of the things that gets lost in the discussion is that SALT gets talked about with blinders on, instead of talking about what's the bottom line on the tax bill. What do people owe? And we saw after 2017, if you look at SALT, you look at the alternative minimum tax, you looked at lower rates for individuals, and you looked at a higher standard deduction, all of that resulted in 94% of the people having lower taxes because of those combined. If you just look at one of those provisions, you don't get the same answer through that process. So we need to make sure that we're looking at a consolidated tax package and all the impact through that. One of the things we did recognize as we were crafting this one big beautiful bill was that there's been horrendous inflation during the 4 years that President Biden was in office, and recognize that that's led to an increase in taxes at state and local level. And that's why we looked at increasing that $10,000 cap to $30,000 to help address that and making sure that people are covered for that additional cost that they have. But we need to make sure that as we look forward that the bottom line is what's the total tax bill that people have to pay as opposed to any one individual provision in a silo. So with that, I yield back, Mr. Chairman.
Gentleman yields back. Mr. Neal.
Let me yield my time to Mr. Swazi.
Thank you, Mr. Neal. And Mr. Estes, I appreciate your comments, and I just want to try and I want you to understand, I'm sure you do already, it's so different from state to state in our country. It's just completely different. When we first had the 2017 tax bill passed, I had a woman call me up. She was a nurse, and she worked a lot of overtime. And her husband was a retired supermarket worker, and they made $160,000 a year. And she was crying because her taxes went up. She didn't expect her taxes to go up. She usually got a refund, but her taxes went up because of this cap of $10,000 on her state and local tax bill. And she explained how she had a house worth about $550,000 or $600,000, and the second floor bathroom was leaking down to the first floor, and she couldn't afford to fix that bathroom because she had borrowed a lot of money for her kids to go to college. So I asked her to come into my office. I actually brought my accountant to the meeting and try to talk to, do you have a lot of credit card bills, or do you go out to the restaurants a lot, or maybe a lot of big vacations? No. She's just a hardworking person whose taxes went up based upon the state and local tax deduction cap. I explained that to a friend of mine from Oklahoma, an elected official from Oklahoma, a member of the Senate actually, and he looked at me and he said, $160,000 a year, a $550,000 or $600,000 house, that person must be loaded. They must be so rich. If you had that money in Oklahoma, if you had that type of house in Oklahoma, you'd be living in a gated community. You might even have a pool and an indoor movie theater. You might even belong to the country club. So it's very different from place to place. In our state, where a teacher and a police officer, married couple, two wage earners, could easily be making $150,000, maybe even $180,000 a year between the two of them, but their house is much more expensive, their cost of living is much more expensive, and when we get money from the federal government for infrastructure, we have to do old roads and old sewers and old bridges and old schools and old hospitals and fix those places up. Whereas some of the faster growing states in our nation, when they get money from us in New York, the highest donor state in the country, they're building new roads and new bridges and new sewers and new hospitals and new schools, and they're expanding. We're in fact subsidizing our own demise. But we need to do a better job talking to each other about how different it is from place to place in our country. I'm sure that salt is not a big issue where you live. And I'm sure it's not a big issue in a lot of other states. But in the states that have relied on this provision for 100 years, this is a major factor in our very existence. Why would you have 6 loyal Republicans that are on your team 100% of the time, that support President Trump, coming out and saying they're not going to vote for this bill unless they get the salt cap increased? Because this is devastating to our states. This is unfair to our states.
Well, the gentleman yield.
Yes.
I recognize the point. I mean, obviously, the state and local taxes in a lot of high-tax states are higher than in others. However, it does affect people in Kansas. Just speaking from my personal experience, it's affected me personally. That I hit the salt cap of 10%, but as a result, I ended up using the standard deduction, and ultimately taxes were lower because of that. So I think there's a lot of folks that fall into that category as well, and that's one of the reasons why we were looking at raising the limit, knowing that there were some concerns that affect people in different states.
And so let me just say, Mr. Estes, to reclaim my time, that there are people on the Democratic side, and there are some Republicans that see this as being existential to our communities, that it's essential for us. And we want to continue to be great American citizens that pay our taxes, that subsidize other states. Most of the red states are net takers from the federal government. Most of the blue states are net donors to the federal government. Texas is a net donor also. But again, we've relied upon this for 100 years. 100 years, this is the way we conducted business. And listen, I wish the taxes in my state were lower. I ran for governor of New York State twice on a platform of lower taxes. I got my ass kicked. But, sorry about the language there, Mr. Bean, apologize. And so the bottom line is that we just need to recognize what a serious problem it is. And there are other serious problems that are faced in other parts of the country, like rural hospitals, that aren't an issue that I face in my district, but I don't want to see rural hospitals closed down. we all have different issues that we face in our different communities. If we can move beyond yelling and screaming at each other and working with each other and understanding each other better, we could get a lot more done and make things better for the American people.
The gentleman's time has expired. I now recognize Mr. Davis to speak on the amendment.
Thank you, Mr. Chairman, and I come from Illinois, which is a donor state, and I strongly support this amendment and reject efforts to permanently double tax Illinoisans and tens of millions of other Americans by permanently capping the state and local income tax deduction. I am a proud, bold, dyed-in-the-wool progressive. I firmly believe that the rich should pay their fair share, and I reject the false claim that the Republican effort to limit the SALT deduction is to make the wealthy pay. I call that horse bucking. I served on this committee for TCJA. I saw Republicans use the SALT cap to intentionally target blue states that raise revenue to pay for services to improve the quality of life. Limiting the SALT deduction was intentionally designed to hurt blue states, not the wealthy. The Republican weaponization of the tax code in TCJA wasn't limited to SALT. The initial disaster tax provisions in TCJA intentionally covered disasters only in red states, but excluded those in the blue state of California. Speaker McCarthy fixed this by final passage because he knew how unjust it was to deny federal aid to disaster victims due to politics. The Republican tax scam increased the taxes on over almost 2 million Illinoisans by hundreds of millions of dollars, 85% of whom were in the middle class. The SALT deduction is a bedrock part of the tax code since its inception because it recognizes that all levels of government need the revenue to carry out critical services to help citizens, to educate, hire police officers, fix roads, ensure clean water, make sure that the garbage is removed and picked up, and make sure that the quality of life is decent. So I would urge all of us to be real about the tax deal. I support the Swazi amendment and urge its passage.
Does the gentleman yield back? The gentleman yields back, and now recognize Ms. Chu for 5 minutes.
I offer my full support for this amendment to substantially increase the Republican cap on the state and local tax deduction. It will make a big difference in my state of California. The SALT deduction existed in our tax code for a simple reason. It's a matter of basic fairness. That's good policy because it helps states fund important services. State and local tax revenue goes to law enforcement, firefighters, educators, hospitals, and transportation. These are all fundamental public services, and when states fund them robustly, it takes pressure off of the federal government. But in 2017, Republicans capped the SALT deduction for one simple reason: to finance a massive corporate tax giveaway. This was a trade-off, attacking funding for police and schools so that corporations can make more money. Sadly, this bill is a fake solution that does not undo the immense damage of the original Trump tax scam. You know, prior to the GOP's cap on SALT deductions, 37% of households in my Pasadena, California district claimed this deduction at an average of more than $20,000. And many of these are working class households where the cost of living is high. In fact, in Los Angeles County, the Economic Policy Institute's family budget calculator showed that a family of 2 adults and 2 children needed to earn $102,000 per year, and that was just to meet the basic living expenses. For these families who are just getting by, the SALT deduction can be the difference between saving for a child's college education or having enough savings to deal with an unexpected emergency. These are the taxpayers that Republicans took advantage of to hand out tax cuts to the rich, and they are the same taxpayers that are left behind by today's bill as we consider yet another round of tax cuts for corporations. I urge my colleagues to join me in voting yes on this amendment, and I yield back.
Colleague yields back. I now recognize Ms. Van Dyne from Texas.
Thank you so much, Chairman. You know, we've heard over and over again that New York is a donor state, how much New York gets. New York used to be a donor state. New York is no longer a donor state. In 23, New York contributed $320.1 billion. However, they received $337.9 billion. So basically, for every dollar that New York sends into the federal government, they get $1.06 back. They are not a donor state. Texas, though, is a legitimate donor state. We should not have to pay to make up for the rich folks in New York who are getting raped by their local and state governments. If you don't like how much they're charging, stop voting for these people. Stop getting them into law. But the fact is that when you look at how much money that New York is basically wasting, I can't imagine anybody actually still lives in that state. But they attributed substantial federal pandemic relief that they wasted on folks who are in our country illegally. They have expanded their Medicaid to people who should never have been getting it. If you look at how New York spends their dollars, they are like one of the top 2 in Medicaid spending, which is full of waste, fraud, and abuse, SNAP, and rental assistance. And the reason why their rental assistance is so high is because their policies make it so impossible and expensive to build housing in New York where they need it. Do you know where their lowest spend is on federal dollars? Highways and veteran benefits. Absolutely accurate with New York. You'd expect nothing less. But if we should not have to subsidize, the donor states should not have to subsidize high-paying states because they do not know how to fiscally manage their money and they waste it. And with that, I yield.
Will the gentlelady yield, please?
The gentlewoman already yielded back. I now recognize Mr. Schneider, 5 minutes.
Thank you, Mr. Chairman. I'm proud to support Mr. Swazi's amendment. And I want to take a moment just to highlight how unfair leaving in place this cap on state and local tax deduction is for constituents in states like Illinois and New York and California. And just to share a couple numbers. In Illinois, a couple making $200,000. Mr. Swazi mentioned a couple, one's a teacher, one's a police officer. They're in Illinois maybe making $200,000. They hit the cap on just their state income tax. In Lake County, the county I represent, a $365,000 home, their property tax would be $10,000. And that's just slightly over the median price of a home in Lake County. And what's striking to me is this overall bill we're discussing has a $5 trillion price tag, adding to the federal debt. We've talked about this all day. And it disproportionately benefits the most fortunate, the most secure taxpayers. Just like in 2017, the Republicans have decided to hit blue states, California, New York, New Jersey, Massachusetts, Hawaii, and Illinois, and put the burden on them for states that have made the decision. And with all respect for my colleague from Texas, it's up to the states to decide if they want to pay for quality schools, if they want to pay for parks. In my district, I'm very proud of the park districts and the forest preserves that we have that are recognized nationwide, providing spaces for our citizens. That's the choice of each state. But what we're doing in this bill is double taxation. The Republican decision to again use citizens of blue states double down on what is nothing more than a punitive approach of double taxation, and we should make sure that it is not continued. So I support this amendment. I know that Mr. Swazi wanted to add. I don't know if you want any time.
Well, I'm glad that yes, thank you, Mr. Schneider. I'm glad that you gave me a few minutes to calm down, and I'm not going to take the bait from Ms. Van Dyne. and get in a tit for tat about my state versus your state. The bottom line is that, do you think that people should be taxed on taxes they've already paid? Ms. Van Dyne?
I think when you have a management of a state,
I understand
that.
You don't like our state.
Their citizens.
You never come to our state.
Yes, they should not.
You never come to our state for fundraising, do you? Because you've been attacking our state here tonight.
Have you been in Texas?
No.
Oh, really?
Let me ask you a question, Ms. Van Dyne.
We're going to check out your
Ms.
FEC
Van
report
Dyne,
and see if that's true.
Ms. Van Dyne, do you think that people should be taxed on taxes they've already paid?
I don't think you should separate out how much you're paying in taxes.
If somebody
to state
makes
and
$200,000 a year,
and it's not the same
if
thing
somebody
as
makes
federal.
$200,000
We don't have an income tax.
Can I just ask you a question, please?
We don't have a state income
Can I
tax
ask
in
a question?
Texas.
I understand you don't. You're very fortunate right now that you're going through a very big boom of growing after years of being not a growing state. But now you're booming, and it's great, and
Because
we're very happy for you.
people are leaving your state.
Well, they are leaving my state, and they're leaving California also, because of the state and local tax deduction is a big contributor to that. After years of our state contributing to make this the greatest nation on earth, because we were productive and successful, because our people built great things and continue to do great things in our state. But because of a change in the law in 2017, when we capped the taxes deduction at $10,000, it's incentive. You're like gloating. You're enjoying the idea that people are leaving our state to go to your state because you put in place the state and local tax deduction. Yet you come to New York on a regular basis.
First of all, I wasn't here when they did that.
You come to New York on a regular basis to raise money, to come for tourism. It's a great place. It's a wonderful place. And I'm sure your state is a great place.
Tom, I'm going to take back my time.
Yes, okay.
You can, no, because I think it makes an important point that I want to touch on. You know, my son served 5 years in the Navy. And he did his OCS training in Rhode Island. He was stationed for 2 years in Hawaii. He served in California. He was deployed all over the Pacific. When he was on watch on ship, when he served in the Navy, he was serving with people from all over the country, from Texas, from New York. I represent Naval Station Great Lakes, where every Navy recruit comes for basic training. No matter what state they're from, they are volunteering to put on a uniform to defend and protect our country. We shouldn't be having a debate whose state's better than another state other than in a friendly, competitive way. I want New York to succeed. I want Texas to succeed. I want every state to make decisions how they are going to fund their government responsibly. I don't think we should be double taxing them.
Gentleman's time has expired. The gentleman from California, Mr. Thompson, is recognized for 5 minutes.
Ms. Van Dyne, I've just been getting a lot of texts from people. Where were you born, Ms. Van Dyne?
I was born in upstate New York. I always
Albany.
say I'm a New Yorker.
And Ms. Van Dyne,
Oh, there's a reason why I left the state. I'm a New Yorker by birth, but a Texan by choice.
Okay, Ms. Van Dyne, where did you go to college?
What?
Where did you go to college?
Cornell.
In New York State.
Yeah.
Okay, I'm going to ask at least my New York colleagues, at least them, but hopefully some other states that are being affected by the state and local tax deduction, especially on the other side of the aisle, to please talk to Ms. Van Dyne. This is very unfair to our state. This is unfair to our residents, that people are being encouraged, and people are actually celebrating it. Some people are celebrating it. The idea that people are leaving our states because they're being taxed on taxes they've already paid. The federal government was set up with a concept that state and local governments have a right to decide how they're going to govern themselves. And people can vote whether to keep or get rid of the people. But, Ms. Van Dyne?
Well, I feel like I need to be able to respond to this.
Go ahead.
Part of the problem, and look, I was a mayor in Irving, Texas, way before 2017. I became mayor in 2011. I'll tell you, when we were going out and we were looking for economic development, where we were finding companies that were moving, this was way before the SALT cap. We had companies that were moving and people who were moving into our country, into our state, into our city, not because of the SALT cap, but because they felt like they were being abused at the local and state level because they were being absolutely overtaxed and overregulated. This was back in 2011. We saw company after company after company leaving places like Chicago, New York, and LA for places like Florida and Texas not having anything to do with a SALT cap, having everything to do with a mismanagement and the horrendous regulatory environment of your local and your state governments.
So
and it's still happening.
I'm going to reclaim my time. So you really don't like New York, okay? And
New York is a great state run by horrible elected officials.
So you think that New York is just a terrible place, a great place run by horrible elected officials. Now, do you think that under the system that we have, that the federal government should reach in to the state and local governments and tell them what they should be doing?
No.
Do you think that people...
I think
so
if
answer
they
my
want
question.
to be double-dipped, then that's the state and local officials' job, not ours.
So please answer my question I asked before. Do you think people should be paying taxes on taxes they've already paid?
I don't think that's the case. I think you are absolutely mischaracterizing that. In Texas, we have high property taxes. We're paying that. That is the way that our state actually generates a number of its revenues.
Most of your revenues are generated
from
royalties on oil, right? Aren't most of your taxes?
No, we have a very diverse economy. I think the 80s called. They want their question back.
Okay.
We have a very diverse industry.
Ms. Van Dyne, thank you very much. We were sorry that you left New York, but in some ways it may have worked out better for all of us.
Does the gentleman yield back? The gentleman appears
Yes, I yield back.
Yield back. The question is on agreeing to the amendment offered by Mr. Swazi. Clerk, call the roll.
Mr. Buchanan?
No.
Mr. Buchanan, no. Mr. Smith of Nebraska?
No.
Mr. Smith of Nebraska, no. Mr. Kelly? Mr. Kelly, no. Mr. Schweikert? Mr. LaHood? Mr. LaHood, no. Mr. Arrington? Mr. Estes? Mr. Estes, no. Mr. Smucker? Mr. Hearn? Mr. Hearn, no. Mrs. Miller? Mrs. Miller, no. Dr. Murphy? Dr. Murphy, no. Mr. Kustoff? Mr. Kustoff, no. Mr. Fitzpatrick? Mr. Fitzpatrick, no. Mr. Stubbe? Mr. Stubbe, no. Ms. Tinney? Ms. Tinney, no. Mrs. Fishbach? Mrs. Fishbach, no. Mr. Moore? Mr. Moore, no. Ms. Van Dyne?
No, but you might want to, Swazi, look at your FEC report. You got a lot of cash from Texas.
Ms. Van Dyne, no. Mr. Feenstra? Mr. Feenstra, no. Ms. Maliotakis? Mr. Carey? Mr. Yakum? No. Mr. Yakum, no. Mr. Miller? Mr. Miller, no. Mr. Bean? Mr. Bean, no. Mr. Moran? Mr. Moran, no. Mr. Neal? Mr. Neal, yes. Mr. Doggett? Mr. Thompson? Mr. Thompson, yes. Mr. Larson? Mr. Larson, yes. Mr. Davis? Mr. Davis, yes. Ms. Sanchez? Ms. Sanchez, yes. Ms. Sewell? Ms. Sewell, yes. Ms. Delbene? Ms. Delbene, yes. Ms. Chu? Ms. Chu, yes. Ms. Moore? Mr. Boyle? Mr. Boyle, yes. Mr. Byer? Mr. Byer, yes. Mr. Evans? Mr. Evans, yes. Mr. Schneider? Mr. Schneider, yes. Mr. Panetta? Mr. Panetta, yes. Mr. Gomez? Mr. Gomez, yes. Mr. Horsford? Ms. Plaskett? Ms. Plaskett, yes. Mr. Swazi? Mr. Swazi, yes. Mr. Schweikert? Mr. Schweikert, no. Mr. Arrington? Mr. Arrington, no. Mr. Smucker? Mr. Smucker, no. Ms. Maliotakis? Mr. Carey? Mr. Carey, no. Mr. Doggett? Ms. Moore? Mr. Horsford? Mr. Horsford, yes. Chairman Smith? Chairman Smith, no.
The clerk will record the vote. Will
The
report
yeses are 17, the noes are 25.
There being 17 yeses and 25 noes, the amendment is not agreed to. Are there additional amendments? Mr. Thompson.
Mr. Chairman, I reserve a point of order.
Point of order is reserved.
Thank you, Mr. Chairman. I have an amendment at the desk.
The gentleman will suspend while the amendment is being distributed. Mr. Thompson is recognized for 5 minutes to introduce.
Thank you, Mr. Chairman. You know, the President and my Republican colleagues like to talk about bringing back manufacturing and energy dominance. And the chairman of this committee said that and I quote, the golden age of American manufacturing starts with the extension of the Trump tax cuts. Well, that can't be further from the truth. Today, we have more Americans working in manufacturing than at almost any time since the Great Recession. In 2024 alone, we invested nearly $240 billion in new manufacturing facilities, a record high. Unlike my Republican colleagues, we understand you don't build new factories by giving tax cuts to folks that don't need them. You build new factories by investing in American ideas, labor, and enterprise. That's exactly what we did with the Bipartisan Infrastructure Law, CHIPS and Science Act, and the Inflation Reduction Act. We spurred billions in investment in solar, wind, clean hydrogen, carbon capture, biofuels.
Mr. Thompson, will you suspend 1 moment? I'd like to ask those observing once again to take your conversations out in the hallway. Each member deserves to be heard as we conduct business. The gentleman may proceed.
Thank you, Mr. Chairman. We spurred billions in investments in solar, wind, clean hydrogen, carbon capture, biofuels, advanced battery technology, and more. Since 2022, we have created 400,000 new jobs and invested over $400 billion in clean energy jobs. But now, in order to pay for trillions in more tax cuts for those who don't need them, the Republicans are gutting clean energy tax credits, which will be devastating. It's the American worker who will suffer, with many of them in districts represented by my Republican colleagues on the other side of this dais. Representatives Arrington, Bean, Carey, Estes, Fenstra, Fishbach, Kern, Kelly, Kustoff, LaHood, Malatakis, Miller, Moore, Murphy, Moran, Smith, Smucker, Stubbe, Tierney, Van Dyne, and Yackham. You guys are going to be voting to kill jobs and in some cases, billions of dollars of investment in your districts. You're going to have to answer to your constituents with that vote. By gutting these tax credits, you're not just hurting the current industry, you're hurting the United States in our effort to get back our competitive edge against China. The American people understand that these credits work off one another. You can't have successful manufacturing when you eliminate credits that incentivize purchases. This is all part of one large supply chain and ecosystem. Whether my Republican colleagues believe it or not, clean energy is the industry of the future, and China is doing all it can to dominate the supply chain. This bill would shut off the most impactful tool to ensure America and American companies lead in the future. Everybody on this dais should vote for this amendment. I yield back.
The gentleman yields back. Anyone wishing to speak? Please. Mr. Neal is recognized for 5 minutes.
Thanks. Let me say this to our colleagues here. This was a sound piece of legislation. The infrastructure law, the CHIPS Act, they were sound pieces of legislation. It's going to inure to the benefit of the American family for decades to come. Everywhere you travel now, the result of the infrastructure bill is apparent. On the clean energy front, for those of you who are market-driven, look what's happened to the cost of solar power and wind. They've come way down. But the Inflation Reduction Act, $412 billion worth of tax credit, it allows local investors to decide what they think might win, what might prevail, but not to miss the point. That's a choice that they make. Coupled with the other, I think, very important consideration here, I've always been offended by those who will show up at groundbreakings after they have voted against the expenditure. If you don't want the money, don't show up at the groundbreaking, and surely don't show up at the ribbon cutting hoping that people have amnesia as to what has happened. The easiest piece of legislation in my years in this Congress to pass, always Republicans and Democrats together, the infrastructure bill. Easily done, easily accomplished. Some of the best chairmen that I've served with in this Congress were Republicans on the Infrastructure Committee, or Public Works as it was once called. They were able to maneuver the system. They made sure that the old-fashioned idea, if you voted for the bill, largely your projects were embraced. I hope, and I expect, by the way, that a lot of what's being bartered here over, it's going to fall by the wayside because the Republican leadership is going to start to hear of what this means. A lot of these projects are already in the ground. It's going to be really hard to take a walk on them. So thanks to Mr. Thompson for this amendment. This is a really sound amendment. Park politics for 5 minutes here. Keep these tax credits, keep the Inflation Reduction Act, insulin, all of the things that are in it. It was great legislation. Yield back my time.
Those wishing to speak on the amendment, Mr. Panetta is recognized for 5 minutes.
Thanks, Mr. Chairman. I appreciate that. Look, I support this amendment, especially this amendment that strikes provisions of the bill that gut the clean energy tax credits. The amendment eliminates credits. Well, this bill eliminates credits that support the deployment of clean energy projects and credits that lower the cost of efficient homes. It also eliminates transferability of credits, crippling the effectiveness of the remaining credits and destroying the clean energy economy that harnessed markets for the green transition. Doing so would increase energy prices for consumers and threaten the deployment of clean energy projects across all of our districts. This directly contradicts the majority's goal of supporting American manufacturing and the economy. These investments unleashed a wave of clean energy funding and job creation, especially in red states and, yes, in red congressional districts. Since these investments were made law, over 75% of clean technology investments have gone to counties with incomes below the national median. These investments have led to the creation of more than 330,000 good-paying jobs in the clean energy sector, jobs that provide stability and upward mobility for thousands of American families. By stripping these tax credits, we risk abandoning the very communities we pledge to uplift and setting the United States behind both environmentally and economically. That's why I urge my colleagues to support this amendment, and I thank Mr. Thompson for offering it. I yield back.
Gentleman yields back and now recognize Mr. Horsford for 5 minutes to speak on the amendment.
Thank you, Mr. Chairman. I support Mr. Thompson's amendment. Look, I get it. Republicans think that because this wasn't their idea that it's not a good idea, but they're on the verge of discarding over $300 billion in private investment that was catalyzed by the Inflation Reduction Act. That's right, $300 billion of private investments that have been focused on creating good-paying jobs and have revitalized local economies from West Virginia to Arizona and my home state of Nevada. We're talking about the destruction of good-paying jobs and choking local economies, especially in rural America. Here's the hard truth. they don't want to admit. Repealing the clean energy tax credits actually will raise energy costs on American families. Experts estimate electric bills would climb by at least $110 per household each year. All to do what? To bankroll tax cuts for billionaires like Elon Musk. The stakes really couldn't be any higher. Already 62,000 clean energy jobs have been lost or stalled since President Trump came to office due to damaging tariffs and executive orders. Pulling the rug out from energy incentives will cost hundreds of thousands more and send U.S. manufacturing overseas. Even more damning, of the nearly 400,000 new clean energy jobs that were created under the Inflation Reduction Act, 53% are in districts held by Republicans, proving that these aren't blue state jobs or red state jobs, they're American jobs. So I hope my colleagues are ready to explain themselves to any American who would ask why they voted against their constituents to give more tax cuts to billionaires like Elon Musk. Even 32 Republicans sent a letter asking you not to gut these valuable programs. So if you won't listen to us because it's not your idea, at least listen to your colleagues. This is outright hypocrisy. Eliminating consumer energy credits while preserving corporate loopholes isn't fiscal responsibility. It's a giveaway to the ultra-wealthy and a betrayal of working families. So do not be the reason, though, that energy costs increase. Do not be the reason why good-paying jobs are destroyed. Do not be the reason manufacturing moves to China. Do not eliminate these credits while leaving corporate loopholes untouched. That's the wrong direction for real tax reform, and it's something that you simply won't be able to explain back home in your districts. With that, I would thank the gentleman, Mr. Thompson, for his amendment, and I urge my colleagues to vote yes. I yield back.
The gentleman yields back. I now recognize Ms. Plaskett for 5 minutes.
Thank you, Mr. Chairman. I, as well, am in favor of this amendment. And some might think from my district that would be kind of unusual, considering we have a refinery, a fossil fuel oil refinery in the Virgin Islands that we are trying to start. But that fossil fuel refinery, which at one point was the largest in the Western Hemisphere, understands that diversification of energy is important for our economy, important for jobs, and important for competitiveness. Listen, even Senate Republicans have looked at this proposal, and just now, if you look at Politico, Reuters, others, are saying that this provision that you have put in to the chairman's bill is not the right way for our for manufacturing, that this cutoff is too soon, this does not help even in the areas that you all are very interested in nuclear reactors, in geothermal. This is going to cut that off with these tax credits being cut off. Industry has, and individuals have made decisions on moving technology forward, on being competitive, and stopping these tax credits just because it was something that President Biden did is not the right way to go. We are going to stifle American competitiveness. We are going to stifle American innovativeness and our ability for our manufacturers and our companies to be able to create new and diversified areas for jobs to grow. Listen, in the Virgin Islands, we had an oil refinery that was a boon. Most of our revenues came from this refinery. Individuals had jobs. We were able to grow the middle class exponentially. But we did not recognize that diversification of our resources and our manufacturing was absolutely key. And when oil prices, movements away from refining happened, we've been stuck. And so those individuals who are working on the restart of the refinery also recognize that we need to diversify it. And these tax credits are very helpful for us to be able to do that, to recognize American innovation and ingenuity. That's what we are allowing the private sector to have by having these tax credits. By removing them, you are stifling American business. And I don't understand to what end, to whose support. Where is this $300 billion that you were going to be used going to go? Oh yeah, probably the tech bros. Those individuals who it seems that the tax credits seem most geared to in this legislation. Let's keep manufacturing here. Let's keep that innovation going. I am in favor of this amendment, and I can't see why my Republican colleagues would not be. Your Senate colleagues across the Capitol are looking at this as well and saying that this is a no-go. Getting rid of these tax credits is going to be harmful to American manufacturing, particularly in the areas that you all are looking at as well. So support this amendment. This is one area that we can all work on together. I yield back.
The gentlelady yields back. I now recognize Mr. Yocum for 5 minutes to speak on the amendment.
Thank you, Mr. Chairman. The Democrats' so-called Inflation Reduction Act was designed to, by their estimation, to reduce our dependence upon foreigners for energy. The Inflation Reduction Act actually would have been better called the Inflation Enhancement Act. Democrats passed the Inflation Reduction Act, and what happened? Inflation shot through the roof. There were also loopholes created by the Biden administration that allowed foreign actors to take advantage of our tax credits. Why should the Chinese government be allowed to come in here and take advantage of American taxpayer loopholes? We shouldn't allow that. We should want domestic production of energy. We should want domestic investment. And the way to make that happen is to pass this one big, beautiful bill. I urge my colleagues to vote no on this amendment.
The gentleman yields back, and I recognize Mr. Doggett to speak on the amendment for 5 minutes.
During the last Democratic Congress, we took constructive action to respond to the climate crisis. And we worked to incentivize the expansion of an infant industry in competition with serious competition from China. Our industry has grown, the investment has grown, hundreds of thousands of new jobs have been created. The bill has worked. And for some reason, apparently Donald Trump's belief that windmills cause cancer or some other extraordinary, unbelievable position, our Republican colleagues are determined to undermine everything that we did through that legislation. There's a mention by Mr. Yocum of prices. Well, prices on energy have gone down in my state because of renewables. Texas is known for its fossil fuels, but in fact, we're the leading wind producer. We're right at the top on solar because they have worked to bring prices down, not up. And this bill is all about undermining that progress. Without the amendment that we're offering, we're going to see electricity costs go up. We'll see hundreds of thousands of jobs lost, and we'll see much of the modest progress that we've made to protect our planet reversed. Phasing out these credits to unworkable short timelines, placing impossible foreign entity of concern restrictions on materials, and repealing the consumer credits, all of these serve to restrict further clean energy growth while Trump demands more and more dirty coal and over-reliance on fossil fuels. Last year was the hottest year ever recorded, the hottest year in known human history. It brought us dangerously near the tipping point of no return with reference to the climate crisis. Climate change is not some far-off event. It's at our doorsteps. It's at the doorstep of my home in Austin tonight, where the temperatures this week are soaring into triple digits. Because in Texas, in my area, summer has become a time that extends from April to November. And that's happening increasingly around the country as we see the intensification of weather events, not only with heat, but with hurricanes, with tornadoes, with floods, and of course wildfires in Texas and wildfires right in the center of Los Angeles. It's absolutely incredible that we're here tonight even debating
whether to kill the credits for clean energy and the development of this new industry that can be competitive and not abandon renewables to the Chinese, whether we're going to abandon that approach in order to pay for well-connected billionaires' tax breaks. Electricity demand is projected to grow exponentially in large measure because everything's getting so hot and people want more cooling, more air conditioning. And solar and wind can readily meet that demand without kicking off a death spiral of high emissions from energy used. American families will pay the cost if these provisions are killed. We need these clean energy credits, and I would yield the balance of my time to Mr. Thompson to add important rebuttal to some of the arguments that have been made.
Thank you, Mr. Doggett, and I agree with the comments that you've made. I'm a little bit mystified by what my colleague and my friend, Mr. Yackham, had to say. By not passing this amendment, you're doing exactly what you're warned against. We are acquiescent to the Chinese. We're gonna eat their lunch in regard to the development of renewable energy unless we keep going at the pace that we're going. This means jobs in districts across the country. It means cheaper energy for our constituents. It is overwhelmingly popular. And interestingly, there's investments going on, and I read the list of names of our colleagues on the other side of the dais who have major projects with big investments. And Mr. Yackham, you got $6 billion invested in your district in regard to renewable energy. And this is, to say stop is, I think, crazy. I had an opportunity to participate in an energy conference this month, bipartisan, Democrats and Republicans. And one of the most interesting things I heard was from a Republican colleague who said he said, I'm glad you're here as a Democrat on the Ways and Means Committee, but I sure wish there were some Republicans from the Ways and Means Committee here to understand how important it is that we're looking at and investing in, however you want to take it, all of the above or the best of the above, but we need to do a lot of work in regard to energy development.
Gentleman's time has expired.
Clean renewable energy is an important part of that.
Gentleman's time has expired. Mr. Byer is recognized for 5 minutes to speak on the amendment.
Thank you, Mr. Chairman. And I want to thank Mr. Thompson for offering perhaps the most important amendment of this markup. The energy provisions of this bill are catastrophic. Everyone understands that this is selling out the future generation's livelihood to support tax cuts for the wealthy. The indisputable, universally accepted climate science tells us we need to take every step we can to fight the existential dangers of global warming, every single step. And if we don't, future generations will prematurely die of heat stroke, will not have the weather temperate enough for crops to grow, or oceans that can support fisheries. If you don't appreciate immigration and emigration right now, get ready for 1 billion people on this planet displaced by 2050. And when Gen Z or Gen Alpha ask you why Congress didn't do something to stop a planet on fire, we can just point to this bill. We have an epidemic of anxiety and depression among our kids. I spent a lot of time with high schoolers, college kids, even fourth graders and sixth graders. And you say, why is there so much anxiety, so much depression? Right away they'll say, because you're doing nothing to stop what's happening to our planet. Listen, then just if the next Helene or the next LA wildfire isn't enough to make you afraid, just evaluate this from an energy perspective. And that's why I'll tell you that these edits are dumb and deeply unserious. This is killing tax credits that have long had bipartisan support that way predated Joe Biden. This is killing Republican-led ideas like tech neutrality and transferability. You can't reasonably look at the changes made to these tax credits and think that they support energy markets in the U.S. Between the FEOC provisions about being unworkable and functionally killing credits, creating placed in service deadlines, which means no project underway can guarantee it will be done in time, and eliminating transferability, you've killed financing in the energy market. If we lose the advanced nuclear industry to China, let's point to changes that we made here. It's just so deeply unserious at a time when we have increasing energy demand. We should be supporting the rapid deployment of energy that we can get on the grid now. And that's the opposite of an all-the-above or an energy dominance agenda. This is just doubling down on oil and gas. For example, why would we be attacking storage at a time like this when we're trying to improve reliability and improve capacity and lower energy costs? It's baffling. This is an economic loser's agenda and a job killer. At a time when we're trying to grow the economy, why would we be pushing legislation that kills jobs and kills manufacturing in the United States? I also want to point out that these changes are anti-family. If you care about lowering energy prices, these efforts increase household energy prices. Households are going to pay more for energy without these clean energy credits. Americans can see their electricity bills rise by $110 next year. So you're increasing folks' utilities bills at a time when folks are already struggling with the cost of living. And for what? So that the ultra-wealthy can pay even less in taxes. And if you want millennials and Gen Z to have kids, one of the key reasons they don't want to have kids is they're concerned about costs, and they're concerned about climate change. And this bill makes both of those things worse. So I'm deeply opposed to these energy provisions. They're hiking energy prices, they're killing jobs, they're killing manufacturing, they're contributing to the climate crisis, and they're asking our kids not to have their own children. With that, I yield back. Yes, I yield.
Time has expired.
Yeah.
Hey, you want to sit here? Mine is working. This is working. Jump in. Come on. It's your birthday.
If I can come up and stay up on the top of the that one.
The committee will stand at ease as technical issues are being addressed.
We can.
Testing, 1, 2, 3, 4. Would you like to use this one?
Hello.
Come on up.
Mic check, mic check.
This one works.
Okay, can we, you want me to
Test,
continue?
test.
The committee will come to order and we'll proceed.
Thank
as
you.
needed.
Thank you for yielding your time to me. I know that my colleague, Mr. Thompson, was discussing some of the statistics and what was said by our good colleague from Indiana. One of the things that I think we need to continually do is get rid of misinformation. He also stated that there was inflation skyrocketed under Biden. Let's be clear that we know that in 2021, inflation was at 7%. That was the inflation rate. It dropped down to 6.5. In 2023, it was 3.4. 2024, 2.9. And at the beginning of the Trump administration, 2.3. Those are the numbers, and to state, it's disingenuous to say that inflation skyrocketed under the Biden administration when there was a steady decline. Additionally, we know that the IRA, the Inflation Reduction Act, has brought 400,000 new clean jobs, and over $422 billion has been invested across 48 states and Puerto Rico in that short period of time. I yield back.
The gentlewoman yields back.
Mr. Byer, you still have time. Would you yield?
Mr. Byers' time has expired.
18 seconds. It says he had 18 seconds, but that's all right.
Mr. Byers' time is 18 seconds.
Mr. Byer, you're aware that this week 23 retired four-star generals and admirals said this is not just a matter of clean energy, but it is a matter of our national security, that these credits be maintained. There's a serious national security issue that is being totally ignored by our Republican colleagues with this amendment, is there not?
There certainly is, sir.
The gentleman's time has expired. The question is on the agreeing to the... Ms. Moore is recognized for 5 minutes to speak on the amendment.
Thank you so very, very much. I'm reflecting back on Member Day when I was the vice ranking member of the committee and sat there for hours listening to Republicans come in and beg, the majority, Republican members beg to not destroy the IRA provisions, the energy provisions in the IRA. They said that red states had more of these investments than blue states, and that the projects that were in code would be interrupted were the Republicans to use a sword or a knife rather than a scalpel. So I am wondering at this point why the Republican conference has not listened to its members to talk about what a great investment they have seen. I would yield the rest of my time to Mr. Doggett. Do you want time?
I believe we've adequately covered this amendment, but it's critical to our national security, our economic security, to job growth, and to assuring that we respond to the climate crisis before we're overwhelmed by it. Thank you.
Thank you. I yield back.
Gentlewoman yields back. Question is on agreeing to the amendment offered by Mr. Thompson. Clerk, call the roll.
Mr. Buchanan. No. Mr. Buchanan, no. Mr. Smith of Nebraska.
No.
Mr. Smith of Nebraska, no. Mr. Kelly. Mr. Kelly, no. Mr. Schweikert. Mr. LaHood. Mr. LaHood, no. Mr. Arrington. Mr. Estes. Mr. Estes, no. Mr. Smucker. Mr. Hearn. Mr. Hearn, no. Mrs. Miller. Mrs. Miller, no. Dr. Murphy. Dr. Murphy, no. Mr. Kustoff. Mr. Kustoff, no. Mr. Fitzpatrick. Mr. Stubbe. Mr. Stubbe, no. Ms. Tinney. Ms. Tinney, no. Mrs. Fishbach. Mrs. Fishbach, no. Mr. Moore. Mr. Moore, no. Ms. Van Dyne. Mr. Feenstra. Mr. Feenstra, no. Ms. Maliatakis. Ms. Maliatakis, no. Mr. Carey. Mr. Carey, no. Mr. Yakum. Mr. Yakum, no. Mr. Miller. Mr. Miller, no. Mr. Bean. Mr. Bean, no. Mr. Moran. Mr. Moran, no. Mr. Neal. Mr. Neal, yes. Mr. Doggett. Mr. Doggett, yes. Mr. Thompson. Mr. Thompson, yes. Mr. Larson. Mr. Larson, yes. Mr. Davis. Mr. Davis, yes. Ms. Sanchez. Ms. Sanchez, yes. Ms. Sewell. Ms. Sewell, yes. Ms. Delbene. Ms. Delbene, yes. Ms. Chu. Ms. Chu, yes. Ms. Moore. Ms. Moore, yes. Mr. Boyle. Mr. Boyle, yes. Mr. Byer. Mr. Byer, yes. Mr. Evans. Mr. Evans, yes. Mr. Schneider.
Yep.
Mr. Schneider, yes. Mr. Panetta. Mr. Panetta, yes. Mr. Gomez. Mr. Gomez, yes. Mr. Horsford. Mr. Horsford, yes. Ms. Plaskett. Yes. Ms. Plaskett, yes. Mr. Swazi. Mr. Swazi, yes. Mr. Schweikert. Mr. Schweikert, no. Mr. Arrington. Mr. Smucker. Mr. Smucker, no. Mr. Fitzpatrick. Yeah, I see him. Ms. Van Dyne. Ms. Van Dyne, no.
How is Mr. Arrington recorded?
Mr. Arrington is not recorded. Mr. Arrington, no. Chairman Smith? Chairman Smith, no.
The clerk will report.
The yeses are 19, the nos are 25.
There being 19 yeses and 25 nos, the amendment is not agreed to. Are there additional amendments?
Mr. Chairman.
Mr. Chairman, I reserve a point of order.
Point of order has been reserved. Ms. Sanchez?
Mr. Chairman, I have an amendment at the desk.
Thank you. If you would suspend while we distribute the amendments.
Yes, do you want them? Okay, yeah, I brought fuzzy warm socks. I don't know why I wore these heels. I don't know why.
Ms. Sanchez is recognized for her amendment, 5 minutes.
Thank you, Mr. Chairman. This amendment would terminate the International Emergency Economic Powers Act, or IEPA, those tariffs that were imposed by Trump Executive Orders 14257, 14193, and 14194. Trump's tariffs have only brought us economic pain, not results. For the first time since the pandemic, our economy shrank in the first quarter. We now face the very real risk of yet another Republican-led recession. Prices continue to rise and jobs are being lost or are in jeopardy, with farmers and small businesses feeling the brunt. According to the Joint Economic Committee, employment at small businesses declined by 3% since President Trump took office. That is 366,400 jobs lost. Americans are unsure of how to weather the day's trade storm or what tariffs might hit them next. It's time to end the economic damage and to restore stability. Congress cannot sit idly by working on a tax bill while President Trump's trade policies wipe out American jobs, businesses, and economic stability. That's why I offered an amendment to eliminate President Trump's global tariffs once and for all. This includes the baseline 10% on all countries and the massive looming additional tariffs. My amendment would also permanently remove the 25% tariffs on Canada and Mexico. No more so-called temporary pauses that get turned off and on at the president's whim. Republicans will desperately argue there's a strategy behind Trump's approach. They'll talk up these big trade deals. But let's be honest, there are no real deals. It's all a smokescreen. Just vague promises and walkbacks to hide the chaos and to distract American families from rising costs and the economic uncertainty ahead. Look at China. Trump sure did talk a big game and bragged about his tough tariffs on China, but in reality, he got spooked by the market, so he caved, temporarily dropping them from 145% to 30% in an effort to save face. And it looks like China gave us nothing meaningful in return.
Ms. Sanchez, would you pause? I would ask the audience to please take your conversations into the hallway.
Thank you, Mr. Chair.
Members deserve to be heard. Please, audience members, take your conversations to the hallway. Ms. Sanchez, please proceed.
Thank you, Mr. Chairman. So Americans have to bear the brunt of his trade wars with nothing to show for them. President Trump said Americans will feel short-term pain for his tariffs, but what is the short-term pain exactly? Higher prices and jobs lost, declining investments in the United States, and no meaningful progress on fixing our trade imbalances. But there is one person who seems to come out ahead time and time again, President Trump himself. He's getting a new $300 million private luxury plane from Qatar that he'll keep once he leaves office. A gift that just happens to come after the Trump Organization announced plans to develop a $5.5 billion golf resort in Qatar. Just a coincidence, right? This fits the pattern, rewarding countries that benefit Trump personally, punishing our allies like Canada, and going soft on authoritarian regimes like China and Russia. Meanwhile, it's the American people who are left paying the price. Trump's tariff policies aren't about trade. They're about his own self-interest, chaos, and control. It's time to end this grift and bring some sanity back to our trade policy. I encourage my Republican colleagues to strike Trump's IEEPA tariffs and support my amendment, and I yield back the balance of my time.
The gentlelady yields back the balance of her time. Anyone wishing to speak on the amendment? Ms. Plaskett.
Thank you very much, Mr. Chairman. I am speaking in favor of this amendment. I thank the gentlewoman, the ranking subcommittee member on trade, for this amendment. You know, while President Trump has expressed an interest in changing U.S. trade policy and the world economic order, his administration has so far been marked by a lack of coherence and demonstrable interest in enriching our foes. He's not articulated or acted upon specific, responsible reforms to help American workers and middle-class families. Instead, perhaps due to growing divisions within the administration, it's not clear, and with many in the business community, the administration on several occasions has swung wildly between policy extremes, creating a great deal of uncertainty for stakeholders and our trading partners. These trade people that we work with are our partners for the betterment of the American people and American workers. The administration has taken a hostile approach to the economy and alliances, all leading to questions about their overarching objectives on trade. IEEPA is not a tariff statute. Its text and legislative history make clear that Congress neither intended to nor did provide for IEEPA to be a tariff statute and has never been used that way. The Constitution gives Congress, not the President, the first branch of government, the power to impose tariffs. The President thus can only raise tariffs if Congress has clearly delegated its authority to him. And here, Congress has not done so. Congress knows how to delegate tariff authority and has made itself clear when it has done so on a number of occasions in the past. When Congress does so, it includes substantive, procedural, and temporal limits on the President's delegated power. That's the balance of power. That's the checks and balances that our Constitution is supposed to have. Trump's chaotic on-again, off-again approach to tariffs imposed under IEEPA is bad for the U.S. economy. It's bad, and we know it's bad because we've seen the stock market. We've seen what it's done, and would not have happened had the President used any of the other tariff authorities available to him under the law. This is an amendment that brings certainty, that brings clarity, that brings a procedure, and allows Congress to have its rightful authority, so that there are guidelines under which the President is operating to make any changes or negotiations that he would like to do. I'm supporting this amendment, and I urge my colleagues to do so as well.
Are there other members wishing to speak on the amendment?
I too support.
Mr. Evans is recognized for 5 minutes.
Yes, I too support the amendment. And Ms. Sanchez has done a good job in terms of providing leadership. And that's what we really need. We need someone who really understands and realizes that Congress has to work with the administration. Ms. Sanchez has demonstrated that, and and what she stated has been very clear. So I support this amendment, Mr. Chairman.
Does the gentleman yield back? Others? Mr. Horsford is recognized for 5 minutes.
Thank you, Mr. Chairman. I also would like to speak in favor of the amendment. I'm actually going to share a couple of constituent stories of people who wrote in to me, because I think too often we don't center the people who are affected by these policies. And to be clear, Trump's tariffs are taxes that the American people, consumers, pay, not some foreign government elsewhere. And while tariffs can be used strategically as a tool, that's what this administration has chosen not to do. Now, I don't know where all the Republicans have gone. I don't know why you guys can't be here to be a part of the debate to defend this big, beautiful bill. Maybe you're off negotiating terms that you haven't reached, but I'm here to speak on behalf of my constituents and make sure they have a voice. So the owners of the North 5th Brewery in my district, Amanda and Matt, shared that aluminum cans is their primary source of advertisement, and all of the aluminum is imported. Their profit margins on their cans is already very minimal. When they looked at the numbers, they realized that the tariffs would hurt them. Canned beer may be something that we would have to eliminate, they said, and that's a huge hit to them. Also, they're at a point where they do need more brewing tanks, and the steel comes from overseas, even if they're locally made here. They have to get that resource from somewhere. They said they may have to go from $6,000 a tank to almost $20,000. As a small business, that's just not something we can afford, they shared. Mallory, who is the owner of Needle and Stitch, shared that it's easy to say that tariffs just raise the price of goods, but for us, it's so much more than that. With the cost of materials going up, I'm forced to make impossible decisions. Do I raise my prices and risk losing the loyal customers that keep us going? Do I cut my employees' hours even though they're depending on those wages to get by in a place where rent and groceries just keep going up? I'm not a corporation with layers of funding. I'm just a mom, a military wife, and small business owner who took the leap of faith to build something for my family and the community that I love. These tariffs will squeeze every part of my business. We serve families, teachers, the military, other entrepreneurs, and folks who are watching every dollar right now. We need policies that are going to protect us, not push us out. Thank you, Mallory. I hear you, and I appreciate you sharing your perspective. Vanessa, co-owner of La Vecindad, who is a small business owner, said that these tariffs will directly increase the cost of imported goods that we rely on, from specialty ingredients to packaging. That means higher prices for our customers, tighter margins for us, and tougher decisions about staffing and growth. Small businesses like mine already operate at razor-thin margins. These tariffs don't just hurt trade, they threaten our very survival. And Dee Dee, a constituent of mine, said that after seeing the Instagram post, I felt compelled to share how the tariffs and the current administration in general affects the way I conduct my business. I'm a hairdresser and a makeup artist. I have a two-phase business because I do hair and makeup for TV and film, and I rent a salon suite. Everything I use, the hair dye, styling products, tools, printer ink, makeup brushes, cases, and so on, is imported. Even if the product is made in the United States, the packaging is imported. I've been through their industry strikes, a pandemic, and a recession. I've tried to absorb the cost of doing business over the years and haven't raised my salon service prices in 8 years. Now I'm worried. The cost of doing business keeps going up. I don't want to lose clients because they don't want to pay more. Also, it's really hard to save for retirement now that Social Security is in peril. I don't sleep well. Let's not do it this way. The ranking member of the Trade Subcommittee is absolutely right. The President has no authority to enact these emergency tariffs. And if it was an emergency for fentanyl, why is he now lifting the emergency and extending the dates? And where are the Republicans, and why are you capitulating your Article 1 constitutional right to oversee this executive branch? That's your job. Don't cut me off.
The gentleman's time has expired.
I'm here to represent my constituents.
The gentleman's time has expired. The question is on agreeing to the amendment offered by Ms. Sanchez.
I move to strike the last word.
Ms. Moore is recognized for 5 minutes to speak on the amendment.
Thank you. I think this is an extremely important amendment. One of the things that has been extremely shocking to me is that this institution is not jealous for its power and authority. I mean, it's one thing to be partisan and say, well, I'm a Republican or I'm a Democrat, but to really come here and sit here for hours on end and allow someone in the executive branch, and unelected, dictate, friends of the president dictate policies that ought to be under our purview is absolutely disgusting. I would yield the remainder of my time to Mr. Horsford.
I thank the gentlelady from Wisconsin. Look, I know you may not want to defend your constituents, but I came here to work. I came here to do my job. So even though you don't want to hear me, you don't want to hear my constituents and their plea, it's my job to make sure that my constituents' voices are heard. Representative is not just a title, it's not just a definition, it's what I am for the 750,000 constituents in Nevada's 4th District. They may not all agree with the positions I take, but you know what they do agree with? That I listen, that I make sure that their perspectives are heard, that even if they don't agree with me, they will be able to hear my point of view. So I would at least ask my colleagues on the other side of the aisle to give us that respect. And the underlying amendment is about your constitutional responsibility, your duty as a representative here in the House of Representatives. Can one of you say anything about why you've capitulated to the executive branch, your responsibility to oversee trade? Can you say, what is the strategy of this administration, the on-again, off-again strategy? Can you answer to constituents who are concerned about the prices from everything from groceries to appliances to whether or not their kids are going to have gifts under the tree because the shelves won't be stocked? Oh, I'm sorry, you guys are silent because you've been directed by Almighty King not to speak during these markups, just like you've done in every other committee. This is the choice that the American people have made. Well, I'm going to keep fighting for my constituents. I'm going to make sure their voices are heard. And the thousands of people who've written me, who've emailed, who've shared your stories, I hear you, I see you, and I'm going to make sure that your stories are lifted up. I'm now going to yield the balance of my time to the ranking member of the Trade Subcommittee, Ms. Sanchez.
The gentleman must yield back his time. Does
I'm
Ms.
sorry.
Moore
to
yield
Ms.
time? Ms.
I
Moore
apologize.
yields time to Ms. Sanchez.
Yeah, I think it's very interesting that my colleagues on the other side of the aisle have forgotten that they are a co-equal branch of government, and that part of our duty is to make sure that there is no overreach by the executive branch. And the Constitution specifically grants to the Congress the power of trade and tariffs. And yet you seem to just look the other way and allow the executive branch to do whatever he wants and overreach that power, and you're not willing to stand up and assert your constitutional responsibility. It's very telling. It's very telling. You were willing to do it when Biden was president, but you're not willing to do it when a member of your own party sits in the White House. My constituents, I hold town halls. I know a lot of you don't because you don't want to hear the backlash from your constituents that this is painful for them economically, these tariffs, and the uncertainty and the chaos of the on-again, off-again nature. I'll tell you, I represent the ports of Los Angeles and Long Beach. Their cargo is down 35%. Every 4 containers means 1 job lost. We are looking at massive job loss for longshoremen, for truckers, for associated businesses, and that's, I share the same experience as Mr. Horsford of having constituents who are small business owners tell me they are going out of business because of these tariffs. The president had no right to institute them, and we must wrest that power back to this committee and to do it in a logical and strategic way that makes sense for the American people.
Gentlewoman's time has expired.
With that, I yield back.
Mr. Gomez is recognized for 5 minutes to speak on the amendment.
Thank you, Mr. Chairman. I support Ms. Sanchez's amendment to take this power back because Mr. Trump, the president, has been reckless when it comes to its use. While Republicans sit and blow hot air about strengthening the economy with tax breaks for unelected billionaires like Elon Musk, President Trump was waging a trade war that has caused prices to start skyrocketing. I'm not against all tariffs. I'm against dumb tariffs. President's dumb tariffs took a strong economy and hobbled it with sudden and unjustified escalations, followed by weak and pathetic policy retreats for the whole world to see. And his trade policy caused whipsawing markets and rampant uncertainty among businesses and consumers. Used entirely bogus formula and justifications to slap tariffs on our closest allies and sabotage our most important relationships, as well as entirely deserted. He also imposed a tariff on an entirely deserted island of penguins. Penguins. And what have we gained for all of it? To quote the president, concepts of a plan instead of actual trade deals. What agreements have been made mostly seem to be just removing the arbitrary tariffs Trump slapped on and the retaliatory tariffs countries have placed on American businesses. The only people who seem to have actually benefited are the same people who benefited from this bill. Trump's closest friends and unelected billionaires who seemingly have made piles of money on having insider information to when Trump will make his next destabilizing announcement on trade. Trump paused his tariffs on Chinese imports because of one word, Christmas. During my recent tour of the Port of Los Angeles, I saw firsthand the empty berths and barren cargo ships. I learned retailers weren't placing orders for the holidays due to Trump's tariffs, because this is when they actually place the orders, not close to the holidays, right now. And that's not what they're doing. So that will make it nearly impossible or incredibly expensive for families to find the perfect Christmas gift, including clothes, electronics, and toys like dolls. But it goes with the line, maybe less is more, as they said, less dolls for even the little girls who live in this country. Trump may be backing off now to try to avoid a Christmas disaster, but the economic damage is done. Ships are still delayed. Empty ships are returning to carry our agricultural products to Asia, and getting things on track will take more than a month and a half. The worst part is that working families are paying the price, just like with this bill before us today. With that, I yield back.
The gentleman yields back. Anyone else wishing to speak on the amendment? Question is on agreeing to the amendment offered by Ms. Sanchez. Clerk, call the roll.
Mr. Buchanan?
No.
Mr. Buchanan, no. Mr. Smith of Nebraska?
No.
Mr. Smith of Nebraska, no. Mr. Kelly? Mr. Kelly, no. Mr. Schweikert? Mr. LaHood? Mr. LaHood, no. Mr. Arrington? Mr. Estes? Mr. Estes, no. Mr. Smucker? Mr. Hearn? Mr. Hearn, no. Mrs. Miller? Mrs. Miller, no. Dr. Murphy? Dr. Murphy, no. Mr. Kustoff? Mr. Kustoff, no. Mr. Fitzpatrick? Mr. Fitzpatrick, no. Mr. Stubbe? Mr. Stubbe, no. Ms. Tinney? Ms. Tinney, no. Mrs. Fishbach? Mrs. Fishbach, no. Mr. Moore? Ms. Van Dyne? Ms. Van Dyne, no. Mr. Feenstra? Mr. Feenstra, no. Ms. Maliotakis? Ms. Maliotakis, no. Mr. Carey? Mr. Carey, no. Mr. Yakum? Mr. Yakum, no. Mr. Miller? Mr. Bean? Mr. Bean, no. Mr. Moran? Mr. Moran, no. Mr. Neal? Mr. Neal, yes. Mr. Doggett? Mr. Doggett, yes. Mr. Thompson? Mr. Thompson, yes. Mr. Larson? Mr. Larson, yes. Mr. Davis? Mr. Davis, yes. Ms. Sanchez? Ms. Sanchez, yes. Ms. Sewell? Ms. Sewell, yes. Ms. Delbene? Ms. Delbene, yes. Ms. Chu? Ms. Chu, yes. Ms. Moore? Ms. Moore, yes. Mr. Boyle? Yes. Mr. Boyle, yes. Mr. Byer? Yes. Mr. Byer, yes. Mr. Evans?
Yes.
Mr. Evans, yes. Mr. Schneider? Mr. Schneider, yes. Mr. Panetta? Mr. Panetta, yes. Mr. Gomez? Mr. Gomez, yes. Mr. Horsford? Mr. Horsford, yes. Ms. Plaskett? Ms. Plaskett, yes. Mr. Swazi? Mr. Swazi, yes. Mr. Schweikert? Mr. Schweikert, no. Mr. Arrington? Mr. Arrington, no. Mr. Smucker? Mr. Smucker, no. Mr. Moore? Mr. Moore, no. Mr. Miller? Mr. Miller, no. Chairman Smith? Chairman Smith, no.
The clerk will report the vote.
The yeses are 19. The noes are 26.
There being 19 yeses and 26 noes, the amendment is not agreed to. Are there additional amendments? Mr. Snyder?
Thank you. I have an amendment at the desk.
Mr. Chairman, I reserve a point of order.
Point of order is reserved. Gentlemen will suspend while the amendment is distributed.
Thank you. Mr. Schneider, you are recognized for 5 minutes.
Thank you, Mr. Chairman. Instead of helping American workers, families, and small business owners, Republicans are prioritizing the country's wealthiest people, the most financially secure, with their tax bill. While those with million-dollar-plus incomes should love the massive tax benefits in this bill, President Trump and the Republicans are manufacturing a cost-of-living crisis for the many working families who worry about financial security. This bill fails to help families with health care, child care, paid leave, or affordable housing. The cuts to Medicaid alone will take health care away from 14 million people. The price tag of this bill will result in more than $5 trillion additional debt by 2034 and an astonishing, eye-popping $45 trillion by 2055. That debt burden might not make a difference to President Trump's or Elon Musk's family. It will, however, lay a burden on working families in Main Street communities for generations. But this bill is not the only burden on American families. President Trump's impulsive, often arbitrary and capricious tariffs are raising costs and pushing countless American small businesses to the brink of closure. Just to be clear, tariffs are a tax paid by American families and American small businesses. The president's tariffs are making life for American families more expensive, our nation less secure, and our citizens less prosperous. Whether my Republican colleagues will admit it or not, the president's tariffs have real-world impacts for every one of our constituents who will see higher prices at the grocery store, shortages of critical products, and less money in their retirement accounts. The Yale Budget Lab projects that the revised tariffs will result in the average household's real disposable income declining by $4,900 per year due to rising prices. The president has suspended for 90 days the so-called across-the-board reciprocal Liberation Day tariffs levied against not just problem countries, but also our most valued trading partners and even the Heard and McDonald Islands, uninhabited except for a lot of penguins. And this weekend, Treasury Secretary Scott Bessent announced a partial rollback of the 145% tariffs on goods from China. These abrupt suspensions should tell us something about the president's tariff policy. And yesterday, the Wall Street Journal's editorial board, not a liberal bastion by any means, wrote the following, quote, "Rarely has an economic policy been repudiated as soundly and as quickly as President Trump's Liberation Day tariffs, and by Mr. Trump's own hand. Witness the agreement Monday morning to scale back his punitive tariffs on China, his second major retreat in less than a week. This is a win for economic reality and for American prosperity." In the same piece, the Wall Street Journal board continued, "As with last week's modest British agreement, the China deal is more surrender than Trump victory. Apart from the tariff rollback, neither side announced any broader concessions on the substantive trade issues that weigh on the U.S.-China relationship." End quote. There's still a 30% tariff on China and 10% virtually on every other country, which is why the Wall Street Journal editors made the following important point yesterday. Quote, "But a 10% across-the-board tariff is still 4 times the average U.S. tariff rate before Mr. Trump took office. It keeps the door open to the economically and politically destructive special pleading for tariff breaks for well-connected industries and companies at the expense of everyone else. U.S. companies protected by high tariffs will gradually lose their competitiveness against the rest of the world, end quote. American families deserve relief from President Trump's tariffs. That is why I am introducing tonight the American Family Tariff Relief Amendment. My amendment would increase the standard deduction by $5,000 for families, $2,500 for single filers, approximately the same amount the Yale Budget Lab estimates average families will pay this year because of President Trump's reckless trade agenda. Since the president's announcement, we've seen companies raising prices on consumers, cut back on investing in R&D, and laying off workers. Tariffs are a regressive tax, especially in the short run, and have outsized effect on the lowest income earners compared to those at the top. American families should not pay higher taxes to fund tax cuts for the rich. I urge my colleagues to vote in favor of my amendment to provide real relief to working families across the country. And I yield back the balance of my time.
The gentleman yields back. Mr. Miller is recognized for 5 minutes.
Thank you, Chairman. I appreciate what my colleagues on the other side of the aisle are trying to do, but this bill already doubles the standard deduction, and it includes a bonus up to $2,000. This already benefits, and I'll say it again, over 90% of my congressional district and constituents. While I appreciate once again what our colleagues are trying to do on the other side of the aisle, we are trying to move forward in a sensible way with actual revenue targets. I yield back.
The gentleman yields back. Is anyone wishing to speak on the amendment? Ms. Sanchez is recognized for 5 minutes.
Yeah, it's interesting because what you're giving with one hand, you're taking away with another. You may be attempting to put money in the pockets of everyday working Americans, but the cost that these tariffs have in terms of the very real price increases that they're going to experience or are experiencing right now means that they fall further and further behind. You don't really give tax relief that is meaningful to the average American family. I think what this amendment does is tries to make up for the fact that families are going to be out $5,000 more per year because the cost of groceries, energy, diapers, formula, school supplies are going to go up or are already going up because of the tariffs. In fact, when I toured the Los Angeles port, which I will say 40% of all goods that come into the United States come through that port, I was told that because no ships are coming, bringing goods into the United States because of the tariffs, that in a matter of weeks we will have empty shelves. And when there is scarcity, that drives prices up even further. So we are looking at a very real economic impact for families that are struggling the most. If you guys truly cared about the working class or the working poor or even the middle class, you would support this amendment, which just seeks to make families whole. And with that, if my colleague, Mr. Schneider, would like to claim the balance of my time, I will yield to him.
Thank you, and I think you made the point, my colleague from California made the point very precisely. It's taking away with one hand what's given with the others. This bill is putting a burden on working families. It's taking health care away from 14 million Americans. It's putting a debt burden not just on more debt today, but more debt for future generations. And it's doing all of this in an irresponsible way just to extend massive tax cuts for the wealthiest and friends of the president. It's unfortunate that we're in this conversation. It's unfortunate the president is putting this burden on families with these tariffs. This amendment would provide relief to those families as long as the tariffs are in place. I yield back.
The gentleman yields back. Are there others wishing to speak on the amendment? Ms. Plaskett is recognized for 5 minutes.
Thank you. I just want to say that I appreciate this raising the standard deduction to offset these tariffs. I live in a location that absolutely is affected by tariffs because most of the goods that are brought into our island comes from ships. And because of that, we have an exponential cost of living as it is. Buying a car in the Virgin Islands is going to cost you about 15 to 20% more than it costs in the United States, in the mainland. And the cost, you guys talk about the cost of eggs, our prices were already there to the prices that you all were looking at. Groceries, another 10 to 20% higher for groceries on a place where everything is shipped in. And these tariffs have made it exponentially harder for a family living in the Virgin Islands, particularly when our cost of living and our salaries are so much lower than other places, and we have 30% of our children living in poverty. If you're going to be taking away what's happening in the Energy and Commerce and the Agriculture Committee to take away benefits and take away support for families that are right on the line, the working poor, then we're going to need some offsets as well for those individuals, those families that are doing these itemizations. So I'm grateful to Mr. Schneider for thinking about these families, raising the standard deduction to offset the effects of the tariffs are having on everyday working families. Everyday families that are trying to put food on the table, that are trying to clothe themselves, transporting themselves from work to home to school. They're not looking for frills. They're not doing anything out of the ordinary. They need this to make their existence to continue to not fall within the cracks. So thank you very much, and I yield back. I'm sorry, I yield my time to Mr. Schneider. Thank you.
Thank you. I appreciate that. And I appreciate your comment talking about young families with children. And it illustrates, anyone who has young children knows that the costs for baby seats, for strollers, for toys are going up because so many of these products, in some cases all of these products, are manufactured outside the United States. And young families starting out, people early in their careers, whether they're in a trade or a profession, whatever the case might be, they are just trying to make ends meet, trying to save for their children's education, looking forward to the future, trying to maybe enjoy a date night once a month. And these tariffs are making those ambitions more difficult, the prospects of getting that step ahead further away.
And Mr. Schneider, if I may, you and I both know that those things that those families are trying to purchase, whether they're toys or the baby monitor that's in the home, all of the things, the onesies, those are not going to come back to the United States. These tariffs are hurting Americans, and they are not the manufacturing jobs that are going to be coming back here. We need to be investing in upskilling American workers and creating jobs that we are going to be able to have as Americans. But to say that we're going to be sitting in factories, putting onesies together, doing T-shirts, sneakers, that is not going to happen in the United States.
100%. What we need to be bringing back are the high value-added jobs. The jobs, I had the chance to tour some plants in Ohio with my colleague Mike Carey. We went to the Intel Fab plant, which is making the high-end chips that will power the future. We visited a battery manufacturer, joint venture between Honda and LG, making the batteries for the electric cars, the electric vehicles that will not just lower the cost of transportation for working families, but help us address the climate crisis that we're facing. The manufacturing of the products that the world is looking to the United States, not just to innovate and invent here, but to make here and ship around the world. Products, the lower value products where there's high labor content and low price, those are not products that are going to make Americans wealthy. And by putting these tariffs, making Americans pay more for them is only going to make getting ahead that much harder. I yield back.
Thank you. At this time, I yield my time back.
The gentlelady yields her time back. Others wishing to speak on the amendment. Mr. Horsford is recognized for 5 minutes.
Thank you. I came to Congress to create economic opportunity, not cause economic instability or uncertainty. And unfortunately, President Trump's tariffs actually caused the largest tax increase in history without a single pen to paper here in Congress. And my colleagues on the other side are choosing not even to engage in the debate because they've capitulated to the executive branch. I guess they work for Donald Trump, not for the American people. But to be clear, tariffs can be used and should be used as laser-focused, not blanket edicts. Strategic, targeted duties against specific unfair practices can protect U.S. jobs. And I fundamentally believe that, and I know the ranking member of the Trade Committee does as well. But the blanket 10% IEEPA tariffs that Donald Trump has enacted do not protect American jobs. American workers are paying the price for Trump's chaotic, broad tariffs. When manufacturers are faced with uncertainty, what do? They delay investment, they cut shifts, they defer hiring, or they automate. I already shared the real story about one of my constituents, Deborah, the fact that she endured and overcame the downturn in the housing crisis, made it through the pandemic, but now she is worried about what these tariffs will do on the backs of her small business. Now, we all understand the importance of reshoring critical supply chains to the United States and making more goods right here. But that's not what Trump's tariffs are doing. These blanket tariffs are targeting our largest trading partners like Canada and Mexico. They undermine North American factories. Auto plants and part suppliers rely on integrated supply chains. Yet these tariffs threaten thousands of pro-labor jobs on both sides of the border. I want to thank the sponsor of this amendment, Mr. Schneider. You're very thoughtful, you're very deliberate, you're very reasoned in your approach. But I'm also curious because we're watching in real time as Mack Trucks, Stellantis, Volvo, and many other companies are starting to lay off employees. U.S. retailers have eliminated 64,000 jobs in just the first 4 months of this year. That's not Joe Biden's fault. That's Donald Trump. Family budgets are getting squeezed by higher prices. Trump's blanket tariffs drive up the cost of everyday goods, as you said, from diapers to electronics, even groceries, forcing workers to choose between rent and groceries. No one can afford a $2,800 tax hike, but that's exactly what these tariffs are doing. So meanwhile, they just gave permanent tax cuts, or they plan to billionaires. They're going to tell you they're giving you somewhere around $1,000. Meanwhile, they're sticking you with a $2,800 tax bill from these Trump tariffs, which are taxes on the American people. Congress, not in unchecked emergency power, should set tax and trade policy. Real emergencies require real legislative debate. Are my colleagues on the other side willing to debate? Anyone? Anyone? In my home district in Nevada, we're already grappling with high prices and a housing crisis. Nevadans need and want relief now. But tariffs on critical imports such as lumber, steel, and aluminum, which are all necessary to build housing, will only make housing more unattainable. These blanket tariffs are chaotic, they're poorly targeted, and ultimately raise prices without delivering job security. So don't let Republicans fool you that their bill gives you a tax break when Donald Trump just cost you $2,800 tax hike. This amendment will give taxpayers real relief now. That's what we were elected to do. I urge my colleagues to support the Schneider amendment and vote yes.
The gentleman's time has expired. I now recognize Mr. Buchanan for 5 minutes.
I yield to Mr. Miller.
Mr. Miller is recognized.
Thank you, Chairman. I'm a little baffled by the capitulation rhetoric and that our side, isn't doing anything for the American people. And just really to put a fine point on it and not make it too complicated or not bring emotion into it, we have a very ambitious solution that already exists before us. And it sounds like our colleagues already kind of agree with us on that text. Within the base text already, we're going to help Americans with the increased standard deduction in a very reasonable, thoughtful way. We've seen it from every angle. I yield back.
The gentleman yields back. Any Other members wishing to speak on the amendment? The question is on agreeing to the amendment offered by Mr. Schneider. Clerk, call the roll.
Mr. Buchanan?
No.
Mr. Buchanan, no. Mr. Smith of Nebraska?
No.
Mr. Smith of Nebraska, no. Mr. Kelly? Mr. Kelly, no. Mr. Schweikert? Mr. LaHood? Mr. LaHood, no. Mr. Arrington? Mr. Estes? Mr. Estes, no. Mr. Smucker? Mr. Hearn? Mr. Hearn, no. Mrs. Miller? Mrs. Miller, no. Dr. Murphy? Dr. Murphy, no. Mr. Kustoff? Mr. Kustoff, no. Mr. Fitzpatrick? Mr. Fitzpatrick, no. Mr. Stubbe? Mr. Stubbe, no. Miss Tinney? Miss Tinney, no. Mrs. Fishbach? Mrs. Fishbach, no. Mr. Moore? Mr. Moore, no. Miss Van Dyne? Miss Van Dyne, no. Mr. Feenstra? Mr. Feenstra, no. Miss Maliotakis? Miss Maliotakis, no. Mr. Carey? Mr. Carey, no. Mr. Yakum? Mr. Yakum, no. Mr. Miller? Mr. Miller, no. Mr. Bean? Mr. Bean, no. Mr. Moran? Mr. Moran, no. Mr. Neal? Mr. Neal, yes. Mr. Doggett? Mr. Doggett, yes. Mr. Thompson? Mr. Thompson, yes. Mr. Larson? Mr. Larson, yes. Mr. Davis? Mr. Davis, yes. Miss Sanchez? Miss Sanchez, yes. Miss Sewell? Miss Sewell, yes. Miss Del Bene? Miss Del Bene, yes. Miss Chu? Miss Chu, yes. Miss Moore? Miss Moore, yes. Mr. Boyle? Mr. Byer? Mr. Byer, yes. Mr. Evans?
Yes.
Mr. Evans, yes. Mr. Schneider? Mr. Schneider, yes. Mr. Panetta? Mr. Panetta, yes. Mr. Gomez? Mr. Gomez, yes. Mr. Horsford? Mr. Horsford, yes. Miss Plaskett? Miss Plaskett, yes. Mr. Swazi? Mr. Swazi, yes. Mr. Schweikert? Mr. Schweikert, no. Mr. Arrington? Mr. Arrington, no. Mr. Smucker? Mr. Smucker, no. Mr. Boyle? Chairman Smith? Chairman Smith, no.
Clerk will report.
The yeses are 18, the noes are 26.
There being 18 yeses and 26 noes, the amendment is not agreed to. Are there additional amendments?
Mr. Chairman, I have an amendment at the desk.
Ms. Del Bene is recognized.
Mr. Chairman, I reserve a point of order.
Point of order is recognized. Ms. Del Bene, if you would suspend as the amendment is distributed. Ms. Del Bene may proceed.
Thank you, Mr. Chairman. Mr. Chairman, I offer an amendment that will support families, grow the middle class, and dramatically cut childhood poverty. My amendment is simple. It restores the largest ever middle class tax cut by increasing the child tax credit and making it fully refundable, a policy that cut childhood poverty nearly in half in a year when it was in place. These are provisions from the American Family Act, which I recently introduced with the help of my Democratic colleagues on this committee and Representatives DeLauro and Torres. Right now, the Republican child tax credit leaves out 1 in 3 kids in families who don't make enough money to access the full credit. As we learned earlier from Mr. Bartold, that is 17 million children in this country who won't receive the full child tax credit. A family where both parents work full-time and make minimum wage still won't earn enough to access the full credit. Making the credit fully refundable would ensure those parents and countless other families in the same position would be able to receive the full value of the child tax credit. This seems like something my Republican colleagues would support, ensuring that hardworking families get support to help them with rising costs. Instead, Republicans claim to be pro-family while cutting the programs that so many rely on. Like a mother in my district who has 4 adoptive kids, one of whom has a severe developmental disability and requires constant care. She worked multiple jobs so she could provide for her children. She received monthly child tax credit checks that allowed her to bring in extra help to care for her special needs child so she could spend more time with her other children, like taking them sledding in the winter. She told me that she finally felt like she had a few moments to breathe with the extra money coming in. Since the child tax credit payments ended in 2021, she's had to tighten her budget and pick up more work to make ends meet, meaning she spends less time with her kids. Republicans are showing their values with this tax bill. They don't care about everyday, hardworking Americans. If they did, they would be giving tax cuts to the middle class, not the wealthy and the well-connected. They would be expanding programs that we know that work, that help families, like the expanded child tax credit, so that parents who are working full-time and earning minimum wage can earn the full benefit. These are families in all of our districts who would actually benefit from getting the full child tax credit, but despite doing everything they can, according to Republicans, they still aren't doing enough. I urge my colleagues to support this important amendment, and I yield back.
The gentlelady yields back. Mr. Moore from Utah is recognized for 5 minutes.
Thank you, Chairman, and thank you to the gentlewoman from Washington for bringing this up again. I think this is one of the most important things to discuss in our committee, and it has been a fundamental aspect of every tax bill that we've done in my recent memory. So let's just think back to 2017 till today. We doubled it. Republicans doubled it in 2017. Democrats increased it during ARPA for 1 year. We, as a bipartisan approach last year, significantly increased it and made sure that it wasn't going to expire at the end of this year. And we today, the Republican side, I'd like it just a moment to be able to kind of highlight what our approach has been for the child tax credit. So I introduced what's called the Family First Act that would significantly enhance the child tax credit. Got a lot of good news, obviously well appreciated in my wonderful state of Utah, where we have one of the highest birth rates and one of the strongest family-centric cultures that you can have, where we're one of the states that's at least trying to replace our 2.1%, or 2.1 child. So thank you. Again, I'm sincere. Like, I love that we're talking about the child tax credit constantly in this committee. I want to take a look and just quickly highlight what Republicans have done on this issue. In 2017, it was $1,000, and we doubled it. We doubled the child tax credit. We get no credit for that, of course. We constantly get said that, you know, by increasing it by 2x, we constantly take criticism that we're not doing anything to support the middle class. And, you know, we get it. That's constantly going to be a talking point in this side. But the fact is, we doubled it in 2017, and we're enhancing it again today. In fact, not only are we enhancing, we are making what we did in 2017 permanent and tying that portion to inflation. That's a significant difference than what my Democrat colleagues did in ARPA and the American Rescue Plan by only enhancing it for 1 year, right? And so there's obviously a cost to this, and I don't know the decisions made then. I wasn't on committee, but I know that it wasn't increased for more than just 1 year. And then we were back to the potential, which was why we did the bipartisan tax bill last year. And we came to a spot that showed this committee cares deeply to make sure this does not go back to pre-2017 levels. And that's what we're doing again today, is making sure that we never have to have that on the table again by making it permanent. And in addition to making it permanent, we're enhancing it for 4 years up to $2,500. And so there's a slew of things that we've been working on with respect to this. The Senate has been heavily engaged on this. The White House has been engaged on enhancing this as much as we possibly can. Again, a piece of legislation that I put forth was a part of our effort in the discussions we've had over the last few months in this reconciliation bill to enhance this as much as we possibly can. We're thrilled at where we're at right now. It's going to be permanent, so we never have to have the threat of it going back to $1,000, which was the pre-2017 level, and enhancing it up to $2,500. Again, the permanent part we're going to make tied to also inflation, so theirs will be indexed, and a significant, consistent, a consistent sort of anchor for American families to know they're going to have this going forward. And I just appreciate the chance to be able to express it. What we're doing in this bill is significant. It's done in a responsible, fiscally responsible way, and it will give relief immediately to families with young children, even up to the age of 17. I yield back. Thank you.
Gentleman yields back. Mr. Neal.
I think what the gentlelady is saying here is that if we weren't pausing for the purpose of borrowing $4 trillion to cut taxes for the wealthiest people in America, that indeed we could build a permanent and refundable child credit that might have real consequence. I think that's an essential part of the gentlelady's thrust here, and she's been consistent on this, and she's argued for refundability. And when you're talking about another $500, that's a pretty paltry sum when you're talking about tens of thousands of dollars for people at the very top who really don't need it. I think that's the point the gentlelady is trying to make. And I'd yield another moment to her if she'd like.
Thank you, Mr. Neal. I appreciate Representative Moore's remarks. I want to point out two things. One, we have been trying to make this permanent, so it absolutely is a priority to make the expanded child tax credit permanent. And an effort, frankly, we've had no Republican support for. In fact, that's why it just expired. There's no Republican support to extend the child tax credit, even though we cut childhood poverty in 1 year nearly in half. But I would say a big issue that I think is missed, and I commented earlier, is that 1 in 3 children, their families do not make enough money to access the full credit. Refundability is key. If, offsetting someone's, tax liability who has enough to have a tax liability is one thing, but making sure people who don't make enough get the full benefit is critically important. And that was key to cutting childhood poverty across this country. Refundability is not part of this proposal. It's never been part of the proposal. It means the families of the greatest need do not get the benefit. And so I would say if we really want to make progress and help the families who need it the most, then refundability has to be part of the proposal. That is why it is part of the proposal, as part of what we put in this amendment, because we know it works and it gets dollars to those families that need it the most. Thank you. I yield back.
Gentlelady yields back, and now recognize Mr. Davis for 5 minutes.
Mr. Chairman, I applaud this amendment, and I want to commend the gentlelady for her continuous leadership on this issue down through the years and the success that we've experienced. Much of it has come as a result of your leadership. So right on to that. As the ranking member of the subcommittee focused on low-income children and families, I emphatically support restoring the 2021 child tax credit that helped cut poverty by almost half for children. Almost 1/3 of children in my district live in poverty, and 15% live in extreme poverty. I saw firsthand the families that the CTC helped. Many of these parents cried in gratitude and relief when they told me how these funds helped their families with the cost of food, rent, and clothing. The John Burden Advocates for Youth found that among the foster youth that they helped file their taxes, 13% were custodial parents who received an average refund of over $3,100 from the 2021 child tax credit. When the 2021 enhanced CTC expired, an estimated 19 million children, or more than 25% of children under age 17, got less than the full credit or no credit at all. In Illinois, about 661,000 kids under 17 were left out. Republicans want us to pat themselves on the back for temporarily bumping up the CTC by $500 while excluding the poorest children who need help the most. The 2021 CTC was $3,600 for kids up to age 5 and $3,000 for kids aged 5 to 18 and covered the lowest income families. And that is why the CTC lifted millions of children out of poverty. I reject the false justification for targeting the CTC to upper income families as a supposed work requirement. The Republican CTC has no work requirement. It has a wealth requirement. This bill intentionally leaves out the millions of low-income working parents who don't make enough money to pay taxes and completely fails to improve the actual tax credit for working parents that has a work requirement. The GOP CTC excludes the 17 million children who currently get less than the full $2,000 credit while bestowing higher income families earnings up to $400,000 with 2 kids and an extra $1,000. This cruel bill also discriminates against our youngest citizens whose parents are undocumented. What religion teaches us to pamper the wealthy and give crumbs to the poor? Absolutely shameful. We know that the 2021 CTC was a powerful driver of economic growth and business development, with JEC reporting that families getting 2021 expansion injected nearly $20 billion monthly into local economies. Further research shows that for families with children under the age of 5, receiving an extra $3,000 per year boosts children's adult earnings by 17%. So enhancing the CTC for all families would lift children out of poverty both now and in the future. We know how pernicious and devastating childhood poverty is. Instead of helping the most vulnerable,
the gentleman's time has expired.
That is appalling. So I support this amendment. Urge
the gentleman's time has expired. I recognize Ms. Sewell for 5 minutes.
Thank you, Mr. Chairman. I, too, want to join and echo the applause for the gentlelady from Washington for her steadfast leadership when it comes to the child tax credit. For me, restoring the refundability is absolutely key. Offering an enhanced CTC is good, but offering an expanded CTC that includes refundability, and I would go so far as to say, and restores its monthly, providing it monthly, now that is about fairness. You know, we have been debating the Republicans, well, the one big beautiful bill that they offered up. And if you think about it, the enhancement is only for 4 years. So they raise it to 2,500, but it's only for 4 years. Meanwhile, they give permanent tax cuts to the corporations and to the wealthy, and provide temporary help, and only for a fraction of the families that really need it. As was said, 1 in 3 low-income families will not get the benefit because they don't make enough money to actually receive the benefit. Let me repeat that. 1 in 3 low-income families will not get the benefit. And these are the poorest of the poor. I mean, they're poor, or what we would say in Alabama, they're po. They can't afford the O or the R. They need the most assistance. They need the most assistance. I can tell you that we would have loved to extend beyond the 2021 year, but had no support in trying to keep that expanded CTC. And so in Alabama alone, in my district, the expansion for that 1 year is estimated to have lifted 82,000 children out of poverty and 43,000 children out of deep poverty. Nationally, the CTC expansion kept 5.3 million Americans above the poverty line. It is estimated that the expanded child tax credit benefited 91% of the children in Alabama, impacting 316,000 households. And so I think that it is critically important that, as a matter of fairness, that we actually make the child tax credit fully refundable, and we actually give the benefit to the families that need it the most. You know, I was approached by several of my constituents who were able to, for the first time, buy instruments for their children to actually participate in band. I was approached by one constituent who was able to buy encyclopedias for her home to provide access to her children to literally explore. Another that was able to get National Geographic. You know, as a child, I didn't have a passport, and I traveled through the National Geographic. And it warmed my heart to hear about that constituent that was able to provide that benefit to her child. Now, she never, ever filed an income tax before 2021 because she made too little to file. She lived below the poverty line. And so I want to applaud and join the chorus with Ms. Delbene's amendment to restore the expanded child tax credit and to make it fully refundable. I urge my colleagues to join me in this. I don't give a pat on the back to Republicans that are providing temporary enhancement. They need to be providing expanded child tax credit and really uplift the families that need it most. I wanted to know whether or not the gentlelady— You're out of time. I'm out of time. Oh. I yield back the balance of my time.
Gentlelady's time has expired. I now recognize Mr. Yocum for 5 minutes.
Thank you, Mr. Chairman. My Democrat colleagues keep talking about all of these ideas. Raise the top income rate, raise the SALT cap, and now restore the child tax credit from the American Rescue Plan Act. And I just can't help but think, what if my Democrat colleagues held the House, the Senate, and the presidency? Maybe then they would implement these policies. But the problem is, you did have all three. You had the keys to the car. You passed 2 bills without Republican votes, as you love to remind us. But you didn't do any of this stuff. You could have increased, through your own budget reconciliation bill, the top marginal rate. You didn't. You could have raised or eliminated SALT. You didn't. Yes, you made the child tax credit more generous in the American Rescue Plan Act for 1 year. You could have made it for longer, but you didn't.
Would the gentleman yield?
You could have made it permanent.
Would the gentleman yield?
No, sir. But you didn't. You had the trifecta of power, and you didn't do any of these things. The question is why? Our One Big Beautiful Bill makes the $2,000 credit permanent, and it further expands it. It's pro-family, and I believe everyone should support it. With that, Mr. Chairman, I yield back.
Gentleman yields back. Now recognize Mr. Larson for 5 minutes.
Thank you, Mr. Chairman. Let me yield to...
I'll do this quickly. In response to the gentleman, because I was here when this all happened, it was because we had some sense of fiscal restraint as to what the country could afford at that particular time. We weren't talking about borrowing $4 trillion to cut taxes for the wealthiest people. When I look back at it, you know what we should have done? Borrow a couple of $1 trillion and made the child credit permanent. That would have been a better response based on the logic the gentleman has offered.
John, will you?
Clearing my time, I just want to, again, thank the gentlelady from Washington State for her incredible leadership, along with the gentlelady from Connecticut, Rosa DeLauro, who have led on these efforts. And I said earlier this evening, the people on this side of the aisle are good people. You could tell that just in the way we've approached this debate, and also in the way that, well, Blake Moore talked about the child tax credit. You could see that he cares. And yet, as we just witnessed, the stark contrast in terms of what the choices are and where the priorities lie in making a child tax credit permanent as opposed to making permanent tax cuts for the wealthiest people who are going to struggle between deciding whether it's a Maserati or a Lamborghini they're going to get, whether or not they're going to have to go through the stressful process of deciding not to have a 40-foot or a 32-foot yacht, whether or not they're going to have to, whether they're going to be able to make it with this kind of tax cut that they're going to receive at the expense of health care for people, at the expense of a child tax credit where there is agreement on. And you know what? Without the child tax credit, the #1 anti-poverty program for children is Social Security. And that hasn't been touched and extended in over 50 years. So, I commend the gentlelady for her efforts, and I'd like to yield to her.
Thank you, Mr. Larson. I wanted to make the point that in the 2017 bill, why didn't Republicans make the $2,000 child tax credit permanent? They made corporate rates permanent in 2017. So to your logic, I don't understand why you didn't make it permanent. I think that says a lot about how you feel about the child tax credit. So if you really want to make sure that we're doing everything to help families, we should be supporting doing the right thing in this bill, making the child tax credit permanent and making it refundable, something that you did not do in 2017 with your bill. I yield back to Mr. Larson.
I yield to Representative Sanchez. I yield back.
Mr. Larson yields back. I now recognize Ms. Chu for 5 minutes.
I rise in strong support of this amendment, which would expand the child tax credit and make it refundable. In 2021, Democrats created the expanded child tax credit and gave families the financial support they needed to meet their basic needs during some of the darkest months of the pandemic. This was among the most ambitious and impactful anti-poverty programs in our country's history. Yet this Republican bill once again cuts taxes for corporations and the wealthy while giving crumbs to the families who relied on the CTC. The child tax credit was a lifeline for people like my constituent Daisy. Daisy's a teacher in Pasadena, and she was able to use her monthly child tax credit payments to support her 4-year-old son and rebuild her savings, providing her with financial security. Millions of families around the country, just like Daisy, received monthly checks of up to $300 per child from the IRS and no longer had to choose between basic necessities like groceries, medicine, gas, diapers, and school supplies, which also has an enormous impact on a child's academic and social success as they grow. These checks were investments in America's families and America's future, and we now have the evidence to show that these investments paid off. In 2021, the expanded CTC lifted 2.1 million children out of poverty and cut the child poverty rate nearly in half to its lowest levels ever recorded by the Census Bureau. And each of these families has a story like Daisy's. In fact, official government surveys found that families primarily use the money for food, utilities, housing, clothing, and education. Parents continued to work, so the result was healthier, more secure families.
I'm sitting right next to her and I can't hear her.
Gentlewoman will suspend, remind audience members to take their conversations to the hallway. Please do so immediately. Please proceed.
Well, parents continued to work, so the result was healthier, more secure families with children who have better opportunities, better health, and a more promising outlook for the rest of their lives. And that is the difference between tax cuts for the wealthy and tax cuts for working families. When Democrats had control of Congress, we raised taxes for the wealthiest corporations and gave children and families monthly tax cuts that lifted millions of children out of poverty. When Republicans have control, they slash funding for government programs and cut taxes for corporations. And that's not right. That's why we need this amendment to pass, and I yield back.
Gentlelady yields back, and now recognize Mr. Horsford for 5 minutes.
Thank you, Mr. Chairman. I actually want to commend Representative Moore from Utah for engaging in this important issue around child tax credit. And I believe in your sincerity in speaking on what your side has attempted to do around this issue. And I fundamentally want to commend our sponsor of this amendment, Representative Delbaney, because I actually think this is an area where, put everything aside, if we can't be for the children, then what the hell are we here for? My question is, why exclude a family of 4 that earns less than $29,000 a year from receiving the full child tax credit, which the Republican plan does? Why are we excluding those who are most in need of the child tax credit from the benefit? I work with colleagues on the other side on the no tips on tax legislation, or the no tax on tips legislation. One of my provisions was about the sub-minimum wage. We have 6 million workers in America who are tipped workers who make as little as $2.13 an hour. How are they supposed to pay a rent and mortgage and cover household expenses on that? They are working, but they make less than $29,000 a year. Meanwhile, a family making up to $400,000 still qualifies. I'm not against that. I'm actually not against wealth. People work hard. They should be able to accumulate wealth. I just want them to pay their share in taxes so that we can cover the essentials for our entire country. Now, the child tax credit, when it was expanded, helped to lift half of the children out of poverty. 4 million children, 4 million children who were in poverty. In my district, in Nevada, remarkably, 92% of children benefited from that expanded tax credit. But that progress was short-lived, as you noted, Mr. Moore, when the expansion expired in 2022. The safety net was pulled out from millions of those families. And since then, 10 million children across the country have fallen back into poverty. So my question to you or anyone else is, what can we do to cover all children, including those families of 4 earning less than $29,000 a year? I'm sincere. I really want to know, how can we get to that point? And is it possible to accept this amendment and to allow that debate to continue? Because I know Ms. Delbaney's commitment to this. I know those of us who've worked on this issue fundamentally believe that when we lift children out of poverty, you improve their life chances of success. You improve their ability to graduate from high school. You improve their health outcomes. You improve their ability to go on to college. So if we get this right, there's nothing that stands in the way of that child and their future. Plainly put, it puts children first and is something that we should all be able to support, regardless of party. This is not, Mr. Chairman, this is not a right versus left issue. This is a wrong versus right issue. This is a fundamental thing about morality and a moral moment about what we really believe in. And if we can't do this, then what else are we even here for? So to Mr. Moore or to any other member on the other side, will you accept the ability to include families that earn less than $29,000 a year and the full refundability that is included in Ms. Delbaney's amendment? If we can get that done tonight, that actually might be a victory in the nearly 11 hours that we've been here thus far. Mr. Moore or anyone on the other side that would be willing to speak to that. The impact is real. I know that Ms. Delbaney is serious, and I believe there are many members on our side of the aisle who would be willing to work with you.
The gentleman's time has expired. I now recognize Ms. Moore for 5 minutes.
Thank you, Mr. Chairman. I was uncertain as to whether or not I was going to speak on this amendment because I feared becoming so triggered about my own childhood, about the food insecurity, about going to school every day with no breakfast and no lunch money, with the electricity being turned off, shivering in the bed, waiting on money to buy coal or oil for our furnace, not being able to go on field trips because my mom didn't have $5 for me for my bus fare, walking 3 miles, 6 miles round trip so I could get $10 so that I could take the ACT. And you know, my cousin, Mr. Blake Moore over there, I do believe in your sincerity about, and you stuttered when you stopped and talked about helping middle-class families. But I think the thrust of Ms. Delbaney's amendment is about the 17 million children like me. I was smart, intelligent, but I went to school every day and ate the crumbs and the garbage off of kids' plates until I got brave enough to one day to just stand in line and demand something to eat. And let me, and what's up with this? Charles Dickensian attitude that, you gotta work. Somebody has to have income before we can help kids. I mean, we have a crisis in this country with regard to our replacement rate. We want to pay women, some women, to have children, and we won't feed the ones that we have. You know, I think of one of my favorite authors, you've probably heard of him, Charles Dickens. Wrote stuff like Scrooge, The Christmas Carol, David Copperfield, Oliver Twist. All of this coming out of his trauma, growing up, having to go to work. A child, Charles Dickens, having to go to work because his father was in debtor prison. And you know, God doesn't distribute intelligence based on people's income. You know, some of our smartest kids may be in the pool of those 17 million, and we're going to kill their brains because they can't eat. You know, I think that, you know, we have been pilloried and criticized for talking about unjustly enriching the wealthiest people. I heard someone over there talk about the high cost of expanding this child tax credit. It's worth every dime. This is an investment in our future, in our kids. Our president of the United States wants to pay women to have babies. That's how critical it is. We're throwing away our immigrant children, you know, the DACA children that belong to us. We've raised them. They're smart. They're talented. We want to get rid of them. And then we just want to starve the rest of them. We don't have any throwaway kids. We don't have any extra kids in this country. Every single child in this country is precious. And I'm telling you, the United States is way behind other OECD countries in terms of realizing that the best investment you can make is in your kids, not in some daggone bridge or some factory where we can hope to start making socks and T-shirts again. They're in our children. And, you know, I only have 49 seconds left, and I'm going to stop talking because I don't want to get upset. But I'll tell you, in England, children were regarded as the industrial slaves of that era as they worked kids. Is that where we're going? Does the income from a kid that's working part-time at the beauty shop sweeping up the floor going to count toward income so their parents can get part of this refundable tax credit? Let's at least do that. Say that if kids got a part-time job and they become the slaves of 2025, that we will give them the refundable tax credit for their efforts. Mr. Chairman, you can have your 3 seconds back.
Now recognize Ms. Sanchez for 5 minutes.
Thank you, Mr. Chairman. If there's one thing that I know, it's that being a parent is expensive. Diapers, childcare, food, everything adds up. And I talk to constituents every single day who have trouble just affording the basic necessities that they need for themselves and their families. In 2021, we expanded and improved the child tax credit under the American Rescue Plan, and that helped parents pay for some of the expenses that come with having children. Basic everyday things like school supplies or nutritious food or a new pair of shoes for their growing kids. It raised 4 million children out of poverty in 1 year. And since my Republican colleagues let the expanded child tax credit expire, child poverty has more than doubled in this country. It is a crime that 1 in 5 children goes to bed in this country hungry every night. And as Mr. Horsford stated earlier, if we are not here to try to help keep kids from going to bed hungry, why the hell are we here? The credit, as it stands in this bill, doesn't even apply to the poorest of the poor, because some families earn too little to benefit from the full credit. We should be helping the children and families who need it most, like the 17 million children living in poverty who don't qualify for the credit under this bill. And I would add that most of those kids reside in Texas, my home state of California, Florida, and New York. And I wish I could say that I look forward to seeing my Republican colleagues in those states vote yes on this amendment to let their own constituents benefit from this life-saving credit. But I know that they won't. I know that they're not going to do that. That's because they're more focused on cutting child care and taking Medicaid away from families who need it. You know, I sincerely hope they'll prove me wrong and vote yes on this amendment to support their own constituents whose kids go to bed hungry. If you can't do that, why are you here? And with that, I yield back the balance of my time.
Gentlelady yields back and now recognize Mr. Gomez for 5 minutes.
Thank you, Mr. Chairman. I wanted to add my voice in support of this amendment by Ms. Del Bene that increases the amount of the child tax credit. And the impact it had on families during the time that was implemented cannot be overstated. It reduced child poverty in this country, depending on where you live, from 40 to 60%. That is, we always talk about having programs that actually work. That worked. It was amazing. It was amazing. And that's because of a few things. One, it was fully refundable, meant that everybody could have access to it, and then it was advanceable. I know that this bill doesn't, or this amendment doesn't address the advanceability, the idea that you should get it monthly instead of just when you file your taxes, but it's still a big win. And the reason why is that when you're the working poor, you can't put off, food, diapers, rent, groceries, go down the list. You can't put it off until you get money on your tax returns. That's not how it works. If my parents were, if this was in place when I was growing up, my parents wouldn't have gotten the benefit because most of the time, like I said, didn't earn more than $38,000 per year. So we need a child tax credit that helps people. And right now, I know people are looking at inflation, how much it increased when right after Donald Trump took office, how it decreased. And I always tell people, do not always look at the economic indicators, because they can be wrong. I remember, I've been going grocery shopping. I go do the grocery shopping with my family. My wife comes with me most of the time, and I take my 2.5-year-old son. And I haven't seen that many, I've never seen this before, but you see people in the grocery store comparison shopping. They actually look and they look, okay, how much does this peanut butter cost compared to this peanut butter? Do I have a coupon for it? They look at that price of eggs. Price of eggs are still way higher than they were even last year. They look, they make these decisions. Can I plan a meal by buying a bag of beans or rice to make a dish that stretches out? So that's how people are living. And then we have a situation when your president, Donald J. Trump, issued tariffs that started to increase prices on working people. But you guys don't care about that. And that's the whole thing, is that people are struggling right now. And when they see the prices going up and up and up at the grocery store, they see their wallets and their bank accounts going down, down, and down. So imagine if we did have a child tax credit that helped the working class, to make that makes $50,000 or less. But, I know that you guys are proud of yourselves for doing the 500, which something is better than nothing, but then you're going and making sure that you're taking Medicaid away from them. You're taking Medicaid, you're increasing the amount that they're going to actually pay in taxes over time. You're saying that you're helping them, but really you're not. You're giving them crumbs while the billionaires and the largest corporations get permanent relief. The no tax on tips, that expires in 4 years. The $4,000 for Social Security recipients, that expires in 4 years. Everything for the working class, for all of you, is temporary. But for the billionaires, the largest corporations, well, that's permanent. That really says a message of who you value in this country. It's not the working class. It's not your constituents. It's the people that are, it's not the people that are struggling. It's the new billionaire establishment that runs Washington, D.C. You all promised that you would drain the swamp, but you have become the swamp. You are now the swamp party that is passing tax breaks for billionaires at the expense of the working class. With that, I yield back.
Gentleman yields back. Mr. Kelly is recognized for 5 minutes.
Thank you, Chairman. I'm really puzzled, and because I agree with the idea of having increased child tax credits. What I don't understand, and I know this is something that really is hard to discuss because it just doesn't, I can't get it to match. You're concerned about child tax credits. There's an abortion about every 34 seconds in this country. There was an estimated 1,026,700 abortions in the United States in 2023. And yet we're so concerned about this lack of attention to children and having tax credits. I want to tell you, I mean, I don't know how you do it. I really don't know how you do it. I don't know how you sit here and say, pour your hearts out, and that this is so unfair to these poor children. And what maybe your answer is, just don't let them be born. Don't let them be born. Then you don't have to worry about these costs. Talk about hypocrisy. You talk about how we don't care. I would suggest that of the two parties, there's one that's a pro-life party, and there's one that is not. And I know that we try to translate into that to something altogether different, because it's not about the life of that little baby boy or girl. It's about women's health rights. And I know that's going to really rankle you, and it's going to rub your fur the wrong way. But I got to tell you, it is hard. And I have sat here all day and listened to everything you had to say, and I agree with some of the things you say, but I just can't get by the hypocrisy that we're talking about right now. It is over the top. It is over the top. So I want to thank you for bringing it up, because I think it does bring attention to what it is we need to do. If we're so worried about child tax credits and about the fact that we do not have the number of births that we need in this country every day, and that's why we need to have more people coming in from around the world, because we're not producing enough children on our own. Don't you see how these things hit head-on into each other? I would say I'm confused, but I'm not confused anymore. I'm not confused. I understand. I understand who stands for life, and I understand who stands for truth, and I understand it. In a nation that's been so blessed for so long, we're having these long debates over things, and yet when push comes to shove, we'll turn our backs and we'll put fingers in our ears and we'll close our eyes to what's taking place in the United States every single day, and then we're worried about a child tax credit. Here's my concern: those number of children that never had a chance to actually have a chance. That I yield back.
The gentleman yields back. I now recognize Mr. Boyle for 5 minutes.
I'm happy to yield to my seatmate, Ms. Moore.
Well, I just want to thank Mr. Kelly for his concern and his pro-life position. And I just would like to say there's nothing pro-life about Johnny being born with Medicaid, by the way. And then as soon as he's born, you're saying, oh, we're going to cut off your SNAP, we're going to cut your Medicaid. We're not, in the case in Milwaukee, we've got 2,500 cases of lead poisoning a year. And the new Health and Human Services Department fired all the people who could help mitigate the child lead poisoning in our city. There is nothing pro-life about bringing children into the world and then abandoning them. Now, I've been an abortion counselor, Mr. Kelly, for your information. And I'll tell you, as a mother of 3, and as a grandmother of 3, and a great-grandmother of 3, let me just tell you this. I've held women's hands while they've had an abortion. I've held their hands while they've given birth, and I've knitted them a blanket when they had a baby. But the one thing that I'm going to do now as a member of Congress is I'm going to sit here and say, baby, if you come into this world, we're going to guarantee you that you can grow up, and until you're on your own, we're going to make sure you have some food. We're going to make sure you have an educational opportunity, and not just, rich people who can afford tax credits for choice school, but a public education. We're going to guarantee you a shot at life, not just some sort of fictionalized view of life or theological view of the importance of life, but a real life. Once you're born, we're going to make sure that you can have diapers and food. And so, Mr. Kelly, I appreciate your position, and what I've always said to my so-called pro-life proponents, and I'll start bugging you about this, you and Chris Smith and all of you all, these ardently pro-life people, you are the main people that we ought to have on our amendments like this, if you're pro-life. And so I would yield my time to you, Mr. Kelly, or anyone else who would like to respond to what I have said. Don't tell me that you're pro-life only up until the moment of birth. That is something that I think is hypocritical. Mr. Gomez would love to or yield back to Mr. Brandon. Mr. Boyle.
Either way, I yield the remaining 1 minute 40 to Mr. Gomez.
Thank you so much. Mr. Kelly, I respect your view. I respect the passion that you have. But this is one of the main debates I've always had with my Republican colleagues. You can't just care about the bookends of a person's life, just how they're born and how they die. You need to care about every single step of how they develop. Whether they're going to be able to start off with a family that has health care coverage. You have to care about how they're going to be able to get an education, how they're going to be able to feed their children. You're going to have to care about every single moment. Because when we do that, we can change the course of history. That's what I want to see from my Republican colleagues. Don't just care about the bookends. You got to care about that individual that is born, right? When my son Hodge was born, it changed just like probably everybody else. It changed everything to an extent that I realized that the legacy is not the bills that we pass, but the values that we instill in our children. If they're going to be the ones that carry on the fight to create a more perfect union, not just for the wealthy, not just for the well-connected, but the average working person in this country. That's what this is about. So, Mr. Kelly, I will work with you to make sure that it's not just about the person's bookends of their life, to make sure that our families are stronger. With that, I yield back.
The gentleman yields back. The question is on agreeing to the amendment offered. Excuse me. I recognize Ms. Plaskett.
Thank you very much, and I won't be long. When we looked at, there's so many people who have had so many incredible comments about this child tax credit, fully refundable, and increasing the amount from $2,000 per child to $6,360 for newborns, $433.20 for children age 1 through 6, $3,600 for children age 6 through 17. You know, I think about the children who live in the Virgin Islands. 33% of the children under the age of 13 in the Virgin Islands live in poverty. And 37% of children under the age of 5 live in poverty in the Virgin Islands. That means that for many of them, their families are not filing taxes. They're just barely getting through. And this may not seem like a lot of money to us, and incrementally, it's not. But it's going to make a tremendous difference in their life. In the Virgin Islands as well, 1/3 of children, their primary caretaker are grandparents. Those grandparents are living on fixed incomes themselves. Many of them just have Social Security that they're relying on. They may have small pensions, they may get support for others, and they are the primary caretaker of those children. They need our support. They need our help. That's what's going to make the difference in this society. Not giving an additional $273,000 to individuals who don't need it. And the past legislation that we've done here have shown that it doesn't trickle down. It doesn't get to these 33% of children living in poverty, or the 37% of those under 5 living in poverty, or the young man on the corner who needs a job to support the child that's living in poverty, or the young woman who's looking to upskill herself. Those are the individuals that we need to support, not the wealthy individuals that we have decided are going to drive our economy when statistically it is shown that they don't. We need to work not just on child care. We need to just not work on the child tax credit. If we want to talk about being pro-life, what about child care? What about paid leave for mothers who are giving birth to those children? What about health care for those families? You know, across the hall, they're talking about getting rid of WIC, women, infant, and children. Those individuals, my colleagues who are pro-life, are you going to support funding WIC, or are you going to take that away? The proof is in where you are putting your money. That is going to show where your treasure is. Where's your treasure? Is your treasure going to be with Bezos and with Musk and with individuals who already have all of the resources? Or are we going to do some kind of distribution here that is not just charity, but at the end of the day is fiscally responsible for us? Because if these families take care of themselves, they're less likely to be a burden on us in other ways. And so I support this amendment. I support this amendment because I'm pro-family, because I'm pro-life in terms of the life that people are living and the quality of that life, because I want people in this country to be the best. America needs to be the best. And the fact that we can have that many children living in poverty means that we are not the best. We are not. And we're not doing ourselves in this country and our isolationist positions that we're putting ourselves by not ensuring that the least of us are taken care of. And I would just beg my colleagues, my Lord, if we don't want to do it for the adults, can we do it for the children? Yeah. And with that, I yield back.
Gentlewoman yields back. Is anyone else wishing to speak to the amendment? Seeing none, the question is on agreeing to the amendment offered by Ms. Del Bene. All those, clerk, call the roll.
Mr. Buchanan. Mr. Buchanan, no. Mr. Smith of Nebraska.
No.
Mr. Smith of Nebraska, no. Mr. Kelly. Mr. Kelly, no. Mr. Schweikert. Mr. Schweikert, no. Mr. LaHood. Mr. LaHood, no. Mr. Arrington. Mr. Estes. Mr. Estes, no. Mr. Smucker. Mr. Hearn. No. Mr. Hearn, no. Mrs. Miller. Mrs. Miller, no. Dr. Murphy. Dr. Murphy, no. Mr. Kustoff. Mr. Kustoff, no. Mr. Fitzpatrick. Mr. Stubbe. Mr. Stubbe, no. Ms. Tinney. Mrs. Fishbach. Mr. Moore. Mr. Moore, no. Ms. Van Dyne. Ms. Van Dyne, no. Mr. Feenstra. Mr. Feenstra, no. Ms. Maliotakis. Ms. Maliotakis, no. Mr. Carey. Mr. Carey, no. Mr. Yakum. Mr. Yakum, no. Mr. Miller. Mr. Miller, no. Mr. Bean. Mr. Bean, no. Mr. Moran. Mr. Moran, no. Mr. Neal. Mr. Neal, yes. Mr. Doggett. Mr. Doggett, yes. Mr. Thompson. Mr. Thompson, yes. Mr. Larson. Mr. Larson, yes. Mr. Davis. Mr. Davis, yes. Ms. Sanchez. Ms. Sanchez, yes. Ms. Sewell. Ms. Sewell, yes. Ms. Del Bene. Ms. Del Bene, yes. Ms. Chu.
Aye.
Ms. Chu, yes. Ms. Moore.
Aye.
Ms. Moore, yes. Mr. Boyle.
Yes.
Mr. Boyle, yes. Mr. Byer. Yes. Mr. Byer, yes. Mr. Evans.
Yes.
Mr. Evans, yes. Mr. Schneider.
Yes.
Mr. Schneider, yes. Mr. Panetta. Mr. Panetta, yes. Mr. Gomez. Mr. Gomez, yes. Mr. Horsford. Mr. Horsford, yes. Ms. Plaskett. Yes. Ms. Plaskett, yes. Mr. Swazi. Mr. Swazi, yes. Mr. Arrington. Mr. Arrington, no. Mr. Smucker. Mr. Smucker, no. Mr. Fitzpatrick. Ms. Tinney. Ms. Tinney, no. Mrs. Fishbach. Mrs. Fishbach, no. Chairman Smith? Chairman Smith, no.
The clerk will report the vote.
The yeses are 19. The noes are 25.
There being 19 yeses and 25 noes, the amendment is not agreed to. Are there additional amendments?
Mr. Chairman, I have an amendment at the desk.
Mr. Chairman, I reserve a point of order.
Point of order is reserved. Gentlelady will suspend while the amendment is being distributed.
Was that chocolate inside those eggs?
No, it was an almond.
Oh.
But the coating was kind of hard. Well,
You almost choked me. Thank you.
Seriously, that's all it said.
Is that
That was great.
That's great.
Yeah, it is.
The American story.
Thank you. I tell you, they're making it hard. Yeah.
We will proceed. I would ask for the attention of the audience and members. We will proceed. Ms. Sewell is recognized for 5 minutes.
Thank you, Mr. Chairman. My amendment would extend the Affordable Care Act's premium tax credit to Americans in non-Medicaid expansion states like Alabama, who are caught in the coverage gap, as well as Americans who will lose Medicaid coverage as a result of the Republicans' cuts. 15 years ago, the Affordable Care Act was signed into law, increasing access to health care coverage for millions of Americans. Thanks to the ACA, more Americans have health insurance now than at any time in our history. The 2024 open enrollment period shattered records with a historic 21.3 million Americans signing up for health care coverage through the ACA marketplace, including more than 380,000 Alabamians. With a record amount of Alabamians receiving health care through the marketplace, it is imperative that we protect the Affordable Care Act's advanced premium tax credit, which makes health care coverage affordable for 477,000 Alabamians with the ACA marketplace plans. However, we must also extend the premium tax credits for low-income citizens below 138% of the poverty line. I have heard from countless constituents who fall in that coverage gap. They make not enough money to buy their own health care insurance, but they make too much to apply or be on Medicaid in the state. So they are desperate to have health care. I recently spoke with one of my constituents, Kiana, who is caught in that coverage gap. She lost her Medicaid coverage following the end of the COVID public health emergency and states, quote, she has been fighting for her life ever since, end quote. Kiana has had blood pressure issues for almost 10 years. When she tried to qualify for Medicaid again, she was told since she made more than $295 a month, she did not qualify. Let that sink in. $295 a month. If she made $295,000 a month, then maybe my Republican colleagues would care about helping her. But because she makes more than $295 a month in the state of Alabama, she is not allowed to get Medicaid. In my home state, Medicaid is a bare bone program. You have to be less than poor to receive Medicaid. So for many Americans, that makes more than the limit. They are without options unless we advance the access to the premium tax credits. Without expanding this tax credit, Americans will continue to take on more medical debt. A month after turning 30, Kiana went to the hospital with a stroke-level blood pressure that put her in the ICU. Due to past debt acquired for medical expenses, Kiana was not seeking medical care. Americans should not have to choose between financial stability and medical care. Instead of offering handouts to billionaires, this committee should be finding ways to increase the number of Americans with health care coverage. It is unconscionable that while we have states like Alabama that have not expanded Medicaid, that this committee is meeting to further the agenda of the wealthy and to not help these Americans. You know, Mr. Chairman, I believe that health care in this great country should be a right for all Americans and not a privilege for the few. If my colleagues truly care about the most vulnerable in our society, they would support my amendment to extend premium subsidies to individuals in the Medicaid coverage gap, making marketplace coverage more affordable. I hope that my colleagues will join me in favoring health care for all Americans and not just the privileged few. I yield back the balance of my time.
The gentlelady yields back the balance of her time. Ms. Moore is recognized for 5 minutes.
Thank you, Mr. Chairman, and I just want to thank my colleague, Ms. Sewell, for this very important and thoughtful amendment. Again, my colleagues have told their constituents that they aren't trying to dismantle health care at all. They're just trying to get rid of the lazy boys that are in their parents' basement playing video games. I don't know who those people are, But they certainly are not the people in Wisconsin, the 90,000 people who benefit from being on the exchange because they make 138% of the poverty level. And as Ms. Sewell has indicated, these are people who are working every single day, but they don't have the benefit of a corporate health plan, a company health plan. And you know, the way we laud small businesses and say that small businesses are the heart and soul of our economy, yes, they are. But small businesses are also places that hire 2, 3 people and do not provide health care. And that's why the ACA has been just a godsend for populations of people. In Wisconsin, you know, our legislature's failure to fully expand Medicaid has really left 90,000 Wisconsinites dependent on the marketplace. And, you know, and we know that millions of eligible Americans will lose their health care coverage as a direct result of this reconciliation bill. And they aren't ineligible folks. They're not lazy folks. They're just people that we are going to take health care from. Unless we have an amendment like this, I know that you're all shocked to know that many workers in our society just don't have health care coverage. And it's not their fault. It's not because they're in their parents' basements playing video games. It's because they work at small businesses that don't provide this health care coverage. These are folks who are, some of them have disabilities. Those disabilities are not certified through Social Security. They haven't been deemed to be disabled. But we know that there are many, many people who are working every day and, you know, are disabled, and they depend on the ability to get Medicaid and to be able to get these market credits. According to our JCT estimates for tax year 2023, 77% of the total deductible value of HSA contribution goes to households with incomes over $100,000. So the health savings accounts is not an answer to people who need the expansion of the Affordable Care Act. We actually have a gap in coverage that will leave even more than the 14 million folks that we talked about earlier without any health care. They won't have access to preventive health care services, and as my colleague mentioned, they then will have diseases that we may have been able to catch and treat at initial stages that become deadly. You know, we could prevent premature deaths and certainly expensive outcomes. This amendment recognizes that lack of health care coverage and the inability to afford medical costs leads to significant burdens on families and on our society. And I sure hope that we will see fit to support this amendment. And I yield back.
Gentlelady yields back. Ms. Sanchez is recognized for 5 minutes.
Thank you, Mr. Chairman. I rise in support of Ms. Sewell's amendment to expand premium tax credits for those that lose Medicaid coverage. This amendment is about preserving and expanding health coverage for low-income families. Missouri Senator Josh Hawley said it today. Slashing health insurance for the working poor is both morally wrong and politically suicidal. I can't emphasize enough, 15 million people could lose health coverage under Republicans' plans. Chairman Guthrie and other Republicans here are saying that this bill is about prohibiting left-leaning states from providing health coverage to illegal immigrants. Well, we have on the record that they are not actually doing anything about undocumented immigrants. They are actually stripping health coverage from legally present tax-paying immigrants. So that's just a bunch of bull. Instead, Republicans have decided to turn their backs on working families in red districts and blue districts alike to loot Medicaid and the Affordable Care Act to the tune of nearly $1 trillion. And why? To pay for tax breaks for billionaires and corporations. Now is the time to pass Ms. Sewell's amendment. Over 70 million Americans, low-income children, pregnant women, seniors in nursing homes, people with disabilities, and individuals fighting addiction will be less healthy because of Medicaid cuts. In fact, most voters think healthcare spending should be increased, not cut. And lastly, I want to call attention to the California Hospital Association's statements, and I'm quoting them. Cuts of this magnitude cannot be absorbed. Hospitals will have no other choice but to reduce patient care services or, in the worst cases, close entirely. That means care for everyone is lost. Children's, seniors, even privately insured people, no matter what kind of health insurance coverage you have. I would also like to mention the California Medical Association's statement from this morning. And I'm quoting here, "These would be the largest Medicaid cuts in history and will leave veterans, seniors, the disabled, children, and working families without health care coverage, making emergency rooms the only point of care for millions of people. Communities will be devastated and lives will be lost." Because you see, when people use the emergency room for their health care coverage, that means that wait times increase for everyone. Yes, you may think that Medicaid doesn't impact you because you're privately insured. But if our emergency rooms are clogged because people don't have health care and they wait until they're very sick to go, and you happen to get into a car accident and end up in the emergency room, your wait time and therefore your health care is delayed. So it impacts everybody. Enough is enough. Listen to your Republican colleagues, listen to doctors, listen to the hospitals in your very own districts. Ms. Sewell's amendment would at the very least provide relief for those states with health coverage gaps. I think this is a great amendment, and I urge all my colleagues to support it, and I yield back.
The gentlewoman yields back. Mr. Horsford is recognized for 5 minutes.
Thank you, Mr. Chairman. It's almost midnight. I predicted that in the dead of the night, we would be here talking about doing exactly what the Republicans came here to do. When we started at 2:30, we talked about the fact that 13.7 million Americans are going to lose their health care from this big, beautiful bill. I call it the Screw America bill, in order to give tax cuts to Elon Musk and to Jeff Bezos, permanent tax cuts for billionaires and for big corporations, not for the working people of this country. And if you have been paying attention, the American people, who I do believe are watching, who are paying attention to the contrast. On one side, we're fighting to expand opportunities to health care, while the underlying bill that we're voting on tonight, into this morning, into the dead of the night, would take health care away from 13.7 million Americans, the largest cut to health care in the history of the United States. I support wholeheartedly this amendment by my friend and colleague, Representative Sewell from Alabama. And let me tell you why. There are now 10 states that continue to refuse to provide health care coverage to their citizens, despite 15 years ago the Affordable Care Act being passed. Within that bill, Medicaid expansion was designed to close what's called the coverage gap, which helps low-income Americans who had been shut out from receiving care. That especially provided coverage to adults without children who, despite meeting income requirements, didn't qualify for help. It was a life-changing move. Wisconsin, Wyoming, Kansas, Texas, Tennessee, Mississippi, Georgia, South Carolina, Florida, and Alabama refused to provide health care coverage under the expansion of the Affordable Care Act. That's not just bad policy, it's a moral failure. It's a moral failure. Now, I know Medicaid expansion doesn't have to be a partisan issue, and I want my colleagues on the other side to hear this. When expansion first became available, you know who the first governor in the country to adopt it was? The first Republican governor? Brian Sandoval from my home state of Nevada. I always give credit where credit is due. He led the charge. In fact, I was in the state Senate at the time, majority leader, and we worked together to set up that structure. He was the first, and for quite some time, the only Republican governor in the country to opt our state into expansion. And what happened? We cut the uninsured rate by a third. Half of the uninsured were children. We were able to get them into primary care and out of our emergency rooms. We were able to help people in rural Nevada and urban communities. That's why I support your amendment, Ms. Sewell, because it gives 1.5 million Americans in the coverage gap a real chance. It extends the advanced premium tax credit to make coverage affordable even in states that refuse to expand Medicaid. It's about fairness. It's about dignity. It's about access to health care for parents, for people with disabilities, and yes, for hardworking Americans. You know what we also have in common with some of these states that haven't expanded the health care coverage gap? They don't pay livable wages. They still have a sub-minimum wage that pays workers as little as $2.13 an hour. They can't even afford rent, let alone covering health care for themselves or their children. But do you see what they're doing? They're cutting health care for 13.7 million Americans, the largest cut to health care in U.S. history, to give tax cuts to billionaires and to big corporations. This is your priority. Live with it. Defend it. Speak about why it is you are doing this. Because that is the consequence of your actions. Donald Trump told you to do it? Or is this what your constituent asked for? Yeah, my time has expired, but my time here tonight hasn't.
The gentleman's time has expired. Are there members wishing to speak to the amendments? Ms. Tenney.
I wish I had some time to ask.
Thank you, Mr. Chairman. I just want to say there is a catch when you spend a lot of money, and I have a lot of respect for Ms. Sewell from Alabama. She's a terrific member, and we co-sponsor some bills together, and we have similar districts. But I come from the state of New York, where we have 8 million people enrolled in Medicaid, some in the Essential Plan, and only 5 million are eligible. So it is costing billions of dollars to New York taxpayers. We have a lot of fraud, abuse, and waste. It becomes a cottage industry. I'm not concerned about as Ms. Moore, who I love, is talking about some kid playing video games in his cellar. We're talking about people are actually defrauding our state. And there's a newspaper called the Albany Times-Union. I consider it very far left. It's certainly very anti-Republican, and I served in the legislature. They exposed this Medicaid fraud in New York, which is unusual. They called out what was happening in New York, and did New York do anything to fix it? Nothing, absolutely not. So my concern is expanding premium tax credits rewards this misreporting. It fuels enrollment that's fraudulent, and it leaves the taxpayers holding the bag. And I can say that with facts. New York is the highest tax state in the nation. It's why we're having a debate about the state and local tax deduction and the damage it does on New York taxpayers. The Albany Democrats, who run the entire state, it's a one-party rule state, have just put forth a $254 billion budget, $15 billion higher last year, never taking into account all the money they've received from COVID, all the expended, never looking back. So in 2024 alone, as many as 5 million individuals were fraudulently enrolled in Obamacare plans, costing taxpayers $26 billion. And that's just outrageous, probably most of them in New York. A permanent extension would cost more than $400 billion and benefit wealthy families making as much as $600,000 per year. And that's wealthy in my district, for sure. I don't think that's affordable care. That's a subsidy scheme for the wealthy, actually, with no guardrails, no fraud, abuse, and waste, no way to stop this from happening. And locking in enhanced credits would permanently subsidize fraudulent enrollment, hand billions to insurers and brokers who profit by gaming the system, which is exactly what happens in New York. Instead, Republicans are focused on giving patients choices, flexibility while lowering health care costs, small business owners. This is the single biggest problem for every small business owner in New York with the mandate, is it's so costly to actually provide good health care, which we care about our families that work for us. We want them to have access to great health care, but it's cost prohibitive because of some of these schemes. And many of our veterans and people with special needs who need to be cared for and senior citizens are getting pushed out of the way by fraudsters and people who are taking advantage of these types of programs. And I urge my colleagues just to reject this amendment and support our underlying bill, which is trying to stop this from happening and making sure the fraudsters are not displacing the people who are truly needy, which, by the way, is part of the New York State Constitution. We have an obligation, when I served in the New York State Legislature, we had an obligation to take care of the people who were truly needy. Many of those people are not getting taken care of because we have people that are gaming the system and taking advantage of the system and costing the taxpayers money and bankrupting the state of New York, which is why, to an earlier conversation, we have the highest out-migration of people in jobs than any state in the entire nation because of these types of unchecked, fraudulent programs taking advantage of our federal money, our taxpayers, and that's why you see what's happening in New York. These are things that have to be fixed, and this, I applaud the sponsor for trying to fix this problem or try to make healthcare affordable, but all it's doing is making it more affordable and opening us up to even more fraud, abuse, and waste that we're trying to limit, we're trying to streamline so that the people who truly deserve to get this type of care and get health care, who can get the needs that the health care needs that they deserve, are actually getting it and are not displaced by a lot of other people taking advantage of the system. And with that, Mr. Chair, I yield back.
Gentlelady yields back. Ms. Chu is recognized for 5 minutes.
Well, I support this amendment because it will put a stop to Republicans' reckless and dangerous attack on the health care of millions of Americans, despite President Trump promising that they wouldn't cut Medicaid or take away people's health care. This bill includes the largest cut to Medicaid in our nation's history, and this amendment would ensure that the most vulnerable amongst them would get health care coverage. And now I would like to yield to my fellow Congressmember, Gwen Moore.
Thank you so much, Ms. Chu. You know, I'm very good friends with my good friend, Ms. Tenney over there, but I just couldn't sit here quietly and listen to this straw man, fallacious argument. Ms. Sewell is trying to provide coverage for people, after we pass this bill, people who fall into a gap where they don't qualify for Medicaid and they will not get the ACA premium credits. People who are working, people who through no fault of their own don't have health care because they don't have employers that pay for it. And instead, we hear this straw man fallacy where we talk about all the fraud, waste, fraud, and abuse that goes on in the program. And so that because there is waste, fraud, and abuse, we should therefore cut 14 million people off Medicaid, off of health care. That's what I am hearing. It's a straw man fallacy. I was very good at this. I had to take logic. I was trying to avoid taking math, so I took logic. And this was one of the first things that they pointed out to us. It's a fallacious argument, and it doesn't address the true the true problem. What the true problem is something that Ms. Tenney did mention. That she said it would cost, what, $400 billion to provide these ACA credits? You know, nobody is worried about the fact that we're going to provide $5 trillion worth of tax cuts to the wealthiest people, and that half of that is going to go to the top 1%. Nobody's upset about that. So why should we be upset about providing health care for these needy people? Another point that I want to lift up that I think Ms. Plaskett made is that if we don't deal with people's health care in a preventive way, that it's going to cost society much more money. I can tell you that I know so many black women who showed up in the last 2 weeks of their lives at the emergency room with breast cancer, asking the doctor what's the next step, because they didn't have insurance and they only were forced to go to the emergency room when they became symptomatic. And the doctor said, ma'am, you just need to get your house in order. That's the next step. And I used to think, I mean, what is it? These were black women. What's with these black? Is it some disease or something genetic about black women that we're dying more from breast cancer? Is no, because we don't have health care. You know, I had a nephew, God rest his soul, who was a vegetarian, who never smoked a cigarette, never used drugs, never drank one drop of alcohol, never had any stray babies all over the place. But he worked in an industry at a call center that had no health care. One night he didn't feel good, so he showed up at the emergency room and he got dressed. And as he was about to walk out the door, the nurse asked him, "Where do you think you're going, sir?" And he said, "I'm going home." And they said, "No, you're not. We're going to dialyze you right now." So in an instant, he was eligible for Medicaid, for Medicare, and if he had just had health care, a decent person, never been to jail, if he had just gotten some high blood pressure medication and some insulin, it would have prevented him from becoming a double amputee and dying before he was age 60. You know, this is the sick care system that we're perpetuating by not approving this amendment. Thank you, Ms. Sewell, for this amendment. It will save lives and it will save money.
Gentlelady's time has expired.
Thank you so much.
Now recognize Ms. Plaskett for 5 minutes.
Thank you so much. You know, I'm listening to this discussion and talking about the expansion, and I debated even if I was going to speak on this amendment because the Virgin Islands, the territories don't have an expansion. We're not part of the marketplace. It appears that when they were working on the Affordable Care Act, there were two versions of the bill. This is how it was told to me. There was a version that included the territories in the House, and as the bill was making its way in the Senate, the champion of the companion bill, the late Ted Kennedy, passed away. And the president and this Congress wanted to get things done very quickly, and they used a different version of the Senate bill that kept the territories out. So when I thought about the things that you were talking about here, I keep telling you all that I live in a cautionary tale of what this legislation is going to do. My community is what it looks like when you don't have expansion, when you don't have people on Medicaid, when you don't have people have access to health care, when a third of your population does not have health care. They're out of it because either they're not poor enough to be in part of the Medicaid that's getting it, and they don't have private insurance, which is very expensive because there is no marketplace in the Virgin Islands for them to receive it. Both in the Virgin Islands as well as in Puerto Rico. Those are the examples I want to give you guys today. So, you know, before when I showed you guys that chart particularly about Puerto Rico. Many of you don't know, and we don't even think about the fact that the federal assistance medical assistance percentage, the FMAP, is set in statute. And it determines a determinative amount that the federal government is going to pay, and then that the state pays the rest of. For Puerto Rico, for many years, the FMAP was at 55%. Now, in the poorest state in the United States, Mississippi, the FMAP is 81%. And an arbitrary amount was put in the Virgin Islands and Puerto Rico at 55%. Medicaid block grants, per capita caps, statutory FMAPs created a serious budgetary challenge for the territories, and it will do the same nationwide. The combined budgetary limitations forced Puerto Rico to rely on borrowing and debt to cover their Medicaid funding shortfalls, which led to a cycle of financial strain that ultimately contributed to their bankruptcy declaration in 2017. We all know that PROMESA then was created, and we all blame Puerto Rico for not being able to manage its money, when in fact the federal government had a large portion to do with that. In the Virgin Islands, they have been plagued by a historic lack of federal funding for health care. And unlike Puerto Rico, rather than borrowing to meet that amount, we just told people, you're just not going to get any Medicaid. And when the FMAP was in fact changed for us, but we still have a cap on the amount of money that the federal government is going to give us, which is what's being proposed here, what happens is that the cap is met more quickly. Medicaid enrollment then drops because a state realizes that they do not have enough money to meet the fulfillment of everyone that is requiring it. As a result, hospitals then have account payables in the amounts of tens of millions of dollars because they have individuals coming to the hospital that are getting their primary care through hospital, going to emergency rooms, and then they become uncompensated care. That's what's going to happen throughout the United States. That's what the Republicans are doing by not keeping this expansion of Medicaid, by throwing 13.7 million people off of the roll. You are not going to have savings. You are going to create fiscal catastrophes in your state. You have a warning. Look at what has happened in the territories to understand what is going to happen in the rest of the United States. And at what cost? And for whom? Billionaires who don't even need it. I yield back.
Gentlewoman's time has expired. Others wishing to speak on the amendment? Seeing none, the question is on agreeing to the amendment offered by Ms. Sewell. The clerk will call the roll.
Mr. Buchanan?
No.
Mr. Buchanan, no. Mr. Smith of Nebraska?
No.
Mr. Smith of Nebraska, no. Mr. Kelly? Mr. Kelly, no. Mr. Schweikert? Mr. LaHood? Mr. LaHood, no. Mr. Arrington? Mr. Estes? Mr. Estes, no. Mr. Smucker? Mr. Smucker, no. Mr. Hearn? Mr. Hearn, no. Mrs. Miller? Dr. Murphy? Dr. Murphy, no. Mr. Kustoff? Mr. Kustoff, no. Mr. Fitzpatrick? Mr. Stubbe? Mr. Stubbe, no. Ms. Tinney? Ms. Tinney, no. Mrs. Fishbach? No. Mrs. Fishbach, no. Mr. Moore? Mr. Moore, no. Ms. Van Dyne? Ms. Van Dyne, no. Mr. Feenstra? Mr. Feenstra, no. Ms. Maliotakis? Ms. Maliotakis, no. Mr. Carey? Mr. Carey, no. Mr. Yakum? Mr. Yakum, no. Mr. Miller? Mr. Miller, no. Mr. Bean? Mr. Bean, no. Mr. Moran? Mr. Moran, no. Mr. Neal. Mr. Neal, yes. Mr. Doggett. Mr. Doggett, yes. Mr. Thompson. Mr. Thompson, yes. Mr. Larson. Mr. Larson, yes. Mr. Davis. Mr. Davis, yes. Ms. Sanchez. Ms. Sanchez, yes. Ms. Sewell. Ms. Sewell, yes. Ms. Telbene. Ms. Telbene, yes. Ms. Chu. Ms. Chu, yes. Ms. Moore. Ms. Moore, yes. Mr. Boyle. Mr. Boyle, yes. Mr. Byer. Mr. Byer, yes. Mr. Evans. Mr. Evans, yes. Mr. Schneider. Mr. Schneider, yes. Mr. Panetta. Mr. Panetta, yes. Mr. Gomez. Mr. Gomez, yes. Mr. Horsford. Mr. Horsford, yes. Ms. Plaskett. Ms. Plaskett, yes. Mr. Swazi. Mr. Swazi, yes. Mr. Schweikert. Mr. Schweikert, no. Mr. Arrington. Mr. Arrington, no. Mrs. Miller. Mrs. Miller, no. Mr. Fitzpatrick. Chairman Smith? Chairman Smith, no.
The clerk will call the roll.
The yeses are 19, the nos are 25.
There being 19 yeses and 25 nos, the amendment is not agreed to. Are there additional amendments?
Mr. Chairman, I have an amendment at the desk.
Mr. Chairman, I reserve a point of order.
Point of order has been reserved. The gentleman
Don't worry,
will
it's
suspend.
germane.
The gentleman will suspend as the amendment is distributed.
You don't want to suspend, it's more of the same. It really is. Thank you.
Mr. Doggett may proceed for 5 minutes.
Thank you very much. Well, good morning. It's Wednesday here in Washington, and through much of Tuesday, we Democrats have been pleading with our Republican colleagues to recognize the harm that they are causing by denying so many Americans access to a family physician, access to life-saving pharmaceuticals, and other forms of health care that are so vital to keeping families together, to protecting the future of children, and to just recognize the basic humanity of so many Americans who will be harmed if they are denied their health insurance coverage. And here it is with a new day, and we are not giving up. Our pleas, yes, but our demands and insistence that we will not yield on standing up for American families to protect their health insurance access. So this amendment tries once again to protect the health of Americans and ensure their access to the health care that they need. It does three things. First, this amendment will ensure that the coverage obtained through the Affordable Care Act enhanced tax credits remains. Otherwise, and it's clear that's what the Republican intent is, in a mere 7 months, those credits are going to expire. The same people who tried so hard throughout the life of the Affordable Care Act over the last decade plus to kill it, to repeal it, to stop it, well, they haven't given up. They're trying to stop it once again, and they will do so for millions, about 4 million Americans who will lose their health insurance coverage as a result of not extending these tax credits. This amendment will prevent that from happening. Second, this amendment will prevent the estimated almost 8 million people that will lose their coverage, thanks to what the Republicans are doing with Medicaid. It will allow them to enroll in the Affordable Care Act marketplaces. This will prevent a spike in the uninsured rolls, which are already too significant. And third, it will ensure access to a physician for those Americans who, as we have just discussed with Ms. Sewell's amendment, who for more than a decade have faced the upside-down reality
of just being too poor to qualify for Medicaid. And I want to tell you that I have looked in the eyes of families in Texas in exactly that situation and tried the near impossible task of telling them that they would not qualify for a marketplace plan when they came to the forums that I had for that because they were too poor. And they couldn't qualify for Medicaid because we have an indifferent, reactionary government in Texas that refuses to extend and accept federal funds to extend coverage that people need. And the same thing, of course, as Ms. Sewell explained, has happened in 10 other states where Republican leaders reject federal funds. And as a result of that, in Texas, for example, we have more uninsured Texas citizen children than any other state in the country. Children whose future is affected by their inability to get the health care that they need. And we also have a high number in Texas of rural hospitals that are closing at an alarming rate because they can't get access to reimbursement from some of their poor citizens. Our state economy is estimated to lose about 300,000 jobs as a result of not addressing this issue. Now, we've talked today, or yesterday, I should say, at length about the cost of this Republican bill. But I want to tell you that the cost of this Republican bill is not measured in dollars alone, because the effect on lives, on livelihoods, on the health of so many of our neighbors is every bit as important as those dollars. Millions of Americans will be losing their health care and their food assistance while the rich get even richer. I can tell you about one family after another that is impacted by these cuts. But I think particularly of Zach, whose mom put it best in Austin when she said, quote, "Medicaid is not just health care, it is the infrastructure of his life." Zach, a young man who just recently had a heart transplant, chemotherapy, and more. These young people, many of them will die if they lose their health access. That's why a day later, we're still fighting to try to protect their health insurance coverage. I move adoption of the amendment.
The gentleman's time has expired. Does anyone wish to speak on the amendment? Ms. Sewell is recognized for 5 minutes.
Thank you, Mr. Chairman. I want to second my support for the Doggett amendment. As my amendment prior did the Medicaid gap, you've gone even further, and I appreciate that. You know, I believe that our budget is a reflection of our values, and we spend money on that which we value. And the reality is that this bill, this reconciliation bill, spends trillions of dollars, gets us trillions of dollars into debt, all to give tax breaks and giveaways to the most wealthy in our society. Well, my state did not expand Medicaid. I will never forget meeting one of my constituents, Hank, who said that he did not ever have, he was a farmer, never had health insurance. He and his wife had 7 children, no health insurance. But someone knocked on his door and offered to give him subsidies that would reduce the price of his health insurance in the marketplace, and he got it. Lo and behold, 2 months later, his hand was caught in one of those machines on his farm. And he had health insurance. He had health insurance for the first time, and it cost $63,000. He would have gone into debt, may have lost his farm, but he said, I was so glad that the person at the front door told me that it was called the Affordable Care Act, because if they had told me it was Obamacare, I wouldn't have gotten it. This is not about politics, people. This is about saving people's lives. This is about health care. We live in the best country in the world, and people go without health coverage. Healthcare is a basic human right, in my opinion. It should not be for the privileged few. We have an opportunity here to right this wrong. I fully support the Doggett Amendment, and I yield my rest of my time to Mr. Doggett.
Well, I thank you for your support, and I think it's important to respond to one of the arguments made against your amendment and some of the earlier ones. Mine is an attempt to bring all this together and not to leave anyone out that would be denied care by the Republicans. But that is this argument about fraud. You know, fraud has obtained new meaning this year in Washington with Elon Musk and President Trump, because they basically use it as a word to apply to anything they oppose. They found fraud here, they found fraud there, and yet they've yet to produce a single case that they would prosecute through their own Department of Justice for fraud, because it's just a word they like to throw around. And the same is true of Republicans. We've had some of the members of this committee claiming that there's $500 billion of fraud in Medicaid. It is absolute nonsense. In fact, I want to ask unanimous consent to include in the record a report from Keep Americans Covered that's designed to disprove these claims of fraud.
Without objection, so ordered.
Of course, the Republicans have also been very selective about that. We didn't hear a word from them about concern about fraud when Trump fired 17 inspectors generals whose job it was to seek out fraud in different federal agencies. We didn't hear a word from them about fraud when we were concerned about tax fraud from some of the same people that are going to benefit from the trillions of dollars that they're including in this bill, and when they took away the resources, the law enforcement that is needed at the Internal Revenue Service. And certainly with reference to the claims of fraud here in the Medicaid program, they just don't stand up. They're as phony as Trump's argument here to the Congress that people who are 300 years old were getting Social Security checks. Absolute nonsense. It provides them an excuse for the cuts that they're making, just like the claim that these resources are going to those who are not here properly in our country, who are not legal immigrants into our country. Absolute nonsense. We know it's right there. We heard it read right off the page of where we are not providing any of these coverages for people who are not here in the country. But they can use that kind of argument. They can use the arguments of fraud, all of them arguments that are not valid, when basically all they're doing is denying coverage to good, hard-working Americans. And that's why we fight at this early hour of Wednesday morning.
The gentleman's time has expired. I recognize Dr. Murphy for 5 minutes.
Thank you, Mr. Chairman. I subscribe to a lot of medical board reviews, things that are looking at bad acting physicians or fraud schemes. And let me just tell you unequivocally, there is fraud going on in the system. Let me give you a few examples here. DOJ case in Florida, brokerage firm guilty of a $133 million fraud scheme. Another one, DOJ found brokers in Texas and in Florida targeted vulnerable low-income individuals, homelessness, $161 million fraudulent payments. This goes on all the time. I see the individuals arrested across the country all the time. And you know what? I still see patients. And most of the patients don't look like me. A lot are on Medicaid. And let me tell you personally, I know many individuals, and I see them regularly, who have no business being on Medicaid. I see this for a fact. And let me tell you now, the charge about illegal aliens not being eligible from Obamacare and Medicare, yes, they are, and they have been for decades. Going to that wonderful source of healthcare.gov says only lawfully present immigrants are eligible for Obamacare and Medicaid. Let's define lawfully present. Asylum seekers, parolees, refugees, temporary protected status, even individuals who've been ordered out of the country by a judge but haven't left yet are still considered eligible for Obamacare and Medicare. So no one in good conscience can claim that the millions of illegal aliens under these statuses are truly lawfully present. They were here because of an open border policy by Biden's staff, not by Biden because he didn't know what the hell he was doing. Democrats, led by Biden and Kamala, led in 1 million illegal aliens to temporary protected status in 4 years. Many of them, we know little about them or the nature in the country. 95%
of Venezuelan TPS beneficiaries were illegally paroled into the U.S. without inspection. Illegally paroled. Jose Ibarra, the murder of Georgian student Laken Riley, was an asylum applicant, and he represented only one of 1.5 million applicants in for this system of asylum. These people are eligible for Obamacare and Medicare. Some DACA recipients affiliated with gangs, nearly 60,000 of those individuals had arrest records, but they were granted DACA benefits. I don't know why in hell we are sitting here and trying to defend the nonsensical policies of the last 4 years and say it's okay for these people who have come in the country illegally to get benefits when we can't get them for our own patients. Back here, you know, Jose Ibarra, the Lincoln Riley Act was killed. She was killed in cold blood. He would have been eligible for taxpayer-funded Obamacare and would be eligible for Medicare at age 65. That's a fact by healthcare.gov. Guys, look, I see this crap every day. There is so much fraud that is going on in this system. I see it as a fact. It is not wrong to go after this nonsense. It is not wrong to slow some of the meteoric rise in Medicaid payments across this country. Look, it's an all-of-above approach to try to get medicine and health care for individuals in this country when we need to go after high payment systems. You look at states gaming the Medicaid system. We're not even talking about Medicaid in here, but states have been gaming that system. We've allowed them to do that for years. We've allowed huge surpluses in some places in this country in hospital systems. Sadly enough, it does disproportionately affect our healthcare system in rural areas. But guys, if we don't get our financial house in order, none of this matters. None of it matters, because we are perilously close to careening towards a sovereign debt crisis. And if every time we want to try to get our house in order, people are going to complain and whine about this cut or this reform, we're never going to be able to have the moral fortitude to do it for our country. We have to do this. We have to have accountability for the first time in this nation's 250-year history, that we get something done and we don't put a blind eye for our grandkids, our great-grandkids, hell, if we even get that far as a nation. We have to do these things. We have to make hard choices, and this isn't a hard choice to keep people out of our out of our taxpayer dollars who are in this country illegally. Thank you, Mr. Chairman. I'll yield back.
Gentleman yields back. I now recognize Mr. Thompson for 5 minutes.
Thank you, Mr. Chairman. I'd like to yield my time to Mr. Doggett.
Well, Dr. Murphy has my great respect. In fact, we're making common cause in several areas, but this is not one of them. I'm all in favor of getting our financial house in order, and you don't do it by adding $4 to $7 trillion to the national debt. And that's exactly what this bill does. The total hypocrisy of those who claim they're fiscally responsible when under any measure they are adding trillions of dollars of additional debt through this bill just is amazing to me. And what about the concerns about fraud? Yes, there's fraud. There's been significant amounts of provider fraud. In fact, I've introduced 2 or 3 bills that I can't get a hearing on in this committee to try to do something about that Medicare fraud. But Donald Trump's taken a look at Medicare fraud. He's had great interest in it. He's had such interest that in his short time here in office, he's managed to pardon 12 or commute the sentences of 12 fraudsters convicted of healthcare fraud. He has, at the same time that Republicans want to kick people off of Medicaid, he pardoned Philip Esframs for $1.3 billion in Medicare fraud. He pardoned Judith Negrin, convicted of orchestrating a $205 million Medicare fraud scheme involving assisted living facilities. He pardoned Daniela Wagner, conspired to commit $50 million in health care fraud and money laundering. And I can go on and on. I'll put the whole list in the record by unanimous consent, Mr. Chairman.
Without objection, so ordered.
The point is that we do need to attack fraud when it occurs, whether it's by an individual recipient or by a health care provider. But the way you do that is through prosecution for fraud, not by denying hardworking people who are relying on the Affordable Care Act, relying on Medicaid, or who want to be able to get health care that they've been denied in states like mine, denying them coverage. And to wave around a big photo of somebody who has been violent and entered our country, I want them removed if they've been violent and convicted of violent crimes. I don't care if they're a 10th generation American or they got here yesterday. But I do not see that as any excuse for denying health care to people in my state or across this country who need health care. The law is clear. There is no one who is entitled to receive Obamacare, Medicaid, or any other form of federal health care assistance if they are not here legally. And if someone violates the law, they should be prosecuted. We heard from our colleague in New York about all this rampant fraud up in New York. Well, we've got the Trump Justice Department. I hope they are not as permissive toward fraud as President Trump is himself in commuting the sentences and pardoning all these fraudsters. But if the Justice Department is out there, these U.S. attorneys, I'd tell them to get after it. That's the way to deal with fraud, not by denying Americans who are trying to provide for their families, who barely scrape by, the ability to see a family physician and get the prescriptions that they need. It is wrong to give trillions of dollars, to devote trillions of dollars to Elon Musk and the billionaire class and deny it to the poorest people in our country, people that want to climb up that economic ladder but need a little help to get up the rungs, and getting the help of a family physician is vital to them. With that, I would yield back.
Gentleman yields back. Are others wishing to speak on the amendment? Ms. Chu, recognized for 5 minutes.
I support this amendment to put a stop to the Republican reckless and dangerous attack on the health care of millions of Americans. This bill will preserve enhanced ACA premium credits and will provide them for those who lose health access as a result of this bill. And we know that there will be millions who do lose coverage because of this bill. Republicans are going to strip health care from people who are eligible for Medicaid simply because they cannot navigate a mountain of unnecessary red tape. These requirements don't promote work, they promote paperwork. And we've already seen what happens when these policies go into effect. In Arkansas, the first state to impose these requirements, more than 18,000 people lost coverage in just a matter of months. Did employment rise? No, the only thing that increased was confusion, red tape, and suffering. Most people who lost coverage were working or should have been exempt, but were tripped up by a flawed, complicated reporting system. And let's be clear about who gets hurt. The workers hit hardest by these requirements are in manufacturing, agriculture, food service, hospitality, home care, and child care. They work long hours, often for low wages with no guarantee of consistent weekly schedules. A missed shift here, a reporting glitch there, and they're kicked off their health coverage. When Republicans talk about adding burdensome reporting requirements, I think about my district, which suffered unimaginable tragedy. In January, the Eaton fire burned more than 9,400 structures to the ground, leaving 20,000 people homeless in Altadena and Pasadena, California. More than 6,000 homes were gone. Now, my constituents are just starting to rebuild their lives, and Republicans would force them to jump through complicated reporting hurdles just to get the care that they are already eligible for. These people have lost everything. Many of them fled their homes with nothing but the clothes they were wearing. For some, their places of work burned to the ground, or they're living in temporary housing, or they lost the car that they used to go to work. They are home health aides, grocery clerks, restaurant servers, child care providers. And now they could lose their health coverage, and all for Republicans who want to rip away their health care so that billionaires can buy a third yacht, a fourth home, and get another tax cut they don't need. It's a perfect storm. Take away affordable marketplace coverage, then kick people off Medicaid, leaving working families with nowhere to turn. More uninsured, more devastating for people already struggling. Well, we can't let this happen, and that's why I urge my colleagues to join me in voting yes on this amendment, and I yield back.
Gentlewoman yields back. Others wishing to speak on the amendment? Seeing none, the question is on. Mr. Evans is recognized for 5 minutes.
I want to join with Mr. Doggett in what he's expressed, that we should support this amendment. This is very key, and this is our opportunity to join and send a message. If you listen to the message of Mr. Doggett, it is something that we need to take a lead on. We need to fight this battle and get it across that we are not going to let the Republicans steal this health care. And we think generally that what Mr. Doggett has expressed is what we all should join. So I want to join, I want to add my voice to also to Representative Doggett and what he expressed. Again, I support this.
Gentleman yields back. The question is on agreeing to the amendment offered by Mr. Doggett. The clerk will call the roll.
Mr. Buchanan?
No.
Mr. Buchanan, no. Mr. Smith of Nebraska?
No.
Mr. Smith of Nebraska, no. Mr. Kelly? Mr. Kelly, no. Mr. Schweikert? Mr. LaHood? Mr. LaHood, no. Mr. Arrington? Mr. Estes? Mr. Estes, no. Mr. Smucker? Mr. Hearn? Mrs. Miller? Mrs. Miller, no. Dr. Murphy? Dr. Murphy, no. Mr. Kustoff? Mr. Kustoff, no. Mr. Fitzpatrick? Mr. Stubbe? Mr. Stubbe, no. Ms. Tinney? Mrs. Fishbach? Mr. Moore? Mr. Moore, no. Ms. Van Dyne? Mr. Feenstra? Mr. Feenstra, no. Ms. Maliatakis? Ms. Maliatakis, no. Mr. Carey? Mr. Carey, no. Mr. Yakum? Mr. Yakum, no. Mr. Miller? Mr. Miller, no. Mr. Bean? Mr. Bean, no. Mr. Moran? Mr. Moran, no. Mr. Neal? Mr. Neal, yes. Mr. Doggett? Mr. Doggett, yes. Mr. Thompson? Mr. Thompson, yes. Mr. Larson? Mr. Larson, yes. Mr. Davis? Mr. Davis, yes. Ms. Sanchez? Ms. Sanchez, yes. Ms. Sewell? Ms. Sewell, yes. Ms. Delbene? Ms. Delbene, yes. Ms. Chu? Ms. Chu, yes. Ms. Moore? Ms. Moore, yes. Mr. Boyle? Yes. Mr. Boyle, yes. Mr. Byer? Yes. Mr. Byer, yes. Mr. Evans?
Yes.
Mr. Evans, yes. Mr. Schneider? Mr. Schneider, yes. Mr. Panetta? Mr. Panetta, yes. Mr. Gomez? Mr. Gomez, yes. Mr. Horsford? Mr. Horsford, yes. Ms. Plaskett? Yes. Ms. Plaskett, yes. Mr. Swazi? Mr. Swazi, yes. Mr. Schweikert? Mr. Schweikert, no. Mr. Arrington? Mr. Arrington, no. Mr. Smucker? Mr. Smucker, no. Mr. Hearn? Mr. Hearn, no. Mr. Fitzpatrick? Mr. Fitzpatrick, no. Ms. Tinney? Ms. Tinney, no. Mrs. Fishbach? No. Mrs. Fishbach, no. Ms. Van Dyne? Ms. Van Dyne, no. Chairman Smith? Chairman Smith, no.
Clerk will report the vote.
The yeses are 19, the noes are 26.
There being 19 yeses and 26 noes, the amendment is not agreed to. Are there additional amendments?
Mr. Chairman, I have amendments at the desk.
Mr. Chairman, I reserve a point of order.
Point of order is reserved. Gentlemen will suspend as the amendment is distributed.
Sure, yeah.
Mr. Thompson may proceed.
Thank you, Mr. Chairman. Mr. Chairman, members, my amendment would strike what must certainly be a drafting error in this bill that would eliminate the $200 tax on silencers. At a time when Republicans are taking health care and food away from millions of Americans, it must be a drafting era that would spend $1.4 billion to make silencers cheaper. I'm truly fascinated at the idea that members on this dais would spend that much money, $1.4 billion, to make it harder for victims of mass shootings to know where the shots are coming from as they're trying to run for cover. As the father of a deputy sheriff, I'm disgusted that this Republican majority is celebrating Police Week while all of our police officers and law enforcement officers are in town by spending $1.4 billion to make it more dangerous for cops to do their jobs. Understand that it's not like you see in the movie. This doesn't completely silence the gunshot noise. What it does, it disperses the noise. So if you're in a mass shooting, there's a shooter, you're trying to run for cover, you have no idea where to run to because you don't know where the gunshots are coming from. When the police show up to apprehend the shooter, they don't know where the shots are coming from because it disperses the sound. At a time when DOGE is slashing everything from cancer research to PBS to Social Security workers to the VA, this Republican majority scraped up $1.4 billion to make our gun violence crisis even more deadly. Mr. Chairman, gun violence is the leading cause of death for children and teenagers. Today, Republicans are doing the bidding of the Inside the Beltway NRA to roll back a tax that's been on silencers since 1934. As a combat veteran, a lifelong hunter and gun owner, I can tell you this has nothing to do with hearing protection, but everything to do about making money for one segment of the gun industry. And I really don't think they need our help, and I'll tell you why. When I saw the JTC cost score for this bill, $1.4 billion, I didn't think that could be accurate. Went to Mr. Barthold, and I guess you didn't think it was accurate either, because he took 2 or 3 different swipes at this thing because it was so much money, but said that this industry has grown so much, so quickly, that it is in fact $1.4 billion. They don't need our help. Gun violence victims do need our help. Cops need our help, and we shouldn't be squandering $1.4 billion the same evening that we're taking health care away from over 13 million people, cutting food programs for the food insecure, and cutting health care benefits for individuals who need that type of help. I urge members to support this amendment, which would restore the tax on silencers, a tax that's been there, as I said, since 1934, and it would promote public safety. I yield back.
The gentleman yields back. I recognize Mr. Kustoff for 5 minutes.
Thank you, Mr. Chairman. I move to strike the last word. Mr. Chairman, I want to respond to the comments that our colleague made about Section 112030 of the bill, which will reduce the excise tax on the purchase of a firearm sound suppressor from its current level of $200 to zero. The claim that this amounts to an industry handout that will exacerbate gun violence is just not founded. In fact, it's unfounded. On the contrary, this provision is an important first step towards correcting an unjust, outdated law that has infringed on Americans' fundamental constitutional rights since it was enacted in 1934, almost 90 years ago, and signed into law by President Franklin Roosevelt as the National Firearm Act. This law imposed a variety of new regulations, including registration, fingerprinting, photographs, and a $200 excise tax on the purchase of specific firearms and firearms accessories, such as firearms sound suppressors. So let's be clear for the record. There are numerous problems with the National Firearms Act, most notably the unconstitutional nature of the restrictions placed on the exercise of a fundamental constitutional right by law-abiding Americans. You should not have to register your firearms, firearm accessories, or pay the federal government $200 to exercise your Second Amendment rights. The NFA treats suppressors the way it treats firearms under the Act. The same onerous regulations and the same $200 tax. Firearm sound suppressors are obviously not firearms. They're just not. And this should go without saying. Suppressors are firearm accessories. And they help reduce, not eliminate, but reduce the muzzle blast associated with discharging a firearm. They do not silence a firearm, contrary to what Hollywood or whomever may want you to believe. But much like car mufflers reduce engine exhaust noise, suppressors help reduce the noise from firing a gun. They reduce the felt recoil and generally make shooting a firearm equipped with the suppressor easier for the shooter and anyone around them. The fact is that in many parts of the world, including many countries in Europe, suppressors can be purchased over the counter. Not using a suppressor is often frowned upon. So rather than demonizing suppressors and those who own them, I think that we should all be commending those who use suppressors for being good stewards. The National Firearms Regulation of suppressors is an infringement on our Second Amendment rights, and that's it. And from a practical standpoint, the associated red tape and the onerous $200 tax keep many gun owners from acquiring a suppressor and utilizing their safety benefits. Exposure to gunfire is one of the leading causes of hearing damage in our nation. Even a single shot can cause irreversible hearing loss. Firearms are loud, and using a suppressor can help reduce, may not eliminate, but it can reduce the noise associated with discharging a firearm. Suppressors are the hearing protection of choice for many hunters, particularly those who could not wear headgear for the purpose of hearing game. So let's be clear. I strongly believe that suppressors should not be regulated or registered under the National Firearm Act. And since 2017, I've supported legislation in every Congress to remove the suppressors from the NFA. I'm going to continue to do so. But right now, today, we have a unique opportunity to secure a historic win for our Second Amendment rights and gun owners across our nation. But we also have to realize the reality of the reconciliation process and what can be passed in the United States Senate. So that's why I've pushed to include the best possible deal for gun owners in this bill that will satisfy the burden. And I encourage all of our colleagues to vote for it. And with that, Mr. Chairman, I'll yield back.
Gentleman's time has expired. I now recognize Mr. Swazi for 5 minutes.
I want to speak in strong support of Mr. Thompson's amendment. Mr. Thompson, as was mentioned, is a Vietnam veteran. He's an avid gun collector. He won the best shot for the Democrats today in the Sportsman's Clay competition. I did not do as well as he did. But it's shocking to me. I mean, here we have this 400-page bill, and I don't think this item would even have been discussed were it not for Mr. Thompson. But now it's 1 o'clock in the morning. I hope people will take note of this. There was a provision created in 1934 for dangerous and unusual items commonly used by, quote, gangsters, is how they made it back in 1934, $200 fee. It's been the same fee since 1934. $200 in 1934 would be about $4,800 today. That's why people saw this as being such a dangerous thing. In fact, there was a silencer used in December in New York City when Luigi Mangione shot the CEO of United Health. And he probably wouldn't have been caught were it not for the cameras that were in the area, because when a silencer happens, you don't really know where the shot's coming from. You don't know that it's happening. And so think about it. $1.4 billion cost over 10 years is about $140 million a year. So you go, oh, that's not that big a deal. That's 700,000 silencers. 700,000 times $200 is $140 million, $1.4 billion. So it obviously has not retarded the purchase of these items over the years. And now, in the midst of this one-party bill, done, now we're talking about it at 1 o'clock in the morning, of a 400-page bill that involves trillions of dollars, we're slipping in an item that is very much supported by the NRA. I'm very proud of the grades I've received in my life and different things, but I got an F from the NRA. $1.4 billion to try and make it easier to buy silencers in the United States of America that are often used by criminals, done in a giant bill in the middle of the night during police week. It really shocks my conscience, to tell you the truth. Maybe I'm missing something. And I can't even imagine that most of my colleagues on either side of the aisle are actually aware that this item is actually in this gigantic bill. So I hope that people that are here tonight that are shocked by this the way that I am will continue to discuss this with people, so at least people can be held accountable for their vote to have this provision changed. That really makes no sense at all. With that, I yield back.
Gentleman yields back and now recognize Mr. Evans for 5 minutes.
I, too, am shocked by this happening, as my good colleague Tom Sazia just says, at 1 o'clock in the morning. And that it's very clear that, at least since I've been around in this house, that no one knows more about Mr. Thompson and him expressing in this type of discussion. There is no way, absolutely, that we should even be entertaining this. With the level of violence that is occurring, we need to send a message. So I agree 100% with Mr. Thompson has expressed in laying out the argument that he's expressed. And the reason we need not be having any kind of discussion at 1:05 1:05 in the morning about this issue. So I support his recommendation. I thank you, Mr. Chairman.
The gentleman yields back. I now recognize Mr. Horsford. Oh, Ms. Moore. Ms. Moore is recognized for 5 minutes.
Thank you so much, Mr. Chairman, and I must add my voice to being shocked. I am shocked that this provision is in this is in this bill. I really want to appreciate Mr. Swazi for the great research that he's done on this issue and sharing with us the details of this amendment. To my colleague who has indicated that his concern is that this amendment would contravene the rights of the Second Amendment and would could possibly cause hearing loss of gun owners using their guns. I just want to call the body's attention to the fact that every 12 hours, on average, a woman in the United States is murdered by an intimate partner with a gun. A little bit more serious than maybe losing your hearing. And homicide is the leading cause of death for pregnant and postpartum women in the United States. Domestic abusers would have much more access to these silencers, and 20% of intimate partner homicide deaths are individuals other than the direct victim. 1 in 3 children under the age of 13 are killed by gun violence in domestic violence incidences. Perpetrators threaten not only their intimate partners, but their pets, their relatives, their parents, and any others that may be in the way. And the problem with silencers is that every second counts in terms of saving the life of a victim. Police cannot necessarily identify where the shots are coming from with a silencer. Neighbors may not realize that a person who is succumbing to a gunshot wound has even been shot because of these silencers. And so I want to join the Jewish Women International, Futures Without Violence, Just Solutions, Legal Momentum in opposing the addition of this provision in this bill. And as I was reading through the letter, and Mr. Chairman, asked unanimous consent that I be allowed to put this letter from Jewish Women International, Just Solutions, Legal Momentum, and Futures Without Violence into the record.
Without objection, so ordered.
Thank you so much, Mr. Chairman. And I just wanted to point one thing out in their footnotes. Not only are these women and these organizations opposed to removing the $200 fee, but the International Association of Chiefs of Police say that it makes it difficult for them to respond, to locate, and to engage armed offenders. They have a challenge identifying the shots fired with suppressors and locating those offenders. And so silencers are used for a reason. Criminals see it as a way to perpetrate their crimes with silence. And I would, I would join Mr. Swazi in supporting this amendment, and I would hope that the common sense would prevail and that we would all vote in support of this amendment, and I would yield back the balance of my time.
The gentlelady yields back the balance of her time. Mr. Horsford is recognized for 5 minutes.
Thank you, Mr. Chairman. I want to thank Congressman Thompson for his amendment. As a member of the Gun Violence Prevention Task Force, I appreciate the work that we've done together in this space, and I want to be as non-emotional and non-reactionary as possible because this is personal to me. But I also want to provide this committee with some additional facts, not misinformation, but facts, along with those that other colleagues, including Congressman Swazi, have provided. Between May 2021 and July 2024, the number of silencers registered by Americans with the ATF increased by 84%. In the first 6 months of 2024 alone, Americans purchased and registered 1.4 million silencers. The ATF recovered and traced over 400 silencers from violent crime scenes in 2023 alone. So like many of you, I can't say that I'm shocked. I'm disgusted that Republicans would include in their Screw Americans bill this provision. And I really want to ask, who asked for this? Was it the assassin lobby? Americans pay a staggering $7.79 million every day in health care costs related to gun violence. An average emergency room visit for a gunshot costs $1,388. If you need hospitalization for a gunshot, the cost rises to $27,820. Gun violence costs the business community an average of $1.47 million per day in productivity, revenue, and personnel considerations. Relatedly, it is estimated that we lose $147 million per day because of work people miss related to gun injuries and deaths. So let me get this straight. At past 1 a.m., the Republicans are cutting health care on 13.7 million Americans, but making silencers cheaper? Make it make sense. Help me, somebody. Cutting the tax to zero? What planet are you even on to propose such a provision? And clearly, this was endorsed by the entire Republican caucus. This is something that all of the members are backing. I know most of them are not even here to defend this provision. We've got one member who's spoken on it, and he referred to a 1934 law. So let me get that right. That's 91 years of existing law that you want to upend in a Republican bill on behalf of the assassin lobby. So I stand in support of Congressman Thompson's amendment for the safety of our communities. During Police Week, when so many of our families are already dealing with the anxiety of what your budget is already enacting on their lives, I urge my colleagues to vote in favor of this amendment and against silencers and eliminating the tax to zero. With that, I yield back.
Gentleman yields back. I now recognize Mr. Larson for 5 minutes.
Thank you, Mr. Chairman. I am going to applaud all the members who have spoken, and I would like to yield my time to my colleague who is a veteran and gun owner, and especially, as he pointed out, during this week, Police Officers Week, when the people who defend us daily are here, that it seems almost implausible that we would be taking this up. I yield my time to Mr. Thompson.
I thank the gentleman for yielding. I just want to circle back. The gentleman from Tennessee said some things that I can't make sense of them, but to suggest that you need a silencer for hearing protection, give me a break. They make earplugs for that. You don't need to buy a silencer in order to lessen the impact of the sound of the rifle or shotgun. it's important, I think, to note that the Federal Firearms Act, which governs silencers, also regulates other dangerous types of devices and firearms. For instance, fully automatic machine guns. So you can buy this stuff, you can buy silencers, you can buy a fully automatic machine gun, but it's regulated through the National Firearms Act to provide an added level of scrutiny and an added level of protection to make our communities safer. Because as everyone who has spoken on this side of the aisle has noted, gun violence is a major public concern. It is the #1 killer of kids and teenagers. It costs the American taxpayers $557 billion a year. And this amendment, and how I agree with my colleagues, how the heck did this get in this 400-page bill to deal with the big tax giveaway that they want to do? It costs $1.4 billion. The gentleman from Tennessee says that if the $200 fee that you have to pay to go through the National Firearms Act to get one of these is somehow unconstitutional and prohibits your right to own firearms. But $20 isn't? So they're not doing away with it, they're just lowering it to $20. So it's okay at $20 to have a fee, but not okay at $200 to have a fee. I don't think his arguments made a lot of sense. And I just want to circle back. A number of our colleagues mentioned different acts of violence that the perpetrator used a silencer with. And as I think Mr. Horsford mentioned, that just in 2023, the ATF traced 406 silencers that were used in criminal activity. May 2019, the Virginia Beach shooter attached a silencer to his .45 caliber handgun and used it to kill 12 people on 3 floors of a city building where he worked before the police were able to apprehend him. The individuals didn't run because they said that this dispersed sound they didn't think was a firearm. They thought it was a nail gun instead. And in 2013, a former LAPD officer murdered 4 people and wounded 7 others using a gun with a silencer. Police were initially puzzled as to why no neighbors heard the 14 shots. It was the same thing. They said that this silencer dispersed the noise and they didn't know what it was and they couldn't recognize it. And then in January 2016, terrorist Sami Mohad Hamzi was arrested and charged after acquiring automatic firearms and silencers in furtherance of a terrorist plot to commit mass shootings at the Masonic Center in Milwaukee, Wisconsin. And he went on to explain that he had to have silencers because that would make it so much easier to commit this terrorist attack, because the silencer would disperse the sound and the police wouldn't be able to detect them and stop them. It would make the terrorist attack much more successful. So the idea that we need to get rid of or make it easier for terrorists and criminals to get silencers at a cost of $1.4 billion is absolutely stupid, and it should be stopped in this committee.
Ms. Plaskett is recognized.
Thank you so much. You know, I guess it seems silly, but I guess it's not. I know Mr. Kustoff has, in Tennessee, has one of the largest suppressor silencer manufacturing companies there as well. So I guess it does make sense why we're having this discussion about it. I am the granddaughter of a police officer. My father was a New York City police officer for 30 years. I was a prosecutor. The use of silencers, that we are going to do this for silencers, but we won't do it for a child tax credit, that we won't expand help and give exemptions for families that need it. We're not looking at providing any support for diapers. I think that's way more important than silencers. We're going to cut $300 billion for incentives for manufacturers, tax incentives for manufacturers in green energy, but we're going to support silencers. We're not going to support feminine hygiene for young girls, for period poverty, to ensure that they may not miss school so that they can be better educated, but we're going to support silencers. But I'm never surprised at the lengths it will go to conform to the needs of, our constituents. And I guess there's a constituency that needs this. Mr. Horsford jokingly called it the assassin lobby. I call it the silencer and suppression manufacturer lobby. That's who this is for. This is not for gun owners. My first Mother's Day, my father gave me a hunting rifle. I got a .30-06. That was my first Mother's Day gift from my father. So it's not as if we are against gun ownership. But the fact that in this bill, where we're concerned about a deficit, that we're going to do this for silencers, which impede and in some instances are the thing that our police officers are fighting against. And they're going to vote no on the amendment. My Republican colleagues are going to vote no on this amendment. And then they're going to go back and they're going to go in the police parades and they're going to wave and show that they're supporting police officers while supporting something like this. I mean, if people want to buy silencers, they want to buy suppressors, why would, that's their business. But the fact that we're taking time to put this in the bill, when there are other things that American people need that we are absolutely cutting out, I'm disappointed. Another level of disappointment that I will just have to get used to. I yield back.
Additional discussion on the amendment. Seeing none, the question is on agreeing to the amendment offered by Mr. Thompson. The clerk will call the roll.
Mr. Buchanan?
No.
Mr. Buchanan, no. Mr. Smith of Nebraska? Mr. Smith of Nebraska, no. Mr. Kelly? Mr. Kelly, no. Mr. Schweikert? Mr. Schweikert, no. Mr. LaHood? Mr. LaHood, no. Mr. Arrington? Mr. Arrington, no. Mr. Estes? Mr. Estes, no. Mr. Smucker? Mr. Smucker, no. Mr. Hearn? Mr. Hearn, no. Mrs. Miller? Mrs. Miller, no. Dr. Murphy? Dr. Murphy, no. Mr. Kustoff? Mr. Kustoff, no. Mr. Fitzpatrick? Mr. Stubbe? Mr. Stubbe, no. Ms. Tinney? Mrs. Fishbach? Mrs. Fishbach, no. Mr. Moore? Mr. Moore, no. Ms. Van Dyne? Ms. Van Dyne, no. Mr. Feenstra? Ms. Maliotakis? Ms. Maliotakis, no. Mr. Carey? Mr. Carey, no. Mr. Yakum? Mr. Yakum, no. Mr. Miller? Mr. Miller, no. Mr. Bean? Mr. Bean, no. Mr. Moran? Mr. Moran, no. Mr. Neal? Mr. Neal, yes. Mr. Doggett? Mr. Doggett, yes. Mr. Thompson? Mr. Thompson, yes. Mr. Larson? Mr. Larson, yes. Mr. Davis? Mr. Davis, yes. Ms. Sanchez? Ms. Sanchez, yes. Ms. Sewell? Ms. Del Bene? Ms. Del Bene, yes. Ms. Chu? Ms. Chu, yes. Ms. Moore? Ms. Moore, yes. Mr. Boyle? Yes. Mr. Boyle, yes. Mr. Byer? Mr. Evans?
Yes.
Mr. Evans, yes. Mr. Schneider?
Yes.
Mr. Schneider, yes. Mr. Panetta? Mr. Panetta, yes. Mr. Gomez? Mr. Gomez, yes. Mr. Horsford? Mr. Horsford, yes. Ms. Plaskett? Ms. Plaskett, yes. Mr. Swazi? Mr. Swazi, yes. Mr. Fitzpatrick? Ms. Tinney? Ms. Tinney, no. Mr. Feenstra? Mr. Feenstra, no. Ms. Sewell? Ms. Sewell, yes. Mr. Byer? Yes. Mr. Byer, yes. Chairman Smith?
No.
Chairman Smith, no.
The clerk will report the vote.
The yeses are 19, the nos are 25.
There being 19 yeses and 25 nos, the amendment is not agreed to. Are there additional amendments?
Mr. Chairman, I have an amendment at the desk.
All right. Mr. Larson, would you?
Mr. Chairman, I reserve a point of order.
A point of order has been reserved. Mr. Larson, will you suspend while the amendment's passed out?
Yes, Mr. Chairman, I will. You're shocked.
Proceed.
Thank you, Mr. Chairman. Mr. Chairman, my amendment does exactly what the majority says that we are here to do. This will definitely help working families across the board and create a national economic development plan that is tried and true. I'm talking about the nation's #1 anti-poverty program for the elderly, and until the child tax credit is made permanent, the #1 anti-poverty program for children. The program that more veterans receive disability from than they do from the VA. I'm talking about Social Security. I commend President Eisenhower, and actually President Nixon was the last president that expanded and enhanced Social Security across the board because they knew exactly what it would do. But believe it or not, my fellow colleagues, it's been more than 50 years since Congress has enhanced Social Security across the board. All of you have received a card from me, but I have here, if you want me to read them, I will, what every single district receives, how many constituents that you have, what the breakdown is, and something few members of Congress realize or understand, how much money comes into your district monthly, and why during this time in post-COVID and global inflationary period that this is the best economic development plan that we could have, because every single congressional district and every one of your constituents will benefit from this. We propose and have a plan that makes sure that we increase benefits across the board for the more than 70 million people that are on Social Security. We make sure that nobody can retire into poverty. Imagine in this country that 5 million of our fellow Americans, 5 million, get below poverty level checks after having paid into a system all their lives in the wealthiest nation in the world. We want to make sure that we take care of disabled workers so they don't have to. We've actually had people die waiting for disability payments from Social Security. And we also want to make sure that there's no longer a disability cliff, so people who are on disability and try to go back to work are not penalized as well. Mr. Chairman, I said this is an economic development plan, and here's why. Because every single district gets payments to their district. And here in, well, for example, Mr. Chairman, your monthly payments are $310 million that come into your district monthly. That hasn't been changed or altered in over 50 years. And what do people do with that money? They spend that money right back in their district, at the grocery store, at the pharmacy, at the dry cleaner, putting gas into their automobiles, paying their rent, paying their mortgage. That's what this has been all about. That's why this is so vitally important that this committee, the Committee of Cognizance with regard to Social Security, make sure that we enhance this program across the board to help out every one of our constituents. There's no doubt that this will help every single American. That's why I asked Mr. Barthold at the start of this, was there anything in the bill that was before us for people that are making over $400,000 that they would contribute to Social Security? It's fully paid for, including the tax cut that President Trump promised and is reneged on in this proposal. We pay for it. We do so by lifting the cap on people who pay nothing or little into the nation's #1 anti-poverty program for the elderly and for children. I yield back.
Mr. Estes is recognized.
Thank you, Mr. Chairman. I just want to start off talking about several things that have been brought up to talk about this. I mean, first, I just want to start off with doing an across-the-board $2,000 increase means that all of these billionaires that have been talked about tonight and yesterday, all of these billionaires will get an extra $2,000. That's not going to be beneficial for the Social Security Trust Fund, and it's not the right way in terms of what we want to approach this. You know, when we look at this, we know, everybody on this dais knows that you cannot make changes to Social Security in a budget reconciliation process. This is really just a poison pill to focus on this. President Trump and House Republicans have consistently said that we're committed to protecting Social Security. President Trump said it over and over again during the campaign, and since he's been in office, we've said it, and we want to make sure that the important part right now is that we actually focus on making sure that the right people get enrolled, and they get enrolled correctly and on a timely basis and get the correct payments. You know, for years, processing claims has been delayed, and there have been numerous payment errors, overpayments and underpayments, and it's been problematic for those recipients, not particularly the folks that are applying for disability claims. There's a lot of work that needs to be done to improve that process that's been in existence for years. This amendment is just a scare tactic intended to distract and obstruct from this important work that we're talking about of how do we deliver historic tax relief for working families, farmers and small businesses. So we want to focus on, let's do what's right for helping the economy grow, and we know that there needs to be continuous work on Social Security, but that's for another bill as we work through that. With that, I yield back, Chairman.
Further discussion on the amendment, Mr. Neal.
Thank you very much. You know, this is again an example of what's gone awry in the national conversation. So we hear that people are having problems accessing the Social Security offices as we're closing them. That there are fewer employees, so that means the phone calls are not answered. I mean, there's some logic here if you play out its manifestation. And coupled with the following, Mr. Larson is not arguing about who's going to get the benefit. His argument, who's going to pay for the benefit expansion. And sooner or later, that's going to be the conversation here. And I think having it sooner is better. Now, the other point is, when we had Mr. Musk and others, the president, saying that people were receiving $300,000 a year, I'm sorry, 300,000 plus, when they've been dead for 300 years or whatever he was pointing out. But what was striking about it to me was how little knowledge they had of the issue, coupled with the fact that they were making these crazed statements for a federal agency that has an error rate of less than 1.1%. I mean, anybody who's ever interacted with a Social Security office, and all of our congressional offices have, you know how honorable they are. They get those problems straightened out quickly when they occur. And I think that what Mr. Larson is suggesting here, look, we're going to get at this pretty fast, I can assure you of that, because conversations many of us have had privately on both sides of the aisle here, we know what the answer is that's coming, and Mr. Larson is proposing part of it this evening.
Further discussion on the amendment. Mr. Thompson.
Thank you, Mr. Chairman. I'd like to yield my time to Mr. Larson.
I thank the gentleman, and I say to my good friend and colleague, poison pill, come on. Listen, there's over 70 million Social Security recipients. They're in all of our districts. 10,000 baby boomers a day become eligible for Social Security. 28 million Americans, this is the only benefit that they have. 5 million of our fellow Americans in the wealthiest nation in the world, on the day that you're proposing billions of tax cuts to the wealthiest people, you're giving people, we don't even give people, 5 million of our fellow citizens get below poverty level checks from Social Security. We can change that. And of those 5 million, most of them are women. And why? Because they were the care providers. And when they were in the workforce, they made less than their male counterparts. And we pay them below poverty level checks. The greatest insurance program, and also administered. I come from an insurance capital of the world. Insurance companies' administrative costs are 16 to 28%. Social Security, because of your cuts, is administered for under 1%. And you're cutting it more, as Mr. Neal said, closing regional offices, shutting down phone services. Most of you on this dais want to be able to talk to a human being and make sure that someone can respond to what you have to say when you have a problem. Think about the elderly within your district and what they need. And you tell me we can't stand up and vote for this and vote for the fact that we want to make sure that all of our constituents, including the very wealthy, who are you rewarding today? How about having them pay their fair share? I yield back.
Mr. Chairman, I'd like to.
Mr. Arrington.
I know my friend, Mr. Larson, is sincere in his desire to address the insolvency of this important safety net for seniors, and I mean that. We have disagreements on the how, on the strategy, on the most cost-effective way to do this, but my question to my friend is, when your colleagues, my Democrat friends, passed a partisan reconciliation bill that gave tax breaks to green energy corporations valued at not $250 billion, which was the initial score, but $700 billion. Where were these same solutions? To me, it's disingenuous to make this the platform for these reforms. It's not let me finish, please. It's not disingenuous for you to have opinions on how to fix it, but it is clear that you cannot open up Social Security, and you would in fact blow up the entire process, which may be the real intent of proposing this. But taking you at your face value on your amendment, my question is simple. If this could pass in reconciliation and Democrats had total control over Build Back Better that became the Inflation Reduction Act, why didn't you include these in the same bill that you were giving hundreds of billions of dollars in tax breaks to big corporations? Just a straightforward question, and I'll yield for the answer.
That is a straightforward question. When you say it's preposterous that we're bringing this up and that we're trying to do this because we're trying to make a political point?
Yes.
No, this is reality. Here's what reality is in your district.
Yes, please. I'd like to hear.
Yeah, well, you're going to hear it.
They're for me.
You have 135,000 Social Security recipients in your district. Of them, 95,000 are retired workers, 14,000 disabled, 10,000 widows, 4,800 spouses, 9,000 plus children who haven't seen an increase in over 50 years that you say is preposterous and insincere for me to bring up at this hearing where you're giving out what I think is preposterous tax cuts to billionaires at a time when you're in your own district. People have been denied any increase in funding across the board for more than 50 years. You don't see that as preposterous?
No, I see it as purely. What? I see this as purely political and not your desire to make good changes and help people. And I give you all the credit for being bold and forth.
There's nothing bold about this.
And forthright about how you would address this, the needed reforms in the safety net. But it's clearly political in that the law prohibits us to open up Social Security policy changes in reconciliation. We all know that. And then here's the question: if that's not the case, why didn't you include? Please just answer this question: why didn't the Democrats include the same policy reforms in your amendment when you all had total control over the outcome of the Democrat Inflation Reduction Act?
Let me yield to the chairman.
As I pointed out before, it's because we embraced some fiscal restraint. And let me say this as well. On the tax credit side, the gentleman's about halfway right on that. $412 billion of tax credits. It's a long-term investment, and it's going to inure to the benefit of the American family. And let me say this. I'm waiting to hear our members of this committee try to undo the investments that have already been made because they are in the ground and underway.
I yield the remainder of my time, Mr. Chairman.
Further discussion on the amendment? Seeing none, the question is on agreeing to the amendment offered by Mr. Larson. The clerk will call the roll.
Mr. Buchanan?
No.
Mr. Buchanan, no. Mr. Smith of Nebraska? Mr. Smith of Nebraska, no. Mr. Kelly? Mr. Kelly, no. Mr. Schweikert? Mr. LaHood? Mr. LaHood, no. Mr. Arrington? Mr. Arrington, no. Mr. Estes? Mr. Estes, no. Mr. Smucker? Mr. Smucker, no. Mr. Hearn? Mr. Hearn, no. Mrs. Miller? Mrs. Miller, no. Dr. Murphy? Dr. Murphy, no. Mr. Kustoff? Mr. Kustoff, no. Mr. Fitzpatrick? Mr. Fitzpatrick, no. Mr. Stubbe? Mr. Stubbe, no. Miss Tinney? Miss Tinney, no. Mrs. Fishbach? Mrs. Fishbach, no. Mr. Moore? Mr. Moore, no. Miss Van Dyne? Mr. Feenstra? Mr. Feenstra, no. Miss Maliotakis? Miss Maliotakis, no. Mr. Carey? Mr. Carey, no. Mr. Yakum? Mr. Yakum, no. Mr. Miller? Mr. Miller, no. Mr. Bean? Mr. Bean, no. Mr. Moran? Mr. Moran, no. Mr. Neal? Mr. Neal, yes. Mr. Doggett? Mr. Doggett, yes. Mr. Thompson? Mr. Thompson, yes. Mr. Larson? Mr. Larson, yes. Mr. Davis? Mr. Davis, yes. Miss Sanchez? Miss Sanchez, yes. Miss Sewell? Miss Sewell, yes. Miss Del Bene? Miss Del Bene, yes. Miss Chu? Miss Chu, yes. Miss Moore? Miss Moore, yes. Mr. Boyle?
Yes.
Mr. Boyle, yes. Mr. Byer? Mr. Byer, yes. Mr. Evans?
Yes.
Mr. Evans, yes. Mr. Schneider? Mr. Panetta? Mr. Panetta, yes. Mr. Gomez? Mr. Gomez, yes. Mr. Horsford? Mr. Horsford, yes. Miss Plaskett? Miss Plaskett, yes. Mr. Swazi? Mr. Swazi, yes. Mr. Schweikert? Mr. Schweikert, no. Miss Van Dyne? Miss Van Dyne, no. Mr. Schneider? Mr. Schneider, yes. Chairman Smith?
No.
Chairman Smith, no.
Oh, wow. The clerk will report the vote.
The yeses are 19, the noes are 26.
There being 19 yeses and 26 noes, the amendment is not agreed to. Are there additional amendments?
Yes, Mr. Chairman, I have an amendment at the desk.
Mr. Chairman, I reserve a point of order.
There's been a point of order reserved. Mr. Doggett, would you please suspend while your amendment's distributed?
Surely. Thank you.
Proceed, Mr. Doggett.
Thank you, Mr. Chairman. This amendment cuts the cost of this bill in about half, preventing the fiscal irresponsibility of billions and indeed trillions of additional borrowing. And it targets the relief precisely where Republicans say they want it, on working folks. The only people that it denies relief to are those who earn above $400,000. We've heard today that that is about 2% of the American people. So 98% of Americans would not see, would get any benefits that are in this bill, some of which I disagree with, but they'll get everything. But what we will do is to put a limit that if you're above $400,000, which is a pretty comfortable income. Think about it, $400,000 a year covers a mighty nice lifestyle for folks. And we say that if you above $400,000, that we would not extend the benefits of this bill. And in the process, we avoid the kind of debt that Republicans are proposing. Now, apparently, even President Trump last week, for a few minutes, and it only lasted for a few minutes, expressed concerns about the well-justified claims that his one big, beautiful bill was beginning to look a little ugly. And he seemed to join Steve Bannon, who is about as MAGA as you can get, who had previously said, quote, "We have to increase taxes on the wealthy. Where does the tax revenue come from? Corporations and the wealthy." Well, the interest of the administration by President Trump was very narrow in the proposal he suggested, but he quickly withdrew it. My feeling is that an amendment that provides all Republicans say they wanted for those under $400,000 a year ought to be satisfactory, unless the real goal here, as we have contended, is to provide more and more tax breaks to Elon Musk and the richest of the rich, or that they've determined that their desire to help the very top is more important than protecting us from a national debt crisis or delivering relief to the working families across this country. Now, Chairman Smith, when you appeared on Fox News Sunday...
Would the gentleman suspend for a second?
Sure, noisy.
Could we please have order in the chamber? Thank you.
Thank you very much, because I was just referring about once a week, I do, in fact, watch Fox News, and I saw Chairman Smith on Fox News Sunday, you looked very good. It was only what you said that I questioned, but you were asked about a Fox poll, and the Fox poll said, "What bothers you most about paying taxes?" And the number one response from the Fox survey of respondents was, "The rich are not paying enough in taxes." And you countered, Mr. Chairman, by saying that without action, taxes were going to rise on people that were earning less than $400,000 a year. Well, my amendment addresses what you said was your concern, and what you said today in opening this markup was your concern to focus on working people. So I preserve the tax benefits for those earning under $400,000, and voting no on this amendment exposes the truth that many of us have asserted, that the real objective here is not to help working families, it is to help those at the top. We believe that this is a scam bill that is really about sneaking in more tax breaks for those who are the rich and the super rich, rather than helping those that are trying to climb up the economic ladder. And while understanding that there's more than a little hero worship among House Republicans of Elon Musk, it is just simply not right that this bill gives him, the richest person on this planet, a benefit that is hundreds of times more than the tax breaks that are available for a working mom who's struggling to put food on the table for her family, or a teacher who's trying to save for retirement, or a firefighter who wants to replace his aging pickup. Worse than making our tax code increasingly more slanted toward the wealthy is the fact that Republicans are borrowing to do it. And by limiting the tax benefits of this bill to those who earn $400,000 or less, we significantly reduce the cost of the bill. And much of that is financed by simply asking, not penalizing those who have been able to accumulate such riches, but to say that their tax rate would go up from 37% to 39.6%. In other words, it would be the same tax rate that applied to affluent Americans when George Bush was president, when Barack Obama was president. It's not a soak the rich approach. It is a reasonable approach to ask them to pay a fairer share of the benefits they enjoy from being prosperous Americans. And so I believe that this approach is one that we ought to get agreement on. If the real objective is to help working families, let's do it. Let's accept all the provisions good, bad, and otherwise, that are in the Republican bill, but do it in a way that does not risk another $2 trillion of debt, and I move the adoption of the amendment.
Mr. Bean.
Thank you very much, Mr. Chairman, and a very good morning to you, and good morning, Ways and Means. If you had Elon, if you've been playing Ways and Means bingo, and if you had Elon, billionaire, or fair share on your bingo card, you won a long time ago, because that's all we've heard from the other side. They say it over and over again, thinking that we'll buy into it, that it's just a giveaway. And ladies and gentlemen, if the American people, if you're watching this on video, this is real tax relief for real Americans, the Americans who are paying the bills, paying taxes, that are just trying to keep afloat. It's $124 billion, Mr. Chairman, as you know, because you wrote it, in tax cuts for the 80 million workers who stay late, work overtime to keep America running. It's $40 billion in tax cuts for the 14 million waitresses, barbers, hairstylists, taxi drivers who rely on tips. We let them keep their money. Read the bill. We put limits. Highly compensated workers can't receive these cuts. So no matter how many times we hear Elon, billionaire, fair share, if you read the bill, it is delivering freedom from an overburdensome government. We can do it together, but we have to stay focused. We have to drink an extra cup of coffee to stay up, so that we don't buy in the hype. Mr. Chairman, I salute you on bringing a great product, but let's vote this down so we can get back to the business at hand of passing this one big, beautiful bill. Yield back.
Further discussion on the amendment? Seeing none? Oh, Mr. Davis.
Thank you, Mr. Chairman. You know, we've listened, we've heard, we've expressed, and we've had a great evening. As a matter of fact, we've heard a great deal of philosophy. We've heard a lot of common sense, a lot of good practices. But I join with Mr. Doggett, who says that if you really want to move, go ahead and do it. $400,000 that individuals earn, paying a little bit of extra tax. Different people have said different things about taxes. One person said that taxation is the price that we pay for a civilized society. Another person said that taxation is something that you run from, not to. But if America is to become a nation that takes care of its old, its young, and those who have difficulty caring for themselves, then the concept of fair share is not outlandish. As a matter of fact, I find it appealing, and so I support Mr. Doggett's amendment and urge others to do the same thing. See where we go. Yes, I yield.
I'm pleased to hear from our colleague, Mr. Bean, that freedom is at stake, and the point is that there's a little more freedom in this bill for some people than there is for others. In fact, there's about 339 times more freedom for those who earn $1 million per year than there is for those who earn $50,000 or less. I think that if the real goal here has been, as we were told at the beginning, to prioritize working people, we need a little more freedom for the working people, and we get it by having a bill that does not charge so much to help those at the very top, whether it's Elon or someone else. Those who earn more than $400,000 a year, those who are in 2% of all American taxpayers, that we ask them to pay not 37% that they get today, but to go back to the George Bush, Barack Obama rate of 39.6%. And in doing so, and with other changes in the bill, we reduce the cost of the bill by half, and we target the relief. It's a reasonable approach to get relief to middle-class Americans, to working Americans, but not to provide more of the billionaire tax breaks that I think were the real purpose of this Republican effort. So I move adoption of the bill. Thank the gentleman from Illinois.
Further discussion on the amendment? Seeing none, the question is on agreeing to the amendment offered by Mr. Doggett. The clerk will call the roll.
Mr. Buchanan?
No.
Mr. Buchanan, no. Mr. Smith of Nebraska? Mr. Smith of Nebraska, no. Mr. Kelly? Mr. Kelly, no. Mr. Schweikert? Mr. Schweikert, no. Mr. LaHood? Mr. LaHood, no. Mr. Arrington? Mr. Arrington, no. Mr. Estes? Mr. Estes, no. Mr. Smucker? Mr. Smucker, no. Mr. Hearn? Mr. Hearn, no. Mrs. Miller? Mrs. Miller, no. Dr. Murphy? Dr. Murphy, no. Mr. Kustoff? Mr. Kustoff, no. Mr. Fitzpatrick? Mr. Fitzpatrick, no. Mr. Stubbe? Mr. Stubbe, no. Ms. Tinney? Ms. Tinney, no. Mrs. Fishbach? Mrs. Fishbach, no. Mr. Moore? Mr. Moore, no. Ms. Van Dyne? Mr. Feenstra? Mr. Feenstra, no. Ms. Maliotakis? Ms. Maliotakis, no. Mr. Carey? Mr. Carey, no. Mr. Yacom? Mr. Yacom, no. Mr. Miller? Mr. Miller, no. Mr. Bean? Mr. Bean, no. Mr. Moran? Mr. Moran, no. Mr. Neal? Mr. Neal, yes. Mr. Doggett? Mr. Doggett, yes. Mr. Thompson? Mr. Thompson, yes. Mr. Larson? Mr. Larson, yes. Mr. Davis? Mr. Davis, yes. Ms. Sanchez? Ms. Sanchez, yes. Ms. Sewell? Ms. Sewell, yes. Ms. Delbene? Ms. Delbene, yes. Ms. Chu? Ms. Chu, yes. Ms. Moore? Ms. Moore, yes. Mr. Boyle? Mr. Boyle, yes. Mr. Byer? Mr. Byer, yes. Mr. Evans?
Yes.
Mr. Evans, yes. Mr. Schneider? Mr. Panetta? Mr. Panetta, yes. Mr. Gomez? Mr. Gomez, yes. Mr. Horsford? Mr. Horsford, yes. Ms. Plaskett? Ms. Plaskett, yes. Mr. Swazi? Mr. Swazi, yes. Mr. Schneider's not recorded. Mr. Schneider, yes. Ms. Van Dyne? Ms. Van Dyne, no. Chairman Smith?
No.
Chairman Smith, no.
Clerk will report the vote.
The yeses are 19, the noes are 26.
There being 19 yeses and 26 noes, the amendment is not agreed to. Are there additional amendments?
Mr. Chair, I have an amendment at the desk.
Mr. Chairman, I reserve a point of order.
A point of order has been reserved. Would the gentlelady please suspend while the amendment is distributed? Proceed.
Well, Republicans have just rejected eliminating costly tax breaks for those earning above $400,000. My amendment says that there should not be tax cuts for those earning more than $10 million. Are those earning more than $10 million really in need of a handout from our federal government? Now, I know that by the standards of the president's cabinet members and his special government employee, Elon Musk, earning a meager $10 million per year, might be considered low income. But for the median American, that's 124 times what they earn in a year and 6 times more than they will earn over the course of their entire career. Republicans are proposing to give a $1.3 million tax cut to someone who makes $50 million next year. That's enough to pay for childcare for 112 kids. What could possibly be the rationale for cutting tax rates for people who are this enormously wealthy? There's so many other needs. The Social Security Trust Fund is projected to become insolvent in 12 years. Medicare will become insolvent in 11 years. The federal government spends more on interest payments on the national debt than we do on Medicare or national defense. And to pay for this giveaway, Republicans are kicking almost 14 million Americans off their health insurance and taking SNAP food assistance away from some of the neediest households in the country. Republicans are doing this while imperiling the futures of hundreds of millions of Americans just to let some of the richest people in the world pay less in taxes. This amendment is an opportunity to make the most modest course corrections by preventing those earning more than $10 million a year from getting a tax giveaway under this bill. Surely we can all agree on that. So I ask my colleagues to support this amendment, and I yield back.
Mr. Moran.
Thank you, Mr. Chairman. I'm just amazed that we continue to attack those that are growing our economy by producing more jobs. The jobs that are coming to every American, the jobs that are driving economic growth across America, the jobs that were created after the 2017 Tax Cuts and Jobs Act went into place. And here it is again, an assault on the job creators of America. And so I think we need to step back and look at what this tax bill is trying to do, and that is to be broad-based and increase the liberty of every American by reducing taxation. I had a great meeting last night in a rural area of East Texas with more than 100 of my constituents, and we talked about the fact that as the tax rate goes down on every American, liberty increases across the board for every American. That's the goal of the one big beautiful bill that we're producing today. Businesses win across the board. We're renewing this, the 100% immediate expensing, the bonus depreciation. We're renewing incentives for R&D by allowing for immediate expensing. That's going to be creating innovation and excitement in our economy. We're increasing the $199 Cap A deduction for small businesses, and this particular amendment that's being offered right here would hurt that Section 199 Cap A opportunity that we're bringing. Families win across the board. More opportunity to invest in their 529 accounts. We've talked about the child tax credit being increased, the tax relief for those working overtime and seniors. One of the things that I had an opportunity to do just weeks ago, Chairman, you started out today by talking about the linemen in Missouri. Well, I had a conversation with my linemen too, and you know what they're excited about? They're excited about this opportunity for additional overtime and to save on their taxation on the income portion of that premium that they're getting on overtime. They're excited about that. So are our seniors. We're seeing tax relief for those paying interest on car loans. As Mr. Bean pointed out earlier, it's not the folks that are millionaires that are paying interest on their car loans. It's the everyday family Americans. Not only do businesses win and families win, but rural America wins as well on this tax bill. I know that we're especially excited in East Texas about the Rural Opportunity Zone expansion in this bill, because the first time through in 2017, Opportunity Zones clearly went to areas that were not rural in America. And we want this bill to pass because we want additional incentives and opportunities for those rural opportunity zones to grow and America to to be economically driven, not just in the urban areas, but in the rural areas as well, a rural East Texas area like the one I represent. So, Mr. Chairman, I'm excited to oppose this amendment in particular, because I think that this destroys the outcome that we're looking for in the overall one big beautiful bill, and that is increased liberty, decreased taxation, spur economic innovation, and economic growth over the next 10 years. With that, Mr. Chairman, I oppose this amendment. I support the one big beautiful bill, and I yield back.
Further discussion on the amendment. Mr. Boyle.
Yes, thank you, Mr. Chairman. And well, here we are, a little past 2 o'clock in the morning in the frozen tundra of the Ways and Means Committee room. And we have an amendment in front of us that actually shows we on the Democratic side accept and agree to 99% of the tax cuts. One of the most often said talking points on the other side is that if their big, beautiful bill for billionaires doesn't pass, that the American people will be faced with a tax increase. This amendment for Ms. Chu shows how inaccurate that is. Her amendment ensures that all of the tax cuts would be preserved for those who make under $10 million a year. And while it's offered by Ms. Chu, really, we should call this the Trump Amendment. After all, President Trump has said repeatedly that he thinks the 39.6% tax bracket should be restored for those who make $5 million a year or more. So actually, Ms. Chu's amendment is slightly more generous than Mr. Trump's. Well, in the interest of bipartisanship, let me say I agree with what President Trump has actually been saying. And here's an opportunity for my Republican colleagues to vote in support of the position President Trump says he has. Let's ensure that tax relief is delivered for over 99% of the American people, but for those who make $10 million a year or more. That's not the top 1%, that's well below 1% of Americans, actually. The ultra-rich in this country, multimillionaires and billionaires. Given the size of these tax cuts, here's a way to ensure more than 99% of the American people get the benefit, but that we don't explode the national debt, so that we don't have to see devastating cuts to health care, so that at least 13.7 million Americans would lose their health insurance, as the Congressional Budget Office has stated. So I hope that we can have a bipartisan agreement here. I predict you will see every Democratic member vote in favor of this amendment, vote in favor of tax relief for more than 99% of the American people. Or is it that the other side cares so much about delivering tax cuts for multimillionaires and billionaires that they will vote down this opportunity to deliver tax relief for those Americans making under $10 million a year? With that, I am happy to yield my remaining time to Ms. Chu if she would like it.
Well, I surely do not believe that there should be welfare for those earning more than $10 million. And I hope that Republicans can bring themselves to the point where that they can say they do not need this handout from federal government at the expense of so many vulnerable Americans. We know that this trickle-down theory doesn't work. We know that these funds will not flow to the rest of America, and that, in fact, those funds will be hoarded by the very wealthy to become more wealthy. And so please do the right thing and ensure that we do not give welfare to those who earn more than $10 million.
Further discussion on the amendment. Seeing none, the question is on agreeing to the amendment offered by Ms. Chu. The clerk will call the roll.
Mr. Buchanan?
No.
Mr. Buchanan, no. Mr. Smith of Nebraska?
No.
Mr. Smith of Nebraska, no. Mr. Kelly? No. Mr. Kelly, no. Mr. Schweikert? Mr. Schweikert, no. Mr. LaHood. Mr. LaHood, no. Mr. Arrington. Mr. Estes. Mr. Estes, no. Mr. Smucker. Mr. Smucker, no. Mr. Hearn. Mr. Hearn, no. Mrs. Miller. Mrs. Miller, no. Dr. Murphy. Dr. Murphy, no. Mr. Kustoff. Mr. Kustoff, no. Mr. Fitzpatrick. Mr. Stubbe. Mr. Stubbe, no. Miss Tinney. Miss Tinney, no. Mrs. Fishbach. Mrs. Fishbach, no. Mr. Moore. Mr. Moore, no. Ms. Van Dyne. Ms. Van Dyne, no. Mr. Feenstra. Mr. Feenstra, no. Ms. Maliotakis. Ms. Maliotakis, no. Mr. Carey. Mr. Carey, no. Mr. Yakum. Mr. Yakum, no. Mr. Miller. Mr. Miller, no. Mr. Bean. Mr. Bean, no. Mr. Moran. Mr. Moran, no. Mr. Neal.
Yes.
Mr. Neal, yes. Mr. Doggett. Yes. Mr. Doggett, yes. Mr. Thompson. Mr. Thompson, yes. Mr. Larson. Yes. Mr. Larson, yes. Mr. Davis. Yes. Mr. Davis, yes. Ms. Sanchez. Aye. Ms. Sanchez, yes. Ms. Sewell. Aye. Ms. Sewell, yes. Ms. Delbene. Aye. Ms. Delbene, yes. Ms. Chu.
Aye.
Ms. Chu, yes. Ms. Moore.
Aye.
Ms. Moore, yes. Mr. Boyle. Mr. Boyle, yes. Mr. Byer. Mr. Byer, yes. Mr. Evans. Mr. Evans, yes. Mr. Schneider. Mr. Schneider, yes. Mr. Panetta. Mr. Panetta, yes. Mr. Gomez. Mr. Gomez, yes. Mr. Horsford. Mr. Horsford, yes. Ms. Plaskett. Ms. Plaskett, yes. Mr. Swazi. Aye. Mr. Swazi, yes. Mr. Arrington. Mr. Arrington, no. Mr. Fitzpatrick. Mr. Fitzpatrick, no. Chairman Smith?
No.
Chairman Smith, no.
The clerk will report the vote.
The yeses are 19, the noes are 26.
There being 19 yeses and 26 noes, the amendment is not agreed to. Are there additional amendments? Mr. Byer.
Mr. Chairman,
Mr. Chairman, I have an amendment at the desk.
A point of order has been reserved. Would the gentleman suspend while the amendment is distributed? The gentleman may proceed.
Thank you, Mr. Chairman. Top-heavy tax cuts paid for by low-income benefit cuts. Look, this amendment, we just try to make our tax code a little bit fairer by ensuring that the very, very wealthiest among us don't receive another tax handout. I'm not talking about the good people of East Texas who are getting screwed by this bill. I'm not talking about middle-class households or even upper-middle-class households. My amendment just focuses on the very, very, very wealthy, those making more than $100 million a year. Who even makes that kind of money? It's 0.002% of all the U.S. households. So it doesn't sound like very many people, but if you look at the distribution tables, just the top 1/10 of 1% are going to save $50 billion in the next 2027 fiscal year. It's a staggering amount of money. For $100 million, you can buy Vincent van Gogh's most expensive piece of art. You can buy your own Boeing 737 MAX 7. You can build a wind farm with 16,000 of your closest neighbors and leave completely off the grid. Or you can bankroll Oppenheimer, Despicable Me 4, or Spider-Man Across the Spider-Verse. And the best part is this is just the annual income. You could do that all again year after year after year after year. If we believe at all that the wealthy should pay their fair share, it makes sense that The 39.6% goes back to those making more than $100 million a year. Again, I don't expect any of my Republican friends to vote for this, but I think it's incredibly important that we make the point that the vast majority of these tax benefits are going to the wealthiest among us. And if we want to be honest about any sense of fairness in our society and our economy, we want to overcome the enormous divisions in our culture, we have to address the fact that so few have so much, so many have so little, and we're unwilling to look at it honestly. With that, I agree that I urge all of my colleagues to vote yes, and I yield back.
Mr. Smith is recognized.
And thank you, Mr. Chairman, and certainly thank you to all of my colleagues for taking part in this important process. I think it's abundantly clear that it is the wish of my colleagues on the other side to blow up the bill that we have, and if not in its entirety, certainly sections at a time. So I struggle to think that this amendment, if all of a sudden it were adopted, that they would be happy to support the bill. And I don't think that's the case. I find it fascinating that the comments made would tell us, that the rich don't pay their fair share, and yet they want to give them tax breaks with the SALT deduction going much higher.
Will the gentleman yield?
No, not right now, thank you. But to my point that there are all these amendments that I don't think are being offered to get to a point of voting for the bill. And so I think that looking at all the diligence that's been done on our side to arrive at a package that is, when you look at the distributional tables, it's pretty fair. It's effective, I think, in the economy, and various pressures just on the Republican side, from the fiscal side and the economic growth point of view. I hardly think that it would be great for the economy to have the largest tax increase in history take place, just given the law of diminishing returns. But I don't know what might satisfy someone who thinks that someone else doesn't pay enough, even though they're already paying more than everyone else. Thank you. I yield back.
Further discussion on the amendment. Mr. Neal.
Thank you. I've always said that my friend Mr. Smith is a fast learner. We want people to know what's in this bill. We want people to see and hear what is in this legislation. That's our point this evening, or this morning, as I should say. In addition to which, this is clearly an unfinished product. There is a long way to go. And my sense is that even many of the items that are included here, this legislation moves out of committee in the next couple of days here, that it is likely to be altered substantially. Many of these provisions that are being discussed here are pretty popular with the American people. And if you link those to cuts in popular social initiatives as well, including health care, it's going to be uphill. So you're absolutely right. We intend to make our point here in the minority. We would like some cooperation. There are some reasonable amendments that have been put forward. I wish that the majority might have entertained them, but I get it. I understand entirely what's taking place, but we have a ways to go here with this, and we intend to clarify this proposal for the American people. Thank you, Chairman.
Further discussion on the amendment. Ms. Sanchez.
Thank you, Mr. Chairman. If my Republican colleagues truly care about reducing the deficit, strengthening our economy, and more importantly, standing up for working Americans, then repealing tax cuts for those who make over $100 million shouldn't be a partisan issue. It should just be common sense. Let's be honest. Let's speak frankly. The previous Trump tax cuts overwhelmingly benefited the richest Americans and the largest corporations. And this bill just doubles down on that mistake, making life harder for most Americans in order to further line the pockets of the rich who really don't need the help, all the while adding nearly $20 trillion to our debt, according to other Republican members. The other side of the aisle likes to talk a big game about the importance of living within our means, yet they fail to deliver every single time they're in power. Here's the truth. You can't preach fiscal responsibility while protecting tax breaks for those making over $100 million. The math just doesn't add up. And the American people, they can see right through it. They know that when you're giving tax breaks to people who make over $100 million and you're giving tiny crumbs to those who are struggling, that you're not really standing up for your constituents and the working class. And I want to just make very clear that this amendment isn't about punishing success. It's about asking those who've benefited the most from our economy to just contribute their fair share. The rich have seen record gains over the past decade, while working families have struggled to keep up with the cost of living. I don't know why that's so hard for you to understand. The income disparity in this country between those who have and those who don't is getting larger and larger. Repealing tax cuts for the richest Americans is just one step towards a more responsible budget and a healthier economy. An economy where we invest in roads, schools, and American families instead of sheltering the wealthiest for paying their fair share and what they owe. Not a tough concept. It shouldn't be difficult to understand. And I would guess that the majority of the American population knows that when you're giving tax cuts to people who make over $100 million, that that's not fighting for them and that's not fighting for hardworking Americans. And with that, I yield back the balance of my time.
Further discussion on the amendment? Seeing none, the question is on agreeing to the amendment offered by Mr. Byer. The clerk will call the roll.
Mr. Buchanan. Mr. Buchanan, no. Mr. Smith of Nebraska. Mr. Smith of Nebraska, no. Mr. Kelly. Mr. Kelly, no. Mr. Schweikert. Mr. Schweikert, no. Mr. LaHood. Mr. LaHood, no. Mr. Arrington. Mr. Arrington, no. Mr. Estes. Mr. Estes, no. Mr. Smucker. Mr. Hearn. Mr. Hearn, no. Mrs. Miller. Mrs. Miller, no. Dr. Murphy. Dr. Murphy, no. Mr. Kustoff. Mr. Kustoff, no. Mr. Fitzpatrick. Mr. Fitzpatrick, no. Mr. Stubbe. Mr. Stubbe, no. Miss Tinney. Miss Tinney, no. Mrs. Fishbach. Mrs. Fishbach, no. Mr. Moore. Miss Van Dyne. Miss Van Dyne, no. Mr. Feenstra. Mr. Feenstra, no. Miss Maliotakis. Miss Maliotakis, no. Mr. Carey. Mr. Carey, no. Mr. Yakum. Mr. Yakum, no. Mr. Miller. Mr. Miller, no. Mr. Bean. Mr. Bean, no. Mr. Moran. Mr. Moran, no. Mr. Neal. Mr. Neal, yes. Mr. Doggett. Mr. Doggett, yes. Mr. Thompson. Mr. Thompson, yes. Mr. Larson. Mr. Larson, yes. Mr. Davis. Mr. Davis, yes. Miss Sanchez. Miss Sanchez, yes. Miss Sewell. Miss Sewell, yes. Miss Del Bene. Miss Del Bene, yes. Miss Chu. Miss Chu, yes. Miss Moore. Miss Moore, yes. Mr. Boyle. Mr. Boyle, yes. Mr. Byer. Mr. Byer, yes. Mr. Evans. Mr. Evans, yes. Mr. Schneider. Mr. Schneider, yes. Mr. Panetta. Mr. Panetta, yes. Mr. Gomez. Mr. Gomez, yes. Mr. Horsford. Mr. Horsford, yes. Miss Plaskett. Miss Plaskett, yes. Mr. Swazi. Mr. Swazi, yes. Mr. Smucker. Mr. Smucker, no. Mr. Moore? Mr. Moore, no. Chairman Smith?
No.
Chairman Smith, no.
The clerk will report the vote.
The yeses are 19, the noes are 26.
There being 19 yeses and 26 noes, the amendment is not agreed to. Are there additional amendments? Mr. Gomez.
Mr. Chairman, I reserve a point of order.
A point of order has been reserved. Will the gentleman suspend while the amendment is distributed?
Mr. Chairman, I have 16 amendments at the desk, but I'm going to start with one.
We're excited.
So,
we got all the time. Just suspend while they're distributed.
Okay.
Proceed.
All right, Mr. Chairman. So we just witnessed that the Republicans in this committee voted down amendments to stop tax breaks for those making $1 million. Then we said, how about $10 million? You voted that amendment down, and then you went to $50 million, and you still voted that down. So I don't know what's the limit for you guys, but here's the thing. I want to find out if you guys will actually support raising the tax bracket to 39.6% on people making $1 billion or more. So how about show of hands? Let's show hands. Raise your hand if you think billionaires should get a tax break, shouldn't get a tax break, and should actually pay their fair share of taxes. Come on, just raise your hand if you think that they shouldn't get another tax break. So how about the folks over there on the other side of the aisle? Keep your hands up. I just want to see the Republicans. How about Mr. Smith from Nebraska? Even Warren Buffett said that he would be happy to pay more in taxes. So here's the thing. Remember at the beginning of the hearing, I asked a simple question. Are you
Would the gentleman yield? Would the gentleman yield?
Go.
Mr. Buffett, incidentally, did say on the record that he paid a record amount of taxes last year.
Yeah, and then he also said that he would be happy to pay even more. So here's the thing. Okay, I'm going to yield, reclaim my time. Thank you for that. So here's the thing. Remember at the beginning I asked a simple question. Are you for the babies or the billionaires? And here's your chance. You guys all want to be economic populists? Well, here's your chance. Let's raise the taxes on the billionaires who need to pay their fair share of taxes so we can give bigger breaks to the people that are working class, right? Here's your chance to prove to the American people, to prove to people on Joe Rogan and all those other podcasts that you haven't become a bunch of swamp creatures, right? That you're not the party of the billionaire establishment that has taken root in D.C., that you're fighting for your own constituents. It's taxing billionaires. It's not taxing mom and pop shops. It's not like hurting anybody besides making sure that these individuals who are extremely wealthy pay their fair share of taxes. It's a simple amendment. According to ProPublica, the 25 richest Americans paid an effective tax rate of 3.4 on average from 2014 to 2018. There's no reason why the billionaire establishment pays a lower effective tax rate than a teacher or a firefighter or a nurse. Come on, guys. So this is your opportunity. You guys want to be the economic populists? You guys want to make sure that you're not the grand oligarchy party? Well, here's the chance. I'm asking for you guys to vote aye on an amendment that increases taxes on the billionaire class. Come on, join me. Let's get this over with. We can then call it a night. With that, I yield back.
Further discussion on the amendment? Mr. Arrington.
Mr. Chairman, to my friend, Mr. Gomez, I already offended my friend, Mr. Horsford, so I might as well offend you with this question. But what was the reason you all, my Democrat colleagues, did not include this in your Inflation Reduction Act. It was a tax and spend bill.